Tariffs on steel and aluminum, but a key date, March 12th. They don't go into effect until then, so do we have time to negotiate this away? Do we have time to negotiate carve-outs here, or does this actually happen in a month's time?
If you take a look at markets, they're saying, well, something might happen, but wake me when we're there, because right now we're not paying attention to what has been so many times before just noise.
I think when it comes to exemptions, Trump already mentioned Australia. You have to look at who the United States has a trade surplus with. That is really this guy's North Star. I said yesterday, some meetings start where the top line figure everyone needs to focus on is the trade deficit the U.S. has with that specific country. So maybe Australia could be saved. I'm not sure about the others unless they bring something forward that he really wants to get done.
It's a key story for us this morning. In the bond market at the moment, yields are a little bit higher, up by 2 or 3 basis points. The 10-year 4.52. And the surveillance this morning preparing for Powell.
The Fed's on hold, right? They are totally on hold right now. They're on ice. They may not move at all this year. It was probably a really high probability. Right now, the Fed is more likely to just sit on their hands. Over the long term, rates are meaningfully restrictive, right? Probably, easily 100 basis points too high. So that is the path of least resistance, but maybe not this year.
So here's the latest. Investigators, or rather investors, gauging the impact of tariffs ahead of testimony from Fed Chair Jay Powell on Capitol Hill. Leslie Falcone of UBS writing, we look for longer-term bull steepener with 2 Fed cuts in the second half of 2025. Leslie joins us now for more. Leslie, it's good to see you. Last time we caught up towards the end of last year, you were looking for, I think, 4 in 2025. What's changed things, the data or the prospect that policy might change too?
Well, we were looking for 4 prior to the December Fed meeting, and then we actually cut it back to that too. And obviously, growth was much greater than we expected, and inflation turned out to be a little bit more sticky. But we are still looking for 2 cuts, and we do think that this disinflation trend, while it might be stalled, it's not completely derailed. So we are looking for inflation to continue to come down, and more than likely, the Fed cuts in the second half of the year.
Is it because of policy, though, back to John's question, or is it because just there is more momentum in the underlying economy than a lot of people expected before December of last year? Well,
there's definitely more momentum. If you look at some of these GDP growth numbers, if you look at consumer spending in the fourth quarter, even the first quarter, Atlanta Fed now is at like 2.8%. So, and the labor market remains strong. So there is obviously growth has been this much stronger than anticipated. But I think when people say the Fed is on hold, that's priced into the marketplace. I mean, the market this morning is only pricing in about 30, 35 basis points of cuts for 2025. So I think that, hold for longer is there. We just think the market's getting a little bit too hawkish right now, so we're still looking for 2 in the second half.
When you talk about a bull steepener, it kind of goes against what we're seeing right now in the market, to your point, and you say that the market's a little bit incorrect with its pricing in of policy staying where it is. There is this belief that in the short term, in 2-year and 5-year types of time frames, you're going to see inflation move up because of tariffs, because of policy, but over the longer term, you will see inflation come back down and you'll see this sense of slower growth. Do you reject that narrative, that scenario?
I don't. I think the market's doing exactly what we expect it to do. The bull steepener won't come until the Fed actually cuts. Having this flatter right now is what you would anticipate, given the tariffs that we're seeing, the fact that you mentioned earlier inflation expectations, and the break-evens, which is exactly the floor plan that we saw from Trump 1.0. So what happens is you have these inflation expectations rise. They take the cuts out. 2-year goes up. The curve flattens. But the latter part, when you actually see some of the growth impact, the Fed cuts and you bull steepen. So I think the path is exactly what we would expect.
But what if you do see material inflation with all these tariff concerns, but then also a tighter labor market potentially because of what Trump is doing on the immigration front? Is that what could upend your thesis for 2 cuts in the back half of the year?
Yeah, we're not looking for a stagflation scenario. I think that, the Fed is going to look at that long-term inflation scenario, which has been, fairly anchored. We don't think that inflation is going to stay as sticky as what people think. We do think this is one-time price increases that the Fed does look through. So we're not thinking right now, from what we've seen, unless it's organically grown, fundamentally consumer-driven inflation kind of reacceleration, we don't think it's going to alter the Fed's path.
What are you hoping to hear from Powell today?
I don't think we're going to hear very much. I think he's going to be questioned about inflation. There's no question. But remember, even in the December meeting, they pushed their target of 2% from 26 to 27. So they've pushed that out, right? And I think he's explained enough in terms of the recent commentary, which, the last Fed meeting was very, boring in my opinion. He's going to wait for the data. He's going to see what happens in terms of inflation. But I don't think that he's really going to alter his rhetoric that what we saw in the last Fed meeting.
When it comes to tariffs, I think a lot of economists would agree with you, a lot of economists on Wall Street, that the Federal Reserve would choose to look through any price level impact and see it as a one-off. What would constrain that is an important question, though, and Deutsche Bank say the following. Their ability to do so could be constrained if inflation expectations begin to rise and/or the labour market re-emerges as an additional source of inflationary pressure. Have we had any evidence of that, seen any evidence of that in the data we got on Friday, on UMich, and in the jobs report?
Listen, the wage data that we got on Friday was actually stronger than expected, and I think when you think about the policies as a whole, we don't know the impact of, say, immigration, what that might have on the labor market or inflation. We don't know what some of these policy impacts are going to be. But we're still looking for, in our opinion, the labor market to stay strong and growth to stay above trend. We just don't think it's going to force them to completely, stay on the sidelines. And we especially don't think they're going to force a hike in the near term.
Constraining the bias to ease versus forcing a hike are two separate things, I think. Constraining the bias to ease, I think, would be sufficient to spook investors, which is why I think this price action that we got on Friday was so material off the back of what we saw in UMich, together with the wage report, the hotter-than-expected wages with inflation expectations inching higher, albeit not confirmed by the New York Fed's release yesterday. It's enough, it's sufficient just to keep people on edge.
Because there's no reason for the Fed to move. Right now, there has been no data that would really push the Fed off the shelf, where they're very happy to remain out of the fray, out of the political noise, and just saying pretty much nothing and being really boring. And so I think ultimately what you're going to get, and I think that your point is a salient one, which is the removal of the option of cutting or the potential for cutting is enough to spook this market. How much more would have to get priced in, or is that the fully priced scenario at this point?
Even spookier if you think growth is slowing. And Neil Dutcher of Renmac does. Neil writing this, and I repeated this a little bit earlier, so I'll share it with you again in case you missed it. He thinks growth is slowing. He's worried about that. I was reading his note that he put out yesterday, and he thinks growth is slowing while the Fed is playing a game of chicken with the Trump administration. That's problematic if you believe that's the case.
You can tell a different story depending on what sector you look at. He's looking at the housing sector, but you listen to what McDonald's said yesterday. They actually had an okay outlook. You saw a rally because they outperformed based on non-U.S. sales. But they said low-income consumers in the U.S. are still under pressure. And they said the overall market is pretty muted. The low-income segment really is still feeling it, and that is a significant portion of their customer base. So that type of commentary is enough to keep certain people on edge.
That's choiceful, translated. That's some real detail. I hate the word choiceful.
I hate it too.
That's the detail that I think we need to hear from these companies. Leslie, it's good to see you, as always. Thanks for being here. Leslie Falconio there of UBS. Up next on the programme, we'll catch up with Stuart Kaiser of Citi, Bloomberg's Tyler Kendall, David Tinsley of the Bank of America Institute, and Kit Juice of SocGen on the latest out of Europe. The surprise so far, European outperformance in the equity market. Can that continue? Can that continue? We'll ask Kit in about an hour from now. From New York City, this is Bloomberg.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this set. And what a joy that is.
I'd be my feet in the sand and a beer in my hand.
Don't miss the next Open Interest.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings, and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
When we think about the potential for price impacts from something like a universal tariff, they could be quite large.
Some of these tariffs, they get put on and they just stick around for a while.
The Fed is probably going to stay on hold because they don't have a clear picture of where that's going.
We think that the Fed is likely not done with its rate cutting path in this cycle.
Taking a high quality approach at the factor level, I think that's the best way to navigate through this.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Equity futures on the S&P just about negative by 0.2% on the S&P 500. The second hour of Bloomberg Surveillance starts right now with equities just a little bit softer, going into quite a big 24 hours. Chairman Powell twice, once in front of the Senate, then in front of the House. He'll be on Capitol Hill facing a grilling. Big one down in the nation's capital. It's never really a grilling. We'll see what we get a little bit later. Then tomorrow morning, it's US CPI. Inflation in focus in a big way over the last week. Inflation expectations in the UMich survey on Friday just creeping a little bit higher. And the complaint you're hearing from consumers right now, consistently, actually, is about tariffs. And we got more tariffs overnight.
Prospect of 25% on all steel and aluminum and the possibility of retaliatory tariffs coming from the European Union in particular. All of this goes to explain why we're seeing shorter-term inflation expectations in the market tick upward. You can see that in the 2-year and the 5-year inflation break-evens, and those are both at the highest levels in about 2 years. That's leading some people to think, exactly to your point, John, this is going to take away the need for the Fed to cut rates at any point in 2025.
I don't know about you, but 4 weeks into the administration, I'm already losing track of key dates. So this one's March 12th, right? March 12th for tariffs on steel and aluminum. So we've got about a month. About a month to work out whether we can negotiate this away or secure some big carve-outs for some downstream manufacturers who might be pretty disappointed about this announcement.
Well, it's a great point you made last hour, and this is what happened during Trump 1.0. This is what the Wall Street Journal editorial board talks about today, which I'm sure Trump is going to take aim at because he gets very annoyed with these editorials. But they say is the strategy to harm U.S. manufacturers and workers. And they go on to talk about a company which produced roughly half of the nails made in the U.S. And after those steel tariffs took place in Trump 1.0, its sales plunged and they had to lay off individuals. And then some people quit because the factory is going to have to close. Guess what happened at the end of the day? The Commerce Department came out and said, okay, you get an exemption because this is so important to the manufacturing base that actually the Trump administration is trying to boost.
I'm not going to editorialize. I'll let the Journal do that. It's just a statement of fact. More people work for downstream manufacturers than they do in steel production. There will be trade-offs. There always are, and this is going to be a trade-off if they go in this direction.
Back in the 2018 period, to Anne-Marie's point, you saw industrial employment actually fall, and you saw industrial production in the U.S. fall after the implementation of certain tariffs. Is this time different if there are no carve-outs, if there is a more comprehensive plan? A lot of people are trying to understand this, but you have already Deutsche Bank coming out and increasing their expectation for CPI and just inflation more generally, should these tariffs come to fruition in their full form.
So the Europeans have got a lot to say, and the European Commission President Ursula von der Leyen had this to say: unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures. Now, I'm interested in the word unjustified versus justified. If you've got a 10% tariff on American autos and the US has a 2.5% tariff on European autos, Are they justified to come up to 10? Can we have that conversation? Is that conversation available over the next few weeks?
It would be really great to know that. It would be great to know what was on the table to really take down the pressure, or what a justified tariff actually means. We don't know. It's a good point. And it's not fair to say, look, tariffs are bad and they're necessarily going to destroy economic growth, because tariffs went on during the first Trump administration. They stayed on through the Biden administration. And some people, including some of the big bank executives, say selective tariffs make a lot of sense. Question is, how do you come up with a framework as a business owner to understand what's going to get implemented and how it's going to trickle down?
Autos is one sector that's a huge gap when it comes to the tariffs. Then there's also farm products, another big gap when it comes to what Europeans put on U.S. farm products. These are grievances the president has. Another thing Oliver talked about, which I think is very timely. You have J.D. Vance right now, the vice president in Europe. You're going to have General Keith Kellogg going to the Munich Security Conference. Marco Rubio, Secretary of State. Maybe there's something to be said about energy and the industrial complex as well.
What did Macron say yesterday? Plug, baby, plug. Did you see that?
Oh, I didn't see that.
He quoted the president, drill, baby, drill, and he said, we can plug, baby, plug.
I don't think it landed.
It did not land. It was bizarre. It was absolutely. Oh, you can have a look. It's absolutely ridiculous. How does the president of France think that electricity is produced? And does he not think that Europeans need to take a more pragmatic approach to energy production?
It's actually a really good point. I mean, drill, baby, drill is you stick a drill in and you get oil out. Plug, baby, plug. You don't just plug it into the wall and then energy gets created.
And when it comes to energy, who are they going to buy LNG?
Do you think that can continue if you do get some sort of upside surprise in inflation? Or do you think that that is really subject to potential disruption?
It's definitely subject to disruption. I think, it feels like the market, since the FOMC, has traded kind of higher for longer again, which is what we were trading in the first half of last year. That was generally not good for smaller cap stocks. It was not good for lower quality stocks. It was really something that benefited large cap and growth, which is the part of the market that we still think, you should be invested in. So, yeah, I think there is a risk there that you sort of had. The Trump sentiment trade really was, let's get into these smaller cap, lower quality stocks. Unfortunately, those stocks don't work well in a higher for longer environment, or at least the market has told you we're not going to own those in a higher for longer environment. So I do think there's some friction there, and I think that broadening out, if you were to get cuts priced out, especially from an inflation reason, would really be negatively impactful on those types of stocks. Yeah.
From a policy standpoint, if you want to see the market broaden out, do we need to talk more about what's going on the other side of Pennsylvania Avenue, which is the tax cuts, deregulation?
Yeah, I think tax cuts, dereg, are huge. Obviously, just a generally positive growth environment. I mean, the broadening trade, which is something like we're sympathetic to the story behind. The problem is, it seems like there's a pretty narrow range of data outcomes in which that trade can actually work. You need growth to be solid, but it can't be so strong that you're pushing out the rate cuts, because that's sort of a headwind from them from a refinancing perspective. If growth slows down, you don't want to be in the small cap stock. So it's a very interesting trade, and you can tell a nice story about it. We just think there's sort of a narrow corridor of macroeconomic data that it actually works in. And yes, you need you do need tax cuts and deregulation, I think, is a necessary condition.
So it sounds like the market's just treading water. What do you do?
I mean, from our perspective, you want to be in large cap and growth as sort of your core position, and then you need to trade the themes and the sectors that are most impacted by this. The problem is the narrative flips and flops, every day. So it's kind of, I would say,
that's going to be the case for 4 years.
I agree, and John said 4 weeks into the administration. I think it's more like 2, but no, I think that's the case, and people are getting a reminder of what it's like. We highlighted in our weekly over the weekend. Mondays are now back in play. You can't carry risk into the weekend either. So, I think you have to have your core position. I think investors are actively trading event risk. From an options perspective, if things seem calm, you buy options then, because to your point, they're not going to be calm for long. And, I think if I had to highlight one thing that's been really resilient, it's banks. The banks in the financial sector is a part of the market that people are comfortable owning. It benefits from growth. It benefits from dereg. It's domestically facing. It's not going to get tariffed. And he might even allow them to bank in Canada if he gets his way with these tariffs, right?
It's impressive, the run that we've seen in the financials. Weekends are back in play too.
Yes.
No longer at the beach in Delaware, getting things done. It's been so busy the last few weeks. It's been remarkable.
And most journalists now are working weekends, so.
I don't feel sorry for the people who've got to work the weekend after the 4 years they just had.
It's fair. It's a fair point, John.
I'll leave that one there. Stuart Kaiser of Citi is going to be sticking with us. Stuart, it's good to see you. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. The Trump administration has challenged a judge's order blocking Doge from accessing Treasury payment systems. The DOJ argued the judge's order prevents Treasury Secretary Bessent from doing his job. A hearing on a longer-lasting injunction against Doge access is set for Friday. Meanwhile, Morgan Stanley is looking to sell $3 billion of debt related to the X social media platform. The bank led a sale of more than $5 billion of the debt last week, with investors betting on Elon Musk's close ties to the White House. The current tranche is expected to price at 98 cents on the dollar or more and pay an interest rate of 9.5%. The Philadelphia Eagles Super Bowl win over the Kansas City Chiefs drew a record TV audience. Initial figures from Fox show 126 million viewers tuned into the game. That's a 2.1% increase from last year. This was the first time the big game was available on a streaming service. 13.6 million viewers watched via Fox's free service, Tubi. And that's your Bloomberg Brief. John.
Just fantastic numbers, Danny. Appreciate it. Thank you. More from Danny in about 30 minutes. Up next on the program, more tariffs on the way.
We'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips. America's going to be stronger than it ever was before.
There's a lot to play for, that's for sure. Bloomberg's Tyler Kender will break it down live from Washington, D.C. in just a moment. From New York City, good morning.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Chairman Powell coming up at 10 a.m. Eastern Time in front of the Senate Banking Committee. This just dropping from Andrew Honhorst and the team over at Citi. We expect Chair Powell to reiterate that policy rates are in a good place and that there is no urgency to adjust them in today's congressional testimony. So Andrew and the team teeing up a snooze fest a little bit later on monetary policy.
I'd like to find somebody who is not teeing up a snooze fest. If you are not teeing up a snooze fest and think this is going to be a fascinating two-day hearing, please call in.
Anne-Marie is excited about it. In the bond market right now, yield to higher.
I'm not. Just rewatch the Fed press conference.
I don't think anyone thought you were. Up by 3 basis points, but thanks for clarifying. The 10-year, 452.92. Under surveillance this morning, more tariffs on the way.
We're going to be meeting over the next 4-week period. We'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips, all which will bring in a lot of jobs into our country. Cars is going to be a very big one and a very important one. And America is going to be stronger than it ever was before.
There's more to come. Here's the latest. President Trump ordering 25% tariffs on imports of steel and aluminum from all countries. Trump indicating the tariffs could be expanded to impact a range of key sectors. Joining us now from the nation's capital is Bloomberg's Tyler Kendall. So, Tyler, let's start with the latest. The key date for this announcement, I believe, is March 12th. What is the potential for carve-outs? That's a conversation we've had all morning. What's the president said?
Right. Well, good morning, John. We know that President Trump says no exceptions or exemptions, though, as you've been discussing. He did leave open the door for Australia potentially here, citing how they import a large amount of U.S.-made aircraft. But as you said, March 12th is really that date that we're going to be watching to see if any additional calls or visits get added to the White House's docket, to see if any negotiations can get underway. But what is different about these tariff threats compared to previous ones is that they're not necessarily linked to another policy priority for President Trump, such as immigration. Rather, the White House is insisting that this is about rebalancing trade. And what that could mean is that it could make negotiations a little more difficult, particularly as President Trump says that he would like to revitalize these domestic industries. We know that U.S. net imports make up about 4/5 of the aluminum demand in this country, about 1/5 of the steel demand, according to an analysis by Morgan Stanley that we've been citing. And this really is an issue that both sides of the aisle have tried to capitalize on. You'll recall, actually, on election eve, something similar between the two candidates is that they spent some of their final hours campaigning in Pittsburgh, of course, considered to be an epicenter when it comes to U.S. steel production and workers. John, while producers, of course, have largely applauded this move, we'll be watching those manufacturers, particularly those impacted by those downstream tariffs that are now being rolled into this, and whether or not they give us indications on how this will impact American consumers, which could pose politically problematic for President Trump, considering he campaigned heavily on lowering costs.
Tyler, yesterday in the Oval Office, Trump said that reciprocal tariffs are also coming. Any color and detail on when we can expect those and what they may mean?
Right, still waiting on details on that. I will say that Bloomberg Economics, for example, said that emerging economies could be most impacted here. And it's interesting to point out that India's Prime Minister Modi will be here in Washington later this week, is expected to meet at the White House. And Bloomberg News already reporting that that India's top importer of oil is already looking at how they could expand U.S. imports of LNG. That's a similar storyline that we saw when Japan's Prime Minister was also here in Washington last week, saying that they would boost imports of U.S. LNG. So what sort of negotiations could already be underway as we look for these reciprocal tariffs that at this point, President Trump says that no one will be exempted from? I did have the chance to speak to one Republican aide that said when it comes to reciprocal tariffs, these aren't necessarily surprising, considering that we saw President Trump float these universal tariffs, and potentially reciprocal tariffs could be used in a way to kind of make good on that campaign threat of across the board impacting multiple countries.
He's been very consistent about it, that's for sure. Tyler Kendall from Washington, D.C. Tyler, appreciate it. Stuart Kaiser of Citi is still with us. Stuart, if we go back to the first year of this president's first term, we had this synchronized global growth story led by places like emerging markets. This time around, we've started to see Europe outperform again, a rest of the world story outperform a very dominant US story. I just wonder how much longer that can last, given that the tariff story didn't come until 2018 last time around, so we had the benefit of that not existing in 17. This time feels a bit different.
Yeah, the sequencing is definitely different. By the time you were doing tariffs back then, you had already done the tax cuts, so you kind of had that positive kind of story behind you. In terms of European outperformance, I think that has a lot more to do with positioning and sentiment than it has to actually do with fundamentals. European growth hasn't been that great. The earnings growth in Europe is, a fraction of what you're going to get in the U.S. So, I think for European equities to continue to outperform, it really has a lot to do with sentiment and positioning. The positioning seems like it's been cleaned up a little bit. On the sentiment side, obviously, Ukraine has come up as a really big potential kind of driver of that as well. So I think there's still room here, but it's not going to come from fundamentals. It's probably going to have to come from risk premium.
How much are U.S. equity traders pricing in the risk of tariffs?
It's priced. I think it's viewed as, as Amber said, this is ongoing. This is going to be something that happens. Our various tariff baskets have, kind of either sold off or rallied, depending on how you want to look at it. And now they're just kind of in a holding pattern. So I think, the base case coming into me, I thought people were assuming a 10% across the board tariff or something that looked like that once you sort of measured all the pluses and minuses. Week after the inauguration, everything seemed really good. Markets rallied. Then the next week you got, I think, bigger than expected tariff announcements, which really disrupted positioning. So there's an assumption there will be tariffs. I think people initially were hoping it would be better than feared, and now I guess they're really just not too sure. So,
well, and when you say not too sure, I was looking at this Bank of America research piece that came out this morning, and the big question was, is policy uncertainty underpriced? And I was looking at that and thinking, okay, VIX really hasn't broken out. Yes, you're seeing gold reach record highs, but the market has been fairly sanguine. Do you think that there should be more of a pricing in of this inherent volatility and uncertainty that's a feature of this administration?
Not necessarily, to be honest with you. I think what the market is doing is pricing it very locally. You know, there's a premium price for Powell and CPI tomorrow. There's a lot of risk priced in for NVIDIA. In between those days, the market is treating them as quote-unquote normal days. I mean, if you remember back to 2017 was the lowest volatility year we had since the mid-60s, and that was the first year of a Trump administration. So I think the idea that baseline volatility is higher just because Trump is in place, I don't think is correct. I think to get that higher baseline volatility, to John's point, you're going to need the growth data to start to come off. If you have a solid growth environment, then I think what you're going to have is relatively low baseline volatility and a lot of event risk. So I think what that means, you need to own weekend risk. You need to own, economic data risk. If there is a press conference or a vote in the Senate or something like that, you need to own that risk. But day to day, I don't necessarily think it's going to be higher volatility unless the growth stuff starts to crumble.
What does the Fed do with this if they're going to continuously also live in this state of uncertainty? How do they consider cutting, even if the economy is slowing?
Look, I think you guys made a great point earlier. You could have the Fed between a little bit of a rock and a hard place here. You know, if you cap federal hiring, or if you start to get some layoffs, unemployment rate ticks higher, then you've got sort of this inflationary impulse on the tariff side. Yeah, it could put the Fed in a really tricky spot. I think they've been very clear that unless a tariff is announced and implemented, it's not going to be part of their sort of policy outlook. But even Chair Powell's admitted that some members, they'll include a little tariff, just in case. So I think it puts the Fed a little bit between the rock and a hard place if the data evolves in that way. But for now, they're just going to have to, I think, really focus on the data. And then in the background, hopefully they're doing a lot of scenario analysis to deal with it. But yeah, I mean, look, their message is clear. They think, unemployment rate's going to stay about where it is. Inflation is going to be coming down. They're going to get a couple cuts in. And unless and until these are facts as opposed to proposals, I think they're just going to kind of sit on their hands a bit.
It's been really difficult to find out which Fed officials included a little bit of tariff. We've heard from quite a few of them. We spoke to one. They won't give you anything.
Nobody will acknowledge that they were the ones that were pricing in a little bit of tariff.
Why do you think that's the case? They're worried about accusations of political bias? What do you think
Absolutely.
It's about?
Of course.
Yeah, to get truthed, probably, nonstop by maybe the President of the United States,
Do you think we get a little bit of that in this hearing later today and again tomorrow?
I think at a certain point, if the tariff proposals have been floated out there, it gets harder and harder for the Fed chair to say, we don't know what's going on. We can't assume or speculate because you can. You have some proposals. So you have economists at major U.S. banks coming up with scenario analysis and figuring out what that would look like. I'm sure the Fed is doing the same.
Well, not just proposals. China tariffs are in place, and the tit for tat's back in place. So we actually have something tangible that Jay Powell can maybe speak to today.
China's still not in a good place. We heard from the Kering CEO a little bit earlier on this morning. No improvement in Chinese demand, not just for the quarter, for the year. Now we can sit here and say that maybe that's a Gucci problem, not a luxury problem, not a China problem, but that's not a good headline to read about the world's second largest economy.
Especially when you look at sales dropping 24% from 2013 levels, which are 2023 levels, which already were somewhat suppressed. You're right. It could be a Gucci problem, and Anne-Marie can tell you all about the designer kerfuffle and what exactly is going on. That said,
they have big problems.
Hermes
That's a Gucci problem.
Well, Gucci is, the crown jewel of Kering, and when Gucci goes, the whole company goes.
But we get Hermes reporting earnings on Friday. Do you get some kind of repeat of that, given some of the Chinese?
Don't think so. Hermes is in a better place. Personally,
Okay.
that's my
I'm
guess.
down with that. Is that, have you got a price target on a stock? Done? No, okay. Stewie, it's good to see you. Stuart Kaiser of Citi. Up next, David Tinsley of the Bank of America Institute on the state of the US consumer as we count you down to CPI, about 25 hours away from New York City. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Just a little bit softer this morning on the stock market. We're down 1/3% on the S&P 500. On the Nasdaq, we're negative by 0.5. On the Russell, we're down by 0.7 with 2 hours until the opening bell. Let's get you some morning movers with Manus Cranny. Good morning, Manus.
Jonathan, could be a day in which we actually pay attention to tariffs. Here we go. Phillips 66. Elliott mounting their assault on Phillips 66. They already had a position. They've now built that to $2.5 billion. This is Elliott really reaching into the energy sector. Simplify the board. Deliver. They want to push Phillips 66 to deliver, do better. They targeted $3 billion of asset sales. You've only done 2. It's like a school report. Do better, or indeed, Elliott will push you. Meta, you talked about this exhaustive 17 sessions, 17% in 16 sessions, the longest winning streak. It's broken this morning. This one stock has delivered the longest winning streak on the Nasdaq since 1990. Doing a Jack Welch, cutting the bottom 5%. Roll it over, have a look at Coca-Cola. 55 cents is what they made. That beat the street. 3.5-month high on the stock this morning. They raised prices by 9% in the quarter. So we're obviously scaling back at McDonald's, but you'll never script on your Coca-Cola. John.
Manus Cranny, thank you, sir. The stock is up by 3.4%. You noticed the same thing?
Well, this is the 11th straight quarter that that Coca-Cola, has raised its prices by 9% or more in the period. It just highlights how they're making up for pretty slow growth in the volume sales with price increases, and how they're still able to do so, even though we heard from McDonald's that the lower income consumer is being much more choiceful.
This is a part of and I love that word, don't at all. This is a bigger part of the tariff conversation. If the exporters don't take it on the chin, if we find out that this is going to end up with a company that's got to sell on to the end consumer, and they can't ultimately pass it on to consumers, and they've got to put it through margins and then cut costs elsewhere, and then it goes into labour and bad things happen. This is the question we're asking. Are we knocking on the door of the limit of consumer price tolerance or not? Or are we still seeing evidence here and there, and this might be, that perhaps there's still some tolerance still to come?
It's a great question. And is it different depending on the sector and depending on exactly where in the supply chain they end up getting some of the hit? Because you can see with Canadian oil and the pipelines, probably the margins will come in. But with the likes of consumer products, consumers have been conditioned to not totally know what price they're going to pay after the pandemic.
Coca-Cola up by about 3% at the pre-market. On our radar this morning, some top stories. President Trump ordering 25% tariffs on all steel and aluminum imports. The EU vowing retaliation. EU Commission President Ursula von der Leyen saying unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures.
So we don't know what those firm and proportionate countermeasures are. What we do know is things the president gets very frustrated with when it comes to the European Union. One, he doesn't think they spend enough on defense. He doesn't think they buy enough U.S. LNG, which in his first term, I think he called freedom molecules, and he wants to see more of them cross over the Atlantic into Europe. And then third, it's the autos. And you talked about this a lot, Jonathan. This massive gap when it comes to cars imported into Europe that are facing a 10% tariff, while Mercedes, Peugeots, for those random people that might have a Peugeot car in New York, have a 2.5% tariff. And that is the gap? And he said it yesterday, cars, it's coming.
We had a 206 back in the day. Do you know what that is?
I
No?
don't.
OK, we won't pretend we're going to talk about cars anytime soon on this programme. It's a nice vehicle. You mentioned energy, getting lots of comments from the defenders of Macron's energy policy over in France. And I will say, granted, a lot of it comes from nuclear, and the French do not have the problem that the English and the Germans have with energy at the moment, granted. But plug, baby, plug is not going to land. And for the Europeans at White, there is a problem. You mentioned LNG. I think LNG is a very good point. I think it was one of our colleagues who said they'll be pushing on an open door if they want to buy more American LNG, or rather if the Americans want the Europeans to buy it, because the Europeans need it, because of disastrous foreign policy and a relationship with Russia that is totally broken down.
Let's just be clear. We're coming off a period where Joe Biden said you can't export LNG to Europe because that would increase prices back home. And now Donald Trump is saying you guys better buy more. At the same time, I just looked it up. It's Molecules of U.S. Freedom is the new name for fossil fuels that Donald Trump would like to export.
What Emmanuel Macron should have said is, one, yes, we will take those molecules of freedom that are drill, baby, drill, but it's fission, baby, fission.
Yes.
Not plug, baby, plug. Plug, baby, plug makes no sense. Fission, baby, fission would have been better.
Perfect. Do you want to work for the French administration?
No, thank you.
No. And they should address that to the Germans and maybe insert that somewhere into Merkel's memoir.
Yes, there was
that missing chapter that should have been in there.
There was at one point when Germany was shutting down nuclear but restarting coal plants because of this foreign policy crisis where basically enslaving their entire manufacturing industry on cheap Russian fossil fuels.
Going to dig a hole with the Merkel supporters now. That chapter that should have been in the book, like everything I did wrong across 20 years.
Who's next?
That.
Who's next?
No
Macron?
one's next. No, we're done.
Yeah,
We're done.
Angela Merkel.
I try and stay out of British politics. Try and avoid that for the moment. That's
Well,
a very
I think that
sort of...
Keir Starmer is going to be coming to the United States
Is he?
soon. Yeah, so
Yes,
do you want
according
talk
to my
about it?
reporting.
Yeah.
There's a trip in the works.
Was that your reporting?
It was.
Very cool.
Thank you so much.
When's he coming?
Trip in the works, I would say sometime this month, but we have Modi coming up, we have King Abdullah coming today. Potentially the next few weeks, Keir Starmer will be the next one to head into the Oval Office.
Decent start for Starmer and Trump. There hasn't been too much animosity despite the differences in politics, so one to watch.
Is this you playing nice?
That's me playing nice.
Okay, all right, we're going to end there.
President Trump saying Israel should call off its ceasefire with Hamas if all hostages aren't returned this weekend. The president's comments coming after Hamas said it was indefinitely postponing the upcoming release. Trump saying if the hostages aren't returned, all bets are off and let hell break out.
He gave this a time frame. He said by 12 o'clock, and he said, I think that's an appropriate time. On Saturday, he said Netanyahu can go his own way, but this is what my line in the sand is when it comes to Hamas. What was even more interesting part of that news conference is our Jenny Leonard was part of the pool there in the room, and she asked, because Trump has been talking about how Egypt and Jordan need to take in more Palestinians, she asked, well, would you be willing to withhold aid? Because the United States sends billions to Egypt and Jordan every year. And he said, conceivably, yeah, if they don't take in more Palestinians. That is why this meeting today with King Abdullah is going to be very challenging for the Jordanians.
It also raises this real tension for a lot of the leaders in Saudi Arabia and Jordan and some of the other allies of the United States and, frankly, allies of Israel, because a lot of people in their countries are very much for the Palestinian cause. And if they come out and support what Donald Trump is talking about, they could face significant backlash from their own population. So it's a very delicate dance that they're trying to orchestrate here.
Speaking of delicate dances and far less serious, but I think far more entertaining, the OpenAI CEO, Sam Altman, taking shots at Elon Musk after Musk offered to buy the non-profit behind OpenAI for $97.4 billion.
OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode. He's probably just trying to slow us down. He obviously is a competitor. He's working hard and has raised a lot of money for XAI, and they're trying to compete with us. I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this, and we'll try to just put our head down and keep working.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy. I don't think he's like a happy person. I do feel for him.
This got deeply personal. Fantastic job by our reporter, Tom McKenzie, out there on the ground over in Europe interviewing Sam Altman, getting more and more personal as the days and weeks go by for these two individuals. He was pressed in that conversation by Tom about Elon Musk's close relationship with Donald Trump, the president, and if it's something that he should be worried about. And he basically responded, I'm not, but maybe I should be.
Yeah, well, Or not, because think about what happened at inauguration. Elon Musk was there clapping, taking videos and selfies behind Donald Trump at the Capitol in the rotunda. Where was Sam Altman? He was in the overflow room. He wasn't there center stage. But where was he the day after inauguration? In the Roosevelt room, standing next to the president announcing Stargate, something that I imagine Elon Musk would have loved to have been a part of.
Still very much on the inner circle, that's for sure. Look out for the full interview on Bloomberg.com, and of course, if you are a subscriber, on the Bloomberg terminal as well. Elsewhere, the US consumer in focus ahead of CPI data due out tomorrow. David Tinsley and the team over at Bank of America writing, we saw some chills in January's consumer spending, but saw no serious shadows. Spending per household was up a solid 1.9% year over year. I'm pleased to say that David joins us now. David, welcome to the programme. Let's talk about the consumer in America and some of the headwinds that we thought would be in the data over the first month of this year. We had the LA wildfires. We had a very cold snap across the East Coast through January as well. David, do you see that in the data at all?
We do. I mean, what we see is that on the month, card spending dropped 0.4% over the US as a whole. But when you look across the regions, it was the South where we had particularly cold, chilly weather, which saw the biggest drop. That was down 0.9. Not so much of a story in the West. That was actually pretty much flat. But I think, yeah, basically, the dip in consumer spending in January is more or less a weather story. And if you look past that, I think we're still in pretty good shape.
David, do you see any shadows hovering over the creditworthiness of an increasing number of consumers at a time where they're eating into their savings and you're starting to see on the margins credit card delinquencies creeping up?
Well, we do see cost pressures, which do affect, a lot of consumers, and then obviously acutely some consumers in particular. So in the report today, we're focusing on auto loan repayments, and the price of used new cars has risen a lot. Obviously, the loan charges, the interest rates are well up on where they used to be, and payments across all generations, they're rising upwards of 5% year on year, bit firmer for younger millennials, I guess, as they kind of trade up in terms of their car they're owning. So there are those pressures away from cards, away from card spending. And I think, that is part of the story that for just some households, that's a little too much. But by and large, the household sector is in good shape.
Are you getting the sense, David, that a lot of consumers are pulling back if prices go up to a certain degree, that they are feeling a bit more strapped, and you're not going to see the kind of acceptance that you saw in 2022, for example, or 2023, when it came to some of the price hikes going around?
Well, that's a good question, and we're going to keep looking for that. I would say right now the answer is there's not a lot of sign of that. So we did see an increase in grocery spending out in our data in January. And obviously we've seen so many stories around coffee, juice, orange juice, eggs, of course. So there are these cost pressures out there. And then, of course, tariffs adds a dimension in that story as well. And in the surveys, we've seen some consumers, really flagging price pressures particularly in durables and cars. So I think it's not obvious we're seeing that in the hard data yet, but we're certainly looking closely from here.
Yeah, you say no chills, no serious shadows. At some point, then, what do you consider the tariffs to be? Because we see some American consumer sentiment, like University of Michigan, saying there is a little bit of concern about maybe inflation ticking up because of things like tariffs.
Yeah, quite right. I mean, there is some concern over inflation ticking up. I guess what I'd say is, the US labour market is in pretty good shape across all generations. Earnings growth, after-tax earnings growth in our data is solid, growing at, sort of upwards of 3% year on year or so. So I'm not dismissing, the risks out there, and the tariff situation is confused and confusing for us and for consumers, no doubt. But I think right now, until that crystallises, that risk crystallises, consumer spending looks pretty solid.
David, you alluded to this. I just want to finish on it. Credit stress, of course, rates are staying higher for a whole lot longer. Do you see any signs of credit stress emerging anywhere, maybe beyond the auto sector?
Well, I'd point to what, the New York Fed publishes there, and we have seen this rise in delinquency rates that the New York Fed cites for cards and for autos and stuff. So there are, around the picture, elements of credit stress. But I think for consumers as a whole, strong labour market growth, elevated savings and deposits, that's still translating into solid spending growth. So I think by and large the situation is solid.
Let's hope it holds up. David, appreciate your time, sir. It's good to see you. David Tinsley there of the Bank of America Institute out of London this morning. We've all been surprised by how well this has held up over the last few years. The fact that we got interest rates to where we got them, we've only come back down 100 basis points, and still we're only talking about pockets of credit stress. We were thinking about way more than pockets of credit stress if rates had to stay this high for this long.
We have to go back to what happened during the pandemic, which was essentially a terming out of U.S. consumer and corporate debt, and all of that debt being transferred to the government balance sheet, right? I mean, that was essentially what happened, which made the economy a lot less interest rate sensitive. It raises a question about whether, going back to this whole idea of restrictivity, are we seeing restrictive rates at a time where consumers are managing through and Coca-Cola can raise prices by another 9%?
How much longer can we do this for? Apparently longer, based on what we're hearing. Equity futures right now in the S&P negative by 0.25%. With an update on stories elsewhere, with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. Despite President Trump's insistence on zero exemptions for newly imposed tariffs on steel and aluminum, one country may get a carve-out. Australia's Prime Minister, Anthony Albanese, says that he made the case for an exemption in a phone call with Trump and says that the president agreed to consider it based on America's trade surplus with Australia. Elsewhere, the Trump administration has ordered federal prosecutors to drum their case against New York City Mayor Eric Adams. A memo sent by a high-ranking DOJ official claims the case against Adams was politically motivated. Adams was charged with accepting illegal campaign donations and taking luxury travel upgrades from Turkish nationals. He has pled not guilty and denied any wrongdoing. Coffee prices have climbed to a new record high as supply concerns continue to grow. Prices have more than doubled over the past year with tighter supplies from top grower Brazil. Roasters are warning that prices for consumers could jump in the coming months. And that's your brief. John.
Danny, thank you. Our columnist Javier Blas has done a fantastic job over the last few months covering that story, so check out his work if you can. On X, on Bloomberg.com, and of course on a Bloomberg terminal. Up next on the programme, the EU snaps back.
I am certainly looking to see if kind of Europe is willing to do this. One of the big concerns that I hear from them is that maybe they offer up something and then Trump embarrasses them, which is absolutely part of the negotiating strategy.
Kit Jukes of SocGen joins us on the other side from New York City. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or sorry.
My voice and my conversation, my poetry, you know.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Euro dollar down for 3 consecutive days coming into today's session, bouncing back by 0.2%. The euro at the moment at about 103.26, with a lot of tariffs to think about in the coming weeks. Under surveillance this morning, the EU snaps back.
I am certainly looking to see if kind of Europe is willing to do this. One of the big concerns that I hear from them is that maybe they offer up something and then Trump embarrasses them, which is absolutely part of the negotiating strategy. If a country makes a deal, can they actually see Trump follow through with this, or does he come on top and do something different, which makes it hard to want to be the first one that lines up and tries to do something to stop this?
So here's the latest this morning. The European Union vowing a response to President Donald Trump's 25% tariff on steel and aluminum imports. European Commission President Ursula von der Leyen saying, quote, unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures. On this and more, Kit Jukes of SocGen joins us now. Kit, welcome to the programme, sir. Let's talk about this, the tariff war, and how much this is putting a lid on the euro and the FX market at the moment, from your perspective.
There's no doubt it's just something else putting the lid on it. We don't have enough growth. We don't have enough political momentum, whatever the right term for that is, here, and we have interest rates that are going to go on falling. But the biggest thing of all, frankly, is the growth differential between Europe and the United States. It's not getting smaller at this point in time. So this is going to hurt Europe as it goes through, for sure, in terms of competitiveness, and the European economy doesn't need it. So, yeah, we'll see where we go, but there's not a lot of reasons to make you buy the euro that come from Europe. Maybe after the German election, something changes. But until then, it's really just a question of how much stronger the US can make the dollar.
Which is ultimately the real question, Kit. And we saw that steady march upward, stronger at the end of last year, but it's faltered. The strong dollar trade has faltered in the past month or two. Part of this is just because people are worried there is no more oxygen left up at the top. Is that your view, too, that we're kind of bumping up the limits of dollar strength?
Yeah, I mean, look, foreigners own $65 trillion worth of U.S. assets at this point in time, which scares me enough on its own. The U.S. net international investment deficit is $23.6 trillion. So we European savers are all in on U.S. investment because you've got higher rates, faster growth, more attractive investments. How much more can you throw at that? Equally, 0.95 on euro-dollar was the level we reached in the middle of the biggest terms of trade shock that most of us have ever seen, and the first land war in most of our lifetimes. So 95 feels like an incredibly strong dollar, and we've just edged closer, and we can't quite make it. My fear is that we sort of nudge up against it, and each day I say we can't go that much further. But that's sort of where we are now, which is strong, staying strong. The picture doesn't change a great deal. The European side of the equation needs probably political change, economic momentum. Let's see if that comes from the German elections. And then we wait for one-off events like, a possible solution to the war in Ukraine and things like that can help. But in the meantime, we don't have enough growth. We don't have enough growth to not cut interest rates here, which Jay Powell may say the U.S. has enough growth not to cut interest rates much or at all. And we wait and see. And yeah, there's nothing special about parity. but we are just kind of, trading in a very, very, very low range for the euro.
So treading water as we await some sort of shift in the narrative on one side of the Atlantic or another. How much as a currency strategist are you focused on gold as sort of the other part of this story?
I bought my wife another gold necklace for Christmas because this is just so much thing to. I don't own enough gold. I don't come close to owning enough gold.
Necklace? Why didn't you get her a bar?
I've got to jump in, Kit. Does your wife know that you buy her gifts with a store of value in mind?
She was a political journalist at one point in her life, so she's pretty wise, and she knows what I do for a living. So
she sees right through it.
She likes it. She's fine with that. But yes, I should have been buying bars ages ago. It's the gold story in this particular environment is going to be pretty compelling, particularly, starting from the moment that the U.S. effectively, I don't know what the right term is, but weaponized the dollar in terms of, wanting to challenge people who do things they don't approve of. So there's more demand for gold at the moment than there is supply. There's enough inflation concern to keep it bid. I am not a gold expert in a million years. Otherwise, I would own more. But yes.
Well, Kit, you'll have another chance at
things.
getting your wife maybe a bar this Friday for Valentine's Day. But I would love to know, from your perspective, the upper range of where we could see euro-dollar trade if there was a swift response to ending the Ukraine war, especially as we have the Munich Security Conference and we have Keith Kellogg going over to Ukraine.
I think we'd get back up into the teens quite quickly, so back above 110, well, somewhere between there and 115. That seems pretty plausible to me on that event. I think if you want to get back to 120 and areas like that, we need to change the relative growth story. The US has got higher neutral rates, it's got higher trend growth. So all of those things are why euro-dollar's been coming down ever since the Fed started normalizing policy more than a decade ago. But Ukraine, back in the teens.
Kit, appreciate it, sir. Say hi to Mrs. Jukes. Kit Jukes of SocGen. I hope she's not watching. Not this morning, anyway. Kit, appreciate it. Thank you very much. Sure, it would sort out sentiment without a doubt. And Kit makes the argument that the euro would get back to the high teens. But the growth story, it's not going to address the energy issue beyond France. It's not going to help Germany. Unless you believe that if you manage to settle this war, that energy and energy trade begins to normalise, whatever that word means. I just don't see how it gets easier. Talk to people in Germany trying to set up a company right now, relying on the price of energy at the moment, which is just so expensive in certain parts of the continent at the moment.
Absolutely, so expensive. And when it comes to going back to normal, what does that even look like? There's sanctions on Russian energy. Do they then try to do deals with Russia once again? Does Nord Stream come into play? It's very unclear and doesn't look likely, at least at this moment.
But to Kit's point, just from a sentiment perspective, yeah, without a doubt, it would unleash some euro strength. But growth differentials, that's the key. You've got to close the gap between Europe and the US from the growth side.
And it's unclear exactly who or how they could do it, given that the government is sort of up in question in a number of these economies.
Yep. Up next on the programme, we'll catch up with Sinead Colden-Grant of BMY, IBM CEO Arvind Krishna in just a moment, and we'll speak to ITR Economics too. And Sarah Malik of Nuvi from New York City. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much, we want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had
hogs.
kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be
Bitcoin.
a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd
is.
be my feet in the sand and a beer in my hand.
Don't miss the next Open Interest.
Ultimately, stocks have been a bit unsteady over the last couple of weeks, so volatility certainly is part of that discussion.
We are a little concerned that there might end up being some negative economic effect because of all this uncertainty.
The good news is that not only has the market been fairly resilient, but the breadth within the market has been quite impressive too.
The U.S. is still front and center, so I think staying as domestic as possible is going to work.
We could see investors step back a little bit. That might give you an opportunistic time to come into the market, a time to really kind of step in to that weakness.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The opening bound 90 minutes away. The third hour of Bloomberg Surveillance starts right now with equity futures near session lows, down about 1/3% on the S&P 500. Likewise on the Nasdaq 100, just a little bit softer there as well. We're down by 0.4, down by close to 0.5 on the Russell 2000. We'll keep returning to the calendar. The calendar for the next few days looks a little something like this. In front of the Senate Banking Committee later on this morning, the chairman of the Federal Reserve again tomorrow. So a double dose of Chairman Powell. He'll be in front of the House Financial Services Committee on Capitol Hill tomorrow morning. Before we get there, the big one tomorrow morning, CPI, then PPI on Thursday, then retail sales on Friday. And a major focal point, not just for Lisa anymore, but I think for all of us, the amount of debt supply we get this week. Might not be dramatic this week, but it's one to watch for the year ahead, that's for sure.
Especially when paired with CPI and this fear that maybe inflation is just starting to creep up a little bit in all the wrong ways, whether it has to do with eggs and coffee or whether it has to do with steel and aluminum. A real question here about at what point some of these auctions start to falter as people really try to game out the ungameable. Right now, pretty sanguine. And yet, this is something that we'll be watching going forward.
It's ungameable because it's uncertain, and the market is viewing some of this as potentially a negotiating tool, but potentially it's not, which is one area where I think senators could press Jay Powell on and representatives tomorrow. The Chinese tariffs, the 10%, went into place. So yes, he clawed back a pause on Canada, Mexico. We're awaiting whether or not March 12th, the aluminum and steel are going to come on. We're waiting for the reciprocal ones. When it comes to China, those are in place, and maybe they can get something different from Jay Powell than what we heard from the press conference.
For the bond market specifically, a lot of investors that we've spoken to over the past week or so have taken some comfort from the words from Secretary Bessent over the last week. If you look at the bond market, and let's just take 10-year yields, look at the whole curve, Front end's one story, back end's another. 10-year yields have fallen for 4 consecutive weeks. Yields have actually dropped as these tariffs have gone on. As the threat of additional tariffs have come forward, yields have actually been falling, not rising.
Scott Bessent is more important right now to the bond market than Fed Chair Jay Powell. And that, I think, is something that we've seen again and again, where he said that he looks at that 10-year Treasury yield. I'm more interested, actually, in the yield curve shape. The idea that in the short end, you see this idea of increasingly pricing out Fed rate cuts this year as you do get stickier price pressures for a variety of reasons. Longer term, it's less of an issue. And now it just goes to a growth story, to your point, and about whether this really starts to impede that expansion story.
Polar opposite at the end of 24. Exactly. We've had a curve flattening to start the year, that twist that you described. At the end of last year, we were talking about a steepener. Lots of deficit spending, maybe inflation picking up, 10-year yield starts to pick up. Middle of January, where were we? 480? Dropped back since then, back into the 440s briefly.
If we've got Fed Chair Scott Bessent coming out and saying that he targets the 10-year Treasury yield and that that's more important than the overnight rate that the Fed actually looks at, and if he's talking about the importance of not letting it get out of control and that he's not going to issue more debt on the long end, that's going to quiet a lot of people who had concerns.
If the president's watching this morning, you might think Fed Chair Scott Bessent's got a ring to it. You know, maybe that works.
You know, wait a week.
Maybe in the future. Maybe, who knows? Equity futures right now in the S&P, negative by 1/3%. We begin with our top story. Trade tensions escalate.
This is the beginning of making America rich again. We were being pummeled by both friend and foe alike. Essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States.
The EU snapping back. The European Commission President Ursula von der Leyen saying unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures. Your team coverage starts right now with Bloomberg's Tyler Kendall in Washington and Ollie Crook in Berlin. Tyler, I want to come to you first of all. Share the date with us for when this is meant to happen and how avoidable some people think it might be.
Well, John, the date that we are looking for when it comes to the steel tariffs is March 12th. We're going to watch and see if any calls or visits get added to the White House's docket ahead of that date as these countries try to potentially look into some negotiations here. Now, we know the Trump administration often outlines 3 key uses when it comes to tariffs as a revenue raiser, a negotiating tactic, and rebalancing a trade. It is clear that the White House at this moment is trying to push that latter use as these steel tariffs start to come into play. Now, we're looking for potentially other tariffs to come into play here. March 12th is in 4 weeks. That is the same timeline that President Trump last night outlined in the Oval Office, that his administration could be looking into some other targeted tariffs against industries like autos, pharmaceuticals, and chips. And then also, of course, we are waiting on any news when it comes to potentially reciprocal tariffs that could be on the board. Last night, President Trump saying that it is simple in his view that, quote, if they charge us, we'll charge them. Again, likely not leaving open the door here when it comes to exemption. So still a lot of big questions, John. But one thing is for sure, this is moving relatively fast when you think about how President Trump's pick for Commerce Secretary, for example, Howard Lutnick, who he says will have purview over trade. Also, his USTR pick, Jamison Greer, have yet to be confirmed by the U.S. Senate.
We're only going into the 4th week. I keep repeating that. Ollie, I want to go back to that quote from the EU Commission President. Unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures. Ollie, will they wait? Will they wait for reciprocal tariffs? Will they wait for the prospect of auto tariffs as well? How quickly is the EU willing to move?
Listen, I think the EU has been playing a very long waiting game when it comes to Donald Trump, and that's why their response is they're stressing that issue of both firmness but also proportionality. They want to see what is in the mind of Donald Trump. Again, every negotiation, as we know, begins with the price. The price that Donald Trump has set for the Europeans has not yet been disclosed. It could be any number of things, whether it's NATO spending at 5%, whether it's buying more fossil fuels. Could it be something around antitrust and not regulating U.S. companies more? Could it be something around Greenland? They really don't know. So I think what they want to do is understand first what it is he is after and what they are willing to compromise with. I think that part of the issue that the Europeans have is the issue that many of the other nations, the other trading partners are having with Donald Trump, is that if you do get these concessions and you get a delay to these tariffs, what is the sort of guarantee that this won't go even further next time and try to extract more? And that is going to be front and center for the Europeans. Again, steel is a relatively small amount of the trading relationship with the United States. Again, what Trump is trying to do is close that trading discrepancy. There is a $230 billion surplus from the EU and the United States. You know, steel, the biggest one that sells to the United States is Germany. It's about $3 billion. But again, this is going to be front and center, John, when we head down to Munich in just a couple of days, the Munich Security Conference, because that is going to be the first high-level meetings between the Trump administration, Marco Rubio, J.D. Vance, Keith Kellogg, and the rest of the Europeans here in Munich.
Can't wait for your coverage of it. Ollie, thank you, sir. Ollie Crook over in Berlin, Tyler Kendall in the nation's capital. That word justified. The North Star, you said it earlier on the programme. I think you're just dead on. The North Star for the President of the United States is, OK, show me a deficit. How big is it? You're running a big surplus with us? We've got a problem. We need to do something about that. That's just the start. Do you equalise the average weighted tariff? Is that how you reciprocate? I don't think so. I think it goes product by product. If you listen to the President, he's talking about autos. It bugs him. He wants to do something about it. Whenever he talks about tariffs to the Europeans, he always goes back to autos. And for the Europeans at the moment, as we know, we've said repeatedly on this programme, they're putting a 10% tariff on US autos. On the other side, the Americans have got a 2.5% tariff. Now, when I hear words like justified coming from the European side, the President can come out and justify that. And I'm not sure what their response would be. What would their response be?
Well, they'll have to come up with a response line by line by March 12th, well in advance of March 12th. The time frame is very short to get some sort of agreement if they're going to go line by line and come up with some new agreement and then figure out how to implement it at a time where you need to change shipping lanes, you need to understand how to increase production, you need to understand who's going to sell those vehicles. There's a whole ecosystem that goes around selling any product that has to get beefed up in order to meet some of the requirements that might be necessary for some of the provisions.
There is scope for negotiation. It's not all bad news. There's one obvious place, and it started as soon as the President won a second term. LNG. The President wants to drill, baby drill. He wants to sell energy to the rest of the world in a way that President Biden did not. OK? That's the starting point.
And it happened immediately.
Ursula von der Leyen said what? Straight out of the gate.
Straight out of the gate. It wasn't even inauguration. It was after Trump won the election. She said, well, maybe we can buy some more American LNG. That was within 48 hours of Trump being elected because they know the pressure points. It's energy, it's autos, and it's defense, which is why the Munich Security Conference, as Oliver noted, is going to be really important this weekend.
Let's get to the market conversation. Joining us around the table, Sinead Colden-Grant of BNY. Sinead, good to see you.
Good to see you too, John.
Is this a problem for the market? Because at the moment, equities are doing OK, taking this in its stride. The DAX in Frankfurt, Germany, is up by something like 10% so far this year. Is this a problem?
Well, there are a couple of things that I think we need to focus on here. The first is, and our view has always been China would be first when it came to tariffs, and we've seen that. The discussion on tariffs with the EU in particular, think about autos. Not all European autos are actually manufactured in the EU. A lot of them are manufactured here. It is a very big pain point when you consider what's actually happened to, for example, the German car industry, where they've seen such an influx of vehicles from China. They didn't have any tariffs in place, and the industry has, well, let's not say decimated, but it's been very badly hurt as a result. But look, there's been a lot of talk. We had tariffs for maybe a couple of hours on Mexico and Canada, and then they were lifted. There were more negotiations. We need to wait and see exactly what the details are here.
Are you basically saying that you would count all tariffs that are threatened against trading partners other than China as more smoke and mirrors than actuality? That seems to be how the market's treating it.
For now, I think that is the appropriate response because the details really matter here, right? They'll have sector impacts, they'll have individual name impacts. But we also want to think through to what it means for inflation potentially and how big of an impact could that be? Because as we've seen and are seeing, the last mile of inflation getting back down to that 2% is really hard.
How would you know if this is just a one-time hit or it's more pervasive when it comes to inflation? Because a lot of the criticism for people who say tariffs don't work and it means longer inflation, we'll look back to Trump 1.0 and say, well, the Fed took it on the chin as just a one-time hit.
It's complicated. So there are a couple of things that can temper the impact. The first is last time round, we actually saw individual companies decide to take the impact of tariffs in their profit margin. So that's one way it can be dampened. We've got a pretty strong dollar that immediately mutes the impact. And then lastly, if consumers start to buy more domestically produced goods and you see that substitution effect, then the impact of tariffs is lessened.
We've covered a lot of ground in the last few minutes or so. Chairman Powell, absent from the conversation for the last 15 minutes. What are you expecting from him on day one and then again on day two? Is this a big event for you?
Look, we always listen to what Powell says because sometimes it's not what he says, it's what he doesn't say. The thing that we're really interested in is any commentary around how they're thinking about the timing of cuts. Because, look, they still do have an easing bias. They're going to be more data dependent. And tomorrow's CPI print is going to be really important because, look, a lot of companies just raise prices in January.
True. In some ways, maybe tomorrow's more interesting. Once we get that CPI report and then we hear from him in front of the House.
How he characterizes it and exactly what the metrics are, what the benchmark is for them to feel confident enough to cut rates. Does he essentially indicate that rate cuts are becoming a more remote possibility in 2025?
I'm not going to criticise everyone in the House, but sometimes the questions in the House are of a different calibre to the questions that take place in the Senate.
So we've been to
There's an upper chamber and there's a lower chamber for a reason.
All I know is that we've insulted the French leader,
no.
the German leader.
Not insulting everyone in the House.
But then the House, a different caliber.
A different caliber.
Yes, well, it's look.
Chairman French Hill is going to take issue with this tomorrow.
No, he's a good friend of mine, and I've got a lot of time for the chairman of the House Financial Services Committee. I'm just talking about
the pet projects.
Other individuals in the House that have pet projects. Exactly.
And so you start asking him about, you know, one program in this town.
Yeah, they want to make a YouTube video,
right? And then
send out to constituents.
And we all agree.
It'll get much worse as we get closer to the midterm elections.
So this might be a good one. We'll see. Sinead Colin-Grant of BNY. Sinead, appreciate your time. Thank you. Let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. President Donald Trump has officially pardoned disgraced ex-Illinois Governor Rod Blagojevich. In 2008, Blagojevich was accused of turning Illinois' government into a money-making operation for himself by trying to sell the U.S. Senate seat vacated by former President Barack Obama, amongst other things. He served 8 years in prison before Trump commuted his sentence during his first term. The president also made comments about his vice president. Trump told Fox News that he's not ready to name Vance as his successor, saying it's too early to make such a determination. He said Vance is very capable and that he's done a fantastic job so far. A group of investors led by Elon Musk offered to buy the nonprofit that controls OpenAI for $97.4 billion. OpenAI CEO Sam Altman responded on Musk's X, saying, "No, thank you." Speaking to Bloomberg earlier this morning, Altman fired the latest shot in the war of words between the two.
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's like a happy person. I do feel for him.
As of yet, no response from Elon Musk. And that's your brief, John.
So odd how personal that got. So strange. Danny, thank you. Up next on the programme, the Morning Calls Plus, the IBM CEO, Arvind Krishna, at the World Government Summit in Dubai. We'll catch up with Jemana Pasechi in just a moment. From New York City, this is Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equity futures a bit softer. We're down by 1/3 on the S&P 500. The opening bell 1 hour and about 13 minutes away. Let's get you some morning calls. First up, JP Morgan cutting its price target on Dow to 150, citing concerns around increasing margin pressure. That stock's down 1%. Your second call from Citi raising its price target on Walmart to 120, saying it expects fourth quarter earnings to beat expectations after a strong holiday season. That stock is up by 1/3%. And finally, Oppenheimer initiating coverage on IBM with an outperform rating, expecting double-digit revenue growth in its software portfolio. That stock is up about 1/4%. Let's stick with IBM. Let's head to the World Government Summit in Dubai, where Bloomberg's Jumana Basechi is with a special guest. Jumana, over to you.
Guys, thanks for that. Yes, so joining me right now is the IBM CEO, Arvind Krishna. Great to have you with us here at the World Government Summit in the UAE, of all places. Look, I just want to start off with a question that I think is dominating the discussions these days, and that is vis-a-vis artificial intelligence. You can't be a U.S. tech company these days if you're not seen to have a growing presence in AI. How does innovation keep up with demand for a company like yours?
Look, I mean, innovation is our lifeblood. Let me start there. And I do think that AI is a transformative technology. So no company can be in tech without having to play a role in AI. If I look at the role that we want to play, we are focused on the B2B market. So we do not want to do B2C. So B2B means you've got to take advantage of an enterprise's private data. Here's a shocking statistic. Only 1% of enterprise data has found its way into any form of AI model so far. So that is the unlock that we want to do. And as we bring that private data into models, whether it's used to refine models or to construct unique use cases, it unlocks a huge amount of value for the enterprise.
Yeah, how has the arrival of DeepSeek disrupted the landscape for generative AI? Because it's a model that was produced with a much lower cost, but also equal utility as some of the larger language models. Is this a major game changer, do you think?
Actually, you see me smile because I think it's that validation. We've been on this point for a long time that you do not have to spend so much money to get these models. If you're willing to make fit-for-purpose models, we do believe that the cost should be in the millions and not in the hundreds of millions. And so how do you begin to distill models down to smaller sizes, get them unique for a purpose, and then run them at 2 to 3%, so 30 times cheaper than the big models, but as accurate and as good for a domain-specific task?
Do you think that, therefore, there could be a day of reckoning for some of these big tech companies spending billions and tens of billions, even $100 billion on CapEx spending plans these years?
That's probably beyond my ability to compute. Is it a day of reckoning? But I can tell you that we're going to find that the usage is going to explode as the cost comes down. So maybe there's enough quantity increase that all of it maps out in the right way.
Yeah, you've always been a big supporter of open source models. And I just wonder, in the case of DeepSeek, whether that actually served as a reason for the disruption to take place. Would we not have seen a DeepSeek come to the market had there not been open source models?
No, I don't believe so. Because there are enough large models that people are building, not in the hundreds, but definitely in the tens. And it's hard to imagine that there's an ecosystem which doesn't have a large model to start from. Look, ideas tend to spread. This has been true for 2,000 years. People have written about this. Once there's an idea, it gets penned down, the idea spreads. Once an idea spreads, smart people everywhere can copy it.
Yeah. Let me ask you a question about regulation. I started off the interview asking you whether innovation can keep up with demand. Do you think regulation is actually keeping up with the innovation that we're seeing in artificial intelligence?
I'll actually go the other way around. Too much regulation early stifles innovation and then doesn't allow those companies and those nations where the regulation is heavy to succeed. We can always look at the example. I think that the EU is very good at lots of things, but sometimes the over-regulation is an inhibitor on innovation. And I think we should balance that. I think that balance is incredibly critical. And I talk about precision regulation as opposed to sort of blunt force regulation.
Yeah.
So be precise and take a risk-based approach where only the most risky activities are regulated. So in AI, that becomes the use cases. So yeah, be more careful around life or death activities, but allow innovation in customer service, in productivity for your programmers, in terms of what we're going to do around improving the customer experience, but maybe be more careful in life or death activities.
Yeah. Let me just ask you another question, which is also very important in the context of tech innovation, and that is the rise of quantum computing. I thought it was really interesting that in your Investor Day just a week ago, you said, well, you updated the quantum computing roadmap, and you said that your aim at demonstrating the first quantum computer by 2028, that's only 3 years away. People are a bit skeptical that that can be achieved in that
First
timeline.
fault-tolerant with error correction quantum computer in 28.
Yeah.
We actually have 13 quantum computers on the cloud today, actual quantum computers, over 100 qubits, so not toys, really serious quantum computers. But we believe we're going to be on the roadmap to do that by 2028, and that is a commitment that we did make. But I also believe that quantum computers are going to unlock a lot of value. We think about $500 billion worth of value for our customers by the end of this decade. That's exciting. Materials, climate change, carbon sequestration, better fertilizers, better batteries, exciting areas.
Yeah, do you feel that because the world is so focused on one thing at a time, and this time, it's generative AI, we're perhaps not focusing enough on how quantum computing is actually going to disrupt our day-to-day lives? What are we actually looking at in a few years' time?
We can do our work, and when we get there, it'll be a moment, and that moment is going to be important. Our customers are pretty focused on it. We have 280 people, different companies and organizations who work with us on algorithms. The state of Chicago, Illinois in the United States just announced the National Quantum Algorithmic Center, where multiple universities, startups, large companies, national labs all play a role. They'll be running on our quantum computer. They'll probably get others as well if they exist and do that. I think that's the excitement that is there. But the fact that 280 institutions all around the world are busy learning how to use them tells me they'll be ready.
Yeah. Well, we're here in the UAE, and I know that you were in Saudi Arabia recently as well. What opportunities are you seeing in this part of the world for AI growth and growth in your business?
We are very bullish about our business in both these nations, both in Saudi Arabia and in the UAE. I think the appetite for digital innovation, both for government services and for the private sector, is incredible. I think both nations have woken up that tech can be a big part of their economy. If you look globally, it's 4 to 5%. I think both these nations want it to be 10%, and they're investing appropriately. And you can look at the services that are there in both countries that are enabled by technology. Their appetite for AI is massive. You look at the investment that is done in the UAE around MBZ UAI, around some of the Falcon models. You look ditto in Saudi Arabia, and you have the universities, and you have the Alarm model. I think that speaks for itself.
Yeah, well, I'm sure we'll be seeing a lot more of you in the region then. Arvind Krishna, really good to chat to you. Guys, I'll hand it back to you. That was the IBM CEO speaking to us on the sidelines of the World Government Summit here in Dubai.
Hey, Jumana, thank you. Appreciate it. Jumana Basechi there alongside the IBM CEO, Arvind Krishna there. Lots still to come. A little bit later this morning, Chairman Powell on Capitol Hill in front of the Senate Banking Committee. In just a moment, we'll catch up with Lauren Seidel-Baker of ITR Economics and Sarah Malik of Nuveen. From New York City, this is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
60 minutes until the opening bell. Equity futures at the moment just a little bit softer. We're down by 0.4% on the S&P. If you check out the Nasdaq 100, we're down there by 0.6. With some movers going into that opening bell, let's cross over to Manus Cranny for more. Morning, Manus.
Jonathan, good morning. You've got a nice bid for Phillips 66, the oil services company. Here you've got Elliott that took a chunk out of BP. Yesterday, a sizable position. Today, they're putting more pressure on Phillips 66. Deliver. We took a stake in you at the end of 2023. You made us promises. Step up, deliver to the plate. Step up and deliver the $3 billion worth of cuts that you promised. Coca-Cola, 55 cents, double nickel on the earnings. Stock is up 3.5%, 3.5-month high, raising prices by 9%. Nobody's looking cheap in the Coca-Cola shelf. Kellogg's, where are you on your cereal? Do you go brand or not? Right now, Kellogg's deliver a much better earnings per share on an adjusted basis, 42 cents. But they're talking about a challenging environment. The higher prices that they are charging are not translating to more consumer buying. So it's a bit of a conundrum on the high level of the earnings per share versus the challenges that they see in the market. John.
Manus, that stock is up by more than 5%. Manus Cranny there, appreciate it. As we anticipate the opening bell at 9:30 Eastern Time, shortly after that, in front of the Senate Banking Committee, you will hear from Chairman Powell. Volume 1, Volume 2 is tomorrow in front of the House Financial Service Committee. Joining us now is Michael McKee, our economics and policy correspondent, for more. Mike, you're there. What are you looking out for?
Well, we're basically looking for Jay Powell to do a sort of greatest hits version of his oldies and not make a lot of news today. That's going to be the goal. He's basically going to be talking to the markets, talking past the president, talking past the members of the Senate, and trying to make sure that the markets realize that nothing is going to happen very quickly, and he doesn't want to move things around a lot. Obviously, he's going to be asked about the path of monetary policy, doesn't want to give a long-term forecast, meaning doesn't want to forecast anything longer than tomorrow, because they really don't know the details yet of what the president is going to do, all of them together, and what the effect on the economy is going to be. So his message is going to be simple. We're in good shape where we are with interest rates. We can go up if we need to. We can go down if we need to. And right now, the economy's in good shape, so we don't need to. We can sit here and try to figure things out. One thing I would point out to you in terms of market coverage of this is, of course, watch the dollar and then watch inflation break-evens over the next few days. We've seen the University of Michigan inflation expectations number jump over a one-year period. 1 year and 5 year market break-evens have also jumped over the last month, and markets are getting nervous that the Fed may not be able to hold out and might have to actually raise rates. Powell will maybe try to talk them down off of that.
Mike, Jay Powell has been incredibly practiced at dodging questions on tariffs and his response to different policies coming out of this administration. He's been less tested on what his view is on regulating the financial sector at a time where this administration has aggressively already made moves to deregulate a lot of the banking oversight. Do we have a sense, Mike, of how Jay Powell could respond to questions about whether they're on board with that and are doing similar moves on the Fed side?
I think he's going to talk about the strength of the banking system and the fact that it's in good shape and that they are reviewing what they should do. But with Michael Barr's resignation as vice president for supervision, the Fed said they were going to hold off until somebody is appointed to that job before they move forward. Probably means the end of the Basel III endgame, which would raise capital requirements for the biggest banks. So he'll try to take as neutral a stance as possible on that, given that it's going to be a flashpoint for both sides. Watch Elizabeth Warren in the hearing today. The other big one that he's going to be talking about, or be asked about at least, is DEI. The Fed is an independent agency, can do what it wants, but it tries to follow general administration directives, and they have taken down their websites about DEI. Remember, the whole Fed monetary policy process is based on the idea of running the economy hot to give the disadvantaged more chance of getting jobs. That could be an interesting discussion today.
Mike McKee, looking forward to it. Michael McKee there in Washington, D.C., ahead of the first day of testimony from Fed Chair Jay Powell in front of the Senate Banking Committee. The focus has got to be on banking regulation here. We might say soft to touch. I think the banks would say sensible regulation is what they want to see. That's how they'd phrase things, right?
Sensible regulation at a time where they think that it went too far. That said, some of the moves that we've already seen from this Trump administration have been far beyond what anyone expected, including, at least temporarily, dismantling the Consumer Financial Bureau of Protection. So a real question here about whether the Fed will lean into that kind of vibe.
A bank regulation, one focus, inflation, another. Lawrence Seidel-Baker of ITR Economics weighing in on the inflation data this week, saying this: much of the recent rise in price levels has been driven by high shelter costs and sticky inflation. On the service side, fundamental economic factors point to an upcoming rise in inflation in the back half of 25 and maybe beyond. Lauren joins us now for more. Lauren, good to see you.
Thanks, great to be here.
Let's pick up on that quote. What's the source for that pickup in inflation? Where's that coming from?
Well, it's a number of fundamental factors. It's not just tariffs. It's not just these Trump policies. We see things like the velocity of money increasing. We see the money supply. This got a lot of attention when it was contracting. That's now on the uptick again. We just see gross treasury issuance. There is so much liquidity out there. In addition to the macro cycle really gaining steam, that demand is going to pull on prices.
In addition to 100 basis points of interest rate cuts from the Fed, is that contributing to this call at all?
You know, I wouldn't say that's directly contributing. Yes, 100 basis points at the margin, that's going to be stimulative. And whenever we see this uptick in activity, that is correlated with that heating up, right, in price levels. But a lot of these fundamental factors, they're kind of deeper. They're the boring stuff that we like to nerd out as economists on and see the real leading indicators. They are already in the books. So I see tariffs, I see some other Trump potential policies as upside risks to rising inflation. But the fundamentals, those have been in the books for a couple of years now.
Where are you seeing evidence that consumers are accepting the higher prices? We were pointing to Coca-Cola's 9% price increase, which marked the 11th straight quarter of more than 9% or 9% price increases. Where else are you seeing that consumers are accepting these?
Well, they don't want to accept them. We get a lot of pushback, and right now sentiment is really diverging on the consumer side. The interesting thing, the data do say that wages are actually outpacing consumer price inflation. So I see our consumer as having the ability to weather these higher prices, but you're right, they're trying to push back. They're being much more value conscious, whether that's looking for the lowest cost, maybe looking for the bargain brand versus the name brand, or just buying in bulk where you can save. So there's definitely a different mentality amongst the consumer, but retail sales are increasing even on a deflated basis. So we do see that the consumer is out there spending more, and broadly speaking, we have that comfort that we can continue to spend.
What do you say to people who look back to 2017, 2018, the last Trump administration when he came in, put tariffs on, and we didn't see rampant inflation? If anything, we saw slower sales and a little bit of a hit to growth. Why isn't that going to be the logical consequence of a whole host of these different proposals?
So tariffs, I do not expect to be absolutely clear that the day tariffs are put in place, we see that full price impact on imports. Now, what we saw during 2018 is, first of all, some front running, and we certainly see that today. These tariffs have been very well signaled, so importers are getting ahead of them, bringing in steel, aluminum, whatever else it may be. But at the end of the day, those tariffs are giving even domestic producers room to raise their prices, to take a little bit more margin. We saw that in 2018. It's just a longer effect. It takes more time to play out, partially because of this front running and partially just because those importers, they're going to absorb for a little while. They just can't do that indefinitely.
When it comes to tariffs, though, if Trump is always in this negotiating stance, potentially, are people just going to be front running constantly? Is that going to be the theme for 4 years?
I hope not for 4 years. It would be great to get some final information before that point. But I think for the intermediate term, yes, until tariffs are imposed, that's giving us that leeway, right? That lead time. If we do need to bring more in, we're starting to see inventories recover. We had an inventory cycle in the past couple of years. And so we definitely do see the momentum shifting back, bring things in addition to a lot of foreign direct investment flowing into the United States. So much re-onshoring is happening. That's going to be the other part of the story.
Are you considering rate hikes?
I would not be surprised if rate hikes are on the table by the end of this year. The Fed let inflation get away from them once. They really don't want to see that happen again this cycle. So I wouldn't be terribly surprised. I think their ability to cut deep into 2025 is going to be limited by this inflation picture.
Year-on-year comps through the first quarter could be quite favourable for them. How are they going to navigate that with everything you've said in mind that this could pick up again by the end of the year?
Well, the Fed, they don't always lead the cycle, so I think they could be responding. They'll never jump on just 1 month of data or even 1 quarter of data.
Let me jump in then. When do you think the wake-up call actually is? Let me put it that way.
There's
when do you
no
think
threshold.
The penny drops?
There's no threshold. There's no panic. But I think by mid-year, again, it's going to be several quarters of that kind of consistent grind and inflation higher.
Lauren, it's good to see you. Appreciate it. Lauren Seidel-Baker there of ITR Economics on the outlook. Not the first time we've heard the prospect of a rate hike maybe being in store later this year.
I'm thinking about your question, which is what's the trigger point? What's the wake-up call for the Federal Reserve to even put that back on the table, which would be hugely disruptive to markets, certainly according to positioning right now. And it goes back to Scott Bessent and that 10-year Treasury yield, especially with the amount of debt that the U.S. government has. If that starts to get away from the Fed, you can watch the space. I'm guessing that there will be some real action taken.
The focus is still on tariffs.
Yes.
I think for a lot of people on the street, the focus will shift to taxes pretty quickly once that conversation picks up and builds in the year ahead. Let's turn to Sarah Malik of Nuveen. Sarah joins us now for more on financial markets. Sarah, welcome to the programme. I want to talk to you about Chairman Powell a little bit later on. We heard from an economist just there that we could be talking about rate hikes later this year. Would you expect to be having that conversation?
Well, I wouldn't take rate hikes off the table, but right now we are expecting for about 1 to 2 rate cuts this year. I mean, what markets are hoping is for the dust to settle on tech and also tariffs. So if we're starting with technology, the concern here over tech earnings is the amount of spending that companies are doing on artificial intelligence and the impact that we've seen from DeepSeek and the lower cost there. And I think markets are nervous. Are U.S. tech companies overspending on artificial intelligence, and will we get the return on investment from that? On tariffs, the questions are around, is this a negotiation tactic? Are we going to have retaliation? And who's going to bear the burden of the higher cost of tariffs? I don't think it's just a negotiation tactic. I think we are going to see some retaliation, and I think producers and consumers will bear the cost of higher tariffs. And the question, of course, around that is what does that mean for inflation? If you look at history, tariffs tend to cause a one-time bump in inflation. Whether or not the Fed will look through that is yet for us to find out.
Sarah, we've gone over a lot of things, whether it's the tech world, and we're talking about the tariffs and how it all goes together. What's your framework for how you filter out some of the news that you get every day to understand how to prioritize either the proposals from the White House, the earnings that we're getting, or the economic data?
Well, first we focus on fundamentals, and looking at fourth quarter earnings, we're wrapping up earnings season and they're growing 12% year over year. So the U.S. economy does remain strong, but then you have to look at valuations. And here's an interesting tidbit for this year that I think most investors didn't expect. European markets are outperforming U.S. markets. So why is that? Well, we know European markets are cheaper, but that's because of the tech trade. Europe has much less exposure to tech, and tech has struggled this year. So you're seeing EU outperform the U.S., and that's also due to U.S. valuations. So we need to be conscious of the fact that U.S. markets are trading at a 20% premium. You might say that's deservedly so because of the strength of our economy. But going forward, of course, we have to think about this sticky inflation. What does that mean for the Fed? Can the economy continue to chug along with higher tariffs? Also, thinking about 2 other factors from the administration, taxes and deregulation, which are pro-growth for the U.S. So areas that we're looking at that we like are small caps. Small caps in the U.S., I think they'll perform better with tax cuts that are more positive for the U.S. economy, and deregulation should open up the M&A markets. That's good for small caps. So looking at those areas of the world where there's valuation support and fundamental support, I think that's going to be increasingly important this year.
That's a pretty controversial call, Sarah. We've had a lot of people come on the show and say that they really don't like small caps because they have a narrow pathway to really be successful. How do you push back against that at a time when a lot of people think it's a very real possibility that this Federal Reserve isn't going to cut rates and that you're not going to necessarily get the tax cuts and other pro-growth policies quickly enough to really give that boost to the sector?
Well, oftentimes you make the most money when you go against consensus. So I'm often pleased to hear that other people don't like that call. I think it's important not to just focus on valuations, because valuations can stay cheap or expensive for a long time unless you have a catalyst. And that's the key with small caps here. They're cheap, but finally they have that catalyst. And that is some of these policies from Trump that we expect. Tax cuts should help boost the U.S. economy, help the consumer continue to spend, and create some operating leverage for the economy. We saw manufacturing data start to pick up last week, so that's also strong for operating leverage for the economy, small caps that are more domestically oriented. Don't forget about the strong dollar, negative for multinationals, positive for domestic companies like small cap. And of course, finally, deregulation. I think that does help open up M&A, positive for small companies that larger companies tend to look to buy. So those are the catalysts there to help finally close that valuation gap between smaller and larger companies.
But are all catalysts created equal? We have tariffs today. Tax cuts, that's going to take months, especially when every congressman and congresswoman is king or queen of the Hill and having tons of demands on what gets put in this reconciliation package.
Well, I agree. I mean, we have talk about tariffs today, but it's still I think there's still a lot of negotiation left. We have to see what the retaliation looks like. And again, who's going to bear the burden of those tariffs? Is it going to be consumers or producers? But I do think tariffs are the wild card this year. It is what everybody is talking about. It could be a serious issue for the economy, and how the Fed reacts to that could be important. Our view is still, though, if it will get CPI and PPI data later this week, inflation is moderating. I think the Fed still has the room to cut 1 or 2 times this year, as long as inflation doesn't reaccelerate.
We mentioned when it comes to Europe and the tariffs, Ursula von der Leyen's statement this morning about how it's unjustified and it will not go unanswered, will trigger firm and proportionate countermeasures. You started this chat talking about how the EU market beat the United States. Do you still think that's possible for the rest of the year, given this potential tit for tat between Washington and Brussels?
I think an acceleration of retaliation and tariffs could be a headwind for EU. The offset for that, of course, will be what goes on with the technology sector, with DeepSeek, lower cost access to artificial intelligence, and whether U.S. companies will be able to monetize their investments at the rate and degree that investors are hoping for. If the tech sort of negativity continues, I think that is positive for European markets, and they do, of course, have about a 40% discount versus U.S. markets. They do have valuation support there. A couple of the things that we haven't really talked about on this also that's happening this year is, first of all, the return of the retail investor. Last Tuesday was the 3rd biggest trading volume for retail investors in the past 3 years. So retail investors coming back in, I think that is good for small caps. So that's important there, and that also could be another driver for the markets. And then finally, everyone is talking about inflation and worried about it, but look at the 10-year settling now down around the 4.5% level. 10 years also telling you bond markets are a little bit less concerned about inflation.
Bond yields have been pretty contained, that's for sure. Sarah Malik there of Nuveen, your 10-year bond yield, the nominal yield at the moment, 453.93. Yields are up by 4 basis points. Though we have seen inflation expectations just inch up just a little bit over the past few weeks.
It's on the front end. It's the idea of 1 year, 2 year, 5 year out, that kind of expectation. Inflation expectations are going up. Deutsche Bank just put out this wonderful series of charts saying the U.S. has tolerated the erosion of domestic manufacturing in exchange for access to cheap goods. But this game seems to be up. And it goes back to the idea that if you excise the likes of cheap goods from China from the U.S. economy, do you end up with a structurally higher inflationary environment? And we have to go back to thinking about that
It's
as well.
a point that Mohammed Alerian has made repeatedly on this programme over the years. As for Europe versus the United States, we've heard from a few voices already this morning. We've seen a squeeze. And we said at the end of 2024, how little needs to go right to engineer a squeeze, a position squeeze, to get something more sustainable. Kit talked about this massive long position we've built up in dollar-denominated assets over the last decade plus. To rebalance that, you need to rebalance growth differentials. Something needs to improve in Europe, in China. And I'm not sure we're seeing that just yet. Maybe we will, but we're not seeing much evidence of it at the moment, that's for sure.
That could be the shock. And Anne-Marie, you raised the issue of some sort of resolution to the Ukraine-Russia war, although it isn't just energy. It does raise a question about some of the leadership and the leadership changes that you get in Europe, especially on the heels of the Draghi report.
Well, also, that's a great point, because there's literally paralysis right now in Germany. They don't have leadership because they're facing down an election at a time when they're trying to go tit for tat with the President of the United States, who's slapping tariffs on their economy.
They're not in a position to respond. The euro at the moment, 103.18. just about positive. It's pretty much unchanged on the session. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Speaking of tariffs, President Donald Trump has ordered a 25% tariff on steel and aluminum imports. The tariffs will go into effect on March 12th and will also include finished metal products. Speaking from the Oval Office, Trump insisted the move helps boost domestic production and bring jobs to the U.S. Meta has begun notifying staff of job cuts, cutting 5% of its workforce, terminating thousands of low performers. The job cuts are expected to affect around 3,600 people, all part of Meta's efficiency push, and will create headcount for hiring new AI talent. Elsewhere in tech, Elon Musk's net worth dipped below $400 billion, as Tesla shares plummeted 27% from their December record. His political reinvention was a key driver for Tesla stock post-election, but they've taken a hit after dismal monthly sales. Musk's Tesla stake still makes up the largest portion of his net worth. And that's your brief. John.
Hey, Danny, thanks for this morning. Appreciate it. We're counting you down to Chairman Powell on Capitol Hill in front of the Senate Banking Committee. That's happening in just about an hour from now. Up next on the program, we'll set you up for the day ahead. From New York City, this is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The Cleveland Fed president with some things to say. Beth Hammack, you'll know that name, of course, from the end of last year when she dissented against the decision to cut interest rates in December by 25 basis points, making a case to stay on hold for, quote, some time, going on to say, as long as the labour market remains healthy, I'm looking for a broad-based evidence that inflation is sustainably returning to 2% before adjusting policy further. Imagine if we heard that from Chairman Powell later this morning.
That might cause a bit of a ripple in markets. She went on to actually give some scenario analysis where she said that lingering upside risks to inflation come from that strength of the consumer, going back to Coca-Cola and what we saw there. How much is this just bolstering the hawkish view, which is that they don't need to cut maybe for the rest of this year?
Chairman Powell, the one to watch a little bit later this morning. In about an hour from now, you'll hear from the Fed chair, kicking off his two-day congressional testimony. Tomorrow, the next stop for us is CPI. Tomorrow morning at 8:30 Eastern Time. Thursday, PPI and another round of jobless claims. On Friday, U.S. retail sales plus the Munich Security Conference kicks off as well. Expect plenty of headlines from that. The Vice President, J.D. Vance, set to attend. Joining us from the nation's capital in Washington is Bloomberg's Tyler Kendall. Tyler, we've had a conversation with you all morning about the prospect of additional tariffs and whether some countries, some companies can secure a carve-out. Have we found one nation that might be in luck?
Well, John, we might have the White House confirming this morning that President Trump did hold a call with his Australian counterpart. In a readout, the White House said that the pair discussed this idea of expanding defense industrial capacity, also addressing what they called, quote, mutually beneficial trade, as well as concerns about competing with China. That's important, considering that we know that a senior administration official told reporters last night that part of these steel tariffs went into place in a bid to curb what they called alleged efforts by China to circumvent some tariffs. But it remains to be seen whether or not this will officially go into place as an exemption for Australia. But at the end of the day, President Trump has said that this all comes down to trade deficits, which is why Australia might be in luck here. We know that President Trump is looking to revitalize what he says is this domestic manufacturing base. But it does remain to be seen if that could go against some of his other campaign priorities, particularly as we watch for any inflationary impacts that could come ahead of that March 12th deadline for these tariffs to go into place.
Tyler, appreciate it. Looking forward to your coverage a little bit later. Tyler Kendall there of Bloomberg. In the nation's capital, some countries will be able to negotiate this away. Other countries, some continents, might struggle.
Yeah, so if they have a trade deficit with the United States, if the U.S. has a surplus with them, like Australia, potentially they have a very good bargaining hand when it comes to maybe negotiating this away. For others, namely the European Union, which Trump said last week they've been a, quote, atrocity, it's not going to be negotiated away easily. And actually, I think it's just going to get worse when he talks about reciprocal tariffs.
Which is the reason why I actually think it will be interesting to see how Fed Chair Jay Powell responds to how this weighs on his view of policy. You were talking about the Cleveland Fed president, Beth Hammack. She talked about tariffs, and she said it is appropriate in light of tariffs to be patient with policy. Given the recent history with elevated inflation, the risks to the inflation outlook appear skewed to the upside. This is not a neutral stance. This is one that does not speak to any accommodation or easing anytime soon.
I think we found one, didn't we? One of those officials that incorporated tariffs into their outlook.
I mean,
I think we might have found one.
Maybe this wasn't back in December, but you know.
Possibly. Coming up tomorrow, Lisa Shallard of Morgan Stanley, Congressman French Hill of Arkansas. We'll catch up with Anastasia Amoroso of iCapital and Mohammed Al-Erin of Queen's College, Cambridge. A stacked program as we count you down to CPI tomorrow morning. From New York City, this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment. Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah, blah. Forget it. big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
All right, it's Humphrey Hawkins. So anything can happen today. Right now, we're looking at futures down with 30 minutes to go until the start of cash trading. I'm Matt Miller.
I'm Shonali Bassett.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
And coming up, Powell heads to Capitol Hill. The Fed chair faces tough questions as Trump policies spur caution.
Sam Altman says OpenAI is not for sale and blasts Elon Musk's tactics in a Bloomberg scoop.
Meanwhile, Meta's rally makes history as Mark Zuckerberg's AI bet starts to pay off. Stock still looks relatively cheap, though. All that and more coming up. Let's take a look at where markets are trading. Like Matt said, 30 minutes until the bell. You can see we're taking a bit of a breather today. We had a big start to the week yesterday. The S&P 500 right now in futures trading currently off by about 0.5%. Big tech even more. Of course, we're coming off of 2 straight weeks of losses, and you can see some of that weakness coming in the pre-market right now. The NASDAQ 100 down about 0.8% if you round there. And the bond market, keep an eye on that one. Of course, the 10-year Treasury yield currently higher by about 3 basis points. We are back above 4.5%, Matt Miller.
Back into the danger zone. Okay, as we get closer to the Senate grilling of Chair Powell, let's take a look at how the Fed is set up in terms of risks to inflation or risks to jobs. Here we have in blue the number of Fed officials who are worried about inflation risks to the upside. Now 15. That's the highest level since 2022. In yellow, you see the concern about the jobless situation, and that has come down as unemployment dropped to 4% even.
You've got the macro, I've got the micro. It is still the season that never ends. It is earnings season, and we have some stocks we're watching because of it. Shopify is now up about 2.3% pre-market. It has been fluctuating. It plunged as much as 9% this morning, despite a revenue beat last quarter and an outlook that's mostly in line with expectations. Now higher, though. Coca-Cola up about 4.3% pre-market. It topped estimates as global demand for beverages rises. Consumers are willing to pay higher prices for drinks, with sales growing 6% last quarter. We're going to talk a lot about the consumer. Supermicro now down almost 5% pre-market. They're going to release an update on its business today. It struggled with AI demand following accounting issues last year, but some investors are still optimistic. Its stock is up some 60% in the past week, Matt.
Yeah, the question is, do they get to stay in the NASDAQ, right? If your accountant says, we can't verify this accounting anymore, we quit, that's usually a bad sign.
Yeah, but, they found a new one. I'm looking forward to that business update. We have a lot of testimony to get through before then, though. I'm pretty interested. I know that, you're back and forth on whether you care about the Fed.
I always care. The question is, to what degree is it really driving the trade?
What I'm interested in, of course, there's the politics of it all, but there's also a lot of subjects that Powell doesn't like to talk about. I'm talking about fiscal policy, of course. He can't make monetary policy in a vacuum, and we know he's going to be getting some questions when it comes to tariffs, immigration, et cetera, what that means for inflation, what that means for growth.
It'll be quite frustrating. And of course, you have a lot of lawmakers that feel very frustrated, not about that short end of the curve, but the long end of the curve that perhaps are more linked to mortgage rates. People in their districts can't buy homes. And so you have a lot of things that are kind of outside of his control. So a frustrating 24 hours that will lead us, of course, into the CPI data tomorrow, which is another big moment for this market. Debatably, I know, but people are already trading around it, buying straddles in case of any moves in the S&P 500.
Right, I never say the Fed doesn't matter. I just say it matters less at times and more at others. Let's bring in Marianne Bartels. Sorry, let's get to Mike McKee first for a preview of Powell's testimony. I almost skipped over you, Mike, because I'm looking at Marianne over here on set. We'll get to her in her winter white, but first off, what are we waiting for this afternoon?
Well, we've already gotten a comment from a Fed official this morning, Beth Hammock from the Cleveland Fed. She's in your blue group, Matt. Worried about inflation, saying the risks are to the upside and that monetary policy should stay on hold for a significant period of time. Now, do not expect Jay Powell to take that kind of a firm stance on policy. He's going to have two audiences today, one Wall Street, one the banking committee members in the room. As for Wall Street, he doesn't want to be firm in what he's going to do because he doesn't want the markets to move much since he doesn't know which way he's going to want them to move. But he does have a problem that reflects what Hammock's comments said today, and that is that the dollar, a little lower today, but has been strengthening, and any thought that rates are going to stay higher for longer will push it up and have a negative effect on corporate profits and also reduce the impact of any tariffs. Also, inflation expectations rising. We saw that with the University of Michigan. And if you look at break-evens on Wall Street, they have been rising since Trump took office. And that's something the Fed is going to have to keep an eye on. But also, he does have the banking committee. He's going to have to talk about things, as you mentioned, he doesn't like to talk about. One will be DEI. The Fed is an independent agency, but has taken down its DEI website. Whether the officials will press him to do more or less, we'll have to wait and see. But remember, their whole monetary policy strategy was based on letting the economy run hot to help lower income people get jobs. He'll also probably be talking about bank regulation. There'll be a lot of questions about that and what's going to happen now that Michael Barr has resigned and we have a new administration in place that wants less regulation. And also, he's going to probably be asked about where they go from here in terms of their review of policy. Do they keep that run it hot philosophy going forward?
All right, Mike, we're going to check back in with you in just about 55 minutes from now, ahead of the testimony to get us set up for that on Capitol Hill. Let's bring in Marianne Bartels, Sanctuary Wealth Chief Investment Strategist. And, we always sort of have this debate. I know, obviously, whatever Powell says can move the 2-year dramatically in the moment. But how much does it matter right now to the market since we know, essentially, that the Fed is on hold?
I think CPI is going to be more important than Powell's testimony, the actual real data. The markets are worried about tariffs because we talk about them every day, right? And then Trump is doing something with tariffs, it feels like almost every day. But I went back and looked at his last administration, and when he left office, CPI was 1.4%. The tariffs that he did implement during his last administration didn't result in the long term with inflation. So although I think the markets will be concerned and investors will be concerned about inflation, I'm not concerned about inflation. I'm not seeing it priced in the market. In fact, technically, as I look at the 10-year, it's formed a head and shoulders pattern and broke down. So there's a good chance if we get good inflation data this week that we can actually see the back end of the curve actually drift down. And on the opposite end, it's possible I'm getting bullish technicals on the equity market. When was the last time we had the equity market going up and the bond market going up? And I think if that happened, that would be what's unexpected in the marketplace this week.
Interesting. So how do you invest around that sort of nonchalance you have when it comes to inflation? You're not seeing it in the market. It seems like the technicals are lining up as well. I mean, is that a blanket buy at the index level, or are there specific parts of this market that you would target here?
So I'm pretty bullish this year. I still think the markets can be up 20% this year. Going back
20%.
20%.
So like 7,200.
Correct. So my range is 7,200 to 7,400. The last time we had 3 years of a market that was able to grow 20% or more was back in the 90s. So I equate all of this AI, robotics, blockchain, crypto, this huge innovation bucket being bigger than what we even saw in the 1990s. And I think based on earnings, based on technicals, we can have the market going up despite the market having a very high valuation. I wouldn't be surprised if valuations are able to continue to expand. But to get to your point, what do I like? What's most important to this market is leadership, and technology is the leadership. If technology can come back, and it's been churning, and I just got a buy signal, short-term buy signal, that leadership should drive the rally.
How necessary is that? Because something I was looking at this morning was the S&P 500 relative to the NASDAQ, relative to the Russell 2000, as we've been watching for the last year, it feels like now, and what it looked like compared to the S&P equal weight. Because in January, you did see the equal weight really come back in a significant way. You have seen some of that gap really narrow because of that tech leadership. Do you think that that broadening trade still exists, or is it kind of just big tech going to be driving this market through the end of this year?
I think broadening out, it has happened and can continue to happen. But I believe in a secular bull market. For that to be intact, your leadership has to be intact. So if we've lost tech, you lose the market. That's my philosophy. So I actually still believe in tech. And, you know, if I look at the technicals, the one index we don't talk about anymore that I think is more significant, and I know the name isn't as sexy as Mag 7, is the FANG index.
Oh, my goodness.
Because it's a little bit broader.
I thought you were going to say the Dow.
No.
That's an
FANG,
inside
because
joke.
I get more of tech and tech related. And there's nothing broken in that index. It's churning. I think you're getting a rotation within tech. But I think it's setting up to actually take back leadership within the marketplace. But that doesn't mean other pockets can't come along. I do like financials. I like the banks. I like the capital markets, especially if we can get M&A and IPOs. There's pockets of industrials that I like for the build out for infrastructure. So a broadening out can happen, but I think the leadership stays tech and tech related.
You know what the F used to stand for?
Facebook.
Facebook. Now it's Meta, and Meta has been on an absolute tear, up 16 straight days.
Was the N for Netflix, though?
Yeah.
And not for NVIDIA, right?
No.
Correct.
So what do you think about NVIDIA?
So NVIDIA,
I mean, does DeepSeek undermine, does the idea that DeepSeek was able to create a ChatGPT comparable product at a huge discount, does that undermine the valuation of NVIDIA?
well, I think it's still questionable if it was really at a significant discount. But what I think that what the DeepSeek really shows is how fast technology is evolving. And that's a good thing. But semiconductors, I've liked semiconductors for a long time, and that was my top sector last year in 2024. But you get important rotations in technology, and the market is shifting to software. I think the big moves we've had in semis need to consolidate. So NVIDIA, although it's a company that I like longer term, wouldn't be my top pick for 2025. I think going into the software space will outperform semis in 2025.
I'm looking at, it takes me sometimes a while for something to dawn on me.
Right, right.
I'm looking at Meta, and you point out it's been doing well.
Yeah.
Is it up every day for the last
Last 16
3
days. That is the longest streak of any component of the NASDAQ 100 in data going back to 1990.
It's also a
according to
big
Bloomberg.
reason that the Mag 7 has still been able to become a leader in this market. A lot of those other parts of the Mag 7 have, you know, wavered.
Yeah, it's undeniable, of course, Meta really having a fantastic start to 2025. Marianne, it's always great to see you. Hope to see you again in person soon. That is Marianne Bartels of Sanctuary Wealth. Meanwhile, speaking of tech, let's check in on Apple and Alibaba, because both stocks moving higher right now in the pre-market after a report that they are developing AI features for iPhone users in China. You can see on the other sides, Baidu falling on that news, down about 4% right now, Sonali.
Yeah, and coming up next, we're going to stick with AI. We're going to talk about the exclusive we had with Sam Altman, who says that Elon Musk is trying to slow down OpenAI. He discusses his relationship with Musk in an interview. We're going to bring you some of that next. This is Bloomberg.
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's like a happy person. I do feel for him.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Let's get now to high interest, a look at what's making headlines around the world, starting with the trade tensions between the U.S. and Europe. President Donald Trump ordered 25% tariff on steel and aluminum imports. Those levies will hit some of America's closest allies, and the president warned that the rate may go higher. The European Union is promising to retaliate. Commissioner von der Leyen says unjustified tariffs on the EU will not go unanswered. They will trigger firm and proportionate countermeasures. But don't forget, this isn't supposed to go into effect until like 3 or 4 weeks from now. So there's a lot of time to call it off. Elliott Investment Management has built a stake of around $2.5 billion in Phillips 66. Bloomberg sources say the activist investor plans to push the oil refiner to sell or spin off its midstream business. Elliott first disclosed a stake in 2023 and has since named a new board member and sold assets. It's part of a cost-cutting initiative. And it may have started as a side hustle, but in less than 2 years, Chinese AI startup DeepSeek could turn its founder into one of the world's richest people. The company is worth anywhere from about $1 billion to $150 billion. That's a massive gap, but that's according to 7 AI experts and startup founders who spoke to Bloomberg. So varying opinions as to how much it's worth.
Varying opinions and more billionaires to talk about here and more titans of the world of artificial intelligence. Sam Altman says that OpenAI is not for sale after a group of investors led by Elon Musk offered to buy the nonprofit that controls OpenAI for $97 billion. Musk's xAI is a direct competitor, and he has repeatedly taken legal action against OpenAI's practices and mission. Altman sat down with Bloomberg to discuss his relationship with Musk and his plans for OpenAI.
Look, OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for xAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this. And we'll try to just put our head down and keep working.
Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI?
We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the nonprofit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the nonprofit is not changing it anything or going anywhere. I mean, whether they did or didn't, they built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that, DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do. And we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Do you think Musk's approach then is from a position of insecurity about xAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's a happy person. I do feel for him.
Okay. Do you worry that he has this proximity to the president and he can influence the decision-making of the U.S. presidency and policies around this agenda on AI?
Not particularly. Maybe I should, but not particularly. I mean, I try to just wake up and think about how we're going to make our technology better.
Bloomberg's Tom McKenzie conducted that interview from the Paris AI Action Summit, and he joins us now. Tom, great reporting, man of the hour over there in Paris. So a hostile bid for OpenAI, you could call it, but Sam Altman obviously coming out with some hostile words of his own for Elon Musk.
Yeah, look, it's getting personal now. This history, of course, goes back to 2015 when the two co-founded OpenAI and, of course, famously have fallen apart as a result of what Elon Musk says is Sam Altman's push and drive away from some of the founding principles around open source models, around safety-focused models, and around non-profit. That is the allegation, of course, of Elon Musk, and Sam Altman pushes back very strongly on that, talking about the fact that this is a man he thinks now, Musk, is someone who is insecure, is unhappy in his life. It has taken a personal twist, and it is the latest gear shift, of course, in terms of Elon Musk trying to pressure Sam Altman. It's also a reminder that there is an arms race right now at a startup level in terms of who gets to control this revolutionary technology, if that's what you believe it's going to be. Who gets to control it at a startup level? And it's part of the conversation in Paris as well on a sovereign level as well. Nation states trying to ensure that they're not left behind in this race. And to some extent, this feud between Musk and Sam Altman distills that tension.
Well, I think important as well is who else might be behind the bid, how seriously to take it with the valuation that's been proposed, as well as the other potential investors. Barron Capital, Joe Lonsdale's VC firm, Ari Emanuel. Is the bid real?
Yeah, look, I mean, speaking to executives on the ground in Paris, off camera, I saw some eye rolls, some heads in hands when I asked them about this. A lot of them are not taking it seriously. Sam Altman says he's not taking it that seriously. He thinks it's just the latest chapter. But don't you have to take it somewhat seriously, coming from the world's wealthiest man, coming from someone with proximity, as he does, to President Trump? But you're right, the valuation gap is there, right? 97 billion versus 157 billion versus 157 billion back in October. About 300 billion is potentially the valuation right now as they try to fundraise maybe a 25% stake from SoftBank, above the 13% stake from Microsoft. The valuation gap is a mismatch. Yeah. Is he just, as you suggested, just trolling Sam Altman at this point?
100%.
Sam puts it in this perspective. It's a gear shift.
I mean, just because Elon Musk is the wealthiest man in the world doesn't mean he's beyond, seriously dank memes. He can troll with the
You
best
think
of them.
those memes are seriously dank?
Remember when everyone thought buying Twitter, now X, was a joke also?
Yes, and remember when he tried to get back out of that?
I'm still not
remember
convinced
when he
that
raised all that money in debt markets that they're just paying back?
He ended up having to follow through on. Tom, great reporting. Really appreciate you taking the time. That is Bloomberg's Tom McKenzie joining us from Paris. Of course, a great interview with Sam Altman from Tom earlier today. Let's take a look at futures right now because we're still lower in the pre-market. Just minutes to go until the bells ring. The S&P 500 down about 0.4%, even more if you take a look at big tech, and even more if you take a look at the small caps. We'll take a look at the action and walk through it in more detail next. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
All right, welcome back to Open Interest. You're taking a look at futures right now in the red ahead of the opening bell. The S&P 500 is down about 0.4%, and then it gets worse from there. I want to talk about Meta, though, because Meta also down pre-market, which is a shame because it just closed out 16 straight days of gains. That is the longest streak for a NASDAQ 100 component in data going back to 1990. And what's interesting is that if you take a look at the valuation, it trades at about 27 times forward earnings, which is lofty to be sure, but that's pretty much in line with the NASDAQ 100. So it's not off the charts expensive.
I think people are worried that we may get a breaking headline that Elon Musk is offering $247 to buy Meta.
You know,
with a group, with Ron Barron and a couple of other...
It's a bit of vindication, isn't it, the conversation over the last couple of weeks around open source. This is what Mark Zuckerberg has really been pitching from the beginning when it comes. But coming up next for less than 4 minutes from the opening bell, we're going to discuss those market moves with David Kostin of Goldman Sachs. Stick with us. This is Bloomberg.
you are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are down here. 0.4% for the S&P 500, a little bit more for the NASDAQ, 0.2%. And this is even more disappointing because it means Meta may close down after 16 consecutive days of gains. Longest streak going back to, what did you say, Katie?
1990s.
1990s. So
fudge it a little bit.
Pretty cool stat there. You see SNL, Saturday Night Live, ringing the bell down at the New York Stock Exchange. Some say it's a set, so it's, I think, appropriate. And then you see Global Star ringing the bell, GSAT down at the NASDAQ. In terms of the major averages, which have now been trading for 24 seconds, Katie, what do we see?
Well, now it's 27 seconds, and similar to the pre-market, you can see we're lower on the day, but it's very early. The S&P 500 off by about 0.3%. Of course, we had a big day yesterday. Then you take a look at big tech, also lower, like you mentioned, Meta coming under some pressure after that big run-up that we saw. The Nasdaq 100 off about 0.5%. And then even worse, if you take a look at the Russell 2000, currently off by about 0.7%. We are seeing bond yields climb once again, maybe putting some pressure on those small caps. But let's take a look under the hood, and let's actually go to Canada, because Shopify revenue increased 31% last quarter. Also expects an increase in the mid-20% range for the current quarter. It was down as much as 9% pre-market due to free cash flow concerns. Shaking that off right now, Sonali, currently up about 1.8%.
Yeah, the consumer is in full swing today. I'm keeping an eye on Coca-Cola here as well. They reported a rise in global demand as higher prices led to higher profits last quarter. Coca-Cola has been largely unscathed, even as budget-conscious shoppers pull back on spending. You have the stock up more than 4.4% as the market opens. Interesting after McDonald's. Also, some strong consumer names reporting this week, Matt.
Yeah, we talked about that yesterday. I think someone had brought fries into the studio, which was distracting me for the whole program.
At 9 in the morning?
Coca-Cola, by the way, has drastically underperformed the food and beverage ETF and the consumer discretion.
Discretion?
Yeah. Is it a discretionary Coca-Cola?
I think so. I mean,
or is it a staple?
Some would quibble on that point, but we'll have to check
Only
the
up
official.
8% in the past 12 months.
It's not very much.
And the
relative to
S&P, the broader market, is up 21%.
You know what's been up a lot recently?
Meta.
Yeah.
16 sessions, as you said. That's a pretty amazing stat.
Yes. Yeah, that is quite an impressive streak. But as we're talking about, the valuation's not too expensive. People keep telling us that it's a stock picker's market. It seems like this time they really mean it. You have to wonder how many people.
It's true. It's a $2 trillion company now, but lowball bids are en vogue.
It's kind of plateauing now, not to kind of parse hairs about it, but it's interesting that you did see still continually it rising after that big CapEx spend. I think they set the tone for everybody else, deep sea
I think
or
we
not.
split hairs.
Split hairs.
We parse words.
You know I never know my idioms. It's such a problem. That's going to my family today, I know.
I don't split hairs, obviously.
Anyways.
Let's bring in David Costin from Goldman Sachs. He's the chief U.S. equity strategist there. And David, you know, we're talking about these consumer stocks doing well with earnings. They're able to raise prices. This is what I think is going to be fascinating when we get CPI tomorrow. How many have raised prices to start the year? But what's your take on earnings season thus far, and what do you expect for 2025? Because as I look at earnings expectations, we were so bulled up at the end of last year. I think the consensus on the street was like 14%. Now it's steadily come down. You were at 9 at one point. It's steadily come down to less than 11, and you've moved up to that level.
Well, we're pretty much most of the way through the reporting season for the quarter. And the report card is as follows. We have year-over-year growth of around 12%. So let's put that in perspective. Coming into the quarter, Matt, the expectation was year-over-year growth of around 8%. So 400 basis points, 4 percentage points of positive surprises. That matched the average for the last 12 quarters. So we've seen a pretty consistent set of beats. And if you want to think about that skew towards the larger companies, while 12% was the aggregate index year-over-year growth, the typical stock was reflecting year-over-year growth of around 7%. So again, you saw the impact for the overall index from the largest cap, some of the mega cap companies, which I'll mention in just a moment. But to your point you just mentioned a moment ago about the margins, well, margins improved by around 50 basis points for the overall index, and that's, again, pretty good. So you had about 5% sales growth, some margin improvement, skewed towards the larger cap stocks, the communication services and the technology sectors really driving the best results in the quarter, energy and industrials at the other extreme. That's pretty much summarizes thus far the reporting season.
Well, let's talk about the elephant in the room, and that, of course, is tariffs. When you're trying to model out what you expect for this earnings season and, of course, the full year earnings season, how do you have any real degree of conviction when there's this overhang, this question mark of what the tariff picture will actually look like?
It's an excellent point. So our baseline forecast, which is a model that focuses on revenue growth and margins at the individual sector level, leads us to a forecast of year-over-year growth of around 11%. That's 11% this year, 2025, relative to last year. And then looking into 2026, we're looking at earnings growth of another 7%. So 11% followed by 7%. That's a baseline. If we want to think about what are some of the scenarios, and obviously there's a series of changing news flow every day, but an increase in tariffs of around 5 percentage points for the average tariff rate across the country, which is currently roughly 3% or so, another 5 percentage points, would reduce our estimates by around 1 to 2%. So therefore, instead of 11% earnings growth this year, it would be closer to 10%, probably trim 1 to 2 percentage points of growth off of our forecast. Again, that's a fluid number, a lot of variables, a lot of moving parts, and that's a big area of discussion with clients. Not so clear exactly how companies are going to respond. They may push back and try to get the suppliers to perhaps adjust their prices to absorb part of that. Some of that's a negotiation. In some cases, they may try to absorb that themselves. In some cases, they may try to push that through to the consumer.
You know, speaking of the consumer as well and potential price shocks that companies might feel, in addition to tariffs, the concerns around immigration policy and what that might mean for the labor market. How are you factoring that into potential future EPS growth and ripple effects here for the consumer that has been showing up quite strong until right now?
So my colleagues in U.S. economics research have published a lot of reports looking at exploring some of the impact of the immigration in terms of the impact on the size of the workforce. From a fundamental perspective, as we think about the drivers of economic activity, it may trim slightly GDP growth, so it would have a potential modest impact on our overall earnings for the S&P 500 companies, but it's not likely, in our view, to have a significant impact on corporate profits in the coming year.
Yeah, I would think. I mean, in his first term, Trump deported 1 million people, so that's far less than Obama did. But if he follows through on those threats to deport a large portion of the workforce, I I would think, David, that drives up costs. You know, labor costs. If you don't have anybody to rebuild the homes in LA, if you don't have anybody to, do the jobs that some of these millions of immigrants are doing now, and there's no new labor coming in, don't you see, is that just a longer-term problem, or?
Well, if we'll think about it analytically, the labor budget for a typical company is around 14% of its sales. So, Matt, that looks at salary, compensation, bonuses, healthcare benefits, which, as you know, in America are paid through via the employer. So that wage bill, aggregate, is about 14% of the sales for the typical S&P 500 company. And that's going to give a range from maybe 5% at the low end to maybe 30% at the high end. So that would be a very high labor-intensive company. And so that's a way of thinking about the impact of and the proportion of labor costs as compared with, say, raw materials. Different industries, of course, have different labor intensities, and that has both impact from an inflation point of view, but also from an AI point of view, and the artificial intelligence, which industries may be more or less likely to benefit as a result of maybe the efficiencies that might be gained through the point of AI. So it's a huge topic of interest to portfolio managers. We focus on this a lot in our own research and thinking about which companies may or may not be more negatively or positively affected from their margin point of view specifically.
All right, David, unfortunately, we have to leave it there. Great to get some time with you. That is David Kostin of Goldman Sachs. Now,
and I learned something.
You did?
Yeah, I mean, that is fascinating. 14% on average is labor costs.
Yeah.
And obviously, if those prices are driven up by one thing, deportations, they could be also driven down by AI.
A lot of investors banking on that productivity initiative. Let's see if it comes through fast enough to offset any potential price hikes.
All right, coming up, hedge funds are eating into clients' gains with no limit fees. More from Bloomberg's latest analysis next. This is Bloomberg.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
We want to bring you some breaking news out of Goldman Sachs. The company is killing its IPO diversity pledge as DEI programs come under fire across the country. Joining us now with the latest, Sridhar Natarajan, Bloomberg's chief Wall Street correspondent. You think about when they made this pledge in 2020. The idea was to have one diverse board member. They increased it to 2. It came out with a lot of pomp and circumstance. So what is now the mood, both among Goldman employees and their clients, to now roll this back?
It certainly came with a lot of hype, because remember, when they announced this back in 2020, this was David Solomon high up in the Swiss Alps talking about this policy and professed their unwavering commitment to diversity. This was a time when across corporate America, and especially financial firms, were leaning into this idea that diversity is important and they need to encourage it, and they need to find ways to encourage it. State Street and BlackRock were using their voting power on a bunch of different companies. Goldman, the leading investment bank on Wall Street, came out and said, we will refuse to take a company public unless it has at least one diverse board member. So it effectively was supposed to be the end of the all-white, straight male boards. They even upped the ante and made the requirement 2 for companies that they were taking public in Western Europe and US. Well, today they've formally confirmed that they have backtracked. We've already seen 1 or 2 companies where that policy certainly slipped away. And you have to see what's happening in the broader environment. There's obviously everything that you've seen change since Donald Trump re-entered the White House. There was, of course, the NASDAQ board diversity rule that was killed in the Fifth Circuit as well. All of these things played a fact, and this is Goldman just acknowledging, and this is a nod to the time that we're in.
Yeah, well, I was wondering that. I mean, you have to wonder, is this a direct response to Trump? But then you bring up the NASDAQ point. I mean, that predated the inauguration.
And again, it's not entirely clear that if this was, say, a Democratic administration, if this was a Harris administration, even with that legal precedent, would Goldman Sachs necessarily have killed this initiative? Would other companies have killed their DEI hiring goals? Because this is a board diversity push, but there were other things that people were putting in place, including rank and file, how many people they were hiring, what the makeup of their new hire should be, how many people they were promoting, what their executive class should look like. It's hard to imagine a scenario where you can definitively say that President Donald Trump, once again, did not play a role in this, even if we cite all the legal precedents.
And in the statement to Bloomberg News, Tony Fratto, the spokesman for Goldman Sachs, said legal developments related to board diversity requirements caused them to end the formal policy. So 5 years, come and gone. Bloomberg's Sridhar Natarajan, we thank you so very much for your time today. We're going to now move to today's big take story. Hedge funds. We're going to move to the hedge fund industry because they have been eating up client gains with their pass-through fees. A Bloomberg analysis of regulatory filings spanning over a decade details costs ranging from copy paper to private jet flights. Hema Parmar co-wrote the story, joins us now. Hema, this is really indicative of a massive trend this year where you're seeing, yes, certain funds do very, very well, but that talent war get more and more heated in the hedge fund industry, meaning that these pass-through fees, despite how much certain investors might hate them, have been status quo, haven't they?
Yeah, pass-through fees are the most coveted perk of running a multi-strategy fund. You get the investors to pay for pretty much all the costs of running the firm. And so what we're seeing is that, our analysis of the disclosures shows that the number of fees disclosed has increased by 40% over the past 5 or 6 years. And, we really see how the costs of these pass-through fees can eat into returns when a fund doesn't do so well. So if we look at the Balyasny example, that fund produced a gross return of 15%, but because the costs of the pass-through fees, most notably compensation, were so high, it ate into returns such that investors only walked away with less than 3% in gains.
I was actually going to ask, what's the biggest expense?
Yes.
I thought maybe it would be private jets. I understand that they're a necessity because I just flew commercial to Indonesia and back, and it shouldn't be allowed. But I guess compensation is going to be the big one.
Compensation is the chunkiest by far. If we look at Balyasny, they spent over $600 million of their more than $700 million in pass-through fees on compensation. We see hundreds of millions of dollars in compensation fees. And that's because you're looking at an environment where there's a fever-pitch talent war. You're seeing pay packages for some of these traders reach the $50 million range, $30 million range. And the firms would say that that's because you really need to get the best talent to build these gigantic shops, but they can really weigh. And so it depends on how a fund is doing. If a fund's net return is great, then maybe investors don't mind paying those fees. But if the performance is mediocre or poor, then they might think twice.
Emma, don't mind paying those fees. You know, Matt asks a lot why investors are investing in hedge funds if they're trailing the S&P 500, even though that's not the benchmark. It's an asset management, it's a portfolio management question. You're paying for diversification, perhaps. But if even then the fees are getting eaten up, or eating up the returns rather, are you starting to see investors complaining about the all-in return that they do get back to them?
Some investors do complain. It really depends on the fund that they're in, and it depends on the return that they expect and what they see. So the general expectation is that a multi-strategy fund produces about 1% a month, 12%-ish a year. And so, and the hope is that they don't lose your money. So some of these firms have never lost money or only lost it once in their 20-year history. And that's what you're betting on, the reliability, the consistency, and investments that are not correlated to the market.
When we, by the way, when we show these performance figures, Hema, are they net of those fees?
That's a net return, yes. But when a fund is mediocre, if you're producing less than that 12% threshold, if you have multiple consistent years of not meeting investor expectations, then those costs, you're looking at them again. And you're wondering, okay, well, what am I paying for?
Yeah, especially when actively managed ETFs could be only charging 7 basis points.
That's true.
Hema, thank you very much. Hema Parmar there talking to us about hedge funds. I know different benchmarks, completely different. Apples and oranges, I get it.
No, but that's a lot of fees to just not be handed back in terms of returns. So
when we come back, we're going to focus in on Humphrey Hawkins. That's what we used to call these semi-annual.
I love these testimonies. I'll be honest with you.
Yeah, Fed Chair Powell is at Capitol Hill. Day one, this is Senate day of his monetary policy testimony. We'll take a look at what the market is anticipating next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
All right, we're just about 10 minutes away from Powell's Senate testimony. He also testifies tomorrow in the House. We also get CPI, PPI, jobless claims, and retail sales data in the span of just 3 days. Let's preview it all now with Stuart Paul of Bloomberg Economics. Great to see you, Stuart. So we'll start with what's happening in 10 minutes, of course, the Senate testimony. And it seems like reading the sell-side research ahead of the testimony, Powell will want to try to not make news here, but what do you think some of the hottest topics of discussion will be?
There are some items that are especially predictable. We know that Senate Democrats are going to come out, probably Elizabeth Warren, starting with a question, why did the Federal Reserve withdraw from an agreement to green the financial system? She'll probably press Chairman Powell on how secure the CFPB's funding is, because, again, they don't get it through congressional appropriations. They get their funding from the Fed. We could expect Senate Democrats to push.
Wait, haven't they requested $0 in funding?
So
that would seem to be very secure.
We know that Russ Vought, former OMB director, is now temporarily running the CFPB, but because, again, it's sort of a peculiar appropriations process, we'll see what happens there. Maybe more market relevant is just how forcefully Senate Democrats are going to be pushing for additional rate cuts this year. And also probably more market relevant is whether Senate Republicans will get aggressive in asking Chairman Powell about the effect of the national debt, fiscal sustainability, and so on.
You have to understand the CFPB issue. I know that it's something that's been kind of amorphous and a lot of pushback already, but it's something where bankers across the street are breathing a massive sigh of relief, too, because this is potentially billions of dollars in overdraft fees and credit card fees that might stay on the table now that might have otherwise been challenged.
Bankers breathing a sigh of relief. I don't know about the consumers.
By the way,
right, exactly.
Otherwise, what? You're allowed to overdraft, so you essentially borrow money from the bank for free?
These have been super challenged over the last several years. There's a lot of debate about whether they should exist or not, but it is interesting because of the Fed oversight of this, too. A lot of people believe that there's a duplication of the issue here, too. But anyways, beyond the CFPB, which, of course, is a huge issue, how are they going to just handle the issue of inflation, right? This is before the CPI data comes out, which makes some of the challenge here a little difficult because there's so much you can't say.
It is, that's right. You have to wonder. We heard earlier this morning from Beth Hammack, Cleveland Fed president, who came out saying that inflation risk is skewed to the upside. You have to wonder the extent to which she's coming out ahead of Chairman Powell and his testimony, provide a little bit of breathing room so that he can say something maybe not the same, but similar. Maybe that, for example, the Fed is well positioned to respond to upside and downside inflation risks. I think that Chairman Powell is going to attempt to rebuff requests from the Democratic members of the Senate who are pushing for swifter rate cuts and instead say that the Fed needs to remain rather nimble and keep its options open, especially given all of the policy uncertainty that's coming out of the executive branch.
How does the labor side look to you now that we've had a few days to examine the non-farm payrolls number? I saw Torsten Slok sent out, an alert that someone said weather really did hold the number down. The averages were good. How does it look?
Yeah, so undoubtedly the January numbers were affected by the polar vortex in the lower 48 states. There was also very minor effects from wildfires in Los Angeles. But beyond that, separate from what I think that Chairman Powell is going to be very clear in saying that the labor market is currently solid, but wage pressures emanating from the labor market are starting to dissipate. We do see that a little bit when we look at job openings data relative to total unemployment, where the total relationship between supply and demand for labor is starting to come into better balance.
All right, Stuart, got to leave it there. Great preview. That is Stuart Paul of Bloomberg Economics. A much more markets coverage coming up ahead of that testimony. This is Bloomberg.
Do you mind if you just step up?
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting in Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Peter King. President Trump hosts Jordan's King Abdullah II at the White House in about an hour and a half. Here's CBS's Stacey Lynn.
The two leaders will surely discuss President Trump's plan for the U.S. takeover of Gaza, which includes Jordan and Egypt taking in Palestinian refugees. Both countries have flatly rejected the proposal. And yesterday, President Trump suggested he could consider slashing U.S. aid if they refuse. He also issued an ultimatum to Hamas, insisting they release all the hostages by noon Saturday, or
all bets are off and let hell break out.
Trump hasn't spelled out exactly what that means. Hamas says it's delaying its next hostage release because Israel violated the ceasefire agreement. The president says his tariffs on imported steel and aluminum could be the catalyst for new U.S. businesses. CBS Money Watch correspondent Kelly O'Grady says there's a downside.
Tariffs can mean higher prices for consumers, and I'm really talking about in the home building and automobile industries, both industries that leverage aluminum and steel.
The president's border czar is taking on the Pope, who's criticized the Trump administration's deportation of undocumented immigrants. Tom Homan says he wishes the Pope would fix the Catholic Church and leave border enforcement to the U.S. The Pope isn't the only religious figure speaking out. CBS's Jim Krasula.
Nearly 30 religious groups, Christian and Jewish, representing tens of millions of Americans, have sued the Trump administration to protect houses of worship from immigration arrests. The lawsuit, filed in federal court in Washington, D.C., contends a new Trump policy allowing immigration raids at church services is lowering attendance at worship and other church programs.
Former Trump advisor Steve Bannon is in a New York courtroom. He's expected to plead guilty to fraud to stay out of prison. CBS's Michael Wallace.
Bannon is accused of deceiving the hundreds of thousands of donors who gave over $25 million to the We Build the Wall organization to help build the wall along the U.S.-Mexico border. Bannon was allegedly part of a scheme that funneled money to the group's CEO, Brian Kolfage, who had said he would not take any compensation. Kolfage is serving 51 months in prison.
Stormy weather means rain in the deep south, snow from a storm that stretches from Missouri to the mid-Atlantic. CBS Philadelphia meteorologist Kate Bilo with a few football references thrown in.
It's going to be tracking from Texas right across the Mississippi Valley today, so impacting basically Chiefs fans and then Eagles fans alike. Snow just north of Nashville, portions of Kentucky and into West Virginia and Northern Virginia. It looks like D.C. may be the big jackpot.
Wall Street and early trading, the Dow is down 85. This is CBS News. Boeing says it'll lay off about 400 employees who've been working on NASA's Artemis moon program at the Kennedy Space Center. Boeing makes the core stage of the Space Launch System rocket that's expected to fly 4 astronauts on a trip around the moon next year. Well, the numbers show that this past Sunday was indeed super.
The Vince Lombardi Trophy is headed to Philadelphia. Nielsen says the Eagles' win over the Chiefs drew a record average of 126 million viewers. A record 13.6 million streamed the game. And 2 top sports books, BetMGM and Caesars, say Super Bowl 59 was the most bet single sporting event in each of their histories. Caesars said it was the first Super Bowl in which more game parlays were bet than more traditional straight wagers. Philadelphia quarterback Jalen Hurts had the most money bet on him to win Super Bowl MVP, which he did. Steve Kathan, CBS News.
And I'm Peter King, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. Alex Steele here alongside Norma Lind and John Tucker. Paul Sweeney is off today. This is the moment. It is Jay Powell testifying in a semi-annual testimony to the Senate Banking Committee. We will bring you that Q&A live. Some of prepared remarks are already out. Here are some of the highlights. He reiterates no need to hurry to adjust rates. Also talks about the labor market being broadly in balance and not a source of inflationary pressure. Also, Nora talking about long-term inflation expectations appearing well anchored. Very key because we looked at the UMich 1-year inflation expectation and that really soared quite high.
Right. It showed the opposite. It's interesting. We're really trying to get down to this 2% target and we're not there yet. And of course, we've got additional tariffs on the mind of investors. So many things going on that we're going to have to keep an eye on today.
So I'm pretty sure Jay Powell is going to try to avoid saying the word tariff as much as possible. We will bring that to you. Currently, Chairman Senator Tim Scott is speaking. We'll bring you that testimony, though, live. Let's get you also an update on what's happening in the business world. For that, we go to John Tucker.
All right, and this Bloomberg Business Flash being brought to you by IBKR. Will the percentage of U.S. experiencing drought conditions exceed 18% on February 18th of 2025? At IBKR Forecast Trader, the yes was recently at 35%. What's your take? Trade your prediction at ibkr.com/forecast. Let's just power through this as we wait for Powell. Stocks lower, trade tensions, yields rising. They were higher ahead of Powell's testimony before Congress. The 2-year yield up about 2 basis points, 4.29 right now. The European Union vowing to respond to those 25% tariffs imposed by President Trump on steel and aluminum imports. Coca-Cola among the most actively traded right now, up 3.6%, profit beating Wall Street expectations. Among the best performers, DuPont, those shares, they are rising right now almost 5%, earnings jumping on growth in their electronics market. And Humana, the health insurer, forecasting revenue for this year that exceeded Wall Street expectations. However, the shares in the early going right now down 1.6%. Overall, the S&P 500 down 17 points at 6,048. The Dow Jones Industrial Average 147 points lower. The NASDAQ 100 right now down 60 points. We check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. Back to you, Nora and Alex.
All right. Thanks so much, John Tucker. So we have Jay Powell's testimony. Obviously, that's going to be key for investors. But man, there is an OpenAI, XAI tit for tat unveiling within the market as well. So what was your take when you heard that yesterday?
Really interesting.
Right?
I mean, lots to keep an eye on, especially with OpenAI. We've been talking about DeepSeek. So many things going on in the market right now, and investors don't know where to look.
So the report, of course, was that Elon Musk, through a consortium of investors and XAI, his AI platform, was making a bid just shy of $100 billion for OpenAI. Now, earlier, Bloomberg's Tom McKenzie was able to sit down with OpenAI's chief executive officer, Sam Altman, at the AI Action Summit in Paris. In a wide-ranging conversation, when he was asked about Elon Musk's bid to buy OpenAI, Altman said the company is not for sale, and he believes that Musk's bid is an attempt to slow them down.
Look, OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff. Now this, and we'll try to just put our head down and keep working. Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI? We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the nonprofit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the nonprofit is not changing into anything or going anywhere. I mean, whether they did or didn't, they built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that, DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do. And we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well. Do you think Musk's approach then is from a position of insecurity about XAI? Probably his whole life is from a position of insecurity. I feel for the guy. You feel for him? I do, actually. I don't think he's a happy person. I do feel for him. Okay. Do you worry that he has this proximity to the president and he can influence the decision-making of the U.S. presidency and policies around this agenda on AI? Not particularly. Maybe I should, but not particularly. I mean, I try to just wake up and think about how we're going to make our technology better.
That was our great interview with Tom McKenzie and Sam Altman over at OpenAI, saying, look, we're definitely not for sale. He did post, though, yesterday. He's like, but hey, we'll buy Twitter for just shy of $10 billion if you want.
They don't like each other, do they?
No. What gave you that idea? Anyway, we're definitely going to keep our eyes peeled for any more updates on that story and bring that to you as they cross. But again, we are drumbeating to the big event, and that is Fed Chair Jay Powell testifying before the Senate Banking Committee. He has his speech already laid out. We are currently watching Senator Elizabeth Warren, the ranking member of the Senate Banking Committee, addressing and welcoming everybody. Then we will take Jay Powell's statement. But in the meantime, we wanted to get more of an update with Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist. All right, we got the prepared statement. Anything that stood out to you here?
Absolutely nothing. So Powell said exactly what we expected, which was, we don't know what our next move is going to be. And you've heard a string of speakers come out this morning and yesterday, and basically since the meeting, not long ago, that suggests that the Fed might be on hold for quote unquote some time, right? So, and how do you define some time? Well, historically speaking, some time has meant at least 6 months. So if the Fed's on hold from now until say the third quarter of the year, that gives them some time to assess incoming data, assess what new policies that the current administration is going to be making, and then they can decide whether or not they're going to remain on hold or cut or hike, depending on what the situation is at the time.
So this will be Powell's first testimony before the U.S. Senate Banking Committee since Donald Trump returned to the White House. How do you expect them to push in terms of Trump's proposals on tariffs and a lot of taxation, immigration, regulation? How far do you expect them to push on those questions?
Well, I think members of both the Senate today and then the House Representatives tomorrow will ask him about it. He won't answer. He's ultimately Powell's going to say, once we see what the actual policies are and we can assess how they're going to affect the economy, whether it's spending, like maybe he'll go through, here's the things we're going to look at, but he's not going to be able to give an answer to how it's going to affect the policy regime and in terms of monetary policy. And that's the right thing to do, because quite frankly, anyone who says that they know what's going to happen because of what Donald Trump's saying, they're making a guess, or at best a guesstimate, right? We don't know what a lot of the policies coming out of Washington are, how they're going to permeate and how permanent they're going to be. You've seen just recently, look, tariffs are on, tariffs are off, tariffs are on, tariffs are off. How can we assess the long-term economy with such uncertainty in what near-term policy is going to be?
But what we can address now is inflation expectations that have been rising, particularly two-year inflation break-evens. We saw in the UMich sentiment survey that one-year inflation expectations shooting up quite unexpectedly, and that he can talk about. And he does talk about needing those inflation expectations to stay anchored. What might he say about that?
Yeah, that's a good point, Alex, because the one thing that we do know is that if there are tariffs, that there will be an increase in the price of goods and services, goods in particular in the U.S., and probably a little bit more in services too, which has really been driving inflation expectations. So he'll acknowledge that. I mean, he has said in the prepared remarks that the labor market's doesn't seem to be driving inflation. I actually disagree with that statement. If you look at the labor market and how tight it is and where you're seeing the pockets of price increases, that is being driven by wages and the fact that you have services prices going up faster than goods prices, and then you have wages in the service sector going up faster than others as well.
All right, Ira, you're getting trumped here by Jay Powell. Thanks a lot. Ira Jersey, Bloomberg Intelligence, Chief U.S. Interest Rate Strategist. Let's go to the Senate Banking Committee, where Jay Powell is just starting his prepared testimony to the Senate Banking Committee.
Both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-term goal. PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of the progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we are conducting the second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally mandated assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communication tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Chairman Powell. Certainly your words and your actions have
You were listening to Fed Chair Jay Powell testify before the Senate Banking Committee. Now questioning him is Chairman Senator Tim Scott.
Economically, and I thank you for your commitment to having a conversation with all of us about how you do that well. You and I had a conversation yesterday. Some of it was frustrating, some of it was illuminating. But in the end, my goal is to make sure that the American people, and specifically those working paycheck to paycheck, have more opportunities to succeed, not fewer. You have said that the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. Yet you have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I held a hearing on debanking and once again heard that federal banking agencies, in particular the Fed, use reputational risk as a tool to encourage the debanking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision, once appointed, to revise the Federal Reserve supervision manuals to remove reputational risk as a tool to weigh in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision can result in the loss of billions of dollars. Yet following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify egregious mismanagement of interest rate and liquidity risks, we have yet to see any regulators be held accountable. And as you recall, that was a point of my frustration. As a guy who's spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee failure. Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed to cause us to act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say, a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand your point on accountability.
This is one of the areas where you see the approach of looking at safety and soundness, and with the number of MRAs that when really documented but no action was taken, that leads me to the conclusion that individual employees, supervisors, should have been held account for that. I'll move on, though. In the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me as chairman to make sure that financial regulations do not impose more burden than is necessary? And I'll say that this comes after a number of conversations with community banks and regional banks that have continued to stress that the cost of the regulatory framework around them isn't just harsh, it's oppressive. Larger banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better, and would love to hear your thoughts on that.
Right, first of all, I will commit to working with you on that. We do try to avoid excessive burden. I think it's fair to take a fresh look frankly, on debanking. I think we all see, both in your hearing and in the one on the House side, we hear a lot of people talking about that. And, it's time to take a fresh look, I think. We don't intentionally do these things, but sometimes regulation leads things to happen, and we need to be working on that.
I appreciate that, and I'll turn over to the ranking member. I'll say this, after having a number of conversations with CEOs of banks around the country, one of the things that was made clear to me with specific statement from these CEOs is that the regulatory, OCC and other regulatory agencies said specifically to debank certain industries, and that is the point that I'm making, and one that I think we have to solve. If it's legal in America to do business, we should do our part to make sure that they're banked.
Thank you, Mr. Chairman. So over the weekend, co-president
You are listening
Musk
to Fed Chair Jay Powell testifying before the Senate Banking Committee. Currently questioning Jay Powell is ranking member Elizabeth Warren.
Family of 4 in South Carolina facing an illegal foreclosure. No more cop on the beat looking out for your grandma whose bank account has just been taken over by a scammer. No more cop on the beat looking out for people getting ripped off by giant credit card companies that are charging illegal junk fees. It also means that the CFPB is no longer doing one of its most important jobs, examining big banks to root out illegal conduct before it happens, or at least stop it before more people get hurt. Chair Powell, if the CFPB isn't on the job right now, then who is administering JP Morgan or Wells Fargo's consumer compliance exams to ensure that they are following the law?
Senator, I believe that, and you would know, that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB we still have some jurisdiction.
We'll talk about that in a sec. But the answer to my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
No one, in other words. So thanks to co-president Musk and CFPB acting director vote, Wall Street banks no longer have to show the bank examiners that they're not illegally opening accounts people didn't ask for, like happened with Wells Fargo, or charging illegal junk fees like the Bank of America did. But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country, those that have less than $10 billion in assets? So Chair Powell, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams for those smaller banks, or is the Fed still on the job to make sure that those smaller banks are following consumer financial laws?
Still on the job, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, Russ Vought, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I have my money in one of those giant banks, I might think about going to a smaller bank where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too big to fail banks. During the first Trump administration, under your leadership, the Fed weakened the big bank stress tests, including by giving the big banks some of the answers to the test in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that, hand all of the answers over to the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and, in your own words, would render the stress tests toothless?
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that. And so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
Thank you. Senator Rounds.
Thank you, Mr. Chairman. And Mr. Chairman, thank you for coming before the committee. I appreciate the opportunity to visit with you. I've got a series of questions, but I would like to give you an opportunity.
You're listening to Federal Reserve Chair Jerome Powell being questioned by the Senate Banking and House Financial Services Committees. Republican Senator Mike Rounds is now speaking.
Individuals right now, any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any
Any
law
changes, any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very
if
good.
If, in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks, it's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. And I think we can do this reasonably quickly, one that is compliant, consistent with the Basel requirements, and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that fairly quickly, and we're committed to doing that.
We always wanted our banks to be competitive with European banks, and I'm just curious, the original proposal that was in front of you, and I'd like your thoughts on this, it was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment I'll make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, you know, I've said many times in this committee that I think that the level of capital in the largest banks is about right, and so it'll shake out somewhere in that area, I would guess.
Our expectation would be, and the markets would expect, that it would be neutral with regard to capital.
In that range, but I want to defer to our new colleagues and get their views as well. But that's a good starting place.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize quickly. Effectively, Congress authorized spending, and then the agencies carry out those spending orders. And the way they do that is they send an order to pay a payee, a recipient, to the Treasury Department. Upstream, before it gets to the Fed, all of these decisions are made about, is this an appropriate order? Is this payee on the don't pay list, and all those things. Once all of that is set, it comes to the Fed, and by that I mean 4 or so of the reserve banks, and we actually make the payment. We take the money out of the Treasury General account and we make the payment. We make no judgments whatsoever. Those are all made upstream from us, and we are in fact the fiscal agent of the Treasury.
Confirm for me today, is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity, efficacy, resilience, and all those things of this system. And you know, people do depend on this in a big way, and we're committed to that.
One last question for you, sir. The failure of Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this, it cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired. But you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised, yes. I can go into some details. I mean, one thing that didn't happen was, For example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that, that could well have been enough to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better.
Thank you, Mr. Chairman. I think this is one that I think, as you appropriately pointed out, I think this is an area where a lot more questions are out there yet, and I think if it's the playbook that was the problem, I think perhaps a discussion about how that playbook has been revised would be appropriate in the future. Thank you, Mr. Chairman.
Thank you. Senator Cortez Masto.
Chairman Powell,
you were listening to Fed Chair Jay Powell testify before the Senate Banking Committee, currently being questioned now by Democratic Senator Catherine Cortez Masto.
Of concern, and you touched on a little bit of this, and I think this is important to clarify. There was a change in the law when the CFPB was created. The CFPB examines the banks and enforces the law, whereas the Fed only supervises those banks. Is that correct? Or how would you determine that relationship?
With the CFPB? So Dodd-Frank took a lot of the consumer compliance jurisdiction away from the other banking agencies and gave it to a newly created agency, the CFPB. We retained a residual amount of that, as we just discussed, which was banks under $10 billion in assets. But the CFPB essentially took all of that when Dodd-Frank came into being.
So as it was created, when you two were working together, the Federal Reserve collaborated with the Consumer Bureau when supervising those large banks, correct?
Yes, we still retain supervision over all the holding companies and also of Fed member banks.
And let me ask you this then, does the Federal Reserve enforce consumer protection laws now for things like money transmitters?
Not for money.
That would be the consumer protection. That would be CFPB.
Yes, yes.
Okay.
That's
and
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some financial market utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports of concerns about fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe so.
And you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has $10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't supervise.
And I think that's the concern we're all having right now, is this concern of when we're looking to streamline government. And listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach. But there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks that the CFPB supervises.
Thank you. Let me ask you this, and you know, we talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve Board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are waiting to buy a home. And we know that's still an issue, the high prices right now for home affordability. You add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
You know, so overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remained high, but that's not so directly related to the Fed's rate. That's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, you know, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
Thank you, ma'am. Next will be Senator Kennedy.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here.
You're currently listening to Fed Chair Jerome Powell being questioned by the Senate Banking Committee. Currently speaking is John Kennedy, Republican Senator.
To the big bank lobbyists. Is that true?
No.
Okay. It seems to me that the big picture should not go unnoticed. Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts, based in part on history, said that you were going to have to provoke high unemployment and put our country into recession in order to get inflation down. Do you recall that?
Very, very well.
Are we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about China?
No, wouldn't trade places.
How about France?
No, thanks.
Things aren't perfect. Inflation's obviously still sticky, and long rates are too high, which I want to talk about in a second. But the fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others.
Well, have
make
we
that
experienced a hard landing?
No, we sure
Are
haven't.
we in a recession?
No, we're not.
I call that a soft landing. And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does. Again, I'm not saying things are perfect, but I never imagined that our landing could be this soft, albeit not perfect. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and our president on the fiscal side. I don't expect you to comment on that. You and the Federal Reserve can to a large extent control short rates, can't you?
Yes.
Through the Open Market Committee. You can't control long rates, though, can you?
No, we can't.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, you know, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question. If you went home tonight and Mayor Powell, your spouse, said, you know, I got a call today from our bank, and they're debanking us. They're worried about their reputational risk because they don't like our politics. Would you think that fair?
No, I sure wouldn't. And as I mentioned earlier, I too am troubled by the quantity of these reports, and you know, really want to understand better why this is happening. You know, one theory is that banks are just very risk averse around BSA and money laundering, and that's because we're so tough on them and that they just don't, any red flag is enough. But you know, it may be that this whole thing with reputation risk needs to be thought about. It's actually coming out of our one manual that we use. We're taking that concept out, the manual that we've been using for account access for master accounts. We're just going to take that out. But I think this needs a fresh look, and I think it's time for that, and we're going to do that.
Well, I've asked our chairman, and he has agreed to invite some of the CEOs of some of the banks that have been debanking people. The CEOs,
Yes.
Not their lawyers, not their PR consultants,
Not the lobbyists.
not their priests, them. The CEOs to come in and let's talk about this and find out what the hell's been going on.
Thank you, Senator Kennedy.
Thank you, Mr. Chairman.
Senator Reid.
Thank you, Chairman Scott. Chairman Powell, welcome. Thank you very much. I think your monetary policy combined with the Biden fiscal policy over the last 4 years has made a tremendous difference.
You were listening to Fed Chair Jay Powell testify before the Senate Banking Committee. Currently questioning Powell is Democratic Senator Jack Reed.
2.2%. The unemployment rate finished the year at 6.7%. By 2024, gross domestic product grew 2.5%. The unemployment rate was 4.1%. Labor force participation rate went up from 61% to 62.5%. And that's a combination of your work together with the fiscal policy of the Biden administration. So I thank you for that. One of the issues before us today is the issue of tariffs. In July 2018 testimony, you stated, Mr. Chairman, countries that have remained open to trade, that have not erected barriers, including tariffs, have grown faster and had higher incomes. Do you still believe that?
Yes, I do. I would stand by that.
So President Trump's tariffs on China, Canada, and Mexico will obviously raise costs on families. In fact, some economists, many economists, project about $1,200 per year households will be paying extra, an increase of inflation by nearly 1%, economic growth depression, and, for example, the increase of the average car price by $2,700. Is that a wise policy?
So I guess I ought to say this. You know, I think the standard case for free trade and all that logically still makes sense. It didn't work that well when we have one very large country that doesn't really play by the rules. And in any case, it's not the Fed's job to make or comment on tariff policy. We, you know, really that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
Just this weekend, the president removed the board of the Kennedy Center and made himself chairman. What would you do if the president tried to remove a member of the Federal Reserve Board?
Well, it's pretty clearly not allowed under the law.
Thank you. We've communicated back and forth about synthetic risk transfer as a potential danger to the banking system. And could you give us some insights on how we can improve financial stability by regulating these transactions more appropriately?
So what we've been doing for some time now is looking at them on a case-by-case basis. And if they really do transfer risk successfully, then that's okay. I mean, you know, it's a good thing if a bank wants to transfer risk off its balance sheet in a way that it gets compensated for and all that. But what you want to make sure is that the risk is really transferred, and that was the problem during the global financial crisis. Was sort of things that appeared to but did not accomplish a transfer of risk. So we see this coming, and we've been looking at these transactions on an ongoing basis.
Well, I commend you for that. In fact, what happens typically is the transaction becomes complicated by synthetic risk transfers, as it was the case with synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage. Of course, while housing is difficult, two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're a sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
In our housing market, the 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
That's really a question for you. You know, I mean, putting them back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate it.
Thank you. Senator Ricketts.
Well, thank you, Mr. Chairman and Ranking Member,
You're currently listening to Federal Reserve Chair Jay Powell being questioned by the Senate Banking Committee. Currently speaking is Pete Ricketts, Republican Senator.
I want to address, again, something that the Ranking Member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of Banking that reported to me, that if any consumer would contact us and make a complaint about a bank, even a big bank like JP Morgan, we would investigate, as could the OCC, the FDIC, the FTC. So to characterize that nobody's out there looking for consumers, I think, is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for the consumers. One of the things that has also impacted consumers is inflation. Prices under the Biden administration were up 20%. An average household is paying $13,000 more today than they were for the same standard of living they had before Joe Biden got elected. We see that grocery prices, for example, are up 22%, rents up 23%. Simply put, Nebraskans are economically worse off today than they were 4 years ago, and I expect that that's part of the reason why we saw this change in the administration. They thought that that was not something that they wanted to continue to pursue. They didn't want the same policies being followed. We have to end the reckless federal spending, rein in inflation, and be responsible about how we make decisions to be able to grow the economy. One of those areas that I'm concerned about is the expansion of the Fed balance sheet. The Fed's balance sheet before at the end of 2019, so before the pandemic, was about $4.1 trillion. By May of 2020, the Fed expanded that to $7 trillion, and by 2022, the Fed's balance sheet hit an all-time record of $8.9 trillion. Inflation peaked at 9.1% that year, a high we had not seen since 1981. Now, I'm encouraged by the actions the Fed has taken with quantitative tightening to shrink the balance sheet down to $6.85 trillion, but $6.85 trillion is still too high. And one of my concerns with this, Chairman, is that that's kind of one of your tools to be able to guard against a downturn in the economy or some sort of shock. You obviously used it during the pandemic. Looking ahead long term, will the Fed Reserve continue to this course of unwinding the balance sheet?
Yes, so what we said is that we intend to slow and then stop the decline when reserve balances are somewhat above the level that we judge consistent with so-called ample reserves. The most recent data and the feel of the markets is definitely that reserves are still abundant. They're about the level they were at when runoff started, because the runoff has really happened out of the overnight repo facility, reverse repo. So yes, it's an ongoing thing, and we're not yet where we're headed.
So what kind of pace can we expect? And I know that obviously there's going to be a lot of factors like what happens to the economy over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these commissions, and I think you used the word stable quite a bit, if these conditions were to remain, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
Basically, we're going to be looking at reserve conditions in reserve markets, and trying to stop a little bit above what we consider ample. And we think we're meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves other than by observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing, and we have a ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like what you're seeing in the current day. It's a different test for stopping quantitative tightening, but we would use QE going forward only in a situation where rates are at zero, and we're a long way from zero now.
So that you think that, again, just generally speaking then, if things were to remain stable, you'll continue to unwind the balance sheet, you'll continue the quantitative tightening. Can't give me a range on this? Is that what I hear you saying?
That's right. That's right.
Okay, great. Well, I encourage you to keep doing that because, again, I think that's important to be able to make sure that you've got powder for the next issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
Senator Warner.
Thank you, Mr. Chairman. Chairman Powell, good to see you. One of the things we've talked about in the past, and I've got 2 or 3 issues I want to get through fairly quickly, is that our
You were listening to Fed Chair Jay Powell testify in front of the Senate Banking Committee. He is currently being questioned by Democratic Senator Mark Warner.
That innovation can't come at the expense of things like anti-money laundering, consumer protection, financial stability. I continue to worry in many of these hearings where we keep seeing this regulatory creep outside the boundaries of traditional financial regulation. I think if we were starting a system from scratch, few of us would design it this way. But it is one of the reasons why I'm looking forward to working with Chair Scott and my colleague, Senator Lummis, on a framework at looking at stable coins in particular within the regulatory perimeter. I know my friend Bill Hagerty just introduced a bill in this area. I'm looking at trying to make sure we get those guardrails put in place, and how it touches the Fed is something that's terribly important to me. I know you and I have talked in the past about the notional idea of same activity, same regulation in the non-bank sector. If you'd like to wax briefly on this question around stable coins and how we think about them in the same point of, if they are similar to other activities, should they not have the same regulatory structure?
So we definitely support these efforts to create a regulatory framework around stablecoins. Stablecoins may have may have a big future with consumers and businesses. We can't know that now, but it is important for the development of stablecoins in a safe and sound manner, and a manner that protects consumers and savers and all, that there be a regulatory framework. So we see these bills, and we're in contact as we were in the last Congress, and trying to add our technical thoughts and how to do this. And we think it's a very constructive exercise.
Well, we do think, you have a lot of expertise in this session, and there are people people come with lots of opinions on everything in crypto, from over the top to the other end of the spectrum. And I'm gonna need to rely on your expertise as well as we try to work through some framework for stable coins. I know there are a lot of earlier questions on CFPB. I think the record is pretty darn good. It's returned $20 billion to consumers. Matter of fact, the last time we had the previous chair here, Chair Rohit, Ms. Chopra, we were talking about $55 million to Virginians. I do have to mention this more for my colleagues. Tim Kaine and I did a teletown hall last night. Lots of things happening in Virginia. Normally, we would get maybe 3,000, 5,000, 6,000 folks on a teletown hall. We had 60,000 last night. I have not seen anything like that in my time up on here on the Hill, and a huge amount of concern about what the Doge boys are doing, whether our information is safe, whether privacy is protected. I had one lady say, in light of what was happening at CFPB, and while there's not a direct connection, she's saying, is her deposits at her bank safe? We tried to give her a assurance, but I said, you know what, ma'am, I'm going to be talking to the chairman of the Federal Reserve tomorrow. And with this diminution or shuttering, at least at the time being, of the CFPB, can I tell, I believe her name was Mary, can I tell Mary from Virginia that her bank account is safe?
I think bank accounts overall across the economy are safe. Yes, we've still got deposit insurance at the FDIC, and the banking system is well capitalized and safe.
Well, again, I think the concern was being raised was that the diminution of consumer protections lent her concerns about whether that dollar being safe. Last thing I want to recognize is that there's been reports in the media about the thinness in the Treasury markets, the number of additional bonding that we're going to have to do, particularly with so many of these unpaid tax cuts. Matter of fact, one of the things that was really striking to me was that yesterday the president mentioned how he was, quote, examining Treasury debt payments for possible fraud, and suggested that our debt might not be as high as possible. We all understand the full faith and credit of the United States is based upon a reputation. If this president were to suddenly say, I'm wiping off X amount of debt because I don't believe we owe it, what kind of effect would that have on both stability of the dollar and the overstability of our economy?
It will probably not surprise you that I will defer to you on that question.
So you think it would be, from a Fed standpoint, the President of the United States starts to saying we're not going to pay our Treasury debt, you're going to have no view at all?
I'm not going to comment on things that the president says.
I would like to see us at some point get a stronger answer on that, because I think that in light of the president's willingness to shut down agencies willy-nilly, his ability to potentially curtail payment of debt, I think would have devastating consequences on our economy. Thank you, Mr. Chairman.
Senator Britt.
Thank you, Mr. Chairman. Obviously, there's been a lot of conversation both in
You're
and
currently
out of this
listening to
hearing
Federal
room today.
Reserve Chair Jerome Powell being questioned in front of the Senate Banking Committee. Currently speaking is Republican Senator Katie Britt of Alabama.
President Trump ran on this. I mean, he said we're going to look for wasteful spending across our government. We're $36 trillion in debt, y'all. That's not only fiscally irresponsible, it is actually morally irresponsible. And the difference in this administration and the last administration is that President Trump is actually the final arbiter. And it's interesting that none of you had anything to say over the last 4 years when it is clear that our commander-in-chief was not in command. And if we're going to use the term co-president, then let's go back and say co-president Jake Sullivan, co-president Ron Klain, co-president Jill Biden. I mean, it seems that some of the biggest decisions were made during the president's afternoon nap time. And so I just think we need to be a little bit more honest about what's been laid out and what's actually occurring. Chair Powell, I want to discuss some monetary policy issues, but I first want to highlight a few supervisory items. We unfortunately started 2023 with several bank failures in which the Fed itself admits its supervisors were, quote, too slow to ask. The question has been asked earlier about who was fired, who was not. I think that there's some real merit to having accountability that we have not seen there. In the aftermath of those failures, the Fed was certainly not slow to act when it came to new regulations, like the new capital requirements that would have put the U.S. banks at a global disadvantage and actually hurt consumers in my state. The way I look at this is the world came up with a gold standard. And then Vice Chair Barr said, hold my beer. And unfortunately, that hurts Alabamians. In addition to that, we had Community Reinvestment Act and stress testing frameworks that were basically adopted in secret. Or as we discussed last week, the reputational risk and just the arbitrary nature of that and those standards that were used to push political agendas. None of this is acceptable, and we've got to take a look at how to promote greater accountability and transparency into the Fed's supervisory function. Shifting gears, as of January 30th, the Federal Reserve had a mark-to-market loss on its balance sheet of roughly $221 billion. In fact, I looked back and the Fed has posted losses since September of 2022. Meanwhile, we've seen transfers to the CFPB totaling $2 billion since September of 2022. So just to clarify, Chair Powell, these money transfers are requested by the CFPB director each quarter and then directly deposited by the Fed. Is that how that works?
So the director of the CFPB requests money, and we, under the law, we send that money. Yes.
So, in fact, but Dodd-Frank actually prohibits the Fed from actually reviewing or amending those requests.
That is correct.
And so it gives full discretion to the CFPB
up
director.
to, I think, 12% of our, there's a ceiling on that, but that's correct.
So just to level set, how many times, has the CFPB funding request been denied by the Fed?
We don't have the authority
Zero.
to deny it under the law.
Zero, right?
Zero, yeah.
Yeah, that's what I thought. And by the way, I'd like to applaud the current administration and acting director Vogt for inserting some accountability back into the agency by pausing these quarterly just blank checks. On that, I know there's been a lot of conversation around the Bureau over the last few days, but I do want to focus on those last couple of years, particularly the $2 billion the CFPB received from September 2022 up to the last receipt on January 2nd, 2025. Congress specified in statute that the Fed shall fund the CFPB through the combined earnings of the Federal Reserve System. However, as I mentioned, the Fed has no current earnings. It has a balance sheet of negative $200 billion. So instead of the recent audit statement saying the Fed is funding the CFPB through assessments on its reserve banks, Mr. Chair, there are only two statutes that authorize the Fed to make reserve bank assessments, and neither permit the CFPB to fund transfers. So what authority exactly did the Federal Reserve have to assess the reserve banks in this manner over the last 2 years? I just wanted kind of a fact-finding.
We looked at that question very carefully, and it's very clear on the law and the legislative history that we're still required to make those payments to do so.
Appreciate it. Thank you.
Senator Van Hollen.
Thank you, Mr. Chairman. I would point out that
You were
candidate
listening to
Trump
Fed Chair Jay
did
Powell
not
speaking with the
on
Senate
implementing Project
Banking
2025.
Committee,
In
currently
fact, when he was
being
asked on
questioned
the
by
campaign
Senator
trail about
Van
Project
Hollen,
2025,
Democrat
he said, "I don't
from
know anything about
Maryland.
that. Who are those people?" And yet he early on and quickly installed a key architect of Project 2025, Russ Vogt, as the head of the Office of Management and Budget, which we know is the command and control center for the budget overseeing all federal agencies. And that's what Elon Musk is doing now. he's implementing Project 2025, the same Project 2025 that candidate Trump said he knew nothing about. And he said that because he knew it was unpopular. He knew it would be unpopular to take the financial cop off the beat. And I want to start by talking about what's happening over at CFPB, the Consumer Financial Protection Bureau, because that is the cop on the beat to go after fraudsters and scammers who cheat Americans out of their hard-earned money. And they have returned billions of dollars to our constituents, to the consumers who have been victims of these scams. And in doing so, they've earned some powerful enemies who want to shut them down. And Elon Musk is doing that dirty work on behalf of those fraudsters. And there's something especially twisted about the richest man in the world shutting down an agency that helps victims of scammers and fraudsters recover just a little bit of their hard-earned money. And I find it especially interesting that the new self-declared head of the CFPB, Russell Vought, told employees not to come into the office and essentially to stop work. Here's what he wrote, and I'm quoting, "Employees should not come into the office," unquote, and stand down from performing any work task, unquote. So this is an interesting situation. Federal employees continue to get paid, but the Trump administration tells them to stop doing their work. That apparently is what the Trump administration thinks is a good deal for the American taxpayer, to pay employees to not to do their job. So, Mr. Chairman, I have a simple question for you. Is that a practice that you pursue at the Fed, to pay your employees but tell them not to come to work? Have you done that?
No.
That wouldn't be very efficient, would it? No, it wouldn't. And yet, that's what the so-called Doge boys, efficiency boys, are doing. In addition to that, they're rummaging through the private, very personal, sensitive information of Americans at the Department of Treasury. So it seems to me that the Trump administration and Elon Musk are focused on everything except what Donald Trump said he was going to focus on during the campaign, which was to bring prices down. And when you look at the price of eggs these days, I noticed that Waffle House just instituted a new 50-cent per egg surcharge due to the nationwide rise in the cost of eggs. They said that's going to be a new surcharge, and other restaurants are following suit. You've seen that, right, Mr. Chairman?
Yes.
Yeah. And at the same time, the Trump administration has restricted federal agencies from providing the public with information about the bird flu, avian flu, which is part of the cost of egg increases. So what we're really facing here is an administration that campaigned on bringing down prices and is not doing that, did not campaign on Project 2025, and that's what they're doing. But when it comes to prices, Mr. Chairman, the president's also talking about significant increases in tariffs. Our Republican colleagues are also talking about passing a tax bill that gives way disproportionately to the super wealthy, and which will add trillions to the deficit by their own account. They're talking about playing around with the baseline. So my question to you is simple. All things being equal, do big increases in tariffs and increasing the deficit and debt put upward pressure on inflation? Isn't that simple math?
You know, it really does remain to be seen what tariff policies will be implemented, and I just think it would be unwise to speculate when we really don't know. I mean, we see proposals, but it's so hard to say what's going to happen. And
well, last time the Trump administration was in office, the Fed took actions because they were concerned about the impact of increasing tariffs. Isn't that the case?
We wound up cutting rates in 2000 and I guess it was 19, but it really was because growth slowed and confidence was weak and the global economy was weakening. So the net effect of all that's what we look at. And it's really not just tariffs, it's It's tariffs, immigration, fiscal policy, and regulatory policy. And those will all go into a mix, and we'll try to make sense of it and do what's right for monetary
Well,
policy.
if you could just get back to me, I'm not, on the question of increasing the deficit by trillions of dollars and what impact you believe that has on inflation and prices. Thank you, Mr. Chairman.
Yes, sir. Senator Lummis.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being with us today. I think you're aware of what direction my questions will take.
You're
They
currently
will be
listening to Federal
focused
Reserve
on
Chair
the
Jerome
bank
Powell being
supervision
questioned by the Senate
function
Banking Committee.
of the Fed.
Currently speaking is Cynthia Loomis, Republican
And
Senator
I
of
point out that
Wyoming.
when you and I were toddlers, 1956, the chairman of the Fed at the time, William McChesney Martin, said that the Federal Reserve Board is an agency of the Congress. Ben Bernanke said something similar in 2013 when he told Janet Yellen that, quote, Congress is our boss. Do you agree with that statement?
Yes, the way I always say it is that our supervision, our accountability runs through the legislative branch, not through the executive branch, as it does in many other forms of government.
Thank you for that, because I wouldn't have guessed that that was going to be your response. The way that the Fed has behaved for the last 4 years in its relationship with the U.S. Congress is to thumb its nose at Congress. Your staff has repeatedly stymied information requests from this committee, notably made by myself, the chairman, the ranking member, Senator Tillis, former Senator Pat Toomey, and others. In my experience, the Fed is a black hole. It consumes information, but it never releases it. Your fellow governors have personally misled me on at least 2 occasions with respect to Wyoming and digital assets. And in recent federal court filings, former Senator Pat Toomey has accused your staff of lying to him while providing technical assistance on legislation that passed in the National Defense Authorization Act in 2022. Now, I have behind me a statement by the Fed's General Counsel, one of the staff that's sitting behind you today, who said, quote, the Fed generally resists legislative prescriptions. Now, to me, that's thumbing his nose at Congress, the very people that you and I just agreed you are responsible to and the people depend on. So this is why the American people think there's a deep state. This is why they think there are faceless bureaucrats making policy to hurt the very people of this country. Just look at the mess the Fed made of Silicon Valley Bank. And I contend that there is a lack of understanding that is deliberate on the part of the Fed with respect to digital asset policy. So the Constitution says Congress is your boss, but somehow your staff have not gotten that message. So, Chairman Powell, do you commit on behalf of yourself and the Federal Reserve staff to comply fully with all document demands issued by this committee in a timely manner?
Sure.
Will you instruct your staff to be complete in their responses and not to obstruct the oversight functions of this committee?
You know, we always work with the committee to be responsive to your requests. Sometimes they're beyond our capacity to respond to, and we work with committee and with committee staff to do that, but we're always responsive to committee requests.
And I'll look forward to engaging with you when you feel that our requests are outside of the scope of the oversight that we have over the Fed. Do you commit to disciplining or removing any staff that are found to have engaged in debanking activity, furthering Operation Choke Point 2.0, or other misconduct?
I can't make an open-ended commitment to remove anybody, but I will tell you that I am struck, and my colleagues and I are struck by the growing number of cases of what appears to be debanking, and we're determined to take a fresh look at that. In fact, I took the thing that you showed during the debanking hearing. When I saw that, we're now taking that out of the manual. So I thank you for that.
Thank you, Mr. Chairman. My time's up.
Senator Smith.
Thank you, Mr. Chair and Ranking Member, and thank you, Chair Powell, for being with us today. I appreciate
You've been listening to Fed Chair Jay Powell testifying before the Senate Banking Committee. Currently speaking is Democratic Senator Tina Smith from Minnesota.
Is of great interest to many of my colleagues on this committee. I know, Mr. Chair, that you care a lot about homeownership and making homeownership accessible and available to folks. My colleague, Senator Lummis, as well, many of the folks on my side of the aisle as well. And so I think this is something that we can agree on, that the rising cost of homeownership is a big challenge for our constituents, for Americans. And one of the big pressures, there are many, but one of the big pressures is the rising cost of home insurance. In Minnesota, families, seniors are struggling to manage a nearly 40% increase in home insurance rates. We've seen this over the last 7 years or so. And I know, Chair Powell, that you've told this committee in the past that that rising cost of buying insurance for your home has been a source of inflation as we've been trying to manage inflation. Now, I don't know anyone who doesn't see this crisis of rising insurance rates as being caused by extreme weather events. We've seen massive flooding in the southeastern United States. We've seen flooding in Minnesota. We've seen fires in the Mountain West in California. I mean, these are climate-related events. That's not a political position. That is just a fact. So, we've got banks that of course, require, understandably, that a homeowner provide insurance as a predicate for getting a mortgage. So there's a big question about what's going to happen when insurance becomes unaffordable, or in some parts of the country, just literally not available, and what impact that would have on the mortgage markets, on the value of American homes. Just last week, a new analysis from First Street showed that overall, the value of U.S. real estate could be reduced by $1.4 trillion, colleagues, over the next 30 years due to unaccounted for climate risk. That's the cost, the risk of not being able to afford home insurance because of these extreme weather events. And the prospect of trillions of dollars of property become uninsurable is clearly a recipe, it seems to me, for market instability, both in the rental as well as the mortgage market. So my question, Chair Powell, is, given these trends, how do you think the Fed and how do you think we should be thinking about the challenges that these events are going to pose to insurance markets and to the overall financial stability of the economy? I'm asking you to comment specifically on climate change, because I understand my colleagues on the other side of the aisle see that as a political question. It's more like what you see as the risk to financial stability here.
So let me quickly note that we don't regulate or supervise insurance companies for the most part, but we're seeing the same thing, which is both banks and insurance companies are pulling out of areas, coastal areas and things like that, or areas where there are a lot of fires. So what that is going to mean is that, if you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage, there won't be ATMs, there won't, the banks won't have branches and things like that. Right. That's a possibility coming up down the road. It's not that the banks will stay there and keep making loans in the face of evidence of disaster, or that insurance companies will do right policies. They can cancel those policies every year. Right. So I think the risk is that they just won't be there and that people won't be able to get them. That's really the issue.
And it seems to me that that would be a massive source of instability in our economy overall if you were to see that kind of dramatic decline in home ownership, home values, not to mention the disruption that would occur if people literally couldn't be in their homes anymore.
So I think it's going to fall, if that happens, it'll fall on homeowners and
Right.
residents, but it'll also fall on state and local governments, you know, which you see happening now, where they're stepping in states where insurance is going away, private insurance. You're seeing states step in because they want those areas to remain prosperous. So I don't know that it's a financial stability issue, but it certainly will have significant economic consequences.
Well, certainly to try to figure out how to provide reinsurance as an example in the places where commercial insurance isn't available would be a massive impact on state budgets, if to follow your chain of thinking. And I know in this committee, I've heard some of my colleagues on both sides of the aisle talk about the challenges overall with flood insurance, just as an example, and the massive expense that would have for us as well. I raise this, colleagues, because I think that this is an important issue that we need to be paying attention to. I do think it has a fundamental impact on the overall health of our economy as we look not even down the road, but where we are right now. So I'm out of time. Thank you, Chair Powell. I have a question. You and I have talked quite frequently about my deep and keen interest in the Community Reinvestment Act, and I'll follow up with a question on that for the record.
Thank you. Thank you, Senator Smith. Senator
Chairman Powell, it's good to see you here today.
You're currently listening
Welcome.
to Federal Chair
I wanna
Federal
start
Reserve Chair
by
Jerome
talking
Powell
a
being
bit
questioned by
about
the U.S.
markets
Senate
inflation.
Banking Committee.
Less than
Currently
6 months
speaking
ago, you
is Bill
expressed
Haggerty,
serious
Republican
concerns
Senator of Tennessee.
about labor market weakness and the risk of persistent inflation. But since then, the FOMC has begun its easing cycle and cut its target rate by 100 basis points, as you mentioned in your opening remarks. Now, in the January meeting, the FOMC has telegraphed that it felt both the labor market and inflation have reached a point where you're comfortable maintaining its target range. And my question is this: the recent market data, including last week's strong jobs report, indicate that the economy is on firm ground. Indeed, swaps markets have begun to price in fewer and fewer cuts this year. And I just wanted to talk broadly about these market conditions that you see. Do you see evidence of a higher neutral rate emerging at this point?
Yes, I mean, let me say there was a lot of reason to be concerned about downside risk in the labor market toward the middle of this year, but really that concern has diminished significantly. Labor market's very strong. I think the evidence is, my own view, and there are many different views on this, but is that the neutral rate will have risen meaningfully, very hard to be precise about it, from what it was. It was clearly very, very low before the pandemic. Extraordinarily low, historically so, but yes, I think it's moved up, and many of my colleagues on the FOMC feel so.
A point on climate, and particularly the Fed's forays into climate activism that have taken place over these past 4 years and the recent retrenchment that we've seen. It's one thing for the Fed to disassociate from its past climate activism in a press release, but to credibly claim that it's divorced itself from partisan climate policies. The Fed needs to do more than just issue statements. It needs to actually end its climate policies. The Fed's independence from politics is a headline topic at the moment, of course. And while much attention has been given to potential external pressures on the Fed, I think it's also critical that we scrutinize how the Fed's own regulation and supervision might be utilized to in some way politicize the institution. So when the central bank strays from its mandate by embracing partisan climate policies, the Fed embroils itself in controversial political debates and invites legitimate political scrutiny. So I just want to urge the Fed to refocus entirely on its core statutory mandates. I know it's a commitment that both you and I share, Mr. Chairman. Thank you for being here with us today.
Thank you.
Thank you.
Thank you.
Senator Warnock.
Thank you very much, Chairman
You were listening
Scott,
to Fed Chair Jay Powell.
welcome
Speaking
again,
of the Senate
Chairman
Banking Committee,
Powell.
currently questioning
I wanna
him
echo
is
the
Senator
words
Raphael
of
Warnock,
Ranking
Democrat
Member
from Georgia.
Warren and so many of my colleagues today on Doge and Project 2025's illegal attack on the Consumer Financial Protection Bureau. Certainly the Bureau was not created to be dismantled. And since its inception, the CFPB has been the only federal agency solely dedicated to protecting Americans' wallets and pocketbooks from scammers and predatory companies in financial services. The CFPB reduced costs for Americans, returning more than $21 billion to Americans who have been cheated since its inception. I want us to focus on that as folks are talking about chasing after waste and fraud and abuse. The CFPB has returned more than $21 billion to Americans. Make no mistake, this attack on the CFPB will increase costs for Americans, and it will give the green light to fraudsters and predatory actors seeking to cheat hardworking Americans. And so, Chairman Powell, thousands of Georgians of all political stripes have written into my office, and they are alarmed by an unelected billionaire and his hacksters' dangerous attempts to access Americans' private data and the Treasury Department's systems that control $6 trillion in annual payments to millions of American citizens, including Social Security, Medicare, and tax refunds. Quickly, yes or no, has Elon Musk or members of his team, to your knowledge, attempted to access the Fed's protected data and systems? Yes or no?
I don't
To your
believe so.
knowledge.
I don't believe so.
Okay, so will you commit to report to this committee, majority and minority, immediately should you become aware of any such attempt by Elon Musk or Doge to pierce the Fed's independence or to access its protected systems?
Yes.
Thank you for that commitment. The Fed's latest monetary policy report states that the tight labor market has allowed employment and earnings gaps between Black and Hispanic Americans and white Americans to narrow. I was glad to see that many of the long-standing disparities in employment and wages by sex, race, ethnicity, and education have narrowed under the Biden administration. Some gaps have reached historic lows. Specifically, the employment gap for Black workers and white workers is near its lowest point in almost 50 years. That is the economy that the Trump administration is inheriting, a historic low in almost 50 years. Chair Powell, as you work to promote maximum employment, what steps will the Fed take to ensure that these equity gains are permanent?
So the best thing we can do is it's both of our mandates really, because as you well know, high inflation hits people at the low end of the income spectrum first and most. And in addition to that, we know that the benefits of a strong labor market over time can be really visible and important in those communities as well. So we pursue our mandate. We keep our heads down, and it works out that is the single best thing we can do to foster, closing those gaps.
You pursue your mandate, you want to make sure that it's working. Would you agree that we still need good equity data to continue to narrow and close those gaps by race and gender?
I do think, we're always going to be in favor of good data at the Fed, and we do have quite a bit of that data on our website.
But if we don't have equity data, it'd be difficult to know, right?
Yes.
I'm glad to hear you still believe in the value of good equity data for economic policy making. It's better to fly with the data than to fly blind. I'm not sure what's so controversial about the data. And while I was disappointed to hear that the Federal Reserve, which is independent from the White House, it scrubbed a diversity and inclusion section from its website after President Trump's executive order, while also scrubbing data on the racial, ethnic, and gender makeup of its economists and researchers, I hope you will continue to ensure that the public has good data on how our economy is working or not working for historically marginalized Americans. I also hope you will reconsider your decisions around the whitewashing of the Fed's website. Chair Powell, as we think about the value of protecting data on the Black-white wealth gap or employment gap, I think it's important to understand what policymakers can learn from this data. Historically, from what you've seen in the data, historically, what types of economic events have caused the Black-white wealth gap or employment gap to widen?
Well, high inflation, downturns, you see generally just take the Black unemployment rate, it generally moves at twice the speed of the white unemployment rate. So when it goes up faster, and when it comes down faster. But there is, at the end of the day, there's always been a gap, and we want to run a strong labor market, and we target overall overall labor market conditions for maximum employment. But one of the benefits of that is that gap comes down.
Thank you so much. We all know that fully deregulating our financial regulators like the CFPB, firing bank examiners at the FDIC, or weakening the Fed's supervisory capacity makes an economic shock or recession more likely. We know that this disproportionately impacts Black and Hispanic workers, and there are real consequences to weakening and eliminating financial regulations that keep us safe. Working people are the ones especially who suffer. So thank you so much, and I look forward to continuing to work with you to close these gaps.
Senator Banks is next.
Thank you, Mr. Chairman. Chair Powell, thank you for presenting your report to
You're
the
listening
committee
to
today.
Federal Reserve
and
Chair
for coming to meet
Jerome
with me
Powell
last
being
week
questioned by the U.S.
in
Senate
my
Banking
office as
Committee.
well. The
Currently
Federal
speaking is
Reserve has
Jim Banks,
enormous
Republican
power
Senator of
over
Indiana.
Americans' ability to work and earn a living. And the Fed's interest rate decisions have an especially big impact on industries like manufacturing, which depend on big investments. Chair Powell, the Fed's data on manufacturing is still holding up nationally, but it doesn't look very good in the Chicago region, which includes most of my state in Indiana. The Beige Book says manufacturing jobs are declining and fewer people are buying manufactured products. It also says that steel demand is at a low level, auto production has slowed, and machinery orders are down. What does that say about the rest of the country? When manufacturing in the heartland slows, does that signal trouble for industries in other parts of the country?
It can. It doesn't always, but it certainly can. We watch the manufacturing sector. It's very important. Manufacturing jobs tend to be high productivity jobs. They're very important in our economy. But I would say over the last couple of years, manufacturing was pretty weak during during years in which we had high GDP overall. Manufacturing is a smaller proportion of the economy than it used to be, but it's still extremely important.
Senator Reid asked you why free trade doesn't work when one of the giant players doesn't abide by the rules. The China shock is proof of that. The Fed has a mandate to maximize employment. How do you account for the whole industry that is repeatedly suffocated by unfair competition?
You know, we don't do trade policy. We're not responsible for it. We don't comment on those who do trade policy. So, but, you know, so we don't really have a role in focusing specifically on that. That really is left to those who have responsibility over trade.
Do you agree that a healthy manufacturing economy is important to a healthy overall U.S. economy, though?
I do.
I hope you had an opportunity to read Robert Lighthizer February 6th essay in the New York Times. He explains why a big trade imbalance between any two countries is harmful to citizens in both of those countries. How does the Fed take the trade deficit into account in your decision-making at all?
Again, we really don't. You know, we're aware of it, but it's not something that directly affects our mandate goals.
So not at all?
No. I did read his book, by the way. I didn't read that editorial.
Fair enough. It is a good book as well. I want to get into tariffs. It's no secret that most conventional economists hate tariffs. But I want to note that Indiana gained manufacturing jobs during President Trump's first term with the 2018-2019 tariffs. Even though the economist's conventional wisdom is that tariffs will reduce jobs, do you commit to following the data and not prejudge any outcome?
Very much so, as we did in 2018-19.
Finally, my staff reviewed the research paper on tariffs in preparation for this hearing, and I want to point out one of them called The Employment Consequences of U.S. Trade Wars. Mr. Chairman, I'd like to enter this paper for the record. It found that the timing of tariffs are very important. It found that China's retaliation to President Trump's tariffs did hurt U.S. jobs, but if the U.S. had imposed tariffs on China much earlier in the 90s and early 2000s, it would have almost completely eliminated job losses due to the China shock. And I know you've said what you said before, but will you and your staff please take a look at this paper?
We certainly will. I imagine we already have, but I'd love to see it.
I appreciate that. Home ownership is an essential part of the American dream, but families are struggling to afford homes. In just 5 years, the price of a typical home in Indiana has gone up more than 60%. More than 3/4 of American families can't afford an average home in their neighborhood. How do the Fed decisions about monetary policy affect the ability of regular families to buy a home?
Most of what will have driven that increase will be about, some of it's about local regulation, as you, I'm sure, know. It's also about just wages going up and costs of materials and things like that going up. And land costs and all that are going up a lot. The channel that through which we affect housing is, of course, interest rates. And right now, interest rates are still pretty high, but actually, mortgage rates are really not set at the Fed. Those are really key off of longer run things. Nonetheless, we're clearly having an effect on that housing market, and that'll unwind as we normalize policy. But we're still going to be faced with high insurance costs and high material costs and labor shortages and all the things that keep driving housing prices up across the country.
Thank you. My time has expired.
Next will be Senator Gallego.
Thank you, Mr. Chair. Mr. Powell, just kind of running along that vein of thought, the housing costs are one of the top concerns of my
listening to
constituents
Fed Chair Jay
Arizona.
Powell
From
testifying
2010 to
before
2022,
the Senate
rents
Banking
in Arizona
Committee.
increased by 72%, and I wish wages were as increased
Currently
to
questioning
match, but
him
they did not.
is
and the average 30-year
Andy
fixed
Kim.
mortgage rate
No,
has
it
been
looks like
about
it's Ruben
6%
Gallego,
for nearly 30
Democrat
months. With
from
very few
Arizona.
rate cuts anticipated in the near future, potential cost increase from tariffs or imported construction materials, as well as the demand that we're going to see in terms of rebuilding from California and labor shortages. What do you think needs to happen to make housing more affordable in Arizona and the United States in general?
You know, housing policy and things to help housing supply are really in your wheelhouse, not ours. I do think you know, the housing markets around the country are still suffering from the after effects of the pandemic. Once that's all the way through and short-term rates are down to normal, whatever the new normal level is, I think housing costs are still going to be high. I think it's still going to be expensive to build housing in many parts of the country where lots of the urban areas, the obvious places to build housing has happened. So I think it's a long-term. There's a short-term problem which will go away in coming years, but there's a longer-term problem with housing availability, and that's going to be something that's not within our authorities or power to affect.
You know, one of the things that I've seen in Arizona is because we have people that are locked into mortgages at 2.9, 2.8%, and in order for them to move to the new house, they're going to have to essentially go and try to get, quote unquote, a bigger house, but the mortgage payment is going to be through the roof. And while I know the Fed doesn't set the mortgage rate, at the same time, one of the biggest drivers, obviously, of inflation, especially in places like Arizona, is housing costs. And then one of the biggest decisions essentially you make on whether or not to move rates is inflation, which is driven by housing costs. So we're in this kind of perpetual vicious circle in Arizona when it comes to interest rates. So I don't know what the answer to that is, but I just want to at least for there to be some understanding on that, because it's the reason we're not breaking out of this cycle is because the problem kind of feeds itself over and over and over again.
Yes, that's exactly what's going on, but it's not obvious, though, that lower rates would lead to lower housing inflation, because, of course, that would increase housing demand. It would unlock people's, low mortgages, but that creates both a buyer and a seller. So it's not clear that would be something that would drive down housing inflation.
Well, my supposition, especially in places like Arizona, which is really growing fast, is that by increasing supply with lower rates, you end up essentially having more of a competitive market, so people will start moving and essentially bring down the overall cost. But moving on, so I've also heard from businesses in Arizona, they're concerned about the threat of economic stability in tariffs that are imposed on our key U.S. trade partners. How should we expect prices to move for basic items like tomatoes, peppers, cars, and the like if we place a 25% tariff on Mexico next month, as the president has threatened?
So as you know, we don't do tariff policy and we don't do commentary on tariff policy. I mean, I think just generally, when somebody's got to pay the tariff, and it can be the exporter, it can be the importer, right. It can be a middleman, and it
Somebody
can be the
pays
consumer.
for it, though.
Somebody does, but
Right.
In some cases it doesn't reach the consumer much. In some cases it does, and it really does depend on facts that we haven't seen yet.
But that also contributes to some of the calculations on inflation overall.
It can, but
It's hard to predict.
There's a question of how persistent that would be and how large it would be.
Mm-hmm. So, and of course, I understand you're not here to specifically comment on trade policy, but overall, is it your opinion, let's just say a base opinion, that high tariffs can lead to higher costs, which would then end up being seen in terms of your inflation calculation that helps you set the rates.
So I'd say that's a possible outcome, which will depend very much on specific facts about what's being tariffed for how long, et cetera.
Okay, thank you. I yield back.
Senator McCormick.
Thank you, Chairman Scott. And
You're currently listening to Federal Reserve Chair Jerome Powell being questioned by the Senate Banking Committee. Currently speaking is Dave McCormick, Republican Senator of Pennsylvania.
50%. Debt held by the public, or true debt obligation, has more than tripled during the past 15 years, reaching more than $28 trillion. All told, U.S. national debt is now over 120% of our GDP. And runaway spending contributed to a regressive tax on all Americans, a tax known as inflation. In the past 5 years, the cost of living has skyrocketed for working class Pennsylvanians, especially, as you and I discussed when we visited, those relying on fixed incomes. And unfortunately, that compounded effect of inflation has not been offset by commensurate rise in wages for many Pennsylvanians. I've heard from countless Pennsylvanians who had to count their dollars at the gas pump, cancel family trips, even tighten their belts at the dinner table because of inflation. So while we discuss these heady issues, let's not lose sight of the very real human cost of the decisions made by people sitting in this room. And given that cost, I'd like to ask you about the national debt and the cost of financing it. We now spend more to service the debt annually than we do on national defense. So how concerned are you about the accelerating pace of government borrowing and the borrowing cost, which will affect families in the form of higher mortgage rates?
Yeah, you know, we don't comment on fiscal policy other than to say that, as my predecessors have said, that the U.S. federal budget is on an unsustainable path. It's not that the level of spending or the level of the debt itself is unsustainable. It's that the path is unsustainable, and ultimately the level of the debt will be. So there's no time like the present to start working on this. The longer we wait, the more painful it will be. It's something we need to do and will have to do in the long run, and the short run is better than the long run for that.
And just as a practical matter, how do you factor that into your policy thinking and decisions?
We don't. You know, we're here to achieve maximum employment and price stability, and it's really up to Congress to deal with fiscal issues, and we leave that to you.
Well, just as a more practical question, I think which falls clearly in your bailiwick, because of that national debt, it's caused the supply of U.S. Treasuries needed to finance the debt to skyrocket. And that's at the same time the Fed is shrinking its holdings of Treasury through quantitative tightening. So the question is, or could you at least give us some insight into the impact that this is having on the Treasury market as investors must absorb that supply? And in particular, I'm interested in how the biggest holders of U.S. Treasuries, how their behavior is changing as debt increases.
So this is a real Treasury question, but I think from our standpoint, I can say that there are lots of buyers for Treasuries, but Treasury buyers are going to be factoring in their assessments of the supply that's coming, and that may be part of the reason why the term premium has increased, as you know, over the course of this year. Although, you know, the rates have been going up and down lately. They're almost back to where they were before the election.
I know the Fed has been moving forward with comprehensive changes to the stress test process. Could you discuss how you're thinking about reducing the volatility of the results and increasing transparency on the stress test?
So on transparency, we're going to release the models, clean them up and publish the models, put them out for comment. In terms of volatility, we're also going to, by the way, we're also going to release the stress test scenarios before we implement them. In terms of volatility, what we said we would do is average the changes to, the problem is the stress capital buffer can be moving up and down just because of volatility in the results. And it seemed like a good idea to smooth that out by averaging over a couple of years. We're putting all this out for comment, though, and ultimately we'll reflect those comments in the final decisions we make.
Thank you. I'll yield back my time.
Thank you, Senator McCormick. Senator Blunt Rochester.
Thank you, Chair and Ranking Member.
You're
and
listening to
thank
Fed
you,
Chair
Chairman
Jay Powell.
It's good to
Speaking with the
see
Senate
you, and
Banking
thank you for
Committee.
meeting with me
Currently
last
questioning
week.
him is
We
Democratic
discussed
Senator Lisa
everything
Blunt
from
Rochester from
jobs
Delaware.
and housing supply to the real impact on Fed policies on all of our lives. And I also got a chance to share with you just the concerns and consternation of Delawareans who, for the past few weeks, have been frightened by firings and funding freezes, and just the real impact on people's financial and personal data and information when, DOGE has access to this information. I'm hearing from my constituents as well about the potential shuttering of the Consumer Financial Protection Bureau. As Senator Warnock mentioned, CFPB has returned over $21 billion to millions of consumers, and that's a real impact. But I want to also highlight that it was your leadership in the Fed working with Congress and the Biden administration to really help answer that question that you were asked about if you had the choice to switch countries with France and Germany and others, that you said no, you'd rather be here. And that success is a testament to all of us. We came together during a really tough economic time at the end of this, during a pandemic, and it limited the recession and job losses. And since COVID, we've seen a robust job growth. But we also have grappled with inflation that drove prices up for so many goods. And I've worked to address one part of this phenomenon, our supply chain disruptions. In fact, I recently joined Senators Cantwell and Blackburn to reintroduce the bipartisan Promoting Resilient Supply Chains Act to address supply chain vulnerabilities. And while we see indications that inflation may be slowing, too many of our constituents are still facing high prices and economic uncertainty. We need to do everything that we can to address this anxiety and the realities that Americans are facing. And there seems to be a disconnect. While the economy is doing, well here, on the ground, people aren't really feeling that. So, Mr. Powell, can you talk about, from your perspective, just what is driving this disconnect between traditional economic indicators, such as GDP growth and the stock market performance, and the tangible benefits for families?
I'd be glad to. So it is clear that the overall aggregate numbers are just very, very good for the economy. 4% unemployment, inflation down to 2.6% last year, and the economy growing well in excess of 2%. These are good numbers. But what people are feeling is the results of several years of inflation, and particularly for people in the low and moderate income category, they're really feeling it. So if you look at the earnings releases and press conferences that they do, that companies like the dollar stores and things like that do, who deal a lot with low and moderate income people, they're all telling you that those consumers are feeling really strapped. So we do understand that, and we try to keep that in mind. Even though we acknowledge that the overall data are good, we see what people are feeling, and that's inflation. So it's just another reminder how much people hate inflation and how bad inflation is for people, high inflation, and it just furthers our resolve to get inflation back to 2% and keep it there.
Thank you. One of the big areas that I focus on, you've heard many of us across the aisle talk about the housing crisis that we have in this country. And I know a few others have asked questions previous to me about this, but I would love to follow up afterwards with specifically what you think are the short-term and long-term things that we can do to really address the housing supply and affordability crisis. I have legislation that looks at things like reducing regulatory barriers, zoning reform, these things that we know we can, in partnership with local governments, make a significant difference. And so if I could, would love, again, to follow up with you, even cutting red tape, those kinds of things that we can do long-term and short-term. But I did want to mention one last thing in the 20 seconds that I have. The Fed listens, things that you do, activities that you do. Could you talk a little bit about that as well? Because working people, a lot of times people don't feel that they have a place in these kind of conversations, but can you talk about what the Fed does with Fed Listens?
So briefly, we did this as part of our review 5 years ago, and we do it on an ongoing basis now. And the idea is that we break out from the usual people that we talk to, which is a pretty diverse group, and try to deal directly with people who are experiencing the economy and our policies. And it's quite eye-opening to listen to people talk about it. We had one person at the Chicago conference 5 years ago who said the expansion, which was then 9 years old, is just reaching my community. And he talked for some minutes about how companies were going into prisons and finding people who weren't going to get out for a year or two and training them and stuff like that. You could hear a pin drop. It was very telling stuff. So I think we learned from all that. And so we'll keep doing it.
Well, I will end by saying, there's a famous quote, I think it's Martin Luther King, we may have come over on different ships, but we're all in the same boat now. We need to get it together. Thank you. I yield back.
Thank you, Senator Blunt Rochester. Senator Marino.
Chairman, thank you for being here. Thank you for taking the time on the
We're
phone
listening
the
to
other
Fed
day.
Chair
Appreciate
Jay
that
Powell
very much.
speaking in front
Just to
of
ask you
the
a
Senate
broad,
Banking
general
Committee.
question.
Currently questioning
When you
Jay
increase
Powell
M2,
is
the
Senator
money
Bernie
supply,
Moreno,
by
Republican from
40%
Ohio.
over a short period of time, is that going to drive inflation?
It could. Well, I think we discussed, monetary aggregates have not been a great predictor of really any other thing. But I think when there's a sharp increase like that in M2, then that could, that's something that might cause some inflation.
Now, is that just to be clear for the people watching, that happened because of public policy in this institution here, correct? In other words, there wasn't a civilian-led effort to increase government spending outside of the elected leaders that chose to make those decisions.
I think that was part of it. I think there were just a lot of causes in the inflation that we saw, but that, it's fiscal policy, it was monetary policy, it was just closing and reopening the economy, just generated a bunch of confusing signals and then a lot of inflation everywhere in the world, really, whether people did a lot of fiscal policy or not. So, but there were many factors, and that's, I would say, one of them.
But just to be clear, it wasn't the citizens of the country making those decisions. Those were elected leaders choosing to close the economy. Businesses didn't decide one day to close, didn't decide to not be able to go to work. Those were decisions made by policymakers, correct?
Yes.
So it's a little disingenuous to be hear my colleagues talk about how they care so much about inflation when in reality they cause it. But I don't want to continue that. I'd ask you a question just out of curiosity, because you worked at the Department of Treasury. At what point did you think they were going to run out of ink? Did that concern you, that maybe it was possible that they were printing so much money that the Treasury would have to find alternate ink suppliers?
Didn't occur to me, but good question.
So along those lines, something that concerns me a lot is the idea that we would even look like China in any way. So can I have your commitment that as long as you're the chairman of the Federal Reserve System, that we will never have a central bank digital currency?
Yes.
Thank you for that. I think that's extremely important. It makes me very happy to hear you say that. Shifting gears to a little bit, something that matters to me and entrepreneurs all over the country is, why can't I wire somebody money at 6 p.m. Eastern time? Can we get to a 24/7 scenario where wires are cleared every day, all day? I think that would be very, very helpful to businesses all over the country.
So that's coming. It's just coming slowly here. We have that at FedNow. We'll get in touch with you about FedNow. We provide that service between two banks, and others want to provide it too. But yes, we do kind of lag a lot of other countries in that, and it is time for that to happen.
So I know I don't want to put you on the spot, but to put you on the spot, FedNow was very familiar with it, but it was a little bit late in coming. Can we get a commitment to do that this year, so that by the end of this calendar year, businesses can transact 24/7 and settle payments?
Well, I think they can do that now I believe they can do it now on FedNow, and they can also do it on the RTP system as well. So I think it's available. Let me check in and I'll follow up with you.
That'd be great. One other piece of the puzzle here is, what do you think the Fed can do to fight international terror groups? For example, Hamas, Hezbollah, Iran, the proxies. that are funded by places like Qatar. Do you think that we're doing enough to keep them outside of the banking system? Because at the end of the day, terrorism is ultimately funded by these bad actors. I met with the hostage families this morning. It was heart-wrenching to hear stories about kids that are my kids' age being held for almost 500 days. The Qataris are obviously completely complicit in all this. What can we do? What advice would you have that we can do to make certain that we bring these terror groups to their knees?
You know, we do enforce the money laundering laws very, very strictly, and but it's a tough question. You know, it's a huge focus in international meetings and things like that. But you're right; it's really hard to nail it down, particularly if it's all happening overseas. But we can do what we can do with our banks. We don't want to make it so costly, though, that they debank people because they're so worried about violating the money laundering laws. I mean, that's some of what's happening, according to the banks, is that they're so afraid that there might be money laundering that they just cut people off at the first flag, as opposed to perfectly legal businesses are being, you know, thrown out because of their fear of being caught doing money laundering. So I think there's a balance there, but no, it's a really, really hard project and one we spend a lot of time on.
Thank you, Chairman.
Thank you, Senator Moreno. The patient and persistent Senator Kim.
Thank you. I wanted to make sure some of my colleagues had a chance to be able to run off to some of their meetings, and I've enjoyed being able to listen to the chairman. To be able to
Senator Andy Kim, the Democrat from New Jersey, now talking with Chair Powell of the Senate Banking Committee. This is live on
I did a
Bloomberg.
telephone town hall last night, and I'm glad to hear some of my other colleagues as well. And there is a lot of anxiety right now by the American people in trying to understand what's happening and seeing and interpreting what's happening on the news. I guess I just wanted to ask you, if you were, for your words of how you would explain to the American people the importance of independence when it comes to the Federal Reserve.
So I think the point is that we'll make better policy, we'll keep inflation lower if we just focus on doing our job and stay out of politics, stay out of elections, don't try to favor or to hurt any political party, any political figure, just focus on the data. If we start putting up political filters, we'll be no good, we'll be less effective at our already quite difficult job. And you know, I do think that's broadly understood. I think there's broad support up here in both political parties and on both sides of the Hill. I think that there is a decent degree of support for continued independence. That's not to say we shouldn't be accountable. We should be very accountable and transparent about what we do. We should be up here explaining what we do and why to our oversight body, which is this committee and then the same committee on the House side. So that's what I would say.
Making decisions about your core mission about stability and about growth, but not thinking about it in terms of the context of an election cycle, for instance. Is that right?
Yes, exactly.
I wanted to just shift gears a little bit, but similar type topic. You know, there's been a lot of attention to the role of public servants within our government and, you know, our understanding what roles they play, how many to have. And I guess I just wanted to ask if you could speak to the role of the Federal Reserve employees, their qualifications, and more importantly, like their importance to the mission and being able to engage. How important are they to the work that you are trying to do towards stability and growth?
So I'm very proud to be associated with the people of the Federal Reserve, and I'll give you an example why. When the pandemic hit, kind of out of the blue, and economies all over the world are shutting down, the U.S. Treasury market is stopping to function, companies can't roll over their commercial paper, economists are writing about a depression. People at the Fed who went through the global financial crisis 10 years before step forward and say, we got this, we know what to do. Here's what we do with the Treasury market, here's what we do with money market funds, here's what we do with the companies that can't get any financing. The markets were closed and companies were having maturing debt that they had to roll over. The people who knew what to do in that pretty dire emergency were working at the Federal Reserve and other places. But I will tell you, it was impressive. And I think if you could have seen the way people react and you know how hard they work and how much they know and how well it worked, really. Our work during the acute phase of the crisis was very successful, and it's entirely due to the knowledge base that resides with career people at the Fed.
Yeah. Would you say that the Fed is overstaffed?
No, I would say that, overworked, maybe not overstaffed. Everybody at the Fed works really hard. It's a place where people work
And a lot of
very
this
hard.
conversation right now about staffing numbers at different departments and agencies, it's going back to this sense of the taxpayer dollar, in terms of accountability there. But I guess I just wanted to ask you, is the Fed paid for by the taxpayer dollars? Can you explain to us what the burden is on the taxpayer?
So we're self-funding through our large balance sheet.
So when it comes to the staffing at the Federal Reserve, not coming from the taxpayers, is that right?
Indirectly, we give away all of our profits. We give back to Treasury, and those profits would be higher if we didn't pay for the Fed. So in fairness, it's ultimately paid for by the taxpayer. But in that sense, we're self-funded.
Self-funded.
Yeah.
Just one last question here. You talked about the different actors that are involved when it comes to levying tariffs in terms of paying that the exporter, the importer, the consumer. You said middlemen could be part of that. I guess I just wanted to ask you, do you know of any way in which to 100% guarantee that the consumers will not have to pay higher costs when it comes to tariffs?
Not really. It's not going to be easy to identify with any accuracy exactly where costs do fall, but I think it'd be hard to guarantee any particular outcome. I think we're just going to have to see.
Great, thank you. I yield back.
Thank you, Senator. Senator Warren, did you?
I do. Thank you, Mr. Chairman. I just want to make a point before we quit here, and that is about law enforcement.
Senator Elizabeth Warren,
If you
Democrat
keep
from
the laws the
Massachusetts,
same
backing
on the
questioning
books, but
of
you
Chair
fire
Powell,
the
live on
cops,
Bloomberg.
you're going to have a lot more crime. That's kind of law enforcement 101. And the problem we've got right now is law in the books about consumer protection hasn't changed. But the cops, at least right at this moment, have been told at CFPB to stand down. And I appreciate that we have state AGs who step in, and often they partner up with the CFPB. But there is no one else for the giant banks who actually does what's called the bank examination, the supervision. And that is so important. Remember the Wells Fargo scandal, where Wells Fargo was illegally opening fake accounts in people's names? You find that through bank examination, not because the person who got cheated could figure it out. Bank of America gets hauled in because bank examiners discovered they were charging people illegally on junk fees. Nobody finds that but the people who are down in the banks doing the bank examination on behalf of the consumers. Look, we tried a patchwork of law enforcement for consumers before 2008. We had all those laws scattered among 7 different agencies, and we saw how it ended. It ended with millions of people losing their homes, millions of people losing their jobs, millions of people losing their savings. The CFPB is our law enforcement agency to make sure that the giant banks follow the rules on consumer protection. And for me, right now, I'd be really worried about doing business with a giant bank when there's no cop on the beat.
Thank you, Senator. I will recognize myself for just one question, and it'll even be relevant to your job, I promise, Mr. Chairman. So thank you for your patience and for being here. I wanted to follow up on there were some questions, or at least I know Senator Rounds asked a Basel III question, and your response was basically, let's get the people in place from the administration. And
Live coverage,
then we'll proceed
Chair Jay
again.
Powell's testimony before the
Treasury
Senate
Secretary
Banking
Bessent
Committee.
recently said that
As we
the
listen to
banking
Senator
system is, I
Kramer.
believe, a, quote,
Now this is live.
well-capitalized,
Kevin
perhaps
Kramer from North Dakota on
overcapitalized,
Bloomberg.
unquote. And given that assessment, or if you agree with it, could you discuss the necessity of advancing a new Basel III proposal, specifically how an updated regulation would impact the ability of the regional banks to compete with the big Wall Street banks, and what consideration should be taken into account to ensure that we have a competitive banking system? Because I know there's this concern comes and goes. And for those of us who have largely regional banks, or God love them, the best of all, community banks and credit unions, a competitive system is really important. So if you could just answer that, and then I'll wrap up.
Sure. So we we're eager to get together with new colleagues from the FDIC, new leadership at the FDIC and the OCC to try to finish Basel III. My own view has been that our banks are well capitalized, and Basel III was not supposed to be an exercise in raising capital in U.S. banks. Mario Draghi said that. Dan Tarullo said that back in the day, I believe. So I think that's about right. We have some work to do, but we'll get there, I believe, fairly quickly. In terms of your regionals, they don't face the GSIB surcharges. They don't face quite the burden that the large banks face on resolution planning and that sort of thing. So we certainly need those banks to be healthy and profitable because we need them to compete with the GSIBs. We don't want a world where the GSIBs just keep getting a bigger and bigger share of the economy. That's not what we're looking for, and that's what a lot of pressure. We've seen the number of community banks, especially, declining for 30 years.
Yes.
And this is not something we want to. We don't want to be the cause of that. If it's happening by natural causes or because of evolving technology, that's one thing. But we don't want to be inadvertently causing that to happen.
So as you look at a Basel III exercise, can you think of anything specifically that ensures that competitive, diverse banking system is maintained rather than a consolidation, whether it's fewer community banks into more regional banks or fewer regional banks into more Wall Street banks?
Well, I just think you think twice before you impose the kinds of things that we impose on the largest banks and the next to largest banks. You want to be careful not to just think we should do exactly the same thing. It's what tends to happen is, so for smaller banks, it raises the fixed costs is what it does of banking, and it makes it harder to start new banks and makes it harder for any but the largest to be successful. So that's not what we want. We want a lot of competition, and these regionals. It's important that they thrive.
I agree, and I agree with your assessment. So thank you for that. Thank you for staying with us for the day, and glad we could get you first. So as we wrap up, for senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Tuesday, February 18th. Chair Powell, you have 45 days from that day to submit your response to questions for the record. Thank you. The committee stands adjourned.
Thank you.
There you have it. Live on Bloomberg, as promised, the first day of 2 testimony of Fed Chair Jay Powell. Today on the Senate side, tomorrow goes to the House, will probably last a bit longer than the hearing that we just brought you. Roughly 2 hours and 15 minutes. Chair Powell making some news by saying very little today, and that he believes the central bank does not need to rush to adjust interest rates, speaking to an economy broadly in balance, of course, invoking the dual mandate, the Federal Reserve here. He says the economy remains strong, labor market in balance, not a source of significant inflationary pressures. So why would we cut interest rates? Here's Jay Powell from earlier in the testimony today.
Less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
So let's start our conversation on what we just heard and what we might hear all over again tomorrow. Stuart Paul from Bloomberg Economics, U.S. economist, live from World Headquarters in New York. Stuart had eyes and ears on this for us at the same time. It's great to have you back, sir. Not a huge shock, I guess, as you look at the market reaction here, expectations for rate cuts in the balance of this year largely unchanged. How did you feel about it?
That's right. Expectations for rate cuts faded just a little bit. I think that those expectations were more so due to comments from Beth Hammack, actually, before the hearing began, where she mentioned that upside risk to inflation were probably or potentially larger than those that are downside risk to inflation. And with Jay Powell just emphasizing that the labor market is on solid footing and the unemployment rate remaining low, it again just emphasizes that the Fed does not need to rush toward rate cuts. Those were the real monetary policy takeaways today. The Fed is really in a position to respond both to upside and downside risk to growth on the rate front. Beyond that, the major monetary policy item was that it sounds like Jay Powell is not rushing to end quantitative tightening. That's the Fed's balance sheet normalization process. We had been expecting a March announcement and then an April end to QT. It does not sound like Powell is rushing to make that announcement just yet.
So is this Goldilocks? You look at the market reaction. You know, you've got the S&P 500, well, basically flat. It's down 12 right now. The 10 years at 453, barely moving. Stocks seem to be taking things in stride. No major shock in the conversation with senators today. Donald Trump says Joe Biden left a mess and that the economy needs to be rescued, essentially is the message that we're hearing from the White House. How do you square all that?
Well, so this is mostly a Goldilocks reaction to the press conference. But ironically enough, when pressed about if the U.S. economy had fully achieved the soft landing, if the Fed had achieved the soft landing in its attempt to bring down inflation through interest rate hikes, Powell would not say that a soft landing had been achieved. He did say that we have not had a hard landing. But in terms of finding that Goldilocks outcome, he was not rushing to say that we had achieved the soft landing. In terms of squaring economic outcomes with messaging from the White House, I think that we're just seeing standard messaging from the White House. Any sort of weight that President Trump can put on President Biden for any sort of bumps in the road, you're going to continue seeing that.
Interesting. You know, I have to pull you into the morass here when you're on the political show, Stuart Paul. I know you won't hold it against me, but why not take credit for a soft landing? Wouldn't that be in the spirit of Donald Trump?
It might be in the spirit of Donald Trump. I think that it's actually a pretty politically astute move for Jay Powell to not take credit for a soft landing.
Yeah, tell me why.
In a sense, he could be giving or sharing credit with any sort of incumbent president, in this case Donald Trump, when somebody decides to declare that a soft landing has truly been achieved. And also the fact that, look, the Fed is not at the 2% inflation target just yet means that there still is more work to be done. That would be sort of the more simple reading of it. The more esoteric or the more sophisticated read might be that he's preparing to share credit when that day comes, which would be a very politically smart move.
Very well put. That's great, Stuart. What did we hear about tariffs from Jay Powell today? He's trying to figure out what the landscape is the rest of this year, and that's a pretty big blank to fill in here. The goalposts seem to move every day.
That's right. So the goalposts move every day. So Powell was not rushing to offer any sort of insight into what his estimates of the consequences of tariffs would be, especially on inflation. We do know that from the 2018 tariffs and into 2019, that Fed staff was expecting that tariffs would both slow growth and boost inflation. The only thing that was really notable to my ear was that when Powell was pressed about the inflation consequences of tariffs, he mentioned that in 2019, the negative growth consequences or the negative growth experience in the United States and globally was more of a reason for the Fed to cut rates than to be especially responsive to the inflation consequences of tariffs. So I think that that's actually an interesting, tiny little tidbit about what the Fed is keeping in mind and how the Fed is trying to stay a bit more balanced in its expectations for the consequences of tariffs.
Interesting. As we spend time with Stuart Paul, we look ahead to tomorrow. It's on to the House side. Financial services, right? They have like more members than Earth, Wind, and Fire. This thing is going to take many more hours and could be a lot chippier than what we saw today. What do you expect?
It's usually a 3-hour circus. The House side is a real test of one's patience. I'm not expecting really to see much from the House side. I'm expecting to see sort of more of the same that we saw today. There was a huge emphasis on the Democratic side on the Consumer Financial Protection Bureau, which the Fed, for all intents and purposes, is not especially that interested in other than responding to their funding requests. As a regulator and part of joint regulatory processes around the banking system, of course, the Fed is a key player, but when it comes to consumer protection specifically, it's not really at the top of Powell's priority list right now. We'll probably get more of that on the House side tomorrow, and just more hammering away on the same note regarding fiscal sustainability and the national debt trajectory from Republican members of the House committee.
We're going to be talking a little later on today, the late edition of Balance of Power with Senator Elizabeth Warren. Stuart, safe to say she did not get the answer she was looking for when it came to the Consumer Protection Bureau?
I think she was left unsatisfied. Of course, the CFPB is her baby. She did a great job at noting when there would be certain holes in the oversight and regulatory regime for certain banks, mostly those under $10 billion in assets. But those that are most directly affected by CFPB supervision, like payday lenders, student loan servicers, where you see the most complaints in the CFPB's complaint portal, again, those are so far outside of the Fed's purview that she just was not going to get much from Powell on the topic.
Interesting. It's a story that's one that's important to us that we'll be following later on. We'll talk with Elizabeth Warren in the 5 p.m. hour here Eastern Time on Bloomberg. Stuart Paul, great to have you back, sir. Good to see you live from New York with us from our Bloomberg economics team. On day one of Powell testimony, let's set the baseline. I mentioned the sort of ho-hum reaction on Wall Street. Charlie Pellet, of course, has his hands on the markets for us. Let's get back to New York and see how Wall Street feels about all this. Charlie, what do you have?
Thank you very much, Joe Matthew. I've got you covered. Indeed, the Dow higher, the S&P, NASDAQ, both lower right now. We are looking at a 0.1% gain in the Dow. We've got the S&P lower by 0.1%. NASDAQ down now by 0.3%. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. 10-year 4.53%, the 2-year 4.29%. Spot gold trading lower by $5 the ounce, still above 2,900. 29.03 on the precious metal, down 0.2%. West Texas Intermediate crude with a 73 handle, 73.29, up 1.3%. And Bitcoin down 1.1%, 96,329 on Bitcoin. Stocks are falling, bond yields rising as Fed Chair Jay Powell reiterates the central bank is in no rush to cut rates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thank you so much. Watching Wall Street for us every day here on the fastest show in politics. Have I had a chance to welcome you to the Tuesday edition of Balance of Power? We started off with the Powell testimony. We're going to do that again likely tomorrow. In fact, as Stuart Paul mentioned, it might eat up a little more time in his testimony on the House side. You've got more members to get through here. And, you know, Jay Powell's telling everybody just to take a breath, right? Stop calling. I'm in no hurry to adjust interest rates. The message from the Fed chair as we try to answer questions that we keep asking every day here in Washington when it comes to monetary policy, when it comes to fiscal policy, as we still try to figure out what in the world is going to be happening soon on Capitol Hill. With a funding deadline on the 14th of March. Do you remember that? That's less than 6 weeks away now, fewer than 6 weeks. And we hear from a couple of Democrats already that they may be prepared to force a shutdown over Donald Trump's raiding of the cookie jar in agencies like USAID. I had a conversation about this whole buildup to reconciliation in the House with the man who is charged with getting the Trump tax cuts extended. No pressure, of course, for Jason Smith, who is the chair of the House Ways and Means Committee. Here's what he told us on Balance of Power.
We said it crystal clear from the beginning. The speaker's been very, very clear, is that there's going to be one bill. They can pop over a budget resolution. We can also drastically amend it and send it back. The best and quickest approach to deliver on all of the president's priorities that he campaigned on and 77 million people voted for is to be done in one big, beautiful bill.
What if it's not beautiful? What if it's one big Frankenstein of a bill? That's how these frequently go, and that's where we start our conversation with our friend Nathan Dean. He's taking calls from clients, including you today. Of course, senior U.S. policy analyst at Bloomberg Intelligence. Nathan, it is great to see you here. Can you believe we are still having this same conversation? I think we can rewind the tape to the end of last year on this. Nathan Dean, when are they going to figure this out? The Speaker of the House is supposed to be briefing his conference this morning on the contours of a bill that we still can't even quantify here on Bloomberg.
Yeah, you know, I wouldn't be surprised if we were having this conversation in October of this year. I mean, but from a market perspective, let's look at it this way. Whether you get one bill or two bill, it really doesn't matter. I mean, from the market perspective, what they want are essentially a couple of things. They want clarity over what's going to happen to the Inflation Reduction Act. That's probably going to come in this tax debate, and they need the tax cuts extended, and you need the debt ceiling dealt with. Those are probably the top three items, I think, from the market perspective. So whether you move with the Senate bill now, which deals with border defense, energy, domestic production now, or a House bill later, ultimately they still want to get it done. And the only real deadline in this is the X date for the debt ceiling, which is probably most likely June or July, or the tax cut or the tax reform deadline when the individual tax cuts increase for individuals at the end of the year. So Congress has a lot of leeway of what they can do here. And so one bill or two bill, Washington, we just go back to this idea that when Washington can't figure something out, the easiest thing for them to do is to kick the can. And I can certainly see this playing out through the rest of the summer and potentially even this fall.
Oh, did everyone hear what Nathan just said? So we won't shut down March 14th. We just kick the can for the rest of the summer. Lindsey Graham is apparently expecting something similar here. He's marking up his own budget resolution tomorrow and Thursday. Nathan, that's got us all talking about the Senate jamming the House. Is that a fantasy, or could that actually happen?
No, look, the Senate usually gets what it wants. I mean, that's something that, anybody who's watched Congress knows. The Senate usually gets what they want. And the problem or the challenge for House Speaker Mike Johnson now is the Republicans only have 220 to 215. They have a 5-person majority when they have everybody there in the chamber voting. And so when you have to cram together a gigantic, one big, beautiful bill, everybody's one that sticks to their guns. Is it going to raise the deficit by $1 trillion? Well, then you lost the deficit hawks. Are you not going to raise the SALT deduction? Well, then you've lost the SALT caucus out of New York. And so it's almost like whack-a-mole, where you have to try and figure out how to get this big Pinocchio, perfect, Goldilocks, better way of saying it. And I'm not sure the House can do it. And so when the House can't do it, the Senate is there just to say, look, you didn't do your job. We're going to jam you up, and you're going to do what we say.
I'm sticking with Frankenstein, Nathan. I mean, the bigger this gets, I'm guessing the less beautiful it will be. And then you're going to have more people to upset, of course. And whether the Senate jams the House, you're talking about October. I mean, politically speaking, if we can pull off the side of the road for 1 second here, Nathan, you know how this stuff goes. Where is, forget approval ratings for Congress, where's Donald Trump's approval rating if they can't get anything done until the fall, if we're walking up on a deadline at the end of the year?
So I don't think President Trump's approval rating is going to take a hit all that much. I mean, from the White House's perspective, I think President Trump, yes, he over the holiday break, he said that he wanted to do one big, beautiful bill, but I honestly don't think he cares. He gave his priorities to the House Republicans last week at the White House. No taxes on tips, carried interest provision goes away, taxes on billionaires for sports financing. But at the end of the day, it's the individual tax increase that needs to be staved off. And I think that President Trump isn't really going to pay too much of a political price until or if the Republicans weren't able to do that. And I do think that they are going to be able to do it. Failure is not an option for the Republican Party here. The challenge is it's just going to have to take this entire year-long process to play out. And there's really no advantage for getting something done quickly if you can't get it done. So I just think that, the Senate is getting a little itchy right now. They're saying, look, we need to give $150 billion to defense. We need to increase spending for the border. We need to actually do some stuff with onshore and or offshore leases. So the Senate can actually go out and say, we're going to get something done. But I don't think President Trump's going to play all that much of a political price here unless those tax increases at the end of the year hit for most Americans.
Got it. From Nathan Dean, who I'm sure is receiving a lot of questions about tariffs and taxes, just like Jay Powell is being asked today. Nathan, how did the Fed chair do with so much uncertainty ahead?
So he kicked the can on tariffs and trade. I mean, he said multiple times that's not his purview. But on the regulatory side, he did say a couple of things that were interesting. They asked him about the Basel III endgame. This is that Biden-era proposal that would have raised capital requirements by 9%. He said that when the new leadership of the Office of the Comptroller of the Currency and the FDIC come in place, maybe they could get something out quickly. To me, that says capital neutral. So that's something the big banks would actually fairly much, I think, enjoy or at least warrant. But I also not exactly sure that the new leadership of the OCC and the FDIC will be on board with that. So we'll see. But, in the crypto space, one of the questions that were asked him was, would you unilaterally go out there and declare that you'll create a central bank digital currency? And Jerome Powell just said flat out, no. I mean, so that's pretty much as definitive as you can get when it comes to Jerome Powell. So, we did hear a little bit of nuggets, and I think we're going to hear more tomorrow in the House Financial Services Committee, because you get a 4-hour hearing, 55 plus members, and when people start repeating questions, they get a little bit more specific.
Well, so what do you expect tomorrow? What should our viewers and listeners be listening for, if not a repeat of today's messaging?
Yeah, so a couple more items on the regulatory side. There's this idea of the supplementary leverage ratio. It's known as the SLR. The big banks have been calling for treasuries and central deposits held at the Fed to be excluded from the denomination of the SLR. This will give them some fairly good leverage relief and so forth, lending relief. Jerome Powell in the past has sort of been on the fence about this idea, but, Michelle Bowman, the governor of the Fed, gave a speech last week saying the Fed should do this. We'll see if the president or if Jerome Powell is up for the task and wants to do that. The other thing I would keep in mind is he's probably going to get more questions on crypto. He got some questions on stablecoins today. There's a lot of stablecoin legislation out there. They're fairly bipartisan in nature, so I want to see if Jerome Powell is going to give any support to this idea that the Federal Reserve should play a role in overseeing stablecoin issuers.
All right, we're basically out of time, Nathan Dean, but I do see on Truth Social, Donald Trump has named a new administrator of the DEA, Drug Enforcement Administration. Terry Cole, DEA veteran of 21 years, he writes, currently serves as Virginia's Secretary of Public Safety and Homeland Security. Is this idea of rescheduling cannabis dead?
I'm still thinking it's out there, but it's looking less and less likely. I mean, obviously, Terry Cole, he has said in the past that he's very much against marijuana usage. And we also saw legislation from Senator Lankford and Senator Ricketts to actually take away one of the tax benefits, even if rescheduling were to go forward. So there's still a lot of detractors out there amongst both, Republicans and Democrats in the Senate towards marijuana. So we'll have to see how it plays out, but it may not be as easy as people thought it was.
With apologies to Stumpy, who is sitting right behind Nathan Dean in his home office. Great to see you, sir. Of course, the toast of Bloomberg Intelligence and our friend here at Balance of Power. Nathan Dean, I want to point you to something that's happening right now at the White House. Remember, Donald Trump is meeting with the King of Jordan, King Abdullah. They have decided to allow reporters into the Oval Office for their conversation. It was supposed to be closed press. Think Gaza, the replacement of Palestinians, the settlement of refugees. They're talking about it now. We'll put an ear on this later right here on Bloomberg.
It's 1240 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, the S&P, NASDAQ. They are both lower. Treasury yields rose. Stocks fluctuated as Fed Chair Jay Powell reiterated the central bank is in no rush to cut rates. You heard his remarks live on Bloomberg Radio. Here's where we stand right now. We have got the S&P 500 index trading lower, down 8 points. Right now we are at 6,058 on the S&P 500 index. That is a drop of just about 0.4%. The Dow higher by 0.1%. To keep it all in context, S&P down 0.1%. 10-year right now at 4.53%, with the 2-year 4.29%. Gold 29.06 the ounce. Gold lower today, little change, down by 0.1%. West Texas Intermediate crude 73.28 a barrel. WTI up by 1.3%. A gauge of U.S. small business optimism retreated from a half-year high in January. And with that story, here's Bloomberg's Vinny Del Giudice.
Uncertainty rose the most since 1986 with the new administration in the White House and the Federal Reserve stepping back from rate cuts. A major issue, the cost of tariffs. At the same time, small business owners are largely upbeat about the U.S. economy's prospects, with almost half anticipating faster economic growth. The National Association of Independent Business compiles the optimism data. Vinny Del Giudice, Bloomberg Radio.
Elliott Investment Management has disclosed a more than $2.5 billion stake in the oil refiner Phillips 66 and plans to push the company to sell or spin off its pipeline business. Shares of Phillips 66 up now by 5.3%. Again, S&P 500 index down 9, drop right now of 0.1%. Balance of power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Watching Wall Street here on the fastest show in politics. I am Joe Matthew, live from Washington here on Bloomberg Radio, on the satellite radio and YouTube, where you can always find this program live. Search Bloomberg Business News Live, and you'll see our stream up there and running. You can even back it up if you want to catch the beginning of an interview. It's one of the coolest things going out there if you are interested in what is happening in real time in the financial markets and here in the Capitol, where Donald Trump right now is meeting with the King of Jordan. There will be no news conference, we were told, to the disappointment of many journalists who were looking forward to hearing from the first Arab leader to visit this new White House. King Abdullah is in the Oval Office as we speak, talking with President Trump, and guess what? Maybe we shouldn't be surprised, but they did invite the press pool into the room. So the way this works is once they're done talking, and we've already got some news out of this, we'll get the playback and bring you inside the Oval Office for the conversation. I'm guessing they've got the fireplace lit today. We're expecting snow. To that end, the great disappointment, as I digress, for Elon Musk today to see federal workers excused at 2 p.m. on the day they're all supposed to start working 5 days a week in the office. Yes, sir, 3 inches, all you need to shut down the federal government. I'm glad to say our signature panel is back together at this precious moment. Rick Davis, of course, partner at Stone Court Capital, Republican strategist and Bloomberg politics contributor, joins Jeannie Shanzano here, senior democracy fellow at the Center for the Study of the Presidency and Congress, Democratic analyst, Bloomberg politics contributor. It's nice to see both of you back together again today. Rick, this is an interesting moment for President Trump, having, of course, put forth his plans, or his hope, I guess, to remove all Palestinians from Gaza and develop it into what he describes as the Riviera of the Middle East. We know the King of Jordan is not on board with that idea. He also is not looking to house more Palestinian refugees, but it does seem that he will be taking a few thousand Palestinian children. What's going to come out of this meeting today at the White House?
Yeah, look, I imagine that King Abdullah is going to try and put some guardrails around this conversation about absorbing more Palestinians. The thing everybody needs to understand is Jordan has been the refugee location of choice for Palestinians in the region since the late 60s. And now they have probably around 3 million Palestinian refugees living in Jordan. I mean, that is a massive amount for a country that has less than 10 million people in it. And so how destabilizing would an additional million Palestinians be to the kingdom? Who can tell? But I am pretty confident that the king looks at this as a national security issue, for the preservation of his country. And they both, Jordan and Egypt, strongly believe in a two-state solution. So if you take away the state, there is no solution. And so I think that tips the entire political scenario around how the Middle East and certainly the neighbors in Jordan and Egypt feel about solving the Palestinian issue.
We're going to be bringing you this playback from the Oval Office in just a moment. Jeannie, this could start at any time, so I don't want to set you up to cut you off. But your thoughts on the substance of this conversation, knowing what Rick just referred to, President Trump telling Fox News that he's clearly not in favor of a two-state solution. He wants to move everybody out.
Yeah, this whole conversation feels little bit surreal. Rick is absolutely right in terms of what he described as the domestic situation for Jordan and for the king. But let's take a step back. We have a president who is saying that he will take that land. It will be his. And who's going to give it to him? He said Israel. Well, Israel doesn't have the land to give to him. So maybe before we start talking about destabilizing, moving 2 million people out of their homeland, and with the president tells us yesterday, no option to return, we think about what the practicality and the humanity, more importantly, of any of this is. This is an incredibly brazen idea with absolutely no context and an understanding of the history of the region. If it was that simple, would the Middle East be the way it is right now? Absolutely not. So, I'm not even sure where to go with it. I feel for the king sitting there trying to explain his own domestic situation to the president, who obviously doesn't understand or care to understand the reality and the history there that would make this a non-starter from the beginning.
A few thousand years of history to inform that view. Rick, this also comes as Donald Trump renews his threats to have all hell break out, his words, in the Middle East if hostages are not returned by high noon on Saturday. This emerged in a conversation with reporters last evening. Apparently Israel, and by that I mean Benjamin Netanyahu, endorsed this idea. He said, if all the hostages are not returned by Saturday at 12 p.m., I would say cancel it and all bets are off. Let all hell break out, referring to the ceasefire that so much time went into. My goodness, Donald Trump took great credit for the work of Steve Witkoff going into that deal. How does that color the conversation being had today as we wait for this to begin?
Yeah, look, I think that Trump is playing a very strong game. It's a very strong hand right now in the Middle East. And these are countries that need our resources and our support security-wise. And he is going to stress that relationship out till he gets what he wants. And look, I mean, kudos to President Trump for trying to keep Hamas's feet to the fire. Hamas agreed to a ceasefire that they're now themselves violating. 76 hostages remain, 44 of which we think are still alive. I mean, the idea that we don't even know whether American Israeli hostages are still alive is completely unacceptable. So it shouldn't surprise anybody that Donald Trump's fuse is burned out, and he is telling the Hamas, keep with the deal or we're going to make it really hard on you. And it's not like it hasn't been hard already, but they've made commitments to release these hostages. And I don't blame Donald Trump for being a little bit frustrated with what's going on and demand that they keep to their word.
Let's get in it right now. Rick Davis, Jeannie Shanzano, they'll be back in our second hour as we bring you into the Oval Office right now. We should know Vice President J.D. Vance, Secretary of State Marco Rubio are sitting in the room. We now see, if you're with us on YouTube, King Abdullah and President Trump. Let's listen on Bloomberg.
Stability, peace, and prosperity to all of us in the region. And it is, I think, our collective responsibility in the Middle East to continue to work with you, to support you, to achieve those lofty goals. So I'm very delighted to be here. And as you said, sir, we've got some very interesting discussions ahead.
Very good. Very good. Thank you very much.
Mr. President, many people in the region, especially Jordan, are worried about the annexation of the West Bank. Will you give His Majesty the King guarantee that you won't allow Israel to annex the West Bank? And how are you going to
I think that's going to work out very well. That's not really what we're talking about today. I think that's something that's going to work out automatically, and it's in good shape. And we discuss it. Other people have discussed it with us and with me. That's going to work out. West Bank is going to work out very well.
Mr. President, why should the king take in the Palestinian people? He's made clear he doesn't want to.
Well, I don't know, but he may have just something to say because we discussed just briefly. I think maybe you want to say it now, or?
Well, Mr. President, I think we have to keep in mind that there is a plan from Egypt and the Arab countries. We're being invited by Mohammed bin Salman to discussions in Riyadh. I think the point is how do we make this work in a way that is good for everybody?
Right.
And obviously, we have to look at the best interests of the United States, of the people in the region, especially to my people of Jordan. And we're going to have some interesting discussions today. I think one of the things that we can do right away is take 2,000 children that are either cancer children or in a very ill state to Jordan as quickly as possible, and then wait for, I think, the Egyptians to present their plan on how we can work with the president to work on the Gaza challenges.
So
I want to tell you, excuse me, wait, just please. I didn't know that, what you just said, 2,000 children with cancer or other problems, and that's really a beautiful gesture. That's really good, and we appreciate it. And we'll be working on the rest with Egypt. I think you're going to see some great progress. I think with Jordan, you're going to see some great progress. 3 of us, and we'll have some others helping, and we're going to have some others at a very high level helping, and the whole thing will come. It's not a complex thing to do. And with the United States being in control of that piece of land, a fairly large piece of land, you're going to have stability in the Middle East for the first time. And the Palestinians, or the people that live now in Gaza, will be living beautifully in another location. They're going to be living safely. They're not going to be killed, murdered, and having to leave every 10 years, because I've been watching this for so many years. It's nothing but trouble. Everyone's being killed. They're being robbed. It's like living in hell. And they're going to end up having a great home, great families that don't have to get mugged and killed and beaten up and harassed by Hamas and everybody else. And I know we'll be able to work something. And what you just said about the 2,000 is fantastic. It's so beautiful. It's music to my ears. But we're going to be able to work something, and I know we'll be able to work something also with I believe, not 100%, but 99%. We're going to work out something with Egypt.
But Mr. President, during your election campaign, Mr. President, how is the U.S. going to own Gaza? Your White House has made clear taxpayer dollars won't be used for this. So what money are you going to use to buy Gaza?
We're not going to buy anything. We're going to have it, and we're going to keep it, and we're going to make sure that there's going to be peace, and there's not going to be any problem, and nobody's going to question it. And we're going to run it very properly, and eventually we'll have economic development at a very large scale, maybe the largest scale on that site. And we'll have lots of good things built there, including hotels and office buildings and housing and other things. And we'll make that site into what it should be. And the people from Gaza who wouldn't be able to be there for years, because you're talking about just to get it and prepare it and to take care of all of the problems that currently it has. As you know, tunnels, and people are in those tunnels, and you have some good people and some bad people, and you may have hostages right now. You know, you have the hostages possibly there. They don't know where they are. And, you know, I have a Saturday deadline, and I don't think they're going to make the deadline personally. I think they want to play tough guy, but we'll see how tough they are. But it's going to be a wonderful thing. It's going to be wonderful for the Middle East. I think it'll turn the Middle East. I think you're going to have peace in the Middle East. You're going to eventually have peace in the Middle East.
Couldn't this deadline risk undermining the talks that you're having with the king today, and risk the kind of wider peace that you're trying to?
Because that's not. We're not talking about a big situation. We're talking about something that can go very quickly. We're talking about it's going to go quickly. It's not going to take a long time. Okay. That's not going to take a long time. You know bullies? You know what a bully is, right? You know the bully, I've always, and I found it throughout my life, a bully is the weakest person. And they're bullies. Hamas is bullies. The weakest people are bullies. You know that, right? All right, go ahead.
Mr. President, you were saying that Palestinians will live somewhere else safe. Where exactly do you want them to live?
Well, it's not where I want them to live. It's going to be where we ultimately choose as a group. And I believe we'll have a parcel of land in Jordan. I believe we'll have a parcel of land in Egypt. We may have someplace else, but I think when we finish our talks, we'll have a place where they're going to live very happily and very safely. And, you know, don't forget, they only want to be on the Gaza Strip because they don't know anything else. They've never had an alternative. And they don't want to be on the Gaza Strip, but they have no choice. They have to be. And they're being killed there at levels that nobody's ever seen. No place in the world is like as dangerous as the Gaza Strip. They don't want to be there. They have no alternative. When they have an alternative, not one person will want to stay where they are. Nobody wants to stay there. They're living in hell. It's a death trap.
Mr. President, how do you know that the Palestinians don't want to leave their land? Some people say this is ethnic cleansing. You won't be able to force them to leave their land. They stay
We're moving
there.
them to a beautiful location where they have new homes, where they can live safely, where they'll have
But they want to
doctors
leave,
and
sir.
medical and all of those things. And I think it's going to be great. Yeah, any questions?
King Abdullah, what do you think about the U.S. taking over the Gaza Strip? Do you want to see the U.S. own the Gaza Strip?
Well, I think, as I said earlier, the president is looking at Egypt coming to present their plan. As I said, we will be in Saudi Arabia to discuss how we can work with the president and with the United States. So I think let's wait until the Egyptians can come and present it to the president and not get ahead of ourselves.
And is there a parcel of land in Jordan that you're willing to have Palestinians?
Well, I think what we said, I have to look at the best interests of my country. I think the president is very happy that we do this thing with 2,000 children as quickly as possible. And again, I believe that the president is looking forward to getting a group of us Arabs here to discuss the overall plan.
And last question, the 2,000 children, are those from the Gaza Strip?
Absolutely, from the Gaza
Are
Strip.
you willing to change your mind, Mr.
That's
President?
from the Gaza Strip, the 2,000.
Are you willing to change your mind if you hear the Egyptian and the Arab plan end of the month? If they present you something different, are you open to
I
another
think
plan?
we sort of have gone down the line. We know pretty much what is going to be presented. And I think it's going to be something that's going to be magnificent for the Palestinians. They're going to be in love with it. I did very well with real estate. I can tell you about real estate. They're going to be in love with it.
But Mr.
It's going to be
President,
something.
concern you that moving 2 million people from there.
It's a very small number of people relative to other things that have taken place over the decades and centuries.
It doesn't concern you that moving 2 million people from there.
It's a very small number of people relative to other things that have taken place over the decades and centuries. It's a very small number of people. And they're living a terrible life. Look at the way they're living now. Nobody's living like that in the entire world. They're living under buildings that are mostly fallen down and will continue to fall down. And they're living under. People are being killed every day. The conditions are horrible. There are no conditions anywhere in the world that are worse than the Gaza Strip right now.
But don't you have
Mr.
concern
President,
that you
you
can
said all
destabilize
hell-
Jordan and
You said all
Egypt?
hell will break out if all the hostages are not released on Saturday. What did you mean by that? And are you encouraging Netanyahu to walk away from this deal? Have you talked about this with him?
So I've looked at at the condition of people coming out of the hostage situation, and it's horrible. I looked at the before and after yesterday. 3 young men. One is dead now, as you know, the older gentleman who died, which everybody said he was alive and well. He's dead. But the 3 young men, and I looked at them from a short while ago, and I looked at them now. They're emaciated. They look like Holocaust survivors. They looked, I mean, they'll get better, but they're in rough shape. They were treated really badly, and we've heard things from them since. And I think the reason that Hamas is playing so cute is because they saw the reaction to these 3 people that came out, and the other ones. Look, the one young lady had her hand blown off practically, and they were not in great shape either. But she's missing her fingers and a big part of her hand. You know what she did? She was stopping a bullet that was aimed at her. She went like that, and it blew off her hand. No, I think I think they want time, because I think the people that they have living are in such bad shape, because they're sending the most healthy people out because they don't want to send the least healthy people out. And there was an uproar when they saw the people from yesterday. So these people are, so I don't want to do 2, and then we do another 2 in another week, and then we do 4 in 3 weeks. No. They either have them out by Saturday at 12 o'clock, or all bets are off.
Mr. President, would you still consider withholding aid to those countries if they don't accept your plans to accept?
Well, I don't want to say that because we've had such a good relationship and we're doing so well just in the short time that we've been talking. I mean, the king just made a statement. I didn't ask him to do that, about literally saving 2,000 young children from the Gaza Strip. We didn't know about that. You didn't know about that. Nobody did except for the king and his son. I assume you told your son, right? And I just thought it was great. No, I think we'll do something. I don't have to threaten with money. We contribute a lot of money to Jordan and to Egypt, by the way, a lot, to both. But I don't have to threaten that. I think we're above that. I do believe we're above that. So.
Would you consider other countries, not Jordan and Egypt? There was talks about Indonesia, Albania, other places.
Yeah, sure, we would. And we have other countries that want to get involved. We have a lot of people that want to get involved. There's a great sense of wanting to help the Palestinians. There's a lot of good countries out there, people that rule those countries with big hearts, and this gentleman is at the top of the list.
And if they don't want to leave, how are you going to force them, Mr. President?
Oh, they're going to be great. They're going to be very happy.
Can you Your Majesty, should we expect that the Jordanian response would be part of a coordinated Arab response?
The response will be from a multitude of countries, Arab, international. I know the Europeans want to step in. And again, we'll probably have to look to the help of the United States to make sure that COGAT, which is the clearing agency on the Israeli side, makes it as efficient as possible. Because 2,000 kids, the best way to get to them is by helicopters and get them straight to our institutions. And I also believe that quite a few countries would also probably like to take some of those kids and have them treated in their hospitals. So we hope to launch this ASAP.
Yes, and that's right. This should have been done by the Biden administration, but, you know, they didn't do anything. They didn't know what the hell they were doing. So this should have been done by the Biden administration. This should have never happened because October 7th would have never happened. If I were president, zero chance of happening. You wouldn't have had that whole mess where the Middle East got blown up, and you wouldn't have had Ukraine and Russia fighting. That would have never happened. And by the way, we're making good progress there, I think. I really think we're making some very good progress.
Mr. President, you've said before that the U.S. would buy Gaza, and today you just said we're not going to buy Gaza.
We're not going to have to buy. We're going to have Gaza. We don't have to buy. There's nothing to buy. We will have Gaza.
What does that mean?
No reason to buy. There is nothing to buy. It's Gaza. It's a war-torn area. We're going to take it. We're going to hold it. We're going to cherish it. We're going to get it going eventually where a lot of jobs are going to be created for the people in the Middle East. It's going to be for the people in the Middle East, but I think it can be a diamond. It can be an absolute tremendous asset for the Middle East. And you're going to have peace. It's going to bring peace in the Middle East. Gaza, the way it is right now, every 10 years you're going to have the same thing happening. I've watched it so long, all the death and destruction of Gaza. The civilization's been wiped out in Gaza. No, it's going to be a tremendous thing. It's fronting on the sea. It's going to be a great economic development job. It's going to put people to work, a lot of people to work. And those people are all going to be from the Middle East.
And just to follow up with one on that for King Abdullah, can you clarify again, sir, how do you feel about the U.S. taking Gaza, as the president said?
Well, again, this is something that we, as Arabs, will be coming to the United States with something that we're going to talk about later to discuss all these options.
And Mr. President, take it under what authority? It is sovereign territory.
Under the U.S. authority.
And Mr. President, would you seek to personally develop property in Gaza after this happens?
No, I've had a great career in real estate.
Mr. President,
you know, when you've done what I've done in the last number of years, including the 4 years that we should have been doing something else, frankly, because people see that now for sure. But when you've done what I've done, you can just do more good for people when you're president. When you're president, we can do things. This is all things that should have been done, but actually things that shouldn't have had to be done. Gaza, absolutely, it would have been so great if the Biden administration would have started this. But actually, in all fairness to them, it was, they should have never let it happen. It did happen. And because of the fact that they let this happen, this catastrophe of October 7th, something like this becomes practical and very real, meaning the development and all of the things that I've talked about with respect to the Gaza Strip. If you didn't have the October 7th catastrophe, and it was a horrible catastrophe, then probably you wouldn't be talking about that. But the only thing I can say is this is going to bring stability and peace to the Middle East. And ultimately, when it's developed, which will be in quite a while from now, because we want to let things calm down. But when it's developed, it's going to bring tremendous numbers of jobs to the Middle East, including the people of your country.
Mr. President, what if it does not bring peace to the Middle East? There are many Palestinians, even though you say that everything is going to be beautiful, everything is going to be lovely, they're not going to want to go back. There are going to be people who want to go back and feel like that it is their right to do that. You haven't said, will there be any type of repercussions or anything that happens?
We don't think that's going to happen. We think we think people are going to be very happy, thrilled. A lot of those people that you're talking about are going to end up maybe living there and maybe working there, but it'll be in a different form. We have had tremendous support for this project, and we think the biggest asset of the project is going to bring peace ultimately to the Middle East. All right.
Mr. President, one last question.
Go ahead, behind you, and you've asked enough.
Mr. President, one of your promises on the campaign trail is to bring peace to the Middle East. It was a promise to your Arab voters here. The Arab voters in the United States oppose this. What do you say to them?
Well, you know, if you look at Michigan, where we have a large Arab population, as you know, I was just telling the king that we won. As you know, I won the Arab population. Now, when I started off, I wasn't leading, and when I finished, a few months later, we started campaigning in Michigan. And when I finished, we won it by a tremendous amount, by 30 points. And my relationship with the Arab population has been fantastic, and my relationship with the Middle East is very good with all the countries, just about all the countries. Let's see, I would say all the countries. And they all want to do something, and they want to see peace in the Middle East. So all the stories you hear about the Middle East not really wanting peace, that they want war, they want this, they want to go a certain place. Let me tell you, those stories are false. They want to have peace. I know them all very well. They want to have peace. They want to have a good life like other people. And this will be a big factor in bringing peace to the Middle East. Thank you very much, everybody.
All right, guys. Thank you, guys. Let's go, press. Let's go. Press, let's go. Thank you. Come on, guys, quickly, please.
Thank you.
Guys, let's go. Come on, quickly.
In the Oval Office, alongside Jordan's King Abdullah, President Trump holding forth in an unexpected news conference that was supposed to be closed press in a meeting that will extend through the day here. Of course, the first Arab leader to visit this new White House at a precarious time in the Middle East. Donald Trump speaking to his proposals for the Gaza Strip that are quite controversial, and one that the King of Jordan is likely not going to be agreeing with even after meetings today, although Kaylee, as we just heard from King Abdullah, Jordan will be receiving a couple of thousand sick Palestinian children, as opposed to the hundreds of thousands of potential refugees under the eyes of Donald Trump that he was hoping Jordan might accept. I'm Joe Matthew alongside Kaylee Lyons in Washington. This is Balance of Power on Bloomberg TV and radio. Interesting to have the media in the room for what was supposed to be a private conversation.
Yeah, and there is no telling whether or not this is something that the King of Jordan was actually looking forward to, considering they made a point to not schedule a joint press conference where they would have to field questions from reporters, and yet they did have to do so inside the Oval Office. To your point, Joe, the number 2,000 sick children from Gaza that Jordan has agreed to accept, but no such agreements made on wider acceptance of those who are currently in Gaza, and no real input from the King of Jordan as to Donald Trump's plan for the U.S. to take over Gaza. The King suggested that the Egyptian plan needs to be looked at as well. Really no commitments made on that front, even though clearly the President of the United States is doubling down on that.
Yeah, and suggested they were 90% on the way to a deal with Egypt, I think was the word that he used. So we'll see what comes from all of this. This is obviously an important conversation since Donald Trump came into office, and he has reiterated his threat for all hell to break out in Gaza if hostages are not released by noontime on Saturday. He said he did not expect that to happen. Kayleigh.
Yeah, so we want to get into all of this now and turn to Ian Marlowe, who covers foreign policy for us here at Bloomberg and is here with us in our Washington, D.C. studio. So, Ian, obviously there's a lot to work through here, but when it comes to the plans in Gaza specifically, there's first the notion that Palestinians would be forced to leave Gaza, and unclear, listening to the president just now, as to whether or not they would be welcomed back to it once the land is redeveloped. Then there's the question of who would actually accept these individuals if they deigned to leave. Are we getting clarity on whether there's going to be cooperation with what President Trump wants to do here?
No. And the only thing I think the whole region can agree on is that this idea is a total non-starter. It is fascinating to watch the Jordanian king kind of squirm in his chair there, possibly not even realizing this was going to be a public meeting with media there, asking questions to him about whether he would accept Palestinians. You have to remember, throughout the whole Biden administration, throughout several decades, the idea of Palestinians being expelled from Gaza is unbelievably offensive to so many people across the Middle East, and is part of the animating idea. You know, there's the animating challenge behind the Israeli-Palestinian conflict, and Trump is coming in here hoping to ignore history and view this as a real estate deal. And the Jordanian king, who himself is dealing with a bit of a shaky proposition at home in terms of the popularity of the monarchy, and potential unrest that they worry about will kind of trickle over the border from the West Bank into Jordan. There's huge concerns there about what being forced to take Palestinians out of Gaza, out of what they view as Palestine, and have them never come back. I mean, this is just it's for Jordanians, for Egyptians, this is not going to happen, and so it's very interesting to see how Trump is going to keep pushing this forward, what he hopes to get. Is it just to pressure Hamas into taking a deal? Is it something he's going to really fully carry through on? It's fascinating to watch.
What happens at noontime Saturday?
Yeah, it'll be interesting to see exactly how Hamas and Israel deal with this. To some degree, Israel and the Israeli far right are the only people in the region or in the world who are really taking the idea of expelling Palestinians from Gaza seriously. To them, the idea is great. I mean, there's a lot on the Israeli right who want to do that and have wanted to do that for years, and they want the West Bank as well. So it's that idea has found traction in Israel in a way that it hasn't. And so it's now that it's being tied up with the actual hostage release process and the ceasefire, I don't know if that's incredibly combustible, or whether it's a good thing or a bad thing in terms of piling pressure for them to keep the deal going, because the alternative that Trump is offering is just so extreme. You can imagine the Jordanians and the Egyptians want the ceasefire to keep going. They don't want to see, some renewed conflict here. Yeah.
Well, and on the kind of extremity of what the president is proposing, he was asked by journalists in the Oval Office this notion that this is not U.S. sovereign territory we're talking about. When he was asked by what authority he thinks the U.S. can go in, he just said U.S. authority, suggested they wouldn't have to buy Gaza. They can just go in. Ian, that's not true.
It's not true. It's not possible. A lot of people who have watched the region for decades, who have worked for the U.S. government, are just saying this idea does not make any sense, and that privately a lot of the Arab officials think it's nutty, right? And it's just
so is it a question of if anyone would act to stop the U.S. trying to do this, if Donald Trump were really to send people over? Yeah,
it's hard to see. It's hard to even fathom what that would look like, other than boots on the ground. And boots on the ground is something that, a lot of people who voted for him, a lot of people, in his Defense Department don't really want to see. And so it'll be interesting to see what that looks like. I mean, Gaza is largely rubble now. It is a very complicated, tragic situation. And again, the White House is selling this as outside the box thinking. And, potentially, as the authors of the Abraham Accords that united parts of the region before in the last administration, maybe they have some track record thinking outside the box on this. But for many people who look at these issues seriously, it's hard to see how any of the logistics or mechanics or practicalities of this would work in any way at all. Right?
Insights from Ian Marlowe. Thank you, Ian, as always, reporting on diplomacy and foreign policy here at Bloomberg in Washington. That's just the latest stop on the road here. We've been balancing a couple of developing and breaking stories since we came to air at noontime Eastern. It was only about an hour ago, in fact, that Fed Chair Jay Powell wrapped his first of 2 days of testimony on Capitol Hill, making it clear that no interest rate cuts are coming anytime soon.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
Also watching and listening today, Diane Swank, the chief economist, KPMG, with us now live on Bloomberg TV and radio. Diane, it's great to have you back. Thank you for your patience as we balance a couple of stories here. Based on what you just heard from Chair Powell today, and of course, we're going to have another conversation on the House side tomorrow, and the fact that basically rate cuts are not fully priced in until September. Should the Fed chair just take the next 6 months off?
I think the Fed's going to take more than the next 6 months off. The bottom line is the Fed has made very clear that they're not going to front run any policies by this administration. I think that's important. The other side of it is they have eased. That last cut in December was controversial within the Federal Reserve. We saw the dissent, but we also saw 30% of participants that were at that meeting did not see any cuts at all going forward. And the fact that Jay Powell was much more open to the fact that the neutral rate had moved up substantially from where we were pre-pandemic is important as well, because the fear is with inflation still smoldering out there, you could easily reignite inflation, and that is not a place they want to be. And frankly, all the economic data makes them very comfortable being on the sidelines.
Well, as we talk about inflation smoldering, though, Diane, Chairman Powell today suggested that inflation expectations are still well anchored. And I wonder if you share that view, considering on the subject of data, we had UMich figures that showed inflation expectations rising on the part of the consumer because of tariffs. Is there not a risk here that an unanchoring could be upon us?
I think there is a risk that unanchoring could be upon us. We saw in the University of Michigan index 2 months in a row where fears of inflation moved up on fears of tariffs. So clearly that's in the consumer's mindset. CEOs are not showing as much of an increase in their inflation expectations, and they've actually continued to come down. And there's mixed news from the New York Fed as well. Their surveys show that a pickup in inflation in December, but expectations by consumers in January, because we did not get the initial tariff announcements on the inauguration day, that actually came off a little bit. So there's a lot of mixed news down that, but we've also seen within the Fed themselves debating whether or not inflation expectations are well anchored and could they become unanchored. We heard Lori Logan address this from the Dallas Fed too. And I think that's very important to remember, is that the debate within the Fed is really heating up as inflation is not cooling as fast as they'd like, and that concern about reigniting those smoldering numbers is still out there.
So to what extent, then, could tariffs still change the view of the Fed? We've basically got a 30-day review underway right now when it comes to Canada and Mexico, for instance. Donald Trump has also been promising more when it comes to reciprocal tariffs. What is it going to take for tariffs to change the forecast for Jay Powell?
Well, this is a Fed that doesn't want to front run any policy, so they'll wait and see what the actual impact of tariffs are and what tariffs are actually implemented. That said, we do know that historically tariffs are inflationary unless we see a big spike in unemployment, and those two things have not yet occurred, and so the Fed doesn't want to get too far ahead of itself. But the bottom line is, if tariffs are enacted without a spike in unemployment, you will see the Fed act and continue to stay on the sidelines, hopefully they don't want to have to reverse course and have to raise rates again after they cut rates so much. And I think that's important as well, because if we're talking about a much higher neutral rate, what is it? And nobody actually knows what the neutral rate is. That's sort of a fuzzy number that moves around. And the concern is that we could be already too close to it. And that's something I think that you're going to see much more of a debate within the Fed coming out in terms of people talking differently about how they see inflation going forward.
Well, and of course, it's not just the Fed talking amongst themselves, Diane, but people talking about the Fed, including those in this administration. Just last week, we had an exclusive conversation with Scott Bessent, the new Treasury Secretary, suggesting he does not want to weigh in on monetary policy, basically saying that this administration is not concerned as to whether or not the Fed wants to cut rates or hike rates. They're just trying to make sure that the 10-year yield goes down. And we heard the chairman talking about this in the testimony today, that actually the Fed only has so much control over things like mortgage rates because it's about what the 10-year is doing. Do you see the ability for fiscal conversations happening here in Washington, even if the Fed is not really trying to take those into account, still altering what borrowing costs look like in this economy?
Absolutely. I mean, everything from deficit financing of tax cuts, that could push the yield up even further. On the other side of it, some of the spending cuts that they're trying to attempt to do may actually take some of the steam out of the upward rise in bond yields. So clearly this is outside of the Fed's purview. They can only do what they can do at the short end of the curve. The Treasury Secretary has also made clear that he would like to change some things that he's doing at the long end of the curve and perhaps be able, there has been a statement by the administration they'd like to see a dollar depreciation. That's why they're so focused on the long end of the yield curve. What is unclear is how much they could actually engineer that on their own.
What do higher deficits mean for inflation, Diane, particularly if the Trump tax cuts, if extended, are not paid for?
Well, the extension of the tax cuts alone aren't all that stimulative because we're already in place. So, you know, falling off a cliff of not extending the tax cuts, that would be holding back the economy quite dramatically. What really matters is the composition of tax cuts going forward. Are they going to be just extensions and sweeteners for individuals, or will there also be some offsets on investment to try to offset any losses we see due to tariffs and the higher costs of tariffs? And that's where a lot of debate is currently going on in Washington, and trying to think about how do we think about expensing investments right now? How do we think about R&D? I don't think they're going to come up with any solutions on that till year end because it is so complicated. But depending on where the tax cuts actually come, that will have a different effect on the overall Treasury bond market. But we have seen some return globally of the bond vigilantes, and I don't think they're limited anymore to developing economies alone. We've already seen the UK and France actually feel their ire.
Well, Diane, obviously the argument the administration makes in favor of tax cuts is that it's going to juice growth. But I do wonder what realistically you think GDP growth expectations will look like if, yes, you get those tax cuts, or at the very least we don't fall off a cliff, but it's coming with tariffs, with changes in the labor market because of deportations from the reduction in size of the federal government. How does all of that come together as one big picture?
Well, it really is an issue of sequencing what happens first and what matters first, because the tax cuts are likely backloaded into 2026 and 2027. So the upward effect on growth is in those years, while the suppressing effect of higher inflation and the immigration losses, that comes up front as well. It depends on how fast. Usually we see these things evolve very slowly, but the shock and awe that the administration has been going for to get faster economic results, particularly on the immigration front, could also have more damaging effects. We already have heard, certainly anecdotally, from a lot of firms that have said they're not able to do the kind of things that they thought they could because workers literally aren't showing up because of fear of deportation. So that has its own stagnating effect on the economy and its own drag on economic growth. It also cuts into our ability to grow potential growth. And of course, we know immigration is a big part of the deficit in terms of lowering it, because immigrants pay into Social Security and Medicare, but they cannot collect it unless they ever achieve a green card or actual U.S. citizenship.
All right, Diane Swank helping us look at all the different pieces of this puzzle. Chief economist at KPMG, thank you for joining us here on Balance of Power as we watch from Washington the testimony Jerome Powell gave on Capitol Hill earlier today. And the markets were watching as well, so we want to get a check on those now. Charlie Pellet has a look from New York. Hey, Charlie.
I thank you very much. Do want to begin with a developing story right now out of Moscow. Russia has released American prisoner Mark Fogel after talks with Trump envoy Witkoff. The White House says that plane has left Russian airspace. Fogel, you recall, is a teacher who has been held for more than 3 years on drug charges. But again, the headline, let's repeat it here, Russia has released U.S. prisoner Mark Fogel after talks with Trump envoy Witkoff. U.S. stocks, right now we're looking at a down day, little changed on the S&P. The S&P down 9, drop there of 0.1%. Dow Industrials up 16. NASDAQ falling 91 points, a decline there of 0.5%. Treasury yields rose, stocks fluctuated as Fed Chair Jay Powell, heard here on Bloomberg Radio and Television, reiterated the central bank is in no rush to cut rates. The 10-year 4.53% with the 2-year currently yielding 4.28%. Gold down 0.2%, 29.03 the ounce. West Texas Intermediate crude 73.32 a barrel on WTI, up by 1.4%. Bitcoin down 1.8%, 95,651 on Bitcoin. Goldman Sachs is abandoning a significant pledge it made to refuse initial public offerings with companies that had all white male boards. Wall Street's leading investment bank had a policy that would only take a company public in the U.S. or Western Europe if it included 2 diverse board members, one of whom must be a woman. Goldman Sachs shares down by 0.6%. Again, repeating our headline, Russia has released U.S. prisoner Mark Fogel after talks with a Trump envoy. Balance of Power continues now. Back we go to Washington. Once again, your hosts. Here they are, Joe Matthew and Kaylee Lives.
Okay, Charlie Pellet, thank you so much, and good to have you with us here on the Tuesday edition of Balance of Power on Bloomberg TV and Radio. I am Joe Matthew alongside Kaylee Lines in Washington, where Donald Trump today is meeting with the King of Jordan. We'll keep eyes on what may come from their continued meetings. They already allowed reporters into the Oval Office for a while. Not too much news, but Jordan has agreed to take a couple of thousand sick Palestinian children as Donald Trump looks for more help in resettling Palestinian refugees. I'll tell you what, though, when it comes to the executive actions, Kaylee, that we have seen from this White House, the courts have been very busy. USAID employees are suing. Universities are filing over NIH funding cuts. Public citizen claims, foreign aid freeze, labor unions filing a challenge over the Doge. Just got another ruling here.
Yep.
Doge remains temporarily blocked from accessing Treasury data. Of course, the hand was in the cookie jar pretty early on this one, as the payment system is in fact seized by the Doge.
Yeah, or granted access to, and a federal judge had already earlier this week or over the weekend ruled that they cannot have access to that system. Then there was concern on the part of the government. The Department of Justice countered, saying that actually they were cutting off Treasury officials' ability to access the system as well. So it's a bit of a revision to the restrictions from the federal judge. Leadership at the Treasury is now exempted. Doge can still not get in, but obviously that probably only does so much to pacify those concerned or to alleviate what the administration is saying is the courts acting in a way that they should not be exercising authority over executive power.
It's an interesting moment here, as we saw in the first Trump administration and now in the second, just testing a lot of ideas in the courts as Congress watches along. That's where we start our conversation with our signature panel. They're back today. Rick Davis, partner at Stone Court Capital, Republican strategist and Bloomberg Politics contributor, alongside Democratic analyst Jeannie Shanzano, Bloomberg Politics contributor and political science professor at Iona University. What do you think here, Jeannie? It was a read-only, as we understand it, read-only access to the Treasury's payment system and personal information that was tied to it. The judge is keeping guardrails up here. Will the courts be the answer, the check and the balance to this Trump White House if Congress will not be?
They are trying to be that check. I don't know if it will sustain long term because, of course, we have a vice president who just the other day said they can rule and, we may not listen to those rulings. And that has set off this real concern that we will see a constitutional conflict like we've never seen between the executive and the judicial branch. But the reality is the judge is right about this. When you look at the Treasury, the issues of privacy, cybersecurity, the constitutional issues, the security threats arising from what has happened by letting people who have not been properly vetted and who are not nonpartisan civil servants have access to these systems is incredibly dangerous, not to mention the fact that it is Congress who the Supreme Court has long agreed authorizes the funding, and it is not the will of the Treasury or the executive branch to decide when they listen and when they don't. That is long set in American constitutional law and should not be upended by people who have not been elected or anyone else, quite frankly.
Well, so to Jeannie's point, Rick, obviously we can look at each of these cases and the judge's rulings individually, whether it's USAID or NIH related, if it's birthright citizenship, but all of this broadly seems to be about a question around the Constitution. Do you sense that there is a kind of constitutional crisis brewing just weeks into this administration?
No, not at this point. I'm not exactly sure how much of this is constitutional and how much of it's not. I am not a constitutional expert, so my own layman's point of view is that this is actually a strategy that the Trump administration is actually trying to foment, which is let's poke around and see whether or not we can extend the power of the executive branch by treading on some of the things that have historically been the purview of Congress, and even in some cases, the judicial system, and then let the judicial system tell me whether I'm right or wrong. And so far, that's pretty much how it's been played out. As you pointed out, there are a lot of lawsuits on the issues that have been presented as far as access to and manipulation of agency funding for congressionally approved programs. And I think that it's going to be a real test for the judicial branch to say how much they feel this executive encroachment into the congressional authority is allowed. And the greatest, I think, interesting aspect of all this is the incredible lack of engagement by Congress. Republicans in Congress seem perfectly happy to abdicate their authorities to this executive branch. And I would caution them only that if Democrats were ever elected to the presidency again, they're going to want to have that authority, and Republicans are going to probably try to resist it. So you're putting yourselves in an interesting position of having to cede this temporarily to this president, and no telling who's going to be the next president and whether or not you're going to want that to happen again. So I think we're creating precedent more than breaking constitutional mandates, but I think the courts are going to tell us just how far this administration can go.
Well, how about Democrats in Congress, Jeannie? Is Hakeem Jeffries the right leader for right now?
He's the leader we have. Democrats don't have a lot of, they're not empowered really to push back. They are trying to do some of that. There is a lot of disagreement in the Democratic Party on how best to do that. And I think we're going to see that play out, particularly when it comes to raising the debt ceiling, when it comes to the funding for this year. One of the problems is that Democrats have long sought protection in the courts, and that is not a viable solution for a political party. So they need to win the hearts and minds of the voters. These cases that are going up through the courts will continue to go up. But I would just say that what's changed on the part of the Trump administration here is the rhetoric. In the past, they have appealed decisions they didn't like, but accepted the rulings. What we have heard from J.D. Vance, what we have heard from Elon Musk, even what the president hinted at, which has gotten people very concerned about a constitutional crisis, is the idea that judges have stepped over their skis on this. They don't have the power to set limits on the executive branch. And if they try, we may, beating the Trump administration, not listen to that. That is, if it happens, a constitutional crisis like we've never seen before in the modern era. And that's what's got people concerned. So far, they have listened, But when it gets to the final arbiter, the Supreme Court, if they choose not to listen because they don't like the outcome, that is a constitutional crisis. And that is something that, you know, in American history would put us in unprecedented times.
Judy Shanzano and Rick Davis, our signature panel. It's great to have you both back with us again today on Bloomberg TV and radio. It's Balance of Power, the Tuesday edition. I'm Joe Matthew alongside Kaylee Lyons in Washington. As we turn our attention, Kaylee, back to the Middle East, the King of Jordan at the White House today does not agree with Donald Trump on a two-state solution.
Yeah, not willing to buy into the U.S. taking over Gaza idea either. Right. We're going to get into that with a former ambassador to Jordan. David Hale is on his way in next on Balance of Power on Bloomberg TV and radio.
6:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow and the S&P pushing higher. The S&P has been fluctuating right now higher. Little changed, up by 1 point. The Dow is up 59, up 0.1%. NASDAQ, though, does remain lower, down 36 right now, a decline of 0.2%. Treasury yields rose. Stocks fluctuated as Fed Chair Jay Powell, right here on Bloomberg Television and Radio, reiterated the central bank is in no rush to cut rates. The 10-year 4.52%, with the 2-year currently yielding 4.28%. Gold, little change, $29.05 the ounce, down $3, down 0.1%. West Texas Intermediate crude oil up 1.4%, $73.30 for a barrel of WTI. Apple's Beats unit has rolled out the long-anticipated PowerBeats Pro 2, bringing noise cancellation, a heart rate monitor, and revamped design for the popular athlete-oriented earbuds. Right now, Apple shares, they are advancing by 2.7%. So again, recapping, both the Dow and the S&P 500 index are higher. NASDAQ lower by 0.1%. The S&P up by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where an important meeting has taken place today at the White House between President Donald Trump and King Abdullah of Jordan, with much on the agenda. And in fact, the two sitting down together in the Oval Office and welcoming press in, despite our previous understanding that there would not be press involved in much of this meeting. No joint press conference was scheduled, and still the two of them fielded a number of questions from reporters about Donald Trump's plans for Gaza specifically and the role Jordan would play in them. Here is a taste of what President Trump said about his vision.
It's not a complex thing to do. And with the United States being in control of that piece of land, a fairly large piece of land, you're going to have stability in the Middle East for the first time. And the Palestinians, or the people that live now in Gaza, will be living beautifully in another location.
When asked by reporters if he planned personally to help develop portions of Gaza, the president said no. And so we're glad to bring you a voice of experience on this matter, and someone with great experience in the region. David Hale is with us, Global Fellow with the Wilson Center, former Undersecretary of State for Political Affairs, and most importantly, former ambassador to, yes, Jordan, along with Pakistan and Lebanon. Mr. Ambassador, welcome. It's great to have you with us here today on Bloomberg TV and radio. You know the stakeholders here, and I wonder, before we get to some of the substance, what you make of this move to bring the press pool into the Oval Office for what was supposed to be a closed press meeting. Is this all part of the pressure play?
Well, I don't know exactly what was going on. It's common and normal to have the press there, so even if it wasn't originally planned, I'm sure that the king wasn't going to object if President Trump suggested they do it.
He didn't look terribly comfortable.
No, because it was a surprise, and you know, he speaks English very well, but it's not his native language, so he may not have been fully prepared for it. But the fact of the matter is that the king is one of our closest allies, one of our most reliable partners, not just in the Middle East, but globally. And the conversation that they undoubtedly had was potentially quite consequential.
Well, and the conversation itself could be uncomfortable when you consider what ask the president is making here. He wants into the country so that Gaza can be redeveloped. Is there any way the president is going to be able to convince the king that that is a suitable plan today?
Well, my guess is that the king probably behind closed doors thanked the president for at least demonstrating concern for the welfare of the people living in Gaza, which a lot of people don't seem to want to express. And to try to think about new ideas, because frankly, you know, new realities do require creative thinking. Now, this may be more creative than people are prepared to swallow, but at least it's a beginning of a conversation. And I'm sure if the king were able to offer ideas of his own to complement what the president is offering, then there's a conversation to be had.
So that's my question for you. They're back behind closed doors now. To what extent can King Abdullah bring Donald Trump into his fold and talk about the stakes in the region and why this may be asking the impossible?
Well, again, in my experience, a lot of presidents, and I don't mean this as criticism, it's understandable, don't necessarily know all the details and all the problems that led us into these dilemmas that we face, like today. So that's one task, I think, for the king, is to explain the realities on the ground. And for Jordan, there are two realities. One is they already have been generous, and 60% of their population is Palestinian origin. And there is a Jordanian East Bank population that is rock solid with the king. They are his base, but they don't want one more Palestinian. So that's a political reality. The second problem is that the whole issue between the Palestinians and Israelis is largely now, to summarize, one of land for security. And so the Palestinians are loath to give up their land without any kind of guarantees about what they keep. It's the land. The dispute is over the land. And so if the king were to come along and cooperate with a proposal that deprived them of that, he would be viewed as a traitor.
Well, and the president has suggested that Palestinians wouldn't necessarily be welcomed back to Gaza, that they would be in nicer conditions, in his view, elsewhere. He suggested as well, when he was asked by a reporter, that the U.S. does have the authority to do this, to just go into Gaza, not buy it, he says, but just take it over as its own. What authority is that, Ambassador?
Well, the legal status of Gaza is a little bit nebulous anyway. It's not just a matter of law or authority, but also what our interests are. And I think our interests are to work carefully and wisely with the Israelis, the Palestinians, and the Arabs to come up with a solution that will improve the welfare of the people living in Gaza, but also get us back on a path toward finding a durable solution.
The president indicated in a conversation with reporters last evening that he would be open to threatening, at least, to pull some funding from Jordan. I don't know if you take him at his word there, but what would we be talking about? To what extent does Jordan rely on U.S. funding? We certainly know how it relies on military support.
Right. We provide over $1 billion a year to Jordan, so it's quite substantial, but we do it because it's in our interest, not necessarily because it's in Jordan's interest. It is, of course, as well. But we do it because the King of Jordan and the government of Jordan and the army and the intelligence services are solid partners. This is an island of moderation on Israel's eastern border. And if we risk put in jeopardy that support, it puts in jeopardy the stability of the monarchy. And I think that would be an extremely dangerous course to take.
Well, and we should remember as well, last year when Iran sent the barrage of missiles and drones over to Israel, it was the U.S. and U.K. that were helping take those down. But Jordan air defense, Jordanian air defense was involved in that too. Obviously, that is just one of the players we're talking about here, though. There's Egypt as well. And King Abdullah said, we need to see the Egyptian plan too. Are they on the same page, the two of them together? Will Egypt be viewing this any differently?
Well, Jordan will probably seek an Arab consensus for any outcome, and obviously it may serve his purposes to hide a bit behind the absence of an Arab consensus to support this. It's the Saudis who will really matter, and they've already rejected this proposal. But you touched on a very important point, which is that Jordan is an ally of ours in dealing with the Iranian problem. And so a lot of this is frankly a distraction from the real issue, which should be strategically, how do we do something that permanently puts Iran the reversal of fortune that Iran has suffered. How do we make that permanent? And Jordan has a big role to play and a lot at stake in that. And so I hope they're also discussing some of those issues.
Ambassador, this is all further complicated by Donald Trump's threat for all hell to break out again, starting at noontime Saturday in Gaza, if hostages are not released. He indicated just now he doesn't expect them to be released. To the extent that you know King Abdullah, what does he make of talk like that, and what might Gaza look like at noon on Saturday?
Well, my interpretation is just, as valid as anyone else's, but was that the president was speaking about his expectations of reality, not necessarily that he was threatening that or he wanted that. But
that would mean the ceasefire agreement is out the window.
That he believes that if we don't finish phase one, there won't be a phase two.
Yes.
And if there's no phase two, there will be a resumption of the war. So that's a statement of fact. And I think King Abdullah also understands those facts. So we should be doing what we can to sustain the ceasefire process. The problem there is that phase two of the ceasefire calls for the withdrawal of the IDF fully from Gaza. And yet there's been nothing done to prepare for what replaces that. Who or what will be providing security in that context? So the Israelis are not going to pull out if they don't have a reliable partner on the other side of the fence, which is not Hamas and not the Palestinian Authority. The Arabs have said, well, we can do it, but only if Netanyahu commits to a two-state solution for the Palestinians, and there's no consensus in Israel for something like that. So phase two is in serious jeopardy, not because of what President Trump said, but because of the realities of these differences.
So even if you don't see a break in the ceasefire on Saturday, when this 42-day period is expired, you don't see a likelihood that it's extended beyond that if phase two is the requirement for that?
I think it's very fragile and very unlikely to happen, in my opinion. I hope I'm wrong. but it would require certain either changes to the agreement or compromises on the part of Israel that in the current psychological climate, I think are extremely unlikely to happen.
I want to ask you about a story that broke a short time before you joined us here. The Kremlin has freed Mark Fogel, a man who has your former job, actually, Steve Witkoff, put him on his private plane. They are apparently on their way back outside of Russian airspace, so we can now talk about this. Mike Waltz made this clear. This is the first time that a senior U.S. official has touched down like this in Moscow since the former CIA director Burns touched down to try to head off a war in Ukraine. To what extent does this development help to pave the road for a deal over Ukraine?
Yeah. Well, he was my predecessor, but I didn't have a private plane to bring into the equation. Look, my experience with President Trump in his first administration was that he cares passionately about the fate of American citizens who are being detained unlawfully overseas by governments or terrorist groups. So I think this is a plus. What we don't know, of course, is what the conversation was and what, if any, trade was made in exchange for the release of this man. We don't know that, but undoubtedly it'll become apparent soon.
Well, what does it say that the Middle East envoy is the one who was sent to Russia to do this?
Yeah, I don't know what to make of that, except that I also believe he's a close friend of the president. Sure. So it may be on a personal basis that they all felt that he had what it took to get the deal done.
Does it give you hope on the relationship, or at least the ability to negotiate with Moscow when you hear a development like this? Usually this doesn't happen in a vacuum.
That's right. And so in that sense it's positive, but we don't know what it is that Putin got in return. And so I would want to know that before I made any further judgment.
Well, and we also have to consider the relationship that these conflicts have with one another. We're talking about the war in Ukraine and Russia, which obviously has ties to Iran. China is involved in this as well, as often described to us on this program as a new axis of evil. How do these puzzle pieces fit together in your mind? If Russia's going to the negotiating table on Ukraine, does it have implications for the behavior of Iran? What role does China play in this, for example?
Yeah, I mean, everyone's watching everyone, and Iran has developed an alliance, at least of convenience, with Russia and China, so that's a factor as well. But I think Russia's definitely on the defensive in the Middle East with the collapse of their ally in Syria.
Sure.
So I'm not sure it has any immediate implications. But for the United States, what we do in one theater of operations and one set of problems, that definitely influences attitudes toward us in coping with other problems. So the idea that we're going to assert strength, peace through strength, actually works. And that is, I think, a foundation of Trump's approach.
What about the idea that we could just go in and take over Gaza? What might that signal to China about Taiwan?
It's a good question. I don't have an answer to it, but I accept that I don't really believe it's going to happen.
Well, I'll tell you what, when you start to pull out the lens here and look what's happening in the region, we recall the visit by Benjamin Netanyahu to the White House last week, and people were musing openly here in Washington about a preemptive attack against Iran, that is what Bibi was trying to talk to Donald Trump about. Iran on its heels, go after the nuclear facilities now. Is that something in the realm of possibility for you, or is that talk at a cocktail party in Washington?
Well, I think it's very much in the realm of the possible, and it was a theme for many conversations between President Obama when I was Middle East envoy and Prime Minister Netanyahu when he was in office then. And that was part of the incentive and motivation for us to get the nuclear deal that was flawed deeply, but something that we got. So I'm sure it was discussed, and I'm sure King Abdullah is very interested in knowing what exactly is
You think that's something that they're discussing today as well?
I hope so, and the King will be very happy if we're going to keep the pressure on Iran, but want to know how and to be ready for it. The fact is, Iran's air defenses, I think, are apparently gone. And so this is a good time to think about how we can really eliminate this threat.
All right, Ambassador, thank you so much for joining us here in our studios in Washington, D.C. David Hale, as we mentioned, former ambassador to Jordan, as well as Pakistan and Lebanon, now global fellow with the Wilson Center, former Undersecretary of State for Political Affairs, as well, here with us on Bloomberg as we digest what we have heard already from President Trump and his meeting with King Abdullah of Jordan. And he is expected to sign executive orders about an hour from now. We'll see if that's on schedule and if it turns into another defect.
You know what that could mean.
Press conference.
Yeah, we start the day with with a lot of closed press events, and then somehow they all end up opening to press. We'll let you know, of course, as always, if the president speaks and if he makes news. I'll remind everybody, this was Jay Powell Testimony Day.
Yeah.
This is one. Number 2 tomorrow. We're going to talk a little bit later on in the late edition of Balance of Power, and hope you'll join us with Senator Elizabeth Warren, who had some tough questions for Jay Powell today.
Yeah, specifically when it comes to the Consumer Financial Protection Bureau, with which Elon Musk and the Trump administration are essentially, and Russ Vought, trying to dismantle. She, obviously, considering that was her brainchild, not too happy about that. So we'll get into that on the late edition of Balance of Power. In the meantime, Bloomberg Business Week is straight ahead on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Tuesday, February 11th. Carol Master along with Tim Stenivek live here at Bloomberg headquarters. U.S. stocks, Tim, a little bit of change.
Yeah, bond yields, though, moving up. This is Fed Chair Jay Powell reiterated that the Fed is in no rush to cut rates. That's the news that crossed even before he started speaking. That was in his prepared testimony. Investors showing up in force for 3-year notes, Carol.
Yeah, and all of this is top of mind on this Tuesday, especially what the Fed chair had to say. When Jay Powell speaks, we want to know what matters most to investors. We're going to check in with our Mike McKee just about that.
Plus, a market read on the Fed chair, tariffs, and on earnings, because, folks, we still have quite a few to go.
We got to make sense of it all. Also, Sam Altman versus Elon, what it may mean for the future of OpenAI.
Nobody's talking about a cage match, like with Zuckerberg and Elon. Yeah, I don't know why.
I don't know. That would be kind of funny.
Also, today's big take, Carol, how hedge funds are pocketing much of their clients' gains. Check out that story on the Bloomberg terminal, or just watch or listen to our program.
Yeah, it's the Bloomberg Big Take today. We'll get to that over the next 60 minutes. First up, though, let's get to today's trade and your top business stories. Here is Charlie Powell.
Hi, thank you very much. Good day to you both. We are looking at a U.S. stock market right now, little changed. Key takeaway right now with the S&P down 1 point has been fluctuating. The S&P 500 index at 6,065, a gain of a loss of less than 0.1%. The Dow is gaining up 35, up by about 0.1%, while the NASDAQ Composite Index down now by about 0.3%. We've got NASDAQ down 51, a decline again of 0.3%. The 10-year at 4.52%, with the 2-year 4.28%. Gold down $2 the ounce, $29.06, down less than 0.1%. And West Texas Intermediate crude up 1.4%, $73.31 for a barrel of WTI. Boeing delivered more jets in a month than Airbus for the first time in almost 2 years, as the plane maker begins to recover from a lengthy strike and years of turmoil. According to Boeing's website, it handed over 45 aircraft in January, including 40 of its 737 MAX models, topping the 25 jets delivered by European rival Airbus. Boeing shares now up by 0.6%. Again, recapping, little change for the U.S. stock market. S&P down 1 point, down less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. We are set up on this Tuesday afternoon. Just got about 2 hours to go until the closing bell. Markets, though, they did get a big dose of Jay Powell today, as the Fed chair was up on Capitol Hill in a day, it should be day one, I should say, of his semi-annual testimony on monetary policy before Congress. He answered many questions, but what everyone seemed to focus on was his messaging around timing when it comes to Fed moves.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
All right, that, of course, is Fed Chair Jay Powell today before the Senate Banking Committee. Let's get more on what he said and really what matters to investors. Bloomberg International Economics and Policy Correspondent Michael McKee listening to it all, joining us from our D.C. bureau. Mike, it seemed like not really a new message, but he was pretty clear about not having to adjust rates anytime soon.
Absolutely, Carol, not a new message. This is exactly what he said when he met with the press after the last Fed meeting. The Fed has been pretty consistent in saying that the economy is in good shape, and all the adjectives he used, the economy is strong, the labor market is solid, inflation has come down but is still above its target, is stuff that they have said for quite some time now. So this was sort of a message to the market that nothing has really changed. You see market moves because people feel like they have to move, but all that will probably wash out pretty soon. There were a separate group of messages to the folks on Capitol Hill who were much more interested, interestingly enough, in things like bank regulation and what the Fed is going to do about or thinks about some of the president's fiscal policies than anything to do with monetary policy.
And yet, Michael McKee, we did not get a concession from the Fed chair that the U.S. has achieved a soft landing. Republican Senator Kennedy from the state of Louisiana pushing him on that, and he was not ready to concede.
Yeah, I thought that was probably the most interesting exchange of the whole hearing, because Senator Kennedy is, as you mentioned, a Republican. And President Trump has been describing the economy as a disaster area, a terrible situation. And here is Senator Kennedy saying that the economy is in great shape and it looks like you made a soft landing. And Jay Powell modestly saying, well, I don't know if I would take credit. And Kennedy saying, no, take credit, take credit. I thought it was very strange.
Is it pretty out of the norm for the senators to congratulate or tell the Fed chair he deserves some credit? I was pretty struck by that exchange like you were. Typically, you know, he goes to these things and he gets a little bit of criticism. In this case, Senator Kennedy was like, hey, you should take some credit for achieving a soft landing, for the U.S. not being in a recession, for the U.S. having the best economy in the world.
Well, it normally depends on whose party is in the White House and who's driving the legislative agenda. The congressmen and senators ask questions sort of based on their own politics. So that's why it was unusual that Senator Kennedy, a Louisiana Republican, would give praise to Jay Powell, especially considering who's in the White House. And the man there has been very critical of the economy.
He didn't talk about tariffs, did he, either?
No, he refused to take any position on anything the president is doing. He was asked several times in an economic way, you know, as an economist, he's not an economist, but as a member of the Fed, and what do your economists say about the impact of the president's policies on the economy? And he said, we don't comment on what the president says or does. That's up to the president. And then asked about things that Congress could do, he said, that's up to you. We don't comment on that. His basic message is sort of, we're staying in our lane, and they're keeping their head down. They don't want to provoke anybody into any more of this talk about the Fed losing its independence.
Is that kind of the mission of whether it's Jay Powell or any Fed chair when they go before Congress and answer questions? Is it just to kind of maintain the status quo as much as they can?
Yes, it's rare that in any of these appearances a Fed chair would give any hint about what might be coming up. The one time I can remember that happened was 2013, when Ben Bernanke suggested that the Fed might, in a couple of months or so, think about cutting interest rates, which led to the temper tantrum, the taper tantrum. And that was considered to be a huge mistake, even though he thought it was relatively calming words. So they're going to stay away from anything controversial or any real guidance at these things.
Mike, is the Fed overstaffed? I'm asking the question that Representative Andy Kim of New Jersey, or excuse me, Senator Andy Kim of New Jersey.
Are you thinking about Doge, perhaps?
I am thinking about Doge. I mean, that was kind of the undertone of the question, wasn't it?
Well, you know, I'm not qualified to say whether the Fed is overstaffed or not. They have more PhD economists than anybody. I can tell you that. But you know, Jay Powell and others I have talked to behind the scenes at the Fed say because it's an independent agency, Elon Musk has no ability to do anything there, and they won't let him in the door.
All right, before you go, just curious about, you know, in terms of what investors are expecting for rate cuts this year, a cut not fully priced until September, less than 2 cuts priced in for all of 2025. There's so much room between now and then. I mean, Mike, how do you incorporate any of these market expectations, especially when so much can happen between, you know, month to month and from meeting to meeting?
Yeah, I don't, and I don't think the Fed does, because that's absolutely correct. Anything can happen between meetings. Tomorrow we have a CPI report. If it were to show inflation significantly jumping, and there's a possibility it could because it's a January report, and remember the last couple Januaries we've seen higher than anticipated inflation, then markets might start pricing in the idea of a rate increase. So it's really hard to say that anybody has any visibility on what the Fed is going to be doing over the next 12 months, especially since we don't know what Trump's policies are going to be. And we can certainly be surprised by the data whether or not the president has any influence on it.
All right, Mike, so appreciate it. Mike McKee out there in Washington, Bloomberg International Economics and Policy Correspondent. All right, now let's get to today's trade, where investors are juggling a lot, including, as Mike said, there's a lot we could or couldn't get from the Fed this year, but they're also factoring things like tariffs, earnings, and really, as we said, the economic outlook as laid out by the Fed chair, Tim.
Well, that's where we go now into Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, who joins us here in the studio. Today's trade in response to Jay Powell, kind of a whole lot of nothing, just a big shrug, at least when it comes to the equity market.
Yeah, there wasn't a lot of information to trade on. It's just sort of status quo. I think that for those holdouts that were hoping that we might just get one more ease,
Silly them.
It might have been slightly disappointing, but just not a lot to trade on. Not a lot to trade on when the Fed is pretty clearly just sitting in neutral, waiting for something to change.
Gina, how much in this environment right now are people coming to you? Like, do you feel like you need to update your equity outlook or rethink things because we get something from Washington, the possibility of tariffs, maybe not so much, and then, another round. We're also in earnings season. Like, there just feels like a lot coming at investors, and they're trying to assess what really matters and how it plays into valuations in the market.
I think it's an excellent question, and it's one of those times when I'm just ever so grateful for our model-based approach, because if something is happening and it doesn't change the model, it doesn't need a whole lot of attention.
Yeah.
We have done a lot of work on where tariffs may impact stocks, just to try to get in front of this. In the event that tariffs do emerge, I would imagine the market starts to price it pretty quickly. So far, we've had very little tariff action, a lot of tariff talk, but very little tariff action, so it hasn't been a tremendous shock. But we do want to be prepared for where we might see weakness emerge. So we do a lot of work on what are the benchmarks to watch, what are the guideposts to follow to anticipate potential tariff sort of dampening the mood in the equity markets. I think most importantly for us so far has really been the big takes from earnings season. And this has been very, very interesting because despite the fact that companies are really beating expectations to a great degree, the biggest beats are not coming from tech anymore. They're coming from financials and industrials. And to the degree that tech companies are beating expectations, their prices are falling on the beats, because the stock prices were so elevated for this space, expectations were so high, it's nearly impossible for these companies to beat unless they also raise guidance into the future. So I think that we've gotten some really interesting tells out of earnings season so far. We'll likely continue to get some really interesting tells. Something we're watching really closely this week is the inflation numbers and what they'll mean for margins. As you know, this is a huge risk embedded in our outlook for 2025 is our inflation tailwind is now gone. It's turning into a potential headwind as producer prices are now rising faster than consumer prices. So we're looking for that to either reverse or continue to gather momentum, and that could have pretty significant consequences.
You sound more subdued.
Well, I'm tired, Carol.
Amen. I hear you. I hear you. It's
We're only
Tuesday.
a few weeks into this year, and yet it has been an exhausting one so far. I think that it's not necessarily subdued. It's just very conscientious, I think, there's just a lot to consider. Separating the signal from the noise in this environment has become ever more important. And we want to be pretty careful to identify what are true signals and what is just noise.
What is, you talked about tariffs, you talked about inflation. What about tax policy from the Trump administration?
Yeah.
Is that just a noise? Is that just noise until something actually happens?
Yeah, so far it is very much just noise. I mean, something that I think is a little bit worrisome is at least our work would suggest that there was an expectation embedded in stock prices for greater than 20% growth to emerge this year. That is a really tough expectation, a tough bogey for stocks to meet. It's only happened 3 times since the great financial crisis. 2 of those times were the bounce back years from recession, so we naturally had easy comps. We got to greater than 20% growth. The 3rd time was tax reform year. So I do worry that investors have already anticipated tax reform starting to emerge. To some degree, it's got to be underlying sentiment. So the mandate now is make that tax reform occur, or we have downside risk, right? And I don't know how realistic it is to see tax reform occur in this current fiscal budget environment. So it is a big question mark. It's not at all an investable theme at this moment because we don't know if it's going to happen. I have heard very little about it beyond the president himself. It does require cooperation from Congress to happen. So we'll see. We'll see if they can gather the momentum to make that happen in a year that is likely to be somewhat riddled, at least over the summer months, with another budget crisis.
One thing I want to ask you, and I had read, I don't know, I was reading it yesterday, but just the start to the year for stocks outside the United States, whether it's Europe and elsewhere, like we're really seeing some strong returns in comparison to what we're seeing in the United States.
I think some people would say, finally.
Finally. Well, everyone's been talking about it, but it's kind of happening.
Yeah.
Is it just the case that they were so beaten down, like they had to go up?
Some of it is.
Okay.
I think some of it is the expectations in the U.S. were very, very high. Expectations basically everywhere else in the world were very, very low. In particular in Europe, we
But stupid money doesn't just go there, right?
No, not necessarily, but you get these buying opportunities that emerge when sentiment is so very, very negative that your potential for future positive returns just is amplified.
Okay.
And we certainly, it looks like we got to one of those points as of about Thanksgiving last year with Europe in particular. You also have this interesting policy divergence. Speaking of the Fed today, what the Fed is doing is going on hold while the rest of most of developed markets, central banks are still easing. That creates a shift in currency, it creates a shift in monetary conditions that very much favors financials outside of the United States, which is helping to power markets in Canada and Europe. A lot of equity markets outside the United States are much more financially centric than they are tech centric, so they're kind of the polar opposite of our market. So when central banks are easing, their financials tend to perform relatively well, and so we get a little bit of a lift there. But, you know, I think a lot of people are a bit baffled by the idea that Canada, for instance, has been a great performer.
It is our
since the
51st
election.
state, or some would say.
And that's a lot of that is because of financials.
Yeah.
Europe was just enormously cheap. As of Thanksgiving last year, we started talking about the fact that you had a bigger discount there than any point, even relative to the European debt crisis. Europe's stocks were cheap. So
Just amazing, right?
Very cheap, and they've started to post positive revision momentum, unlike the U.S. So there's a fundamental case that's starting to emerge for these groups as well.
We're almost, well, I wouldn't say we're almost done with. We're pretty far along when it comes to at least the big companies reporting. The mega cap tech companies, 6 of the 7, Mag 7 have reported. NVIDIA happens at the end of this month. We still have Gilead today, Lyft, Zillow, a few more. What's the next catalyst, at least for the U.S. equity market?
NVIDIA is going to be huge. It's just probably, you would argue, it's the most important of the Mag 7 at this point because it is at the center of the AI trade. The reaction to DeepSeek is going to be mandatory. Sort of where are we headed in terms of order flow? What does your outlook look like now? So NVIDIA will be a huge part of driving sentiment. I think the inflation numbers this week are important. I think the market will probably ignore any risks like they did in January, but this is something that is very important to the long-term endurance of the earnings stream. Some of the energy reports that are coming up in the next couple of weeks are also really critical to watch. This is a lagging sector.
Yeah.
So if we start to see some signs of life there, it would be very good.
Yeah, and there's certainly been some reaction in terms of we don't need as much energy spend, but you do certainly have an administration where the policies are expected to be supportive. So we'll keep an eye to get some clarity. Gina, thank you so much.
Sure thing. Thank you.
So appreciate. There's a lot going on and coming at investors. Gina Martin-Adams, she's Chief Equity Strategist at Bloomberg Intelligence. You can check out her research on the Bloomberg Terminal.
Hey, coming up next, it's the story that made us stop for a moment yesterday. Today, it is among the most read on the Bloomberg Terminal.
Can I call it a wait what moment?
Yeah, I think that's fair to say.
It was indeed. It involves Elon and a few other characters.
I think you gave it all away there.
Sorry about that.
Well, there are a lot of stories right now involving Elon, to be fair.
That's a really good point. All right, folks, you are watching and listening to Bloomberg Business Week. I'm Carol Master along with Tim Stanovic. We're back right after a quick break.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Fed Chair Jay Powell says the central bank does not need to rush to adjust interest rates, again signaling that officials will be patient before lowering borrowing costs further. His remarks broadcast live on Bloomberg television and radio. Right now we have got the Dow higher, holding on to a gain of 44 points. Dow Industrials up by 0.1%. S&P, though, in the red, lower by 1 point. The S&P little changed on the day, holding at 6,065. NASDAQ down 58 for the NASDAQ Composite Index, a drop right now of 0.3%. 10-year 4.53% with a 2-year 4.28%. Gold down $4 the ounce. Gold continues to trade above 2,900. Right now, spot gold 29.03, down 0.1%. West Texas Intermediate crude oil up 1.4%, 73.31 for a barrel of WTI. Briefly, Bitcoin down 2.3% now, 95,150 on Bitcoin. After earnings, we've got Hilton Worldwide shares up 0.7%. After earnings, Coca-Cola right now trading higher. We've got Coca-Cola up by 3.9%. Marriott International after earnings down 5% again. Hilton up by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Well, Elon Musk leads a group of investors that has offered to buy the nonprofit that controls OpenAI for $97.4 billion, escalating a clash between the Tesla chief executive and the artificial intelligence company that he co-founded. Now, another co-founder who is also happens to be OpenAI CEO, we're talking about Sam Altman, said thanks, no thanks, offered to buy Musk's X social media platform for $9.74 billion. You know, he just moved the decimal point a little bit over on Musk's and the team's offer. So there's a little bit of a tit for tat going back and forth here.
Well, earlier today on the sidelines of the Paris AI Summit, Bloomberg TV caught up with Sam Altman, who weighed in on why Musk may be making the move.
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product.
Well, there you have it. OpenAI CEO and co-founder Sam Altman on the sidelines of the Paris AI Summit, here to help us make sense of this fast-moving story. Back with us, Bloomberg Businessweek columnist Max Chafkin. He's the co-host of the Elon Inc. podcast, which you can find on the Bloomberg and at Bloomberg.com/Elon Inc. Max, also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He's here in our Bloomberg Businessweek studio. And out there in our San Francisco bureau, Rachel Metz, AI reporter for Bloomberg News. Max, we caught up with you as all of this was breaking late yesterday. Rachel was putting the finishing touch on her own story about this. What more have we learned about this offer? Is it to be taken seriously?
I mean, I think that it is to be taken as an effort to, like Sam Altman says, influence the process that OpenAI is going through, which is a process that Elon Musk has said he opposes, right? He's separately filed this lawsuit saying that OpenAI was unfairly converted into a for-profit company. Meanwhile, Sam Altman now is trying to raise additional funds, trying to expand what it's doing. And Musk, of course, operates a competitor. I do think there probably is a price under which Elon Musk would be interested in owning OpenAI. Now, that would raise all sorts of questions. So it feels like a not totally serious offer, but also not entirely a joke offer either.
So, Rachel, come on in on this. What else have you learned since it broke? And is it a real offer? Has anybody seen the offer or heard from an investment banker about the offer? What do we know?
Yeah, so that's where I'm actually a little bit unclear. I believe Larry Summers, who is one of the OpenAI board members, I haven't spoken to him. I reached out to him, but haven't heard back from him. But I believe he was saying on TV that he hadn't seen an official offer. So if that is the case, then I'm a little bit confused about how official this offer is. It's out. It's out there, but
he has said he has not received any formal communication from Musk on the bid. I mean, if he's a member of the board, you would assume he would, right?
Well, you would, because the statement specifically said that they sent this bid to board members. So if a board member hasn't gotten it, then what does that say? Where's the bid? Show me the bid.
Yeah. So if So Max, come on back. So if there is no official offer, is this just is Musk playing around, or should we not assume that there isn't an offer yet?
Well, I mean, look, Rachel's kind of hinting at this, but Musk has a track record of sort of speaking too soon, maybe. You know, there was the famous take private offer, which led to a whole battle with the SEC where Musk said he had secured funding. In fact, you know, he had not secured funding by any normal definition. That said, right, like, because OpenAI is trying to negotiate this for-profit transition, if there is a credible offer, if there is some rich guy, and Elon Musk is a very rich guy, he also has access.
He's the richest guy.
You know, I don't, like, the question of could Elon Musk come up with $97 billion, you know, that's probably worth asking. He definitely is worth more than that. He'd have to borrow more money. He's already borrowed a lot of money against his shares. He's also, there are lots of bankers out there, lots of financiers who are, you know, kind of clamoring to do business with him. So it does seem like realistic that he could, if he wanted to, get this money. And if he's making a formal declaration, that seems to me, I'm not a lawyer, but it seems to me like something that the, you know, nonprofit board of OpenAI is going to have to take seriously.
Rachel, what does XAI have that OpenAI doesn't have? Or maybe a better way to ask that is, what does OpenAI have that XAI can't do? Like, how much better is OpenAI than X?
I mean, OpenAI has been working on its technology and lots of different types of technology for years now, as Musk knows, since he was part of the company for a while in the early days. It also has huge mind share, huge attention share. It has a reputation as a somewhat consumer-focused company for an AI company, which a lot of the other AI companies do not have that. They have actual users and actual revenue. There's just a lot of attention focused on this company. X, meanwhile, has done a bunch of work in a reasonably short period of time, but it's not super clear where they are in terms of developing their technology to, say, the next level. Like Grok 3, I think, is the one that people are anticipating right now. It's not out as of yet. The company is in, I would say, a much earlier stage than OpenAI. It has raised a ton of money, though, and that should not be discounted at all. I mean, I think regardless of how real or unreal this effort is to buy OpenAI, it is clear it puts a ton of attention on Elon Musk and his ambitions. And as Max said, at sort of gumming up the works here for OpenAI's transition from a nonprofit to a more straightforward for-profit company. So, I mean, we're here talking about it.
Yeah, day 2, actually. Is it important, and let me pose this to you first, Rachel, and then pull in Max on this, but I mean, the interview that our team on the ground did at the AI Summit over in Paris, in France, that Sam Altman said, when asked about Musk and maybe why he's doing this, well, you know, probably his whole life is from a position of insecurity. I feel for the guy. Altman added that he doesn't think Musk is a happy person. It's important that we understand, I mean, do these two guys really, really dislike each other? I mean, is it important to understand the relationship between the two as we try to figure out what's going on here?
I think it's important to understand it, but I also think it's a bit tricky to understand, at least as an outside observer. I mean, we've gotten some hints about it, specifically from some of the emails that OpenAI released last year as part of the court fight between Elon Musk and OpenAI. And it sounds like in the early days they had what seemed like a pretty good relationship, and then things just became acrimonious. But you also see Sam saying publicly things that are still pretty supportive of Elon, or almost sounding like kind of wistful, like he wishes things were better between them. So, I mean, I think the feelings that at least Sam has for Elon seem pretty mixed, and they're not all bad. They're certainly not all bad feelings.
Yeah, well, and also Elon Musk has tried to take control of this company before. We know that from the sort of back and forth between Altman and Musk over this lawsuit that I mentioned earlier, where Musk kind of tried to, as OpenAI was getting bigger, essentially tried a few different things, but trying to either absorb OpenAI into Tesla or to take it over. He has wanted this thing for a long time, and they have been partners for a long time. I think Rachel's right. We don't really know it definitely feels like they're in something of a feud right now. There have been times, and there was a Wall Street Journal report not long ago saying that they hugged it out, at the end of last year. So like there has been some friendship at times, although at this point, I mean, it looks acrimonious.
Max, I want to ask you this because you're co-host. Oh, sorry. Go ahead, Rachel. Jump in.
Oh, no. I was just agreeing. I mean, it's getting harder and harder to imagine them hugging it out.
It is. Max, I want to ask you this because you're co-host of the Elon Inc. podcast, and he is the story of he's the biggest business story of our generation, is I think how the Elon Inc. podcast puts it. And given that he has SpaceX, he's CEO of Tesla, he has Neuralink, Boring Company, XAI,
Doge.
But it's a story about power. If he were to get control of OpenAI, how much more powerful would that make him?
I mean, that's part of the head scratcher here for me. Part of Elon Musk's argument in this suit has been that OpenAI and Microsoft have been engaged in anti-competitive behavior. It's hard to understand how, a person like you've just described, who also owns another AI startup, how the FTC, maybe a normal FTC, an FTC that is not Donald Trump's FTC, would be okay with that, right? It seems like this would be a huge red flag for antitrust regulators if it really went that far. Of course, like Rachel's saying, I mean, that's getting way ahead of ourselves right now.
Do we know, does Musk still own some of OpenAI? Do we know anything about that?
Well, OpenAI, Rachel should jump in, actually. I think she has a better idea. OpenAI was founded as a non-for-profit, so I don't think he owns any equity.
Yeah, my understanding is that he doesn't. I'd have to go back to some of those emails. I think he might have been offered some of the company, if I remember correctly, but declined it at a point in the past.
I also do wonder about like Microsoft and all of this, right? They've made a big old hunk of investment into OpenAI. I mean, have we heard from them, Rachel, at all in terms of all of this that's going on?
No, I haven't heard a peep from a lot of people on this, and that makes me wonder how seriously other parties are taking this. I know they don't want to ignore it, but I think that maybe they're sort of watching and waiting.
Well, remind us, Rachel, it is quite the delta between this offer and the latest reported valuation at a fundraise for OpenAI.
That is true. What is a little confusing to me is what this offer is for specifically versus what OpenAI and all of its entity is valued at. Because the offer or the statement from the lawyer says OpenAI Inc. and all of its assets. So that would be the nonprofit and what? In my mind, that would include all the things the nonprofit owns or owns a stake in, but it's not 100% clear. And so I'm not really sure how you value that versus how you value the nonprofit alone versus, the valuation of the company, which is projected higher.
Just got about 20 seconds, Max. For someone on the Elon Inc. podcast, you guys, the ebbs and flows that are Elon, what are you watching out for next in this story? What do you think might be coming at us, just quickly?
Well, I think we need to see, again, what Microsoft does. And Elon Musk is all over the place in Washington right now. Where does Trump go in response to all of this?
All right, guys, thank you so much. Max Chafkin, columnist at Bloomberg Businessweek, co-host of the Elon Inc. podcast. Here in studio, Rachel Metz out there in San Francisco. She's AI reporter here at Bloomberg News. When we come back, we talk alt investing in real estate. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow and the S&P both advancing. NASDAQ remains in the red. NASDAQ down 49 now, down 0.2%. S&P higher by 3, up by just under 0.1%. The Dow up 103, a gain of 0.2%. Stocks are fluctuating as Fed Chair Jay Powell reiterates the central bank is in no rush to cut rates. 10-year 4.53%, the 2-year 4.28%. Gold down $6 the ounce, still above 2,900, 29.02, down 0.2%. West Texas Intermediate crude up 1.5%, 73.36 a barrel on WTI. Goldman Sachs is abandoning a significant pledge it made to refuse initial public offering business with companies that had all white male boards. Citadel founder Ken Griffin says he is grateful that Elon Musk is taking time away from his companies to slash government spending, but offered blunt criticisms of President Trump's rhetoric on tariffs. His remarks came at a UBS conference in Miami. Again, recapping, S&P up 5, up by about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, REITs, Real Estate Investment Trusts, as a whole, up more than 2% year to date after gaining about 5% last year. The group, though, lagging the equity trade here in the U.S. And yet, as we know, not all real estate investments, Tim, are the same in terms of demand or supply metrics. There's a lot that goes into it.
Well, let's get to our next guest. Christopher Merrill is co-founder, chairman, and CEO of Harrison Street. It's an investment management firm. It focuses on alternative real assets. The company's invested more than $70 billion across senior housing, student housing, healthcare delivery, life sciences, storage, real estate, as well as social utility and digital infrastructure. So quite a bit when it comes to real assets. He joins us here in the studio. First up, we got to start with the Fed Chair, Jay Powell, of course, because you joined us about a year ago. We talked about rates. We thought rates, a lot of people thought rates would be lower now than they actually are. How does the rate environment impact your own investments?
Sure. Well, Carol, Tim, great to see you again. You know, I think with where rates are, and then anticipating where they're going to go, it really leads to where do you want to invest now in the real estate world, right? I think there is concern about inflation. You're seeing allocations increase to real assets. There is a great opportunity now to invest in assets that you can reprice. And so I think people are looking at, okay, maybe is there going to be 4 rate cuts? No, probably not, 1 or 2 going forward. So let's get involved in need-based assets where you're really seeing the opportunity to reprice. So there's a lack of supply in student housing right now, but enrollments are up. So we're seeing the ability to reprice rents 5-6%. The demand for senior housing has never been stronger. So really for us, it's looking for asset classes that with the current cost of borrowing, there's now a great opportunity to invest.
If rates, though, start to go up again, how does that change the metric and maybe slow that pace down?
No, I think certainly. I think there's pressure on the supply side, whether it's rates, potential tariffs. Certain like that could affect the supply chain. So you really want to think about assets where demand is consistent, demand is resilient. And so again, we've always talked about these sort of need-based assets around education, healthcare, storage, digital, where demand is really going to be consistent. And again, you can reprice. So for instance, if rates do tick up a little bit, we're seeing 5, 6, 7% year-over-year growth in student housing. And you're seeing the same need. So we look at it and say, these are great vintage years to invest because of that demand-supply imbalance.
Where are you seeing the most growth right now?
So it's interesting. Again, I'll keep, you know, we've been doing it now for 20 years in the education eldership space. When you look at the numbers right now and you look at the 80 million that are going to be above 65 by 2040 versus 54 today, there is just not enough supply. There's not enough being built right now. So we're going to wake up in 5-6 years, we have 500,000 shortage of housing units, dementia, people living longer, health needs. So you're seeing a lot of demand for medical office.
But what do those investments look like? You said medical office. Are you talking senior living facilities? Are you talking a different approach that works with some sort of memory care? I don't know. Like, what does it look like?
Yeah, no, I think, you know, in the senior housing space, focusing on that sort of assisted living, memory care, health issues, memory issues, as people living longer, very hard to take care of a loved one with health or memory issues.
My own dad, was in an assisted living, and it was pretty independent, like the first level for a long time. And then there's other folks that are that where there's a lot more security, a lot of either Alzheimer's or dementia, where people are more protected in a whole other level. But you're right, as you age out, or not age out, but as you maybe need more medical care or closer care, that's there. But it's not inexpensive.
Exactly.
But are you saying the metrics are there, that there's enough wealthier, aging population that will feed that demand for a while?
I think there is, and there's also an affordable component as well. I think it's really understanding the level of care and the markets that you're investing in. So when I talk about this is an amazing vintage year to be investing in demand-based assets around education and healthcare, you can also make mistakes. You know, in education, you could be at the wrong university. In healthcare, you could be with the wrong operator. Taking care of your parent, there's a lot of work and a lot of understanding that goes into assisted and memory care. So choosing the right partners, choosing the right markets are very important. You've got to have the right age and income profile because of the affordability. So it's very important. I mean, again, we've been doing this for so long that you can't just jump into these sectors. The fundamentals are great, but you can make mistakes.
We saw a lot of people jump into storage during the pandemic. Is it overbuilt?
No, in certain markets, certainly. You know, the storage sector it's actually a fascinating one because it's a not in my backyard asset class. No one wants it built in their town. Everyone thinks they're going to stay for 2 or 3 months. They stay for 2 years. You can reprice on a monthly basis. So while it's very hard to get built in a town, if you can buy infill storage, it's a terrific investment. The challenge is scale. And so what happens is a lot of people that want to put too much money in the sector end up going into markets where it's an easy asset class to build. So new competition, you've got to be in markets where it's hard to build tough entitlements. So again, it's a great asset class, but if you do it right, it's very hard to scale.
What are we seeing in terms of data storage in those facilities? We heard from all the big tech companies that, they're capacity constrained because they can't build it all fast enough. I just did a panel this morning on, energy demands, the role of AI. We talked about nuclear, like all these different things. But again, the build doesn't happen overnight. So I'm just curious what you're seeing in that regard.
I think you're absolutely right. The demand is there. We've invested in a number of data centers. For us, the important thing is that access to power. And so it's not just the building, it's you're not going to start building without that access to power.
Either proximity or the availability.
Yeah, are you going to have that agreement with utilities? So that's the challenge we face in this country is really the access to power. And I think the people going to the data center space that are taking the risk, buying land, and hoping that they're going to get that power, you might own that property, that piece of land for 5, 6, 7 years. You might never get power. So power is the big issue, and we really need to innovate in that space.
It's interesting. I think the president said in Davos that this idea of these data centers being built next to power facilities, like this idea of kind of adjacent in order to make it possible.
I think that's where we're going to see innovation. I think that's where we're really going to see innovation.
You've invested 5.6 billion euros in European markets.
Yeah.
How have the returns from your European funds differed from the American funds?
It's interesting. It depends on the actual strategy. The European investment market, we certainly don't see the same scale as the U.S., but the opportunity is fantastic. So you take student housing, probably 10 to 15 years behind where we are in the U.S., but the demand for housing is fantastic in markets like Dublin, the U.K., we're very active now in student in Spain and Italy.
Is that because there's more U.S. students going overseas or what is it?
When I was studying there, I was
US.
Living with a family, and Spanish students were living with different families that they weren't even related to. It was pretty remarkable.
It's not just U.S. I think it's Asia. I think it's from all over. But it's really a shift in being at the home versus now having purpose-built student housing that has great amenities. So that's a great investment. Multifamily, life science, there's some really interesting opportunities there in Europe right now.
Christopher, just got about 20 seconds. If you had to pick one part of this market that you would say is really just on fire right now or the best play, what would it be?
I would, it's broad, but education and healthcare. So I'd say student and senior right now. I think senior is an asset class that got a negative light painted on it during the pandemic.
Yeah.
But we've seen 17 quarters of great growth, great absorption. There's a huge shortage. So there's a really huge opportunity right now in the senior housing market.
It's kind of like two ends of the spectrum, right?
Yeah.
Just going to say.
Exactly.
Unless you're an older student.
Exactly.
All right, Christopher Merrill, thank you. Really appreciate it. Co-founder, chairman, CEO of Harrison Street. When we come back, no limit fees, great for hedge funds, but perhaps not so much for investors. It's the Bloomberg Big Take.
Someone's got to pay for that copy paper.
Yeah, but you still got or salaries. That's what it's about. All right, that's next. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week on this Tuesday, February 11th. All right, check this out. You have an investment, gross return of 15.2%, yet you take home just 2.8%. All right, would you take that bet?
I would not. I just don't understand this. Yet year after year, people take the bet.
Yeah, you probably would.
Don't get it.
Yeah, many are. Here to explain is today's Bloomberg's Big Take. It is also one of the most read stories on the Bloomberg, and it is written by Bloomberg News hedge fund reporter Hema Parmar. She joins us here in studio. By the way, you can read her story and more from Bloomberg, The Big Take, on the Bloomberg and at Bloomberg.com/Big Take. What's up with that?
Yes, pass-through fees. This is the most coveted item, the most coveted part about being a multi-strategy fund. You basically get the investors to pay for the operational and overhead costs of the firm. And so when a firm is doing poorly or struggling, it eats into the gains in the way that we've seen with our Balyasny example, leaving only 3%, less than 3% for investors to take home when you take out things like compensation, market data, software, infrastructure, all of these things. Copy paper. All of the things that the investors are footing the bill for.
Why do investors put up with this?
Yeah. So a year like this is anomalous, or supposed to be anomalous. Multi-strategy funds typically produce about 1% a month. They're expected to produce a return of about 12% a year.
Right.
What that means is investors get a reliable, steady source of income that's not correlated to markets, and you're investing in this giant firm that's kind of a machine where you have tons of traders investing in a bunch of different stuff with top-notch technology. And so that investment is supposed to work out or be worth the fees when the fund does well. So for example, if you look at Citadel in one of the years, they were up 38% net of fees before fees. They paid 22% in fees on top of that. So that means Citadel had to produce a 60% gross return. Take out 22% in fees, investors walk home with 38. If you're an LP, you might not care that you just paid a ton in fees because, hey, you still got your 38%.
Right.
But you care if you're walking away with less than 3, right?
First of all, I'm just blown away if they're really getting those kind of returns, because that is just great. But how many firms are doing that?
Right. So typically the returns are in between. They're not oftentimes less than 3% net. They're also not oftentimes 38% net.
Yeah.
Typically they're somewhere in between. And so the investor has to think about, at what threshold am I okay paying these fees? At what point does it feel like it's worth it for me, and when doesn't it?
You guys did a bunch of analysis, right?
Yes.
I mean, so I am curious. I mean, I don't know if you've talked to investors and they're saying, yeah, we're okay with it, or, I mean, does it depend? I mean, if you obviously are still finding a decent return, you'll put up with it. But my gut was, if the return was 15.2 and you take home 3%, if you see that year after year after year, you're not going to be okay with it.
Exactly. You're not going to be okay with it. If it's a consistent situation, right?
Yeah.
And investors are looking at also, like, there's not a lot of clarity about where the fees go towards. We looked at the ADV regulatory filings and compiled a list of more than 140 items that these pass-through fees cover. Everything from technology and compensation, which is a huge figure, the pay packages, but also things like rent, food, 401k plans, mobile phone services. And so all of those things, overhead costs. And, you know, so it really does depend. There are some funds that don't lose money very often, hardly ever. And for that, you might be okay. But some funds have produced less than 10% a year steadily. And so I think investors are a bit more cautious.
When those funds that consistently don't perform well, how hard is it for them to keep investors?
I think it's harder. Also, keep in mind that this strategy, a number of firms have locked up their money for longer. So it's harder to get out of some of these firms, where the general industry standard for multi-strats is to extend the amount of time it takes for an LP to withdraw fully from the fund. And so if you're in a fund that you're less impressed with, it'll take you longer to get out potentially, and maybe you rethink if you're getting in to begin with.
What's the transparency around these fees? I mean, I mean, people know that there are fees, but did they not realize how many fees or how much or how they can be added?
Yeah. So the most granular breakdown that an investor gets is basically chunky categories. So you'll know how much goes towards compensation, you'll know how much goes towards market data and research. You won't know specific line items and how much each costs. So you won't know how much goes towards desks or how much was spent towards severance. So you don't get that granular insight, but you have some sense of categories. If you do want more granular insight, you have to get on the phone with a firm, see if they'll walk you through the numbers, and even then that conversation could fall under an existing NDA.
Who are the investors in these funds?
They span a whole array of investors.
Endowments,
foundations, pensions, family offices, a whole array of firms. And these are also firms that have swelled in assets. Over the past 3-4 years, they've doubled in AUM. They've, some of them don't accept new capital because they're so popular.
Hema, really quickly, 10 seconds. I mean, they're not, are they doing anything wrong? I mean, in terms of regulatory?
No, investors opt into this. They know what they're getting into. They consent to all of this. Yes, it's a choice.
All right. Well, interesting stories. We said it's among the most read on the Bloomberg. It is the Bloomberg Big Take. Hema, thank you so much. Hema Parmar, she's hedge fund reporter at Bloomberg News. You can read more about the Bloomberg Big Take. Just head to the Bloomberg terminal. Check it out online. All right, that's going to do it for this hour of Bloomberg Business Week. Carol Massar along with Tim Stanovic. For those who are watching on television, the close is coming your way in just a moment. We've got an interesting interview coming up in the next hour. We're going to talk energy policy.
Yeah, we are. Also, the latest on Elon versus Sam Altman and the nearly $100 billion offer for OpenAI.
Don't forget earnings after the close, including Lyft and a few others. We're going to be breaking them down. You are listening and watching Bloomberg Business Week. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stanovic on Bloomberg Radio.
All right, everybody. Bloomberg Business Week continuing on radio, YouTube, and Bloomberg Originals. Carol Massar, Tim Stanovic live here in our Bloomberg Interactive Broker studio, just under 1 hour away from the closing bell and a batch of earnings. We got a lot going on, though, the next couple of hours.
Yeah, we're going to get an update on Elon versus Sam Altman and the nearly $100 billion offer for OpenAI. Caroline Hyde's going to be here in just a minute.
Still so much I want to know about this one. Also, we're going to talk energy policy. We're going to hear from the U.S. Secretary of Energy, Chris Wright, joining us in just a few minutes as well. A lot to ask about in terms of what we could get from the administration. What kind of mix of power will the administration be supporting?
Hey, still in the midst of earnings season, Avis Budget, Gilead Sciences, DoorDash, Zillow Group, Energy Transfer, AIG. Also, Lyft after the bell. Mandeep Singh is going to be here hanging out with us.
All right, so a lot coming your way over the next couple of hours. Hey, first up, let's get a check on the trade. We've got the S&P hovering near its highs of this session, but just a tad higher. Here is Charlie Pellet.
Hi, thank you very much, Carol Massar. 59 minutes to go ahead of the closing bell with the S&P up 7 right now. 6,073 where we stand. That is a gain of 0.1%. Dow Industrials are advancing 135, up 0.3%, while NASDAQ does remain in the red, down 27, a drop there of 0.1%. Your 10-year, 4.53%. The 2-year, 4.28%. Gold right now down $7 the ounce, holding at 2,900 even. We've got spot gold down 0.3%. West Texas Intermediate crude up 1.5%, 73.37 a barrel. Treasury yields rose. Stocks fluctuated as Fed Chair Jay Powell reiterated that the central bank is in no rush to cut rates. Coming up after the close of trading, we'll be hearing from Lyft, down now by 5.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As we've been covering throughout the day, Elon is coming for OpenAI. Yet, Sam Altman, the OpenAI CEO, has rebuffed Musk's $97.4 billion offer to take control of the company for a second time in less than a day, accusing the world's richest man of making the bid just to gain a competitive advantage. For more, we're joined by Caroline Hyde. She's the co-host of Bloomberg Technology on Bloomberg TV. She joins us here in the Bloomberg Interactive Brokers studio. I want to talk about the investors who are. Elon Musk is the guy who's getting the name recognition here, but there's a big group behind him,
with some Hollywood flavor.
Hollywood flavor, some defense tech people. Who are these folks who are making the bid?
A lot of them have been long-time Elon supporters in whatever way, whether they're on podcasts talking about what he's doing in Doge, or more broadly, whether they're investing in some of his companies. So, for example, Joe Lonsdale has been a long-time supporter of what Elon builds. You've also got Valor Equity Partners. Look, these are the sort of people that helped him get to Twitter, raise the finance to originally buy it. Then that converted into X. They probably put money into the next round of XAI. They are long Elon Musk. They are long the idea of potentially bringing together OpenAI and XAI to be what certainly Elon Musk thus at the moment claims that OpenAI is potentially a monopoly. So goodness knows what XAI and OpenAI together would be if you think about that. But this is a commoditized game at the moment. Large language models are becoming ever more present. We're seeing more and more players added to the mix. And it is a race. But it is interesting that we've got these players. Most notably, Ari Emanuel was the name that caught me by surprise.
And they've been friends for a while, right? I think there's like pictures of them in Europe together at some point.
Swimming. There was a topless picture, wasn't there?
Yeah, that's what Caroline
when people
said,
were
not me.
very unfair about Elon Musk at that point. Like, you know, the guy gives as good as he gets online, but no one needs to judge anyone when they're out swimming. But Ari
She
Emanuel.
knows the picture I'm talking about.
Amen.
Amen. Ari Emanuel, he's doing it through his investment fund.
You know, what's fascinating is, and we've heard from, I guess, Larry Summers, right? Telling Bloomberg, telling you guys, was it?
It wasn't us, but a colleague, but because he's on the board, right?
And he says he hasn't seen any deal. So, like, we're trying to square, you know, is this actually happening, or what stage is it in terms of happening?
And how ultimately disruptive will this be? Look, Sam Altman gave a fantastic interview, short, very sweet, to our Tom McKenzie over on the sidelines of Paris AI Summit, ultimately where he was saying, look, we are not for sale, OpenAI is not for sale, neither is indeed our overall vision and functionality. $97.4 billion, though. Why that particular amount? And what is Elon Musk potentially trying to get in the weeds here? Because is it about the funding round that OpenAI is potentially doing? We've got reports about they're looking to have a valuation of $300 billion, raising up about $40 billion. And they come in at 97 billion? Or is this actually about the restructuring that is currently underway? Now, remember, if you go back in history, Elon and Sam set up this not-for-profit in 2015. In 2019, it started to convert to a capped profit structure, but still with a not-for-profit that controlled it. Now they want to be starting to really go into a public benefit corporation. To do that, they have to pay off the not-for-profit. What is the value of that not-for-profit? Well, thus far in reporting, it's been assessed that maybe they're looking about 30 billion or so. So a $97 billion money value suddenly makes that complicated, that the board has to be assessing this as they're looking to ultimately spin off and make it much easier for OpenAI to raise money from private sources going forward.
It also makes you wonder, I mean, could Elon do it and then say, wait, okay, let's make it, you know, a public company again. Let's get to that interview that Tom McKenzie did, Bloomberg TV anchor Tom McKenzie with Sam Altman out there at that AI summit in Paris. Check it out.
Look, OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things for a long time. This is this week's episode.
You take it seriously at all? What do you think he's trying to drive at with this?
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and has raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market, and I wish he would just compete by building a better product, but I think there's been a lot of tactics, many lawsuits, all sorts of other crazy stuff, now this, and we'll try to just put our head down and keep working.
Does it make it more difficult to move from that non-profit model to that for-profit model for OpenAI?
We're not moving to a for-profit model. We're not sure we're going to do it all, but no matter what, the nonprofit will continue to be extremely important. It will drive the mission. It will continue to exist. The board is looking at lots of options about how to best structure for this next phase, but the nonprofit is not changing into anything or going anywhere. I mean, whether they did or didn't, they built a good model. Many people will distill from many other models. Again, I feel so confident about our research roadmap and also our product roadmap that, DeepSeek will do whatever DeepSeek's going to do. Other people do whatever they're going to do. And we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Do you think Musk's approach then is from a position of insecurity about XAI?
Probably his whole life is from a position of insecurity. I feel for the guy.
You feel for him?
I do, actually. I don't think he's a happy person. I do feel for him.
Okay. Do you worry that he has this proximity to the president and he can influence the decision-making of the U.S. presidency and policies around this agenda on AI?
Not particularly. Maybe I should, but not particularly. I mean, I try to just wake up and think about like how we're going to make our technology better.
Well, there you have it. Tom McKenzie with Sam Altman of OpenAI. I thought it was really interesting, Caroline, what Sam said about feeling for him. Like the emotions, these are two guys who have not gotten along for
a long time.
Well, I don't want to say they've gotten it's been complicated. Yes. Their relationship has been complicated. Let's just say that. How does this change that relationship?
Well, I think at the moment it's in the courts and it continues to be in the courts, and this just makes that ever more complicated. Elon Musk has made his views perfectly clear. There was a lot of mudslinging that went on X just yesterday. Sam Altman's a big user of X, and so he's not being forced on off the platform that is owned by, at the moment, a pretty tough adversary. Someone who wants to compete in what he's building, someone who also wants to throw lawsuit after lawsuit. You heard him there. He has many tactics, many lawsuits, and indeed there have been lawsuits thrown in their direction by Elon Musk, because Elon has this view, rightly or wrongly, that the pivoting from not-for-profit to profit and the fact that they became what he deems a monopoly, that Microsoft started adding to private investment, thinks that it has been distracted from its main aim, which is to build artificial generative intelligence, general intelligence, so as good as you and I, but to do it for humanity. And I think Elon's just got this bug in his brain that this is not what's being achieved. But many cynics will go out there and also say, look, he's set up his own company. He now doesn't seem to be quite so worried about humanity versus AI. And is this just someone who's frustrated that he walked away from this? It's become an absolutely phenomenal company without him there at the table anymore.
It's kind of interesting. I do wonder if, again, could this be negotiating? And at some point, does Elon say, okay, I'll back off, but I want to work with you? I just do wonder the different iterations this could go, or nothing could happen at all. I just wonder what happens next.
Precisely. Well, I think there is a response from the board that's necessary. Brett Taylor, remember, has also his rather complex relationship with Elon Musk, because Brett Taylor was on the board of X when it was Twitter. And when Elon watched in and took over that company, now he's on the board of OpenAI, the chair, and will have to respond. And even though Sam Altman has been making light of it on X and perhaps not taking it so seriously, the board has to take it seriously.
Yeah.
I look at the number, $97 billion, shy of $100 billion. It doesn't seem like a serious offer for a company that's been valued.
I was trying to work out whether there is some sort of signal towards.
I was too.
He's
with
always
all
been
the Twitter stuff and the $4.20 a share.
Exactly.
Did anybody ask ChatGPT what?
I mean, I did, and I couldn't find anything on 97.
But maybe you got to ask XAI. But
Yes.
regardless of what the number symbolizes, it's a significant discount to what the private market has valued OpenAI and what they're raising money at right now, at least according to some reports, including in the Wall Street Journal and Bloomberg News.
Yeah.
Is it a serious offer?
I don't know if it's meant to be a serious offer or whether it's meant to be a serious distraction, or at least get us all talking about it.
Hey, we're doing
digging
that.
into the not-for-profit, for-profit, looking at where the structure of OpenAI is going, and ultimately what these companies are building, and trying to also take money from Masayoshi Son. And maybe some would say, hey, is that quote-unquote, make America great again with Japanese investment? I think many would argue Masa is a close confidant in many ways of Trump, and indeed has done a lot to try and invest into US infrastructure. And Sam has time and time again gone for a globally based company here.
Is it unusual that Microsoft has been kind of mum, it feels like, on all of this?
I don't think that's particularly surprising, because, they have a seat at the table in terms of what money they've put in, but they haven't really spoken out about what Masa is potentially putting in terms of investment. Ultimately, there have been tensions reported between Microsoft and Sam Altman and OpenAI more broadly. Remember, the minute that OpenAI has built AGI, Microsoft's no longer allowed to have access to its technology.
Explain why.
Well, ultimately, that's the agreement. Once we've got artificial intelligence that is as good as humanity, OpenAI is able to step away and make it ubiquitous.
Well, who determines that?
Yeah, well, that was what.
Or does AGI tell us?
Does it?
Well, many would argue.
You're a human. You can't.
Many would argue we're there already.
Yeah.
Some are saying, look, ChatGPT is rather better than me in many strengths. So how are we measuring it? It's fascinating, and many would say that's why some of the structural changes are going to have to happen, because it is putting a seed of discomfort for Microsoft that has put $13 billion in and more and staked its entire future on generative AI.
All right, certainly more to come, and we know we'll be talking and checking with you. Caroline Hyde, of course, co-host of Bloomberg Technology on Bloomberg TV. Right now on Bloomberg TV and Bloomberg Radio, our team, Scarlett Fu and Alex Dill, catching up with the U.S. Energy Secretary Chris Wright. Let's listen in.
I don't want any oil price right now. Lower's better. The president got elected to bring down energy prices and broader prices across the economy and grow opportunities for American. So my goal right now is more energy of all kinds, more affordable, reliable, secure energy to expand American opportunities.
But the easy pickings are oil. So what's the price? And I say this because with your dual hat, right? If you were an oil producer, you don't want $60 oil. You want to make more money for the oil. As energy secretary, you want $60 oil.
Well, all we can do, supply and demand will be decided by, well, consumers in the marketplace and producers. But what we can do and what we're focused on is reducing the cost to produce a barrel of oil. So for producers, they could have lower oil prices and the same profitability if their costs were reduced. So the last administration spent 4 years trying to put all sorts of barriers, make it harder and riskier to produce oil in the United States. We're going to do the opposite. We're going to try to enable producers to bring on supply at lower costs and greater certainty.
So I'm going to follow up on that, Chris, and ask how can you lower the cost curve for companies to invest in new development and not just use money to offset regular well declines?
Yes. So one of the biggest challenges investing in oil and gas infrastructure over the last bunch of years has been uncertainty. If you produce more products, can you get it to market? You know, we still have 6 states in New England without a reliable supply of natural gas. That's bad for producers. That's bad for consumers. But there's a number of barriers like that we can move out of the way. LNG export pause, for example. Everybody in India is alarmed they might not get an increasing supply of natural gas. And how are American producers of natural gas going to invest more in gas production infrastructure if they're not sure if they can get it to market? So I think, we can help the consumers of India, the population of the United States, and producers of natural gas by just removing those uncertainties and going back to regular common sense business.
Removing uncertainty is one thing, but I'm curious whether there's a ceiling on U.S. crude production. Right now, the EIA is projecting a 2.3% increase in U.S. crude production. How much higher do you think realistically that could go?
Well, again, that's going to be the ability to build infrastructure and access more consumers. But I think it could grow meaningfully. It's probably not going to grow meaningfully in the short run, although our natural gas production, I think, is going to grow dramatically in the next 2 or 3 years. But if you look at 5 or 10 years, could America grow our oil production significantly? Absolutely.
Mr. Secretary, to that point in terms of building out infrastructure, that's been very difficult in terms of permitting, in terms of getting something in the ground. That's been very hard. Do tariffs and higher prices for aluminum and steel and things like that make that even harder for you?
Look, the tariffs, what's been the big issues for this president that he ran on? The economic well-being of Americans and the national security of our country and our citizens. So we've had 20-plus years of sort of deindustrializing the United States and letting our heavy industry flow overseas. This president is passionate about increasing national security, and that means we have to have the ability to build heavy steel-intensive, aluminum-intensive, material-intensive systems in our country again. So this is an attempt, I believe, by our president to incentivize the reindustrialization of America.
Talking about different forms of energy, because as you pointed out, it's not just oil, right? All forms of energy. It's energy security. What role do you think coal is going to play in that?
Look, coal's been essential to the United States' energy system for over 100 years. It's been the largest source of global electricity for nearly 100 years, and it will be for decades to come. So we need to be realistic about that. Now, with coal, are we going to see a renaissance in surging coal production in the United States? Not likely, but we're on a path to continually shrink the electricity we generate from coal. That's made electricity more expensive and our grid less stable. So I think the best we can hope for in the short term is to stop the closure of coal power plants. No one has won by that action.
You know, I was looking at the energy roadmap that you've published, the department has published, and the word security comes up so many times. I'm wondering why, or does energy security also include solar and wind? And if not, why not?
Well, the goal is, we're not specific to any particular energy production technology. The goal is just affordable, reliable, secure energy from wherever that comes from. Obviously, there's going to be roles in the long run for solar energy. There's places where it makes tons of sense, where the natural resources are there and the infrastructure is benefited by adding more solar to the grid. But I will say one thing for sure, we're not going to go down the road of Germany. You know, they spent $500 billion. They more than doubled their price of electricity. They actually shrunk the total amount of electricity the country produces by about 20%, and their industry is fleeing the country. That's the path the United States was starting to go down, but that's the wrong path.
So if I'm hearing you correctly, there is a role for things like solar and wind, yet some of the president's executive orders have can be seen as clear moves to stifle those industries.
I guess stifle might be the wrong word, but we shouldn't subsidize technologies that ultimately just make our energy more expensive and less reliable. I don't think you'll see policies that continue to go down that road.
One other policy as well is nuclear. We've seen a real resurgence in restarting some nuclear facilities. The previous administration was looking towards domestic uranium production, and I'm wondering if you would continue down that road, because we need that if nuclear is a big part of that solution.
Absolutely. One of the industries we've lost in this country, or lost in large part, is the ability to produce nuclear materials, generate nuclear power. Ultimately, we need that infrastructure here. We need that mining here. We need that uranium enrichment here. We need that to again, be building and growing our production of nuclear energy. So absolutely, our hope is to really start the American nuclear renaissance as fast as we can.
So then let's talk about some of the legislative ways that you feel like the administration can manage this, because the Democrats came out with the IRA. What can the Republicans come out with that can prevent something more dramatic being done down the road under a different administration? What specifically can you guys get done?
Oh, I think there's a lot of things. Now, some of these we've heard talked about for years, but no action. Just common sense permitting reform. America became this phenomenal industrial powerhouse by people building things in America, investing money, taking risks. Heck, we built a highway system, a pipeline system, an electricity grid in plants. We've come to a point in America today where it's very easy to stop something from being built, and it's very hard to build something. Yes. We need to reverse that. And a lot of that is going to be through legislation.
That is a part of it, too. I wonder, though, in terms of, say, federal lands, for example, like selling federal acreage to the state of Alaska so it can do what, say, Texas does, more concrete, smaller things like this.
Yeah, look, all ideas are on the table and all ideas are being discussed. At a minimum, we're going to see common sense permitting on federal lands. Of course, this president and this administration loves the wilderness and wildlife and the ever cleaner air and waters that I've enjoyed throughout my lifetime. There's no change in any of that. But we have so many obstructions that don't allow roads to be built on federal land, roads that could be used for logging and wildfire control, roads that could access mining and minerals production. So I think we're going to see just a return of common sense to use the federal lands what they were intended to be used for.
Now let's switch to a different part of the administration. That's in terms of money being doled out, the Department of Loans. It was very contentious under the Biden administration in terms of the money that was going out the door in relation to the IRA. What's your guys' plan? Are you going to divert the money to projects that you guys like? Are you going to kind of roll back funding for projects you didn't like?
Well, you know, I'm inheriting a portfolio. So the first thing I'm doing from the day one I walked in the office is to understand what is our existing loan portfolio. Who do we have loans out? What are the terms under which they are? Which projects are midway? Which projects haven't launched yet? So I've got to follow the law and manage what I've inherited. And then there's a lot of monies uncommitted or early on. And of course, those will be deployed to advance the president's agenda of affordable, reliable, secure energy. We just saw recently the Ivanpah nuclear power plant. Solar power plant, sorry about that. A concentrated solar plant out in the California, Nevada desert, right near the state line there. That's certainly north of $1 billion loss in taxpayer funds for something that's not producing a single watt of power today. And during its brief lifetime, it produced very unreliable, expensive power. We don't want to do things like that. We want to focus on American consumers and not subsidizing this industry or that industry. We want the marketplace and consumers to pull what energy is in demand.
Of course, but you also have your own priorities. I'm wondering, would you cancel loans that have already been doled?
We will follow the law. So that's what I'm doing right now, is rigorously looking at what is the status of those loans, what is the status of those projects. And no, things that we inherit that are half pregnant that are going on, we will continue to honor the law.
Mr. Secretary, I want to ask you about the SPR, the Strategic Petroleum Reserve. President Trump has vowed to refill that, quote, right to the top. What is the appropriate volume for the 700 million barrel reserve?
So, look, I'm not going to talk specifics right here, but as you just hear right in that name, the Strategic Petroleum Reserve, that's not the electoral advantage petroleum reserve that we use to drive down energy prices around election times. That's not what it's for, right? The Strategic Petroleum Reserve is things can go wrong. We can have a strategic crisis, and we don't want America's consumers and America's military at risk of an energy shortage.
All right, you've been listening on radio and television, of course, the U.S. Energy Secretary Chris Wright joining our Alex Steele and Scarlett Fu. If you missed any of that conversation, be sure to head to the Bloomberg or check it out at Bloomberg.com.
Well, speaking of energy, it is time for another edition of Bloomberg Plugged In, your weekly look at EVs. And the Trump administration is suspending federal funding for electric car chargers, following through on one of President Trump's first directives to roll back U.S. subsidies for plug-in vehicles after he retook the White House. For more, we turn to Andy Bennett, CEO of Drives. It's a company that provides EV charging management software. It's part of the $5.7 billion market cap publicly held Vontier Corporation. Andy joins us from Raleigh, North Carolina. Andy, welcome back. Good to have you back with us. How does a decision like this from the White House affect your business?
All right, folks, we're having a little bit of an audio problem, so we're going to try and rehook up with Andy and hopefully bring you that interview in just a moment. As we await that, just a quick check on where we are in terms of the market trade. We've got about 35 minutes to go. Call it relatively flat on the S&P 500, just about a 2.5-point gain. Dow Jones Industrial Average, for those who care about that index, 119 points to the upside, up about 0.25%. NASDAQ just a hair lower, down about 0.2%.
Let's try Andy again. He's CEO of Drives. He joins us from Raleigh, North Carolina. Andy, I was asking about the Trump administration suspending federal funding for electric car chargers. How does a decision like that affect you?
Yeah, listen, we build software that the world's largest charge point operators, the folks that operate networks, use in order to basically bring, reliable charging to their customers. There's no doubt about it. NEVI funding was a really positive thing for the industry. If you're on the cusp where you're thinking about buying an electric car, often one of the anxieties you have is around range. So seeing more chargers is a great thing. The more you see, the more comfortable you're going to be with it. But when you think about NEVI funding and the impact, what it really means for us as an industry, as a charging industry, it's been relatively small. Kind of looking back on 2024 in the United States, there were about 14,000 new chargers added, publicly available chargers that anyone can go use.
Right.
NEVI was responsible for about 120, 130 of those chargers. So we're talking about 0.01% of all the chargers added in the United States last year had anything to do with NEVI.
This is the National Electric Vehicle Infrastructure Formula Program that you're referring to, NEVI.
Yes,
okay.
My apologies. Yes, exactly. And so if you think about it, essentially it was an absolutely positive thing, and I think it had some great benefits. And we still have a lot of projects underway, so there'll be another 1,000 chargers that are going to come to fruition as a result of that funding. But it's certainly not the thing that drives our industry.
How much, though, does an administration and a policy change drive what happens in your industry? And I bring that, we're coming off this interview here on Bloomberg with the U.S. Energy Secretary, Chris Wright. And when he says things like, one, U.S. focused on reducing the cost to produce oil. Coal will be essential in U.S. for decades to come. Says U.S. oil output can grow meaningfully. U.S. seeking to stop closure of coal-fired power plants. Commenting on nuclear. I didn't hear a lot about alternative energy. So I do wonder, you know, how does, again, maybe nothing specifically, but how does that tone and tenor coming from the energy secretary potentially turn into policy or lack thereof in terms of supportive policy for the EV and electrification industry?
Sure. You know, 8% of all new cars sold last year in the United States were electric. Once people drive electric cars, they tend to want them. And you know, just stepping back from that, thinking about it, you know, one way or the other, the endpoint for vehicles in the United States and globally is going to be electric. So the only question is, where is that endpoint? So to answer your question, I think when you have an administration that really is pushing, you know, one form of transportation, it absolutely helps. But in the end, it's going to be the consumer that makes that decision. When you look at other countries like Norway and parts of Europe, where over 90% of all new cars are electric, they didn't have federal funding in place to do that. It was around customer choice. It was around broad-based decisions.
But isn't that because a gallon of gas or a liter of gas is like $9?
Certainly the price of fuel has a lot to do with it.
And in a sense, I don't want to say we subsidize fuel because we tax it quite a bit here in the U.S., but we tax it at just a fraction of what some of our European counterparts tax it at.
Yeah, that's fair. You have very high fuel prices. Obviously, in the United States, we've been really lucky with lower fuel prices. You know, for us as a company, my parent company, Vontier, we work with a lot of clients that don't think just electric or just gas. We think about sort of all the above, right? We have companies that focus on classic fueling, on hydrogen, and of course, my company, my focus is around electric. So, you know, ultimately, the administration being more neutral about what that source of fuel is going to be isn't going to have much of an effect on the EV adoption rates. People are going to continue to buy EVs. They're going to continue to grow. Today, there is a massive gap between the amount of cars that are on the road that are electric already and the needed EV infrastructure. So you don't necessarily need the federal government to go help fill that gap. The companies, the charge point operators that make this their life, that make this their living, that are profitable corporations, they're going to continue to put that EV infrastructure out there because it's just plain, you know, good business at the end of the day.
And to be fair, you know, we did a deep dive here at Bloomberg into Norway, and, you know, they talked about various policies. There were some incentives. Their value-added taxes were scrapped. Cars were given access to bus lanes. Parking was cheaper. In many cases, free. Drivers weren't charged for using ferries or toll roads. So there was support, to be fair.
I mean, have you visited Norway?
Yeah, but I'm just saying that, you know, there are things,
it's pretty amazing.
you know, that make maybe, you know, EVs a more obvious choice for more and more Norwegians. I don't know. Are you hopeful about the outlook here? You know how administrations, you know, whether it's Democratic or Republican, they come in and they've got an agenda and they have policies. We're already, you know, producing a ton of fossil fuels, but it does look like we could have a lot more support from this administration. And you do wonder, when it comes down to choice, you know, people are going to look at the choice of what the cars cost, and they're also going to look at the choice of, if fuel is cheap, you're not going to be so worried.
Yeah, that's fair. Yeah, I ultimately believe that electrification is going to take place. The experience that drivers have is such a positive experience. So, you know, this change, or at least maybe, you know, thinking about this as a less subsidized industry, is not such a bad thing. You know, all of us in industry, one of the things we hate the most is big fluctuations between different administrations. because all those policy changes, what they do ultimately is create uncertainty. So what we want is the unit economics of EVs to get cheaper, right? As that cost of that battery gets cheaper, the cost of the car will be cheaper. It'll be more competitive. As more EV infrastructure charging gets available, it'll become normal for folks.
Yeah.
And those are just sort of natural commercial things that I think will occur.
Andy, do you think Elon Musk being involved in the government and certainly very close, it seems, with President Trump, is that a plus for the EV industry ultimately?
Yeah, Tesla was a huge recipient of course, the NEVI funding for one. So, but look, the industry has changed. If we had this conversation a year ago, all we would have been talking about was Tesla cars in the United States. Today, it's about 50% of all the sales in the United States. We have a lot of new vehicles out there, a lot of new competition. So look, Elon Musk, clearly, if it weren't for him, there would be no EV industry, right? There's no arguing that. All these cars, all these companies, this entire industry was spurred by the innovation of that company. But I think having him, have the chance and the opportunity to influence the administration ultimately will be really positive for what we're doing. Absolutely.
Are you concerned? We've seen reports out of Germany, other European countries as well, California, just very briefly about fewer people buying Teslas as a result of perhaps what Elon Musk has been doing in his position in the federal government. Do other EV companies become winners because of that?
Well, like I said, almost 50% of all the EVs sold in the United States this year were not Tesla. So there's clearly a shift taking place. I don't know if that's a political response as much as it is, look, it's great.
We're going to leave it there. That's Andy Bennett over at Drives. He's the CEO of Drives. It's a company that provides EV charging management software. Having a little bit of trouble with his internet connection.
Yeah, it happens. Listen.
It does.
It's the world we live in. Hey, folks, we are driving to the close about 26 minutes. Just reading a story that popped up on my alerts. Federal Reserve Bank of New York President John Williams saying he anticipates inflation will continue to slow toward the central bank's 2% goal, but warned policy-related uncertainty clouds the economic outlook. This on a day when we heard from Fed Chair Jay Powell. He was up on Capitol Hill in his semi-annual testimony to lawmakers. All right, folks. Yeah.
Jay Powell. When he speaks, we listen.
We talk markets when we come back.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow higher, S&P 500 index fluctuating between gains and losses. Down day for the NASDAQ Composite Index. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks are trading mixed right now. The Dow currently higher by 126 points. The S&Ps are down 2, while NASDAQ is lower by 0.4%. The U.S. 10-year yield is at 4.54. Gold is down 10. Oil trading in the green. And Bitcoin, that's lower by 2.2%. Among the main 11 S&P sectors, leaders were energy and consumer staples. Consumer discretionary was under pressure, and leaders to the upside in the Dow, Coca-Cola and Apple, while Walmart led to the downside. In deal news, J&J is putting up its stroke care business up for sale. And in the tech space, Apple and Alibaba are going to make AI features for a Chinese iPhone. After earnings, DuPont gained 8%. And wrapping things up, some of the names pointing up to the bell tonight include DoorDash and Zillow. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes to go until we wrap up the trading day on this Tuesday. You heard Charlie and Bill Maloney working down the trade for you. We've got a bunch of earnings coming up after the closing bell, including Avis, Gilead Sciences, DoorDash, Lyft, Zillow, Energy Transfer, and AIG. So we'll be breaking them down. In the meantime, let's get a read on the markets.
Yeah, I should note, too, we are expecting to hear from the president
We are.
imminently. He's signing some executive orders, so we'll get some tape playback at a certain point and bring you his comments as we do get them. In the meantime, Greg Halter is standing by. He's director of research at the Carnegie Investment Council. They've got about $5 billion in assets under management. Greg joins us from Cleveland. Greg, were you glued to Fed Chair Powell's testimony this morning as we were?
I wouldn't say I was glued. It was up on my Bloomberg, and peripheral basis, I was watching and listening to some of the comments and questions.
Why is that? I mean, is it because you knew he wouldn't say anything that would move markets? Are you looking at what he's saying in a different way right now? Why weren't you glued to it?
Well, I guess from the standpoint of our firm looking for long-term investment ideas, is a meeting-to-meeting basis really going to make that big of a difference? Obviously, if we're on some big, long string of rate hikes or rate declines, you're looking for a hint. But it seems like we're more in a steady state where there may be no action this year in terms of rates.
Hey, one thing I want to ask you, since we're just coming off an interview with the U.S. Energy Secretary, who talked specifically about the U.S. being focused on reducing the cost to produce oil. Coal will be essential in the United States for decades to come. Talking about oil output growing meaningfully. U.S. seeking to stop the closure of coal-fired power plants. I am curious, in terms of an energy play, is there something that you feel like you can hang your hat on and that you'd be willing to make an investment bet on at this point?
Well, anything in that space that's new is going to take time, obviously. But I would think that nuclear and that whole area has viability. It's something that probably needs to be looked at very closely, which I think the top folks are. And there's certainly some areas around that make sense for the long term. Again, none of this stuff is going to happen overnight.
Yeah, most people would say, I just come off a panel. Sorry, it's just like top of mind. And it was all about power demand and the increase that we're seeing all of a sudden after being kind of pretty steady and not really moving around. There is a jump in demand because of data centers, the electrification, industrialization. Having said that, the nuclear play is said to be maybe about 8 to 10 years away. Doesn't mean people aren't starting to take moves, but it's not a quick process. It's not an investment bet, or do you look at the utilities? We certainly have seen seen some of the energy companies, some of the utilities pop up in a big way on expectations of AI power demand.
Yeah, certainly that is playing into the calculus here. Some of the companies that could be of interest would be NextEra Energy, American Electric Power up in Wisconsin, and then of course the non-regulateds have had huge moves. But we'd also look at the entities that would be providing the picks and shovels, if you want to look at it that way, into the nuclear side of things. You know, things like BWXT, which we don't have a position in, but something we're looking at that deals in the whole nuclear space. So I think that may be an interesting way to play, because again, this is going to take a long time. People are certainly interested in looking at areas, but I think you have to pick your spots, because you may see some huge run-ups and then some disappointment with 50, 60, 70% drawdowns in some of these names.
I just want to mention some headlines that are crossing the Bloomberg, and this has to do with President Trump at the White House. Elon Musk seems to be there speaking at a White House event with the president saying he had a great discussion about Gaza. Elon Musk saying it's essential to reduce federal expenses. So some headlines just kind of starting to trickle out. We'll continue to monitor them and bring them to you as they are known.
Hey, in the meantime, speaking of energy, Greg, the Magnificent Seven over the last couple of weeks. 2 weeks ago, Carol and I were sitting here talking about DeepSeek and what happened as a result of the DeepSeek news, kind of like during post-Davos over that weekend. I was surprised to see the hyperscalers and the mega cap tech names continue their commitments to CapEx spending. Are they spending too much money on this stuff?
It's a great question. You know, we thought maybe 2024 was peak at 180 billion or whatever it was of the top 4 companies. This year we're looking at maybe 300 or more billion. I guess these are all forecasts. You know, as Meta did with the metaverse, there was a lot of spending. The stock did not react very well, and then that spending kind of got pulled back. So I don't think any of these are firm commitments. You know, these companies are out there saying what they want to do. But as we know, these news events, these news announcements from companies like DeepSeek, you just don't know, and that could change things in a hurry. So,
well, which part do you not know? Do you not know to what extent they were able to be more efficient given what they released? Is that what we don't know?
I think it's a whole range of things. You know, the efficiency side of things is one area, and that certainly affected some of the names like the Eatons and the Vertivs of the world. From the standpoint of looking at other companies, you know, that provide chips and so forth, there's just so much going on that I'm not sure anyone actually really knows what's going on, because the news is moving so fast. It's kind of amazing. We know things are moving faster and faster, but this is making heads spin, I think.
Hey, Greg, so are you comfortable, just got about a minute left here, to make take a new position, a new investment position, or is it better to just kind of wait and see and let the dust settle, whether it's, you know, new policy out of the administration and the White House, whether it's, you know, Fed still trying to figure out the way forward? Like, I don't know, do you kind of sit tight?
Yeah, we're sitting tight, pretty much fully invested in mostly stocks, probably 70, 75%. The rest would be fixed income. But we're hanging in there with the tried and true names. If these big numbers for this CapEx continue, we think the Mag 7 have a decent runway in front of them. You know, saying that, Microsoft's been flat for a year, so it's kind of taken a break here versus some of the other names. So again, you do have to pick your spots, but you know, there's nothing wrong with a Microsoft type name. It's almost one of these must-own companies. Same with Apple.
All right, going to leave it on that note. Hey, Greg, good to get some time with you on this Tuesday. I'm taking a look at shares of Microsoft, by the way. They're down about 2% for the year, so pretty mellow this year. Greg Halter, he's Director of Research at the Carnegie Investment Council, joining us from Cleveland, Ohio.
Hey, is Meta Platforms one of your gainers today, Carol?
No, because it wasn't up. Is it up now?
It's up now, 17th day in a row.
When I looked at it earlier, I was going to put it on my list, and I'm like, because it was down.
It's at a record.
It's pretty amazing. Yeah, 17. So the most consecutive gains by any publicly held stock. All right, stick around, everybody. 10 minutes to the closing bell.
You're listening to Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we've got just under 7 minutes to go until we wrap up this trading day. We've got a slew of earnings. We're going to be breaking them down. Keep in mind, too, we continue to get some headlines out of the White House. This is coming from, it looks like, a meeting with President Trump. Elon Musk is said to be there. We're assuming it's about the Department of Government Efficiency because Elon Musk is talking about the actions they are doing. All of our actions are fully public. President Trump weighing in would let Elon Musk be involved if there were conflicts. Elon Musk also saying we're trying to be as transparent as possible on the actions that they are taking. So speaking about the actions that they are taking in terms of going into various governments, looking read-only systems, technology systems, looking at the inner workings, you could say, of the U.S. government.
The president also saying that he had great discussions about Gaza. That we took earlier. We took some of those comments earlier and played some of those comments for you. He was sitting there along with King Abdullah II of Jordan, making comments there as well earlier. When we do get the tape playback of these comments from President Trump, we will bring them to you as soon as they play.
Yeah, here's another one. Did we say these ones? All of our actions are fully public. This again is coming from Elon, and again the conflict thing. So forgive me, just kind of repeating them as we see them.
We're kind of getting them from a few different places.
Yeah, there's a lot coming at us.
This is a little nice little, the idea that you get the recording of it after the event is over, but there are reporters in there sending out headlines. So that kind of explains the discrepancy between when you hear from the president over the air versus when we get the headlines.
Well said, well said. And what we like to do is, as soon as we see them, kind of bring them out to you, because sometimes
I have to say that,
there
or
are
else my mind gets blown. Because I'm like, wait, didn't we just hear that? Didn't you know?
But because sometimes things are said that certainly impact the markets. Yeah, here we go. I'm taking a look at some of the most read stories on the Bloomberg. One coming from Ken Griffin, who he, of course, is the Citadel founder. He said he's grateful that Elon Musk is taking time away from his companies to slash government spending, but offered blunt criticisms of President Trump's rhetoric on tariffs. He will do what it takes to win. This is coming from Griffin. He said this at the UBS Financial Services Conference underway in Miami. That was referring to Elon Musk, who, as we know, is CEO of Tesla and SpaceX.
Hey, we also heard a little earlier from Secretary of the Energy, Chris Wright, who said that coal will be essential in the U.S. for decades to come. He says that oil output, thankfully, the U.S. is seeking to stop closure of coal-fired power plants, and the U.S. needs the ability to produce nuclear materials here. That's certainly top of mind for you, Carol Massar. You've been spending a lot of your time talking about nuclear lately.
Yeah, I mean, you know, just doing a panel this morning that talked specifically about the growth that we're seeing in power demand, and it is all of a sudden, after not doing much for a few years, that we are seeing an increase, an uptick in energy demand, and it is because of data centers, AI, the electrification of our world, industrialization of our world. All of that matters. If you bring more factories, manufacturing back to the United States, that requires more energy. And so how do we provide the power that's necessary? And most say it's going to be hybrid. You're going to include fossil fuels, carbon-based fuels. You are going to include renewables. And then nuclear is definitely a component. It's something you and I, all of a sudden in the last year and a half, 2 years, go back to that event we did at NJIT when all of a sudden they were talking a lot about nuclear power.
Did you ask about waste?
We did talk about waste, and that is the one thing that is still a problem.
And what did you say? You said, oh, just throw it in the ocean? Is that what Carol Massar said?
We did not. I did not say that. They conceded that that is still an issue that has to be dealt with.
We still don't know what to do with it.
And I think
nobody wants it.
Right. Nobody wants it. You know, the other thing is if you go from fission to fusion, you know, that can certainly change the dynamics. Am I saying it right? Fission to fusion, fusion to fission.
I have no idea.
Because, but that's also a long ways off. But that's something to think about. And in a world where climate change and we have extreme volatility in weather, you want to make sure that plants, facilities, nuclear or other, are in safe places. But when it's nuclear, that is certainly a bigger consideration. So anyway, we're going to continue to track what's coming out of the White House. We're going to track those earnings when they cross the Bloomberg terminal. Do not go anywhere. We're heading over to our TV colleagues. That's because the closing bell, it starts right now.
Yep, exactly. And of course, valuation. Looking at NASDAQ here off by 0.4%, the underperformer. Here is the closing bell. Full coverage for you.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
We're about 2 minutes away from the end of the trading day. I'm Alex Steele alongside Scarlett Fu. We're going to take you through the closing bell with a global simulcast. We're joined now by Carol Massar and Tim Stenovic in the radio studio. We got TV, radio, and YouTube audiences worldwide. We're going to parse through these moments. Headline level, guys, nada.
Yeah, nada. So you know what I'm going to talk about? I'm going to talk about Meta because it's up 17 in a row. So we're talking about a gain of 18%. We talked about it yesterday. A stock that has had the most consecutive gains. What a run. Just up about 0.3%, but nonetheless 17 in a row, up 18% in that time. So
it could have been one of your gainers, Carol.
I know.
I
was going to, but it was down.
It was teetering, yeah.
It was teetering.
Yeah, you don't want to risk it.
No.
Finley doesn't like that. Hey, you know, equity indices aren't doing much. Bitcoin down 2.2%, just trading around $95,000 per Bitcoin.
You know, I wonder if the CPI report is going to be more of a catalyst for something tomorrow. Volatility around the CPI report, according to some analysts, might be kind of limited because the Fed's not going to count on this one CPI report to make its next decision, right? I mean, it's going to be a couple of data points, a couple of CPI reports, a couple of jobs reports. So, you know, the stakes are not as high for this CPI report, but it'll be super interesting given that it might color Jay Powell's day 2 testimony.
Or at least they'll definitely get questions. He'll definitely get questions
true.
on that for sure. But I guess it's a direction of travel, right? We were talking earlier about inflation break-evens, particularly for 2-year, continue to rise. And we talked about Jay Powell not having entrenched inflation expectations, not seeing that in the market, but those expectations continue to move higher. All right, there's the closing bell, guys. Headline level, real uneventful. The S&P ending pretty much flat. The NASDAQ is the biggest loser of the day, but still just off by about 0.4%. And the Dow Jones Industrial Average off by about 0.3%. And just trying to take into account here what's happening with small and mid caps, also like a little bit softer, but guys, nothing to write home about.
Yeah, it's like ho-hum, right? S&P 500, kind of an even split. 261 names to the upside, Scarlett 241 to the downside.
All right, let's take a look at the IMAP, which splits the S&P 500 into its 11 main sectors. And there is more green than there is red, and it's led by consumer staples, up about 0.9%. Energy stocks and material stocks also gaining at least 0.5%. The laggards of the day include consumer discretionary, which really is, we're talking about auto companies, automakers, which as a group are down about 5%. Healthcare stocks also marginally lower, and communication services just barely in the red.
All right, guys, two individual gainers. Intel, it's a top gainer in both the NASDAQ 100 and the S&P 500 on this Tuesday. This is coming after Vice President J.D. Vance over at the AI Summit in France said that the Trump administration will make sure that the most sophisticated artificial intelligence hardware is made right here in the United States. The two, you might remember, I'm talking also about global foundries, because if we bring that one up as well, Intel's up about 6% here at the close. Same, global foundries up about 6% as well. Those two companies are the largest U.S.-based operators of semi-foundries that make chips for outside customers. So, yeah, no surprise to see them gaining. And then Coca-Cola, it's up about 4.7% here at the close. The company coming out, fourth quarter organic sales growth and profit topping Wall Street expectations, and analysts calling the company's annual outlook pretty solid. So again, some outperformance by those names.
Okay, Scarlett mentioned that automakers were lower. Tesla helping to pull them down. 6.3% to the downside for Tesla. Down for a fifth day in a row, all because of BYD. Over in China, the company added advanced driver assistance features across most of its lineup for no extra cost. Its shares hit a record and Tesla moved lower. It's called the God's Eye Driver Assistance Program. Standard in vehicles priced from about $13,700. Can you believe that price point? It's also included it in several low-cost models, such as that Seagull hatchback. Tesla down about 32% from those December highs.
Let me just jump in because Gilead Sciences, or Gilead as it's now known, just reported results. Let's give you what happened in the fourth quarter. EPS of $1.90, beating the average analyst estimate of $1.71. Revenue of $7.57 billion, also higher than what was anticipated. In addition, Gilead raises its quarterly dividend to 79 cents a share. The profit forecast as well, topping analyst estimates. 2025 adjusted EPS anywhere from $7.70 to $8.10. Analysts were looking for $7.54. That stock higher by almost 3%.
All right, let's get to Avis. It's down about 5% here in the aftermarket. Fourth quarter results, America's revenue, we're looking at $2.12 billion. That's pretty much what the estimate was, $2.11 billion. International revenue, we're talking about $593 million. That's a little bit light. The estimate was for $602.4. We're looking also at overall revenue, $2.71 billion, smack on what the street was expecting. But we are again seeing this stock down in the aftermarket. It's kind of interesting. It's been up about 11% year to date, but we are seeing some disappointment here in the trade.
Yeah, also one headline, Avis budget has named Brian Choi to succeed Joe Ferraro as its CEO. Shares right now down about 5.2%. Well, speaking of shares that are lower, Coty shares finished the day down by more than 9% today, hitting their lowest level going back to 2022. The company did lower its full-year profit projections and reported fiscal second quarter revenue that missed Wall Street expectations. And then check this one out. Fluence Energy shares really taking a dive today. The company reported that it slashed sales guidance and cited contract delays in Australia. Shout out to Carol Master for directing me to this one. Shares falling today by more than 46%.
What an ugly chart.
Yeah, that's you need a two-day chart for that puppy. That's rough. Okay, taking a look at the bond market for a bit here, guys. The back end selling up just a touch. Yields up by about 3 to 4 basis points. We had that 3-year auction, though, $58 billion. That came in pretty strong. Demand was really there. Then we get the 10-year and the 30-year later on in this week, too. So, again, looking for that supply digestion. But many tend to look at 4.5% on the 10-year as like that level that then do we sort of propel higher and get to 5%. That's sort of the line in the sand a little bit. So interesting to see how we trade tomorrow.
It's interesting. I want to go back to the trade. And, we were talking about the CPI report tomorrow, followed by then the following day, PPI. But we were talking with Mike McKee earlier out of Washington, who broke down the Jay Powell talking, also Gina Martin Adams watching the markets. And they said, we are kind of watching this. There's so much coming out, investors that little clues that we can get even from economic data points, certainly something like inflation, it's important.
Yeah, although John Authors has pointed this out, if you listen to companies' earnings calls, they aren't talking as much about inflation anymore. I mean, tariffs has kind of taken the place because that is a big question mark, and the impact on what it means for inflation is still very uncertain.
All right, we're getting some more earnings crossed right now. DoorDash crossing as well as Lyft. Lyft sees first quarter adjusted EBITDA about $90 to $95 million. Estimates were for $93.7 million. Fourth quarter gross bookings came in just shy of estimates at $4.28 billion. Lyft, though, buying back up to $500 million of shares. Shares of Lyft right now in the after hours higher by about 6.7%. Fourth quarter rides coming in just in line with estimates at 218.5 million, and fourth quarter adjusted net coming in above estimates at $114.5 million.
All right, going to DoorDash here, guys. For the fourth quarter, it looks to be a beat on revenue, a beat on orders. In terms of earnings, it might have come in a little bit light. Now, taking a look at their first quarter, the big headline is that gross order value, they now see at the high end of that $23 billion. The estimate was for under 23, so that also is a beat. Their adjusted EBITDA on the high end also beating, so pretty strong results from DoorDash, even though that stock is down 2%.
Yeah, I'm just watching Lyft, though, here in the aftermarket. It's bouncing around a lot. It's up 2.5%, then it's up just about 0.75%. But keep in mind that buyback, definitely a bit of an eye-popping number, but it is interesting that it's its first buyback program, buying up to $500 million worth of shares. So investors, though, bouncing around in terms of these results here.
I noticed that as well, and it suggests a consistent return of capital to shareholders that we're going to wait to hear in the conference call how they address that and to what extent that means that business is going well, that they feel confident enough to go buy back their own shares. I look at the DoorDash results and I'm sorry, I can't help but be colored by emotion.
I knew you were going to do this.
Yeah, well,
she doesn't like DoorDash.
I was talking about this at the meeting because my son orders way too much of it. And, as a Gen Xer, this idea that you're going to pay X% of the final bill on service costs and delivery fees, it's bananas.
I've talked to these young people, Scarlett, before, and they have to, delete the app from their phone because they're spending too much money.
Because they're so used to it. Well, they don't have any basis of comparison. The fact that a big chunk of your final bill is on delivery, well, I mean, you have to pay for it. They're talking, though, in their earnings release about some new initiatives that they're hoping to introduce to give valuable services for customers, merchants, as well as dashers, as they call it. And they said that they exited 2024 with some good momentum. So still trying to find out, the reason why that stock is still getting hit. But nonetheless, interesting when it talks about its really strong order demand.
Yeah, interesting to see. And we are seeing some movement here, so we'll see how they kind of settle in the aftermarket and on those analyst calls. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek. We mentioned that the president has been signing executive orders. He is speaking to press right now. We're going to bring you those comments when they do start to play. We are getting some headlines. He says that we will seek congressional vote on Doge's cuts if needed. Remember, as Carol mentioned, Elon Musk is in that press, not a press briefing, but he's in the room as well.
Yeah, I mean, listen, that seems to be pretty significant. We'll also, the president saying we'll look at spending related to military and education. The president saying federal workers taking buyouts will get their money. He also mentioned that Mark Fogel, the American detained in Russia that was freed, he will be at the White House tonight. So again, tracking these headlines that are coming out of the White House. As soon as we have that playback, we will play it for you in its entirety.
In the meantime, we got from Jay Powell in his testimony to the Senate Banking Committee today quite a bit. He said the Fed doesn't need to rush to adjust interest rates, again signaling that officials will be patient before lowering borrowing costs further. I'm wondering if it changes Joyce Wong's view at all. She's vice president and senior client portfolio manager at American Century Investments. She joins us here in the Bloomberg Interactive Brokers studio. Before Powell spoke, you sent some notes over to our team. You said, we expect 2 to 3 rate cuts this year. Did Powell change your mind?
No, we were always pricing in the rate cuts towards the back end of the year. And because we know that there's a lot of uncertainty around what Trump's policies are going to be, how the market's going to react to them, what sort of counter tariffs we might incur. So we've always thought that the Fed has the ability to be patient. Jay Powell re-emphasized that today, highlighting the strength of the U.S. economy. So no.
So what happens between now and those rate cuts? Does inflation rear its ugly head again?
So this is something that I've actually spent a long time talking about last year, and a lot of people were thinking, it's kind of like Chicken Little, but I think actually inflation is one of the bigger risks to the market because people dismissed it all last year. And I was always thinking, if I go to the store, prices are the same or higher. And the way consumers are affected by inflation, that's going to affect their buying power and their confidence. And that, we know, drove most of U.S. GDP growth last year. And so if the consumer starts to slow and weaken, there goes the U.S. economy.
Yeah, it's kind of interesting, although the consumer continues to kind of surprise us by holding up here. Well, is it a case, Joyce, that you think that inflation, or I think about the Fed's target rate, that we just need to settle above, that there's just stuff going on in the economy, that 2% target I think about that the Fed has to get to, is just not realistic anymore?
Yeah, that's going to be interesting how they kind of maintain that 2%, or is it higher, is it 2.5%? I think Jay Powell did buy himself some time by talking about an average 2% inflation target, rather than sort of that hard ceiling or floor that they were targeting. So I do think he has a little bit of time, but if you think about how hot inflation has been running the last few years, to get back to 2%, we'd actually have to see inflation lower than 2%, which we haven't seen since prior to the coronavirus pandemic.
As I mentioned, we're awaiting comments from President Trump. I wonder, Joyce, how you look at the comments from the president that we get each and every day in terms of thinking about your approach to investing, separating the signal from the noise, and what actually he is going to act on versus talking about, because there is a delta there, and a lot of people have pointed to that.
Yes, absolutely. And, going into this year, honestly, we thought that the tariffs would have been either done on day one, as he mentioned earlier, or kind of pushed out. And he sort of did an in-between, where he did come out with the tariffs, but then delayed them kind of on the same day on Canada and Mexico. And so it'll be determined to see, once we get to the end of that probationary period, how he ends up following up on those tariffs. But I do think as longer-term investors, what we're focusing on is more of our strategic position. One thing that at American Century we've been talking more about within our investment committee this year, though, is taking advantage of some of those tactical signals. So being a little more active on things like increasing credit risk when spreads widen, being a little more active on duration. And at our size, we're able to be very nimble in the market.
Well, that's what I was going to say. You guys have a lot of money under management, and I am curious. I just want to go there. What are you seeing in terms of flows coming in? Investors feeling confident about putting new money to work, and if so, how do they want it played? I'm just curious, the guide that you get from them, are they willing to take on more risk? Do they want to be more cautionary? What are you seeing?
Yeah, it's been interesting with fixed income, because if you think back to 2022, I mean, I've spent almost 20 years in fixed income. I never thought I'd see a year where core bonds were down double digits, right? And so a lot of investors have really been scared off of being back in fixed income after 22, and cash is still paying 4.25. So a lot of people are kind of sitting in money markets, CDs, T-bills, and just rolling their cash, waiting. I think if the Fed does get to the back half of this year and enacts those 2 or 3 rate cuts, depending on the strength of the economy, we could start to see a lot more demand flow back into fixed income as that free money yield is gone on cash.
But if rates go down, forgive me, I've got it, but if rates come down, don't you think that investors are more inclined to say, this is going to be good for, the equity market, certainly those higher valuations. As long as the economy doesn't fall apart and the growth demand, metrics stay, wouldn't they rather kind of take that bet?
I think so, and that's why we actually favor investment-grade fixed income. So kind of that barbell. It's like, I agree. Given how tight spreads are in high yield and distressed, it doesn't make sense to try to put money to work there. Take more risk on the equity side, be more conservative in your fixed income allocation, and stay with investment grade.
Okay, Carol knows I've just been obsessed. Thanks to Carol and also to our colleague Mandeep.
Are you
I've been
talking
obsessed.
Waymo again?
No, well, kind of. I'm talking AI. Kind of obsessed with bringing it into our own workflow. Are you using it at all in your day-to-day?
We use it a little bit right now. I think a lot of asset management companies are trying to figure out the best way to start using AI without giving away proprietary holdings or processes or things like that. So we have to be a little bit careful. I know we've been doing a lot of internal, more insular developments of AI. One thing we have done is sort of in response to the technology and AI is get higher frequency signals. So we've been building more proprietary tools in-house to help us analyze data, news flow, things like that, and AI is a part of that process.
We are awaiting a playback from President Trump. Joyce, I'm just curious, what do you watch out of the news, out of the administration in DC, and just kind of quickly?
For us as fixed income investors, obviously interest rates are going to be the key driver of fixed income returns this year. So what we're watching are those tariffs and the inflation story. So anything related to that is going to be top of mind for me.
Taxes?
We assume that the individual taxes will be continued and they will reach some sort of deal on the corporate tax side. So that's kind of a positive on risk.
What is the percentage rate that you see for corporate taxes?
So I think that he has mentioned trying to cut back down to 15%. I don't know if they're going to be able to get there, just given the deficit concerns. You might actually see the bear steepening of the yield curve if that happens, right? Because then you have the deficit concerns coming to play.
You know, the 10-year is kind of making a nice little appearance when it comes to what Scott Bessent has been talking about with regard to what the administration is paying attention to. What do you see as the direction of the 10-year? I'm surprised it hasn't moved more.
Exactly, and that's actually why we've been recommending investors stay shorter duration, because the yield curve has uninverted from the 210s, but it's only by about 25 basis points as of today. So in our minds, there's a lot of volatility in the 10-year. Like you were saying, it could go down to 4, it could go up to 5. The 2-year point is really anchored to the Fed, and that's what Jerome Powell has control over. And so that's why we see less volatility in the 2-year. Capture your yield, stay short duration. Don't necessarily position yourself out on the 10.
All right, we're going to leave it on that note. Joyce, thank you so much. Really appreciate it. Joyce Wong, she's Vice President and Senior Client Portfolio Manager at American Century Investments, joining us here in our Bloomberg Interactive Brokers studio. Her focus, as you can tell, on fixed income. So great chat. At this point, we do want to head to the White House.
Yeah, to the Oval Office, too, where President Trump is making comments recorded just moments ago. He's joined with Elon Musk and Elon Musk's son, X, there as well.
Discussion concerning Gaza and everything else. We had discussions also about Saturday at 12 o'clock. It's going to be a big moment. We'll see what happens. I don't expect much happening with these people, but we'll see what happens. And we're going to be signing a very important deal today. It's Doge, and I'm going to ask Elon to tell you a little bit about it and some of the things that we found, which are shocking. Billions and billions of dollars in waste, fraud, and abuse. And I think it's very important. And that's one of the reasons I got elected. I said, we're going to do that. Nobody had any idea it was that bad, that sick, and that corrupt. And it seems hard to believe that judges want to try and stop us from looking for corruption, especially when we found hundreds of millions of dollars worth, much more than that, in just a short period of time. And we want to weed out the corruption. And it seems hard to believe that a judge could say, we don't want you to do that. Well, so maybe we have to look at the judges, because that's a very serious, I think it's a very serious violation. I'll ask Elon Musk to say a few words, and we'll take some questions. Elon, go ahead.
Sure. So at a high level, if you say, what is the goal of Doge, and I think a significant part of the presidency is to restore democracy. This may seem like, well, aren't we in a democracy? Well, if you don't have a feedback loop, okay, we would have to, if you it's all right. So, I tell you, gravitas can be difficult sometimes. If there's not a good feedback loop from the people to the government, and if you have rule of the bureaucrat, or if the bureaucracy is in charge, and then what meaning does democracy actually have? If the people cannot vote and have their will be decided by their elected representatives in the form of the president and the Senate and the House, then we don't live in a democracy, we live in a bureaucracy. So it's incredibly important that we close that feedback loop, we fix that feedback loop, and that the public's elected representatives, the president, the House, and the Senate, decide what happens, as opposed to a large, unelected bureaucracy. This is not to say that there are good people who are in the federal bureaucracy, but you can't have an autonomous federal bureaucracy. You have to have one that is responsive to the people. That's the whole point of a democracy. And if you looked at this, if you looked at the founders today and said, what do you think of the way things have turned out? Well, we have this unelected, fourth unconstitutional branch of government, which is the bureaucracy, which has, in a lot of ways, currently more power than any elected representative. And this is not something that people want, and it does not match the will of the people. So it's just something we've got to fix. And we've also got to address the deficit. So we've got a $2 trillion deficit, and if we don't do something about this deficit, the country's going bankrupt. I mean, it's really astounding that the interest payments alone on the national debt exceed the Defense Department budget, which is shocking because we spend a lot of money on defense, and if that just keeps going, we're essentially going to bankrupt the country. So what I really want to say is, like, it's not optional for us to reduce the federal expenses. It's essential. It's essential for America to remain solvent as a country, and it's essential for America to have the resources necessary to provide things to its citizens and not simply be servicing vast amounts of debt.
And also, could you mention some of the things that your team has found, some of the crazy numbers, including the woman that walked away with about $30 million,
right,
et cetera?
Well, we do find it sort of rather odd that there are quite a few people in the bureaucracy who have ostensibly a salary of a few $100,000, but somehow manage to accrue tens of millions of dollars in net worth while they are in that position, which is, what happened at USAID. We're just curious as to where it came from. Maybe they're very good at investing, in which case we should take their investment advice, perhaps. But there seems to be mysteriously they get wealthy. We don't know why. Where does it come from? And I think the reality is that they're getting wealthy at the taxpayer expense. That's the honest truth of it. So, we're looking at, say, if you look at, say, Treasury, for example, basic controls that should be in place, that are in place in any company, such as making sure that any given payment has a payment categorization code, that there is a comment field that describes the payment, and that if a payment is on the do not pay list, that you don't actually pay it. None of those things are true currently. So the reason that departments can't pass audits is because the payments don't have a categorization code. It's like just a massive number of blank checks just flying out the building. So you can't reconcile blank checks. You've got comment fields that are also blank, so you don't know why the payment was made. And then we've got this truly absurd, a do not pay list, which can take up to a year for an organization to get on a do not pay list. And this, we're talking about terrorist organizations, we're talking about known fraudsters, known aspects of waste, known things that do not match any congressional appropriation, can take up to a year to get on the list, and even once on the list is not used. It's mind-blowing. So what we're talking about here, we're really just talking about adding common sense controls that should be present, that haven't been present. So you say, like, well, how could such a thing arise? That seems crazy. When you understand that really everything is geared towards complaint minimization, so then you understand the motivations. So if people receive money, they don't complain, obviously. But if people don't receive money, they do complain. And the fraudsters complain the loudest and the fastest. So then when you understand that, then it makes sense. Oh, that's why everything they approve all the payments at Treasury. Because if you approve all the payments, you don't get complaints. But now we're saying that, no, actually, we are going to complain. If money is spent badly, if your taxpayer dollars are not spent in a sensible and frugal manner, then that's not okay. Your tax dollars need to be spent wisely on things that matter to the people. I mean, these things, like, it's just common sense. It's not draconian or radical, I think. It's really just saying, let's look at each of these expenditures and say, is this actually in the best interest of the people? And if it is, it's approved. If it's not, we should think about it. So, you know, there's crazy things like just cursory examination of Social Security, and we've got people in there that are 150 years old. Now, do you know anyone who's 150? I don't. Okay. They should be on the Guinness Book of World Records. They're missing out. So, you know, that's a case where, like, I think they're probably dead. It's my guess. Or they should be very famous, one of the two. And then there's a whole bunch of Social Security payments where there's no identifying information. Well, like, why is there no identifying information? Obviously, we want to make sure that people who deserve to receive Social Security do receive it, and that they receive it quickly and accurately. I'll tell you another crazy thing. So, you know, one of the things is, like, we are trying to sort of right-size the federal bureaucracy, just make sure that this, obviously there need to be a lot of people working for the federal government, but not as many as currently. So we're saying, well, okay, well, let's, if people can retire, you know, with full benefits and everything, that would be good. They can retire, get their retirement payments, everything. And then we were told, this is actually, I think, a great anecdote, because we were told the most number of people that could retire possibly in a month is 10,000. We're like, well, why is that? Well, because all the retirement paperwork is manual on paper. It's manually calculated, then written down on a piece of paper. Then it goes down a mine. And I'm like, what do you mean a mine? Like, yeah, there's a limestone mine where we store all the retirement paperwork. And you look at a picture of this mine. We'll post some pictures afterwards. And this mine looks like something out of the 50s because it was started in 1955. So it looks like it's like a time warp. And then the speed, the limiting factor is the speed at which the mine shaft elevator can move determines how many people can retire from the federal government. And the elevator breaks down sometimes, and then nobody can retire. Doesn't that sound crazy? There's like 1,000 people that work on this. So I think if we can take those people and say, like, you know what, instead of working in a mine shaft and carrying manila envelopes to, you know, boxes in a mine shaft, you could do practically anything else. And you would add to the goods and services of the United States in a more useful way. So anyway, so I think, you know, that's an example. Like, at a high level, if you say, like, how do we increase prosperity, is we get people to shift from roles that are low to negative productivity to high productivity roles. And so you increase the total output of goods and services, which means that there's a higher standard of living available for everyone. That's the actual goal. Everyone's very quiet. Well, are people normally this quiet?
Your detractors, Mr. Musk.
What?
Including a lot of Democrats.
I have detractors?
You do, sir.
I don't believe it.
Say that you're orchestrating a hostile takeover of government and doing it in a non-transparent way. What's your response to that criticism?
Well, first of all, you couldn't ask for a stronger mandate from the public. The public voted. You know, we have a majority of the public voting for President Trump. We won the House, we won the Senate. The people voted for major government reform. There should be no doubt about that. That was on the campaign. The president spoke about that at every rally. The people voted for major government reform, and that's what the people are going to get. They're going to get what they voted for. And a lot of times, you know, people that don't get what they voted for, but in this presidency, they are going to get what they voted for. And that's what democracy is all about.
Mr. Musk, the White House says that you will identify and excuse yourself from any conflicts of interest that you may have. Does that mean that you are, in effect, policing yourself? What are the checks and balances that are in place to ensure that there is accountability and transparency?
Well, we actually are trying to be as transparent as possible. In fact, we post our actions to the Doge handle on X and to the Doge website. So all of our actions are maximally transparent. In fact, I don't think there's been, I don't know of a case where an organization has been more transparent than the Doge organization. So, you know, and the kind of things we're doing are, I think, very, very simple and basic. They're not, you know, what I mentioned, for example, about Treasury, just making sure that payments that go out, taxpayer money that goes out, is categorized correctly, that the payment is explained, that organizations on the do not pay list, which takes a lot to get there, that actually are not paid, which currently they are paid. These are not individual judgment decisions. These are about simply having sensible checks and balances in the system itself to ensure that taxpayer money is spent well. So it's got nothing to do with, like, say, a contract with some company of mine at all.
But if there is a conflict of interest when it comes to you yourself, for instance, you've received billions of dollars in federal contracts when it comes to the Pentagon, for instance, which the president, I know, has directed you to look into.
Yeah.
Are you policing yourself in that? Is there any sort of accountability check and balance in place that would provide any transparency for the American people?
Well, all of our actions are fully public. So if you see anything, you say, like, wait a second, hey, Elon, that seems like maybe that's, you know, there's a conflict there. It's not like people are going to be shy about saying that. They'll say it immediately, you know?
Including you yourself.
Yes. But transparency is what builds trust, not simply somebody asserting trust. So not somebody saying they're trustworthy, but transparency, so you can see everything that's going on. And then you can see, am I doing something that benefits one of my companies or not? It's totally obvious.
3, 2, 1.
And we
On the
thought
latest
that we
edition
would
of the
not let him
Bloomberg
do
Business Week
that
podcast, a
segment
conversation
or
with Max
look in that
Chafkin
area.
of Business
If we
Week
thought there was
on
a,
Elon Musk's offer to buy
lack of
OpenAI and
transparency or a
CEO Sam
conflict of
Altman's
interest.
reaction
And,
to that bid.
we watched that also. He's a big businessman. He's a successful guy. That's why we want him doing this. We don't want an unsuccessful guy doing this. Now, one thing also that Elon hasn't really mentioned are the groups of people that are getting some of these payments. They're ridiculous. And we're talking about billions of dollars that we've already found. We found fraud and abuse. I would say those two words as opposed to the third word that I usually use, but in this case, fraud and abuse. It's abusive because most of these things are virtually made up, or certainly money shouldn't be sent to them. And you know what I'm talking about. It's crazy. So, but we're talking about tens of billions of dollars that we've already found. And now a judge who's an activist judge wants to try and stop us from doing this. Why? Why would they want to do that? I campaigned on this. I campaigned on the fact that I said government is corrupt. And it is very corrupt. It's very, very, it's also foolish. As an example, a man has a contract for 3 months and the contract ends, but they keep paying him for the next 20 years, you know, because nobody ends a contract. You get a lot of that. You have a contract that's a 3-month contract. Now, normally, if you're in a small, in all fairness, it's the size of this thing is so big.
Yeah.
But if you have a contract and you're in a regular business, you end the contract in 3 months. You know, it's a consultant. Here's a contract for 3 months, but it goes on for 20 years. And the guy doesn't say that he got money for 20 years, you know? They don't say it. They just keep getting checks month after month. And you have various things like that, and even much worse than that, actually, much worse. And I guess you call that incompetence, maybe.
Yeah.
It could be corruption. It could be deals made on both sides, you know, where the guy gets the money, he kicks. I think there's a lot of kickback here. I see a lot of kickback here.
There's a lot of kickbacks.
Tremendous kickback, because nobody could be so stupid to give out some of these contracts, so he has to get a kickback. So that's what I got elected for, that and borders and military and a lot of things, but this is a big part of it. And I hope that the court system is going to allow us to do what we have to do. We got elected to among other things, find all of this fraud, abuse, all of this horrible stuff going on. And we've already found billions of dollars, not like a little bit, billions, many billions of dollars. And when you get down to it, it's going to be probably close to $1 trillion. It could be close to $1 trillion that we're going to find. That will have quite an impact on the budget. And you'll go to a judge where they handpick a judge, and he has certain leanings. I'm not knocking anybody for that, but he has certain leanings. And he wants us to stop looking. How do you stop looking? I mean, we've already found it. We have a case in New York where a hotel has paid $59 million, $59 million because it's housing migrants, illegal migrants, all illegal, I believe.
And they were being paid twice the normal room rate at 100% occupancy.
Unbelievable.
So it's a racket.
Mr. Musk, can I ask you a question? You
Well,
said
if I may sort of just going for the president's comments, at a high level, you say, well, what are the two ingredients that are really necessary in order to cut the budget deficit in half from 2 trillion to 1 trillion? And it's really two things: competence and caring. And if you add competence and caring, you'll cut the budget deficit in half. And I fully expect to be scrutinized and get a daily proctology exam, basically. Might as well just camp out there. So it's not like I think I can get away with something. I'll be scrutinized nonstop. But with the support of the president, we can cut the budget deficit in half from 2 trillion to 1, and then with deregulation, because there's a lot of sort of regulations that don't ultimately serve the public good. We need to free the builders of America to build. And if we do that, that means I think we can get the economic growth to be maybe 3-4%, maybe 5%. And that means if you can get $1 trillion of economic growth and you cut the budget deficit by $1 trillion, between now and next year, there is no inflation. There's no inflation in 26. And if the government is not borrowing as much, it means that interest costs decline. So everyone's, the mortgage, their car payment, their credit card bills, anything, their student debt, the monthly payments drop. That's a fantastic scenario for the average American. I mean, imagine they're going down the grocery aisle and the prices from one year to the next are the same, and their mortgage, all their debt payments dropped. How great is that for the average American?
We had no idea. We had no idea we were going to find this much, and it's open. It's not like complicated. It's
not
simple
that complicated.
stuff. It's
like a lot of work. Yeah.
We can't believe it. A lot of work. A lot of smart people involved. Very, very smart people. But you're talking about anywhere maybe $500 billion. It's crazy the kind of numbers you're talking about. You know, normally when you're looking at something, you'll find you're looking for 1 out of 100. Here, you're almost reversing it. You look for one that's good.
Yeah.
And you can look at the title and you say, why are we doing this? Why are we doing that? And the public gets it. You know, the public gets it. You've seen the polls. The public is saying, why are we paying all this money? This for years, this has gone on.
President Trump, Senator,
Yeah, go ahead. Wait, go ahead.
Senator Rand Paul today said that DOGE cuts will ultimately need a vote in Congress. Do you agree with that? Is that the plan?
I really don't know. I know this. We're finding tremendous fraud and tremendous abuse. If I need a vote of Congress to find fraud and abuse, it's fine with me. I think we'll get the vote, although there'll be some people that wouldn't vote. And how could a judge want to hold us back from finding all of this fraud and finding all of this incompetence? Why would that happen? Why would even Congress want to do that? Now, Congress, if we do need a vote, I think we'd get a very easy vote because we have a track record now. We've already found billions of dollars of abuse, incompetence, and corruption. A lot of corruption.
If a judge does block one of your policies, part of your agenda, will you abide by that ruling? Will you comply?
Well, I always abide by the courts, and then I'll have to appeal it. But then what he's done is he slowed down the momentum. And it gives crooked people more time to cover up the books. You know, if a person's crooked and they get caught, other people see that, and all of a sudden it becomes harder later on. So, yeah, the answer is I always abide by the courts, always abide by them, and will appeal. But appeals take a long time, and I would hope that a judge, if you go into a judge and you show him, here's a corrupt situation, we have a check to be sent, but we found it to be corrupt. Do you want us to send this corrupt check to a person, or do you want us not to give it and give it back to the taxpayer? I would hope a judge would say, don't send it, give it back to the taxpayer.
Yeah, if I can add to that, what we're finding is that a bunch of the fraud is not even going to Americans. So I think we can all agree that if there's going to be fraud, it should at least go to Americans. But a bunch of the fraud rings that are operating in the United States and taking advantage of the federal government, especially in the entitlements programs, are actually foreign fraud rings. They're operating in other countries and actually exporting money to other countries. We should stop that.
Mr. Musk,
and this is big numbers. Talk about $100 to $200 billion a year.
Sure.
Serious money.
Mr. Musk, you said on X that an example of the fraud that you have cited was $50 million of condoms was sent to Gaza. But after fact-check this, apparently Gaza in Mozambique, and the program was to protect them against HIV. So can you correct the statements? It wasn't sent to Hamas, actually. It was sent to Mozambique, which makes sense why condoms was sent there.
Yeah.
And how can we make sure that all the statements that you said were correct, so we can trust what you say?
Well, first of all, some of the things that I say will be incorrect and should be corrected. So nobody's going to bat 1,000. I mean, we will make mistakes, but we'll act quickly to correct any mistakes. I'm not sure we should be sending $50 million worth of condoms to anywhere, frankly. I'm not sure that's something Americans would be really excited about. And that is really an enormous number of condoms, when you think about it. If it went to Mozambique instead of Gaza, I'm like, okay, that's not as bad, but still, why are we doing that?
Mr. Musk, can you talk a little bit about how closely you're working with agency heads as you're directing these cuts? Do they have how much input do agency heads have when you're making these decisions?
Yeah, we work closely with the agency heads, there are sort of checks in place. So it's not just us just going in and doing things willy-nilly. It's in partnership with the agency heads, and I check frequently with the president to make sure that this is what the president wants to have happen. So we talk almost every day, and I double check things to make sure, is this something, Mr. President, you want us to do this? Then we'll do it.
USAID has been one of your main targets. Are you concerned at all that some of the cuts or that shutting that agency altogether may lead to diseases or other bigger problems starting in other countries that then come to the United States? Yeah, so that's an interesting example. So that's something where we work closely with the State Department and Secretary Rubio. And we have, for example, turned on funding for Ebola prevention and for HIV prevention. Left that, you said?
Yes, correct. And we are moving fast, so we will make mistakes, but we'll also fix the mistakes very quickly. So,
do you see it as a worthy cause, USAID?
I think that there's some worthy things, but overall, if you say what is the bang for the buck, I would say it was not very good. And there was far too much of what USAID was doing was influencing elections in ways that I think were dubious and do not stand the light of day.
I can just ask a follow-up to the Pentagon contracts. If you have received billions of dollars in contracts from the Pentagon, and the president's directing you to look into the Department of Defense, is that a conflict of interest?
Are going to do at the president's request.
Does that present a conflict of interest for you?
No, because you'd have to look at the individual contract and say, first of all, I'm not the one, filing the contract. It's people at SpaceX or someone who will be putting for the contract. And I'd like to say, if you see any contract where where it was awarded to SpaceX and it wasn't by far the best value for money for the taxpayer, let me know, because every one of them was.
The president said the other day that you might look at treasuries. Could you explain that a little bit? What kind of fraud, and that question goes to both of you, what kind of fraud are you expecting to see or do you see right now in U.S. treasuries?
Yeah, I think you mean the Treasury Department as opposed to Treasury bills, or.
You also referenced treasuries on Air Force One the other night.
Go ahead.
Well, as I mentioned earlier, really, the first order of business is to make sure we're actually collecting. Sorry for this. I thought my son might enjoy this, but he's sticking his fingers in my ears and stuff. So it's a bit hard to hear sometimes. Hey, stop that. No, the stuff we're doing with Treasury Department is so basic that you can't believe it doesn't exist already. So for example, like I mentioned, just making sure that when a payment goes out, it has to have a payment categorization code. It's like, what type of payment is this? You can't just leave the field blank. Currently, many payments, the field is left blank. And you have to describe what's the payment for, some basic rationalization. That also is left blank. So this is why, the Pentagon, when's the last time the Pentagon passed an audit? I mean, a decade ago, maybe? Ever? Really? And we want to, just in order to actually pass audits, you have to have financial information that allows you to trace the payments. you know, and once in a while, the Treasury has to pause payments if it thinks the payment is going to a fraudulent organization. Like, if a company or an organization is on a do not pay list, we should not pay it. I'm sure you would agree. Like, if it's quite hard to get on that payment, the do not pay list, it means that this is someone that is like dead people, terrorists, known fraudsters, that kind of thing. We should not pay them. But currently we do, which is crazy. We should stop that.
Many transactions. And by the way, hundreds, thousands of transactions like that. You know, we have a big team. And for the sake of the country, I hope that the person that's in charge and the other people that report to me that are in charge are allowed to do the right thing, namely make sure everything's honest, legitimate, and competent. But we're looking at just, when you look at USAID, that's one. We're going to look at the military. We're going to look at education. They're much bigger areas. But the USAID is really corrupt. I'll tell you, it's corrupt. It's incompetent, and it's really corrupt. And I can't imagine a judge saying, well, it may be corrupt, but you don't have the right. You got elected to look over the country and to, as we say, make America great again, but you don't have the right to go and look and see whether or not things are right that they're paying or that things are honest that they're paying. And nobody can even believe this. Other people, law professors, they've been saying, how can you take that person's right away? You're supposed to be running the country, but we're not allowed to look at who they're paying it to and what they're paying. We have massive amounts of fraud that we caught. I think we probably caught way over a lot of billions of dollars already in, what, 2 weeks?
Yes.
And it's going to go to numbers that you're not going to believe. And much, as I said, much is incompetence and much is dishonesty. We have to catch it. And the only way we're going to catch it is to look for it. And if a judge is going to say you're not allowed to look for it, that's pretty sad for our country. I don't understand how it could even work.
On the buyout program, can you personally guarantee that?
Which one?
The buyout program, the operative federal workers. Can you personally guarantee that the workers who opt in to resign now will be paid through September?
Well, they'll get their money, but they're getting a good deal. They're getting a big buyout. And what we're trying to do is reduce government. We have too many people. We have office space. It's occupied by 4%. Nobody's showing up to work because they were told not to. And then Biden gave them a 5-year pass, some of them, 48,000 of them, gave them a 5-year pass, that for 5 years you don't have to show up to work. And let me tell you, this is largely, much of this stuff is because of Biden. It's his fault. He allowed this country, what he did on our border. What he did on our border is almost not as bad as what he did with all of these contracts that have come out. It's a very sad day when we look at it. I can't even believe it. But many contracts just extend, and they just keep extending, and there was nobody there to correct it. And that cannot be, I can't imagine that could be held up by the court. Any court that would say that the president or his representatives, like Secretary of the Treasury, Secretary of State, whatever, doesn't have the right to go over their books and make sure everything's honest. I mean, how can you have a country? You can't have anything that way. You can't have a business that way. You can't have a country that way. Hey, thank you very much, everybody. Thank you.
Thank you, press. Thank you, press. Head it out.
Coming back tonight. Mark Fogel will be at the White House tonight at about 10 o'clock. If you want to come over, you can say hello to him.
Did you guys give anything in return?
All right. That, of course, was the president there from the White House, flanked by Elon Musk. He mentioned Mr. Fogel. That was the American prisoner that was in Russia that has been released. So he was saying that he's going to be at the White House tonight. So just a little bit of an update. There are a bunch of headlines coming out of that, including talking about seeking Congress, a congressional vote on DOGE cuts, the Department of Government Efficiency cuts if needed, which I think is maybe of import certainly to our audience. Let's see what Bloomberg News reporter John Harney has to say about it. He's been watching this and also tracking these headlines from President Trump, as I said, there with Elon Musk and his son X in the White House, surrounded by reporters and taking a variety of questions. John, we're getting used to these playbacks and certainly conversations and updates from the president and potentially a member from his team. And today it was Elon Musk. What stood out for you in terms of newsworthy and pertinent to the Bloomberg audience?
Well, he did or was about to sign the executive order that would further establish the Department of Government Efficiency, or DOGE, Musk entity, to further scrutinize the government spending, different departments, including particularly the Treasury, and they also spoke about the Defense Department. Musk also said that the payments process at the Treasury Department was flawed, though he didn't provide evidence of it. And Trump also complained about judges who have put restrictions on some of the things that he and Musk have done regarding the government bureaucracy.
John, how does the transparency claims that Elon Musk made stack up? He says we're all doing it in public. We're putting it on the Doge website. We're putting it out on X. How does that gel with what you and the other reporters at Bloomberg News have found about what he's actually doing at Doge?
Well, all of this is happening very quickly and in many different places at once, so it's hard to quantify. I mean, one thing, Trump has met with reporters a great deal more than his predecessor Joe Biden did. There's been several encounters, multiple encounters since he took office. But it takes some time to figure out just what Musk is doing, wants to do, what his ultimate goals are, and of course, some of these this executive order, which calls for cutbacks, cutbacks throughout the bureaucracy, that just can't just happen, because there's going to be yet more court action, lawsuits, etc.
John, we only have a little bit of time, so I want to make sure to get to a lot of questions with you. The actual amount of money we're talking about, Musk is talking about tens of millions of dollars, sometimes talking about billions of dollars. We're talking about a $6 trillion federal budget here. Do billions of dollars actually make a dent in the fiscal situation in the U.S.?
Well, it's a billion here and a billion there. It eventually adds up, of course. But this buyout plan that they were trying to put across, and that some federal workers have accepted, that wouldn't by itself save any money, at least right away, because these workers would still have to be paid apparently into this September. So as far as in the trillions, no, we're not seeing that yet.
Yeah, I wonder if we do, and how we get there, if Musk will succeed in that goal.
John, we were anticipating, I think, an executive order. Did we get an executive order? Did we kind of miss it in the playback? I'm just curious what you are hearing.
We don't know. I personally don't know if he's actually signed it yet. It was one of the things that was apparently on his desk. He almost certainly will be signing this order that would allow job cuts across the bureaucracy.
All right, we're going to leave it on that note. Listen, John, thank you so much. Appreciate you jumping on and just going through some of those headlines for us. John Harney, he's Bloomberg News reporter, joining us from our D.C. bureau. I got to say, I'm heading out. We're in New York City proper, getting ready to head out a little bit to northern New Jersey, so head a little bit north. I'm a little nervous because the weather, we're anticipating some snow here kind of late in the evening and then into Wednesday morning. Let's see what Craig Allen has to say about it and what we should expect. He's Bloomberg weather reporter, and he joins us in New York City. So, Craig, do I need to be worried? I should be out and about and back home, hopefully in my warm home by 10 o'clock tonight. Do I have to be concerned?
By 10 o'clock tonight, yes, you would have to be concerned. I have a feeling it will start developing around the New York City area anytime after dark, after a lot of people get home. So this is my advice for now, is to make sure that you get yourself out of work now. It's coming up on the 5 o'clock hour, and go straight home. I mean, there's no need to really go pick up any commodities or anything like that at this point for the household. It's not going to be a major snowfall for the New York City area. Go home, relax, And then tomorrow morning, make sure that you give yourself a little extra time to get rid of some of the snow. This is a system that is going to be bringing more snow from the city on down towards Philadelphia, on down to Baltimore, and then Washington. I think Washington may turn out to be the jackpot for a lot of this. On the other hand, if anybody has to travel to the north of New York City, they're going up the Thruway or up 91 in Connecticut, and then cutting over towards Boston. You may not get very much at all from this particular system. That's the way that this one is going to work. This is a strange one. This one is more to the south and less to the north.
All right, Craig, I don't want to make you uncomfortable, but the reason I was heading to New Jersey was to go to a wake. So, like, are you telling me I shouldn't do that? Like, you really, like, 9:30?
You know, the roads, I saw many of the trucks out there already today. They were putting down a lot of brine, getting prepared for storm number 2 here, which is what this will be. And I would say that conditions will start to get a little slippery the later we get into the evening, 8, 9, 10 o'clock or so. For example, it's not snowing in Philadelphia just yet, but there's snow showing up on radar. It is snowing in Baltimore and Washington at this point as well. So anybody that has to take the trip on down, obviously, you know, conditions are going to deteriorate with your travels to the south. But around Philadelphia, the reason I brought that up is the air is cold and dry. I'm sure you felt that right through the afternoon too.
Yeah.
So the snow is actually evaporating as it's coming on down from the clouds above. As the air moistens up, more and more snow starts to fall, then we're going to start to see the snow reaching the ground. It will start to stick right away because the ground has been at or below freezing much of the day. So anything that hasn't been treated, sanded, salted, unfortunately, it is going to start to get slippery. Now, the track of this storm also is good in the sense that, for the New York City area, I should say, in the sense that we will be, I would say, on the 1 to 3, 2 to 4 inch side. Again, lower amounts north, higher amounts south. But if you're traveling down towards Philly or Atlantic City or Baltimore or Washington, D.C., we could see jackpot numbers there of 4 to 8 inches of snow, and that's really going to hamper travel conditions both on the ground and in the air for tomorrow morning's commute.
Hey, Craig, how is this winter stacking up when it comes to other winters? Are we getting particularly more snow? Is it colder? Remind me, because I just kind of have no idea what's going on if this is normal.
Okay, well, I could speak for most of this northeast corridor here. Obviously, we've had a crazy winter in that they have more snow totaled up this winter so far in some areas down along the I-10 corridor in the southern part of the United States. You remember that about a week or two ago. You know, they had 9, 10, 15 inches of snow there. And so far, the New York City area only has 10 inches of snow approximately for the entire winter. We are below average. We are a little bit above where we were last year at this time. Last year, the snowfall was just absolutely paltry for winter. So we're a little bit above that so far this year, but we are not anywhere near. We're still about 5 to 10 inches below average in terms of snowfall. Cold, it's been a really cold January and December too, the latter part of December into January. Once we settled into this pattern and the polar vortex decided to, you know, it's like come on down into the United States, it has been pretty much persistent, and it will be with us, I think, at least for the rest of this month. Temperatures also this month will be somewhat below average. Again, that's New York City, but it's also encompassing on down to Washington and the Boston area too. One thing I should mention about Boston, you've really had a lot of trouble getting snowfall for the Boston area. There really hasn't been very much. You are way below normal in snowfall, but this week, I can tell you this much, it's going to make up for it all around. We've got not just number 2 tonight around here, but number 3, 4, and possibly 5 as we head on into next week. So I've got a lot to do.
All right, keeping you busy, and now you got me freaked out, so I'm not sure what I'm going to do.
Paul Brennan has got a lot of snow to shovel tomorrow. I can already tell.
Good exercise.
Yep.
It's good for the heart, buddy. Listen. Yeah, go ahead.
I was going to say, be careful, but yes,
Yeah.
it can be very good exercise,
That,
right?
that last storm, it wasn't a ton of snow, but it was heavy. It was wet and heavy. Craig Allen, stay safe. Good to check in with you. All right, everybody, that's going to do it for the Tuesday edition of Bloomberg Business Week. Some earnings, some news from the White House, some weather. Yeah, keeping us busy.
Yeah.
I still don't know what I'm going to do.
I
yeah.
Just, be careful.
I know what everybody should do. Balance of power. It starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
President Trump signing an executive action to direct federal agencies to work with Elon Musk's Doge to reduce their workforces, saying he will seek congressional approval on cuts if needed.
This after Trump's meeting with the King of Jordan at the White House, with Abdullah agreeing to accept 2,006 children from Gaza, but staying mum on Trump's redevelopment plans. We'll get reaction from former U.S. ambassador to Iraq and Turkey, James Jeffrey.
And Fed Chair Jay Powell telling the Senate Banking Committee in day one of testimony he's in no rush to lower rates, fielding questions about Trump administration policy and the dismantling of the CFPB. Democratic Senator Elizabeth Warren, the committee's ranking member, will join us with more.
Thanks for being with us on this Tuesday evening, and we begin with what took place in the last hour. Elon Musk joining President Trump during his executive order signing in the Oval, ordering the federal agencies to work with Doge to trim their workforces. Musk spoke about the efficiency group's findings so far and defended his approach, though the president did note Congress may have a role to play.
We're finding tremendous fraud and tremendous abuse. If I need a vote of Congress to find fraud and abuse, it's fine with me. I think we'll get the vote, although there'll be some people that wouldn't vote. And how could a judge want to hold us back from finding all of this fraud and finding all of this incompetence? Why would that happen? Why would even Congress want to do that? Now, Congress, if we do need a vote, I think we'd get a very easy vote.
Joining us now for more is Bloomberg's Megan Scully. So, Megan, we once again come back to the questions of the roles of the different branches of government here. Have we seen any desire so far on the part of this Congress to keep the Department of Government Efficiency in check?
Certainly not from congressional Republicans who are in charge of both chambers. We've seen more or less a capitulation of their power of the purse. Today, House Speaker Mike Johnson even told reporters that he believes that the executive, that Trump, has some authority to move appropriations around and certainly to make some of these cuts unilaterally was the sense that he was sending. He actually said that the judiciary should kind of hold off, step back in issuing all of these orders that we've seen over the last few weeks, the judiciary being the only branch of government that is really trying to put the brakes on Musk and Trump's agenda here.
It's interesting we had the buyout offer go out to federal employees. I don't know how many have accepted it at this point or did before another judge got involved in that case, but apparently it's a better deal to be fired. You'll have up to a year of severance in this case through workforce reduction than taking the buyout offer. So are we done with the initial offer here?
We'll see. There was always concerns. The government employee unions raised concerns about the buyout offer, whether it was legal, whether they would eventually get it. The reduction in force is different for each agency, for each employee, depending on how long they have been there. Certainly a lot of questions as individual members of the federal workforce weigh their decisions here and their future prospects, whether they're going to retire or not. This is, something that we're feeling here in the district, but only, less than half, I think it's about 20% of the federal workforce is actually in this area here in Washington. So the effects of this are reverberating across the country.
Federal workers leaving because of a snowstorm today around 2 p.m. I wonder how that jives with the whole stay in the office motif at the Doge. Bloomberg's Megan Scully, thank you so much. While meeting King Abdullah today, President Trump was asked about how the U.S. plans to acquire Gaza.
We're not going to buy anything. We're going to have it, and we're going to keep it, and we're going to make sure that there's going to be peace, and there's not going to be any problem, and nobody's going to question it. And we're going to run it very properly, and eventually we'll have economic development at a very large scale, maybe the largest scale on that site.
Following their meeting there in the Oval Office, which was initially set to be closed to press, King Abdullah tweeting, "I reiterated Jordan's steadfast position against the displacement of Palestinians in Gaza and the West Bank." This is the unified Arab position. Joining us now with more, Bloomberg's national security reporter Nick Wadhams. King Abdullah did agree to take in a couple of thousand sick Palestinian children. Right. Will that be the extent of his cooperation here?
Well, President Trump certainly wants to find out. I mean, you did see the president back off a little bit. He said he didn't feel the need anymore to threaten Jordan and Egypt, which he had done in the last couple of days, threatening to pull all aid unless they participate in his plan. I mean, this is really going to put Jordan in between a rock and a hard place, because there is no way they're going to countenance a plan where the U.S. has boots on the ground in Gaza, or takes it, as the president said, or forces Palestinians to leave. But it's also not clear that there is a plan within the U.S. to do that beyond what the president is saying. There's no indication yet that this is filtering down and they're actually coming up with some sort of serious plan to do this. So right now it looks like Jordan has managed to find an off-ramp, and I suspect that what you'll see is the president continue to put pressure on the idea of, okay, maybe behind the scenes we don't ask Jordan to take all the Palestinians who remain in Gaza, but we are going to ask you to do more beyond those 2,000 children that they agreed to take.
And I do wonder what the role of the likes of Steve Witkoff, for example, the Middle East envoy, will be in these ongoing conversations. But he was otherwise occupied today, Nick, taking a private plane to Russia to pick up an American who's been in prison there since 2021, Mark Fogel. We learned from Donald Trump in the Oval Office about an hour ago that he could be at the White House at 10 p.m. this evening. Do we have a sense of what the administration had to give in order to get him home?
That is a great question. President Trump was asked that in the Oval Office spray with Elon Musk, and his response was not much, which could mean anything. I mean, but it is interesting, at least, that he said not much rather than nothing. I mean, what's clear is that Russia would not have done this without getting something in exchange. So it's going to be a big question. I mean, Trump had repeatedly criticized former President Joe Biden for doing exchanges, basically swaps, saying it only encouraged more hostage-taking or Americans being put in prison. So it'll be a big test for his negotiating skills. I mean, and the other thing is Steve Witkoff's supposed to be the Middle East envoy. As you say, what's he doing in Russia? What we're seeing here is another indication of just Trump likes Witkoff. They're longtime friends. They've played golf together. He trusts him. He's going to have him do it. So it's possible that there was some exchange related to Syria or the Middle East, but so many details we don't know still.
All right, Bloomberg's Nick Wadhams, thank you so much. And just one final quick note on the Middle East. We just got a statement in from the Egyptian Foreign Ministry saying that Egypt will be preparing a comprehensive vision for Gaza rebuilding, and that the Gaza plan will ensure that Palestinians are not displaced. The story will continue to follow. Just as we followed today, testimony in the Senate from the Fed chair, Jay Powell, who said the central bank does not need to rush to adjust interest rates, again signaling officials will be patient before lowering borrowing costs further.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
Joining us now for more is Bloomberg's Michael McKee. So, Mike, consistency from Powell on that messaging, also consistency on him not wanting to get ahead of the policies of this administration.
And can you blame him after the news conference thingy we just saw? Jay Powell wanted to keep it low-key today, did not really want to send a message to the markets, let alone to Donald Trump. He basically repeated what he has been saying for some weeks and what pretty much everyone else on the Fed has been saying for some time now, that the economy is in good shape, growth is strong, the labor market is healthy, and while inflation is down, it's still a little bit above target. So let's just leave things as they are, and we can do that because of the strength of the economy.
So markets not pricing in, at least fully, a rate cut until September. Michael McKee, should Jay Powell just go on vacation till then?
Yeah. If he goes somewhere warm, I'll be happy to go with him. At this point, yes. We don't know what the president is going to do. It appears many people in the administration don't know what the president is going to do. So Jay Powell certainly can't know, and he doesn't have any way, nor do any of the economists at the Federal Reserve, a way of assessing what it will mean for the economy. So he wants to stay on the sidelines, and he really can't trade when they might raise rates or by how much, because at this point, it's all up in the air. But Powell did say they would look at the data on whatever policies the president does have on the economy, rather than speculate and start moving policy around based on what they think might happen.
Well, Mike, looking at the data, I was surprised to hear the chairman talk today about the idea that inflation expectations are anchored in light of the University of Michigan sentiment data we got on Friday that showed a big spike in inflation expectations, due in part to the threat of tariffs from this administration. Just how tenuous is that anchoring he's talking about?
Well, it may be more tenuous than the impression he's trying to let on. Now, the Fed always says that they look at long-term expectations as a more reliable indicator of whether things have become unanchored. And the 5 to 10-year forecast in that Michigan survey did show no change. But we did see, we have seen in the markets lately, the longer-term break-evens start to rise significantly. So market people are starting to think that maybe inflation is going to be a bigger danger down the road. He didn't address that today, but it is something to keep an eye on.
Michael, it's great to have you in Washington. As always, day 2 of testimony tomorrow. With the help of Michael McKee, we'll have coverage here on Bloomberg TV and radio. And coming up, a deeper dive into that meeting between President Trump and the King of Jordan with James Jeffrey, the former U.S. ambassador to Iraq and Turkey. He's next on Balance of Power on Bloomberg TV and radio.
I believe we'll have a parcel of land in Jordan. I believe we'll have a parcel of land in Egypt. We may have someplace else, but I think when we finish our talks, we'll have a place where They're going to live very happily and very safely.
Is there a parcel of land in Jordan that you're willing to have Palestinians?
Well, I think what we said, I have to look at the best interests of my country. I believe that the president is looking forward to getting a group of us Arabs here to discuss the overall plan.
President Trump earlier today in the Oval Office with Jordan's King Abdullah when asked about plans to resettle more than 2 million Palestinians currently living in Gaza, which President Trump has promised to take over and redevelop. Joining us now is James Jeffrey, the former U.S. ambassador to Iraq and Turkey and chair of the Middle East program at the Wilson Center. He also worked in the first Trump administration as a special presidential envoy, helping to lead the charge against ISIS. Mr. Ambassador, it's great to have you back. With your knowledge in the region and your experience working with Donald Trump, give us a reality check here. Clearly, our partners in the Middle East do not see a way forward on this plan. Is Donald Trump just opening a negotiation, or does he really think that developing Gaza and removing 2 million people is the answer?
First, thanks for having me on. What I learned in the last administration with President Trump is to not second guess him. He's very flexible. He also thinks outside of the box. Those are good traits. At times, he comes up with approaches that it's very hard to see how you would carry it out. The first question is, how do you get the 2 million people who, for ideological reasons, as well as the fact that this is all they've known, do not want to leave Gaza, even though it's mainly rubble now? That's the first problem. The second one is the legal basis upon which we would take it. And the third one is, would Egypt and particularly Jordan take hundreds of thousands of Palestinians, which in the case of Jordan could be destabilizing to the entire regime, as the king gently pointed out by saying he has to take his own country's interests into account. But that said, President Trump is doing something else, I think, and that is to indicate that the ideas that I and others have had and put on the table and we're trying to execute if this ceasefire with Hamas actually is finally carried out, to rebuild Gaza, to have an international presence and all of that, that may not be realistic. Gaza is totally destroyed. It has presented a existential threat to the state of Israel, certainly on the 7th of October. And it may be that we need to think outside the box, whether that means the way Donald Trump is doing it or some other way, I don't know. But he deserves credit for at least raising the point that maybe going back to another round of rebuilding and then blowing up is not the way forward.
Well, Ambassador, you just mentioned the ceasefire that is still in place in Gaza right now. Of course, we're well into the 42-day period it's supposed to last before phase 2 would theoretically begin. Is this a realistic phase 2 proposal? What other conversations are happening as they try to see if there is a possibility of a more lasting peace?
Exactly. Leave aside the fact that Hamas has suddenly blocked further hostage releases. Let's assume that they take Prime Minister Netanyahu and President Trump seriously, and they start releasing hostages again by the deadline of Saturday. You still have the second phase of 42 more days, and then a third phase to actually complete the redevelopment, not the redevelopment of Gaza, but the introduction of a day after international presence. The problem is, and it was always in this agreement, it's not something new that the Israelis have demanded, it was there from the beginning in May. Right now they're negotiating to see what Gaza will look like, who will govern it, what the role of Hamas will be, and the role of Israeli security if there is a final Israeli pullout in the return of all the hostages as the ceasefire calls for. It's not automatic. Hamas wanted it automatic. The Biden administration hinted that it should be automatic, but it never was. So if Hamas and Israel cannot agree on what Gaza over the long term will look like, there will not be a final ceasefire, there will not be a final Israeli withdrawal, and probably a return to fighting.
Based on what we heard from Donald Trump today, all hell will break out if hostages are not released by noon on Saturday. It seems like we could go in a couple of directions here, Ambassador, either indulging continued negotiations, working towards a ceasefire, or going back to fighting between Israel and Hamas and potentially conducting a preemptive strike against Iran, which was reportedly something discussed between Benjamin Netanyahu and President Trump last week, and we were told likely came up again today with King Abdullah of Jordan. Where are you on this idea of going after Iran's nuclear facilities now?
I take Donald Trump's repeated statements that he would prefer a negotiated solution for reality. Now, it would be very hard, not impossible, but very hard for Israel to take out the entire Iranian nuclear infrastructure on its own. It would require a significant American action, and the question is, what would the legal basis for that be? If you're retaliating, as we've been doing with the Iranian attacks throughout the last year, Iranian attacks aimed at least in the general direction of U.S. forces, that's one thing. It's something very different to launch a major assault on another country. But the other thing is, I don't think it's necessary. I think the Iranians, however they play with the idea of a nuclear weapon, realize at this point that it is the end for them if they actually develop one. I think that we're in a different Middle East since the 7th of October. I think the Israeli dismantling of the Iranian air defense system and showing that Israel can operate without danger over Iran, and that means the Americans can sure as hell do it 10 times more, that Iran is in a position where if it goes for a nuclear weapon, it will be destroyed.
Ambassador, we just have a minute left here, but what does it say to you that the Middle East envoy Steve Witkoff was dispatched to Russia to pick up Mark Fogel today?
I think that whatever you need to do.
And it seems we have lost the ambassador. James Jeffrey, former U.S. ambassador to Iraq and Turkey and chair of the Middle East program at the Wilson Center. Thank you so much. We'll have to get that answer from him next time. And still ahead here on Balance of Power, Bloomberg's conversation with the new Secretary of Energy, Chris Wright, is up next on Balance of Power on Bloomberg TV and radio. Welcome back to Balance of Power on Bloomberg TV and radio, live from Washington. I'm Kaylee Lyons alongside Joe Matthew. And earlier this afternoon, our colleagues Alex Steele and Scarlett Fu had the chance to speak with the new Secretary of Energy, Chris Wright. They discussed Trump's agenda, the future of the energy sector, but began with the Department of Government Efficiency's plans for his department.
I've met the DOGE team that's at Department of Energy and liked them a lot. These are passionate people that are coming in to looking very specifically right now at the flow of funds going out and the systems we use to carry out our basic business functions. How can we be smarter and more efficient doing what we do? And how can we be very careful to know where funds are flowing and where they're not flowing? So it's much less intrusive than a typical corporate audit, but it's giving quick, up-to-date information to help me and the rest of the department run more efficiently and be better stewards of the taxpayer funds.
The DOE was quick to say that there's no nuclear secrets being given away or anything along those lines, and I put that in quotes. But is there a circumstance where you would have to turn that over? Is that become aware of any of this at any point?
I've heard nothing about that at all. You know, we did security vetting on the small team that we have. They have read-only access to very limited parts of our systems. No one has asked or expressed any interest, and we would definitely not share the secrets of our nuclear weapons program and our nonproliferation and all those efforts. That's not part of DOGE. This is not a reckless effort. In fact, it's a very focused and thoughtful effort to quickly look for ways to improve how we run the business.
Right, to streamline things, make things more efficient. We understand the purpose there behind DOGE. So I guess the question for you, Mr. Secretary, is how lean can the DOE get then?
We don't know yet. We don't know yet. But if you take an organization that hasn't been carefully looked at, are we finding low-hanging fruit to reduce our expenditures and deliver the same output? I can say that's an unqualified yes, we are.
You can find Bloomberg's full conversation with the new Energy Secretary, Chris Wright, online or on the terminal. Kaylee, really interesting, and a reminder there, of course, that the Energy Department, the Secretary of Energy, oversees our nuclear arsenal. Yep. This is incredibly sensitive information that he is now in control of. And when it comes to nuclear energy, a big question about whether this administration can follow through with some of the promises we heard on the campaign trail to unlock nuclear as one of the options that could help to power data centers. And you have Stargate in mind on that, too.
Yep, artificial intelligence is a huge part of this picture. And the question is going to be to what extent the administration is relying, hopefully, on this deregulation effort and easing of permitting process and that kind of thing in order to jumpstart a lot of this. Chris Wright, of course, will be intimately involved in all of that as the deregulatory agenda broadly is pushed by this administration.
Yeah, that's for sure. Of course, we had our eyes on energy today with an important conversation surrounding the Middle East, and coming up, President Trump's meeting with King Abdullah of Jordan. Back on the table here on Balance of Power. We're going to take a look at what they discussed with our political panel. It's coming up next on Balance of Power on Bloomberg TV and radio.
Transparency is what builds trust, not simply somebody asserting trust. So not somebody saying they're trustworthy, but transparency, so you can see everything that's going on. And you can see, am I doing something that benefits one of my companies or not? It's totally obvious.
And if we thought that, we would not let him do that segment or look in that area if we thought there was a lack of transparency or a conflict of interest.
The push and pull between Elon Musk and President Trump together in the Oval Office today, along with Elon's son, if you saw all the way down there in the corner of your screen. An EO this afternoon pointed at eliminating federal workers or downsizing the workforce. Joining us now, this evening's political panel, Ashley Davis is here, Republican strategist, alongside Adam Hodge, Democratic strategist, managing director at Bully Pulpit International. It's great to see you both, and thank you for being here. Can we just start with the optics on this? Elon Musk in a black overcoat with a black MAGA hat, standing behind the president at the Resolute desk for this executive order. The press, by the way, was excused from the room before he ever got to sign anything. How is this playing optically for the American
Well,
people?
I just want to look at this as if that was the Bush administration, we were like supposed to wear pantyhose still in the West Wing. So, and you know, Bush did like pantyhose, or not pantyhose, but he did like children. But I think, listen, it's a whole different world. And there are things that are being talked about that none of us would ever expect. But I just don't know. The president feels at the end of the day, this is what he was elected to do. And what we talked about yesterday, actually, was do all these things that he's doing help bring down egg prices or rent or anything else? And so I think that the reason that the CBS poll has him at 53% is that the long-term goal because he is blowing stuff up, but is it impacting the everyday American's wallet? And I think that that's going to be the balance that he's going to need to show. Again, we're 3.5 weeks in. It feels like 3 years. I've aged 10. But I do feel that it's just a whole other dynamic. And the West Wing picture there is just very different than most of us are used to.
I mean, I'm old enough to remember when Obama got raked over the coals for wearing a tan suit to the briefing room, or the fact that Fox News went crazy about him not wearing a suit and tie on a Sunday, right? So we are yeah. Well, he shouldn't have worn the jeans, but I'll critique him on that. But I think the reason why this Doge thing is striking a record, a note with people around the country, is because of that transparency question that people aren't sure. Why is this billionaire, with seems like there's no checks and balances on what he does, in charge of the Treasury payment system, or what foreign aid we're giving to people, or what is the staffing levels at the Department of Education? And just this week, that's why you saw 5 former secretaries of the U.S. Treasury, including my former boss, Jack Lew, raising concerns about the Doge people in charge of the Treasury payment system. They may say all they want that they only have read-only access. But in many ways, they are already defaulting on the U.S. debt by not paying obligations that we've incurred. They are choosing to not pay government debt that we owe to suppliers, and that's a real, real red flag.
Well, as you raise checks and balances, Adam, there's obviously an ongoing conversation now about the role that Congress and the courts play in all of this. We heard about that today from the House Speaker, Mike Johnson, as well as Democratic Congressman Pete Aguilar, talking about the court's reaction specifically to Trump's agenda.
Of course, the branches have to respect our constitutional order, but there's a lot of game yet to be played. I think that the courts should take a step back and allow these processes to play out. What we're doing is good and right for the American people.
They trust the court decision when they win. When they do not win, they want to burn it all down. That's the consistent theme of where the Republican Party is right now.
So when we consider the courts, which have dealt a number of blows to the efforts of the Doge in this administration so far, from birthright citizenship to USAID and NIH funding, they are in some ways acting as a block right now. J.D. Vance doesn't like it. Some Republicans, including the House Speaker, are suggesting they should step back as well. But isn't that their role, Ashley?
It is, and I actually think that it's the Democrats' only ability to stop this right now. I mean, you have, and let's be honest, the people that are stopping, the judges that are stopping it are Democrat, either appointed or elected. So it has become a political issue, which I didn't agree with under Biden as well, that this whole court system has become so political that my biggest concern is that it undermines the whole judiciary system in our United States. I do have to stick up right now for the speaker. He is a constitutional lawyer, so I do think that he takes this a little bit more serious than others, no matter what his politics. But at the end of the day, if the American people continue to watch this political system politicizing what the court system's doing, I don't think that's positive for the U.S.
Elon Musk was not the only person in the Oval Office today. King Abdullah of Jordan was there as well. We were talking earlier with Ambassador Jeffrey about this. Your thoughts on Donald Trump continuing to push this idea of displacing 2 million plus Palestinians, developing Gaza, and somehow getting the region on board? King Abdullah has to go home with this message to not only his people, but apparently a meeting in Saudi Arabia. How's this going to play?
I think it risks undermining all of President Trump's accomplishments with the Abraham Accords that he holds up as the hallmark deal in the Middle East. Let's not remember, his team was also part of the negotiations on the hostage deal. Like Steve Witkoff was alongside Jake Sullivan and Brett McGurk at the end of the Biden administration to get this deal done. Now he's walking back on it. Yeah. And so it raises, again, another questions about, can you trust the deal that you strike with Donald Trump? And I think it risks really blowing up all the tense relationships and their ability to seal a bigger grand bargain in the Middle East with these people. I mean, you're talking about 2 million Gazans trying to move them out of displacing them out of a country, out of an area that is their only home. Like, many people call that, that is a version of ethnic cleansing, by moving people out of their home. And so there's real questions about how that the other partners in the region will see that and react to it. And I think it poses real damage to the Trump administration's foreign policy in the region for them to be able to get this done.
Well, we should hear from the president about this in his own words. This is what he said in the Oval earlier with the King of Jordan at his side about his plans for the redevelopment of Gaza.
It's not a complex thing to do. And with the United States being in control of that piece of land, a fairly large piece of land, you can have stability in the Middle East for the first time. And the Palestinians, or the people that live now in Gaza, will be living beautifully in another location.
Ashley, we frequently question with this president in particular whether something is the opening of a negotiation or policy he really intends to pursue. How do you see this one?
I think this is a positioning, but I also think that what he has said, and I understand 100% what you're saying, but I also think that no one else has come up with any other solution. And you can't live in Gaza right now. How do you rebuild Gaza when it's been 100% destroyed? Obviously, there's all the different issues that go along with that. But also, the foreign aid that has been given to Gaza in the last 20 years have also been going to Hamas and the terrorists. So we have to strike some sort of balance to figure this out. And the problem is moving them means that they're going away from their homeland or whatever. But I mean, not whatever. I mean, it's very important. But I think that it's also the point of how do you rebuild it when it's completely destroyed?
But let's be clear, to protect and move those people and taking over, requires tens of thousands of U.S. troops to do that. Donald Trump, who says he's ended foreign wars, he's not have any intervention in the Middle East. So you can't do that without putting boots in the ground. So I'll believe that this is actually real if you see an order and there are tens of thousands of Marines going to help protect Gaza.
The White House has said they do not want to commit.
But again, this is why this strategy doesn't make any sense, because there's no actual plan.
And people don't want to move.
No, I mean, of course not. If this was you had 2 million people in the DMV, and you say, you know what, you're all moving to North Carolina, and we said no, thank you. The only way to do that is to forcibly move them, and that's not going to happen. Sure. And the other parties in the region, Saudi Arabia, the Qataris, the UAE, they're not going to be part of a plan that forcibly moves people because it breeds unrest in their own country.
But what's the solution? I mean, that's my question, is what is the solution? I mean, how do you fix it? How do you rebuild I mean, they're living horribly right now. It's a humanitarian issue is insane.
It is insane. I think one of the solutions is you provide corridors within the Gaza Strip, and you work with partners in Saudi Arabia and UAE to help finance reconstruction. Now, you have to do that with partners that you can trust, and there's reasons, you've raised good reasons why to have some skepticism about the organizations who've done that work in the past. But I think forcibly moving these people to another country has all the hallmarks of more tension and unrest in the region. I don't think it will succeed.
Well, we expect to hear from Egypt shortly on this. You mentioned this earlier, Kaylee, a headline on the terminal, Egypt's foreign ministry saying it's preparing a comprehensive vision for Gaza rebuilding. If it's a regional effort, does that make you more comfortable?
It has to be a regional effort. I mean, there's no other way to solve this problem, but I think people have to approach it in good faith. And so that's where, again, I think people in Gaza, the people in Egypt, the Jordanians, have real questions like, if we strike this deal, can we trust that it will hold? Just a month ago, Donald Trump and his team helped negotiate a final ceasefire. And now he's going back on that and now saying maybe Netanyahu will just decide. I mean, that raises questions that are you going to keep up your end of the bargain? And so I think whether it's American dollars, taxpayer dollars, or American troops being part of that, that's a real problem that I think flies in the face of everything you've heard from Donald Trump about his foreign policy.
But I thought the reason that the deal was blowing up was because the hostages weren't being released. I mean, I think there is probably a give and take that you and I probably aren't privy to right now, right? We maybe used to be. But it's kind of our problem.
Well, it was not a problem to have you two here for this discussion today. This was fantastic. Ashley Davis and Adam Hodge, our political panel this evening. Thank you so much. And still ahead, the ranking member of the Senate Banking Committee, Democratic Senator Elizabeth Warren of Massachusetts, will join us with reaction to Fed Chair Jay Powell's testimony before her and her colleagues today and what's happening with the CFPB. That's next on Balance of Power on Bloomberg TV and radio.
If the CFPB is not there examining these giant banks to make sure they are following the laws on not cheating consumers, who is doing that job?
I can say no other federal regulator.
That was Democratic Senator Elizabeth Warren of Massachusetts pressing Fed Chair Jerome Powell during his Senate hearing today about the CFPB. And joining us now for more live from Capitol Hill is Senator Warren, who, of course, is ranking member of the Senate Banking Committee. Senator, welcome back to Bloomberg TV and radio. We do have many questions for you about what's happening with the CFPB specifically, but we also saw today, as you and your colleagues pressed the chairman repeatedly about the influence this administration's policies, like tariffs, are going to have on monetary policy. When we are considering policies that could potentially be inflationary. Do you see justification here for the Fed to even be thinking about cutting rates?
So look, I press the Fed to lower interest rates because I want families to be able to have cheaper mortgages and to be able to pay off their credit card debts. But I truly understand the hesitancy that the Fed chair expressed today because we live in a world of on-again, off-again tariffs that Donald Trump has put in place and taken out of place. Donald Trump's on-again, off-again firing tens of thousands of federal workers. His on-again, off-again, whether or not we're going to have federal contracts honored to sell wheat and other commodities to the federal government for purposes of international aid, whether or not the financial cops are going to stay on the beat, or are people just, now is it open season on cheating consumers? Look, Donald Trump needs to settle down and focus on what he ran for president on, and that is lowering costs for American families. That's where he needs to keep his attention, and that will put the Fed in a much better place to lower interest rates.
Well, Kayleigh already mentioned the CFPB, Senator, so let's talk about consumers for a moment. This is obviously something that's very important to you, and we got into it with Mick Mulvaney yesterday, former acting White House chief of staff who spent some time at that agency, and what he had to say about the double-edged sword of how the CFPB is funded. Let's listen.
Liz Warren created this agency when she was a Harvard professor. She dreamt up the idea. She wanted something in her mind that was above politics. Consumer protection in her mind was too important to trust to elected officials. The double-edged sword of that is that when Rohit Chopra is running the place and Congress wants to shut them down, he can sort of go and get his money without having to worry about what Congress thinks. But the other side of the sword is if Russ Vought is running the place and he doesn't want to draw any money down from the Fed, he doesn't have to.
When you consider that funding mechanism, Senator, did you Trump-proof the CFPB enough to withstand this period of time?
So, I hope you had a good time yesterday with Mick Mulvaney, but let's be clear. The CFPB is funded in the largest sense just like every other bank regulator. Starting back in 1863 with our very first bank regulator, the Office of the Comptroller of the Currency, Congress said we cannot fund the banking regulators through the appropriations process and expect them to still do their jobs. Even in 1863, they were so afraid that those big financial institutions would come in and influence Congress to cut back, for example, on the money to enforce the legal regulations. And so all of the agencies that are the banking regulators have been funded outside the political process. And by the way, Mick Mulvaney, the Republicans, some of the giant banks have already argued all the way to the United States Supreme Court and back again that that kind of funding is not right, and the United States Supreme Court said it's fine. Congress has done it in many other circumstances. They can continue to do it. But you know what this is really about, and where we are right now is about sidelining the cops, the financial cops. Right now, we have no one who is enforcing the consumer financial protection laws anywhere in our federal government on the big banks and the non-bank financial institutions. That's what Chair Powell said today, and that's a real problem for every American who has a credit card, a mortgage, a payday loan, a car loan, a student loan. Right now, Donald Trump, Elon Musk have just declared open season on every consumer in America.
Well, what about open season on the financial regulators? As we talk about those that have similar funding structures to the CFPB, Senator, where are you concerned they'll target next?
Look, if the Republicans want to change the funding mechanism for the CFPB, they've got the majority in the House and the Senate. Let them come over here and try to do that. Don't make an end run that is clearly illegal by letting Elon Musk shut down the agency effectively. Come over here to Congress. Congress created the CFPB and the other regulators, and Congress is the only one that can shut them down. You might ask yourself, though, since they're in control, why haven't they done that? And I'll tell you the reason why. It's because the CFPB is very popular. And it's not just popular among Democrats, it's popular among Republicans and independents, because nobody likes getting cheated by a giant bank. Nobody likes getting scammed on their car loan. Nobody likes financial institutions taking advantage of consumers, and the CFPB is the one agency on the side of consumers.
I don't know if you had your eyes, Senator, on the other end of Pennsylvania Avenue a little while ago, but Elon Musk himself, who I believe you referred to as the co-president in your opening remarks today in the committee, joined President Trump, who was sitting behind the Resolute desk, Elon Musk in a black overcoat, talking about the effort here and the work that's being done by Doge. Let's listen quickly to what he said.
What meaning does democracy actually have? If the people cannot vote and have their will be decided by their elected representatives in the form of the president and the Senate and the House, then we don't live in a democracy. We live in a bureaucracy. So it's incredibly important that we close that feedback loop, we fix that feedback loop, and that the public's elected representatives, the president, the House, and the Senate, decide what happens, as opposed to a large, unelected bureaucracy.
Senator Warren, is there any chance this could work?
I have no idea what Elon Musk is trying to say here. Does he not actually understand how government works? Or is he just trying to blow more smoke here? Look, if Congress wanted to shut down the CFPB, they have the power to do it, just like they have the power to shut out any other agency in government. That is the power allocated to Congress. It is not the power allocated to Elon Musk. Nobody voted for him, and even if they had, nobody at the other end of Pennsylvania Avenue has the right to shut down an agency and not spend the money and do the work that Congress has actually empowered it to do.
So is Congress, and specifically your party within it as the minority, Senator, is the only real recourse you have here to act against what the Department of Government Efficiency in this administration is doing to shut down the government next month?
You know, I listen to the premise of your question. No, when people in the administration are violating the law, we have a lot of recourse. Starts out with a whole bunch of lawsuits that are out there right now against them. And if those lawsuits correctly determine that they are breaking the law, they got to stop. That means they have to restart the payments. That means they have to put the financial cops back on the beat. That means they have to go ahead and continue the government contracts as the law requires. This is how government works. 3 equal branches of government. And right now, in the courts, there's litigation over what the administration, what Elon Musk has done. When he's found to have violated the law, he's supposed to get in compliance with the law. This is not a problem we need to fix later. This is a problem right now. When we have got Elon Musk and his little band of hackers in our financial system illegally, then we need to get them out.
Well, Senator, I think Kayleigh was maybe referring to a couple of senators from New Jersey who suggested that a government shutdown may be one of the only ways to put pressure on this situation. That was a conversation on Sunday morning television. But as we talk today on Bloomberg TV and radio, I wonder your thoughts on some concerns that if there were, in fact, a shutdown, no matter whose fault it is, some of these departments might not ever reopen when there was a deal to fund the government because of the efforts of Doge. Do you see it that way?
Look, I appreciate that you framed the question the way you have. Let's understand, Donald Trump is already shutting the government down. By letting Elon Musk move in against USAID, he's shutting down the government. By letting them move against the Consumer Financial Protection Bureau and firing the financial cops, he's shutting the government. By reneging on millions of federal contracts, he's shutting down part of the government. Shoot, he's shutting down the government that promised to help fund child care centers and places that are trying to help vets find housing. Donald Trump, through his co-president, Elon Musk, is in the business of trying to shut down the government right now and doing so illegally. That's why we're in the courts. That's why we need to solve this problem. Not weeks from now. We need to solve it right now because people are getting hurt right now.
Well, stay close with us on this, Senator. We have a lot to learn still, and your insights are important to us on Bloomberg. Democratic Senator Elizabeth Warren of Massachusetts, that's the ranking member, of course, on the Senate Banking Committee. We thank you for being with us. That also reminds us, Kaylee, that there's a second day of testimony ahead for Jay Powell tomorrow.
Yep, he'll be in the House, and we'll have it fully covered for you on Balance of Power, on Bloomberg TV and radio. Have a good evening, and stay safe out there in the snow.
This has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it in others seem to have a very, very narrow definition in mind. And the people we can all agree are stone-cold geniuses always seem to have a dark side. I read in Bloomberg Businessweek about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're going to try to live up to that name together tonight. It's the Business Week Show. Hello, I am Max Abelson, and I'm not a genius, just a regular, like slightly above average journalist who has spent about the last decade and a half here at Bloomberg News and sometimes our magazine, Bloomberg Businessweek, writing about Wall Street's money and power. And what that means is I write about ambition and ownership and imagination and survival and risk and second acts and, of course, genius. Tonight, and in the weeks to come, we are going to be talking about those things at this table with people whose lives and careers and ideas are big or interesting or just really fun. So, welcome. This is the Business Week Show, and it's starting right now. If you consider yourself a master of Wall Street, a connoisseur of investing, a soothsaying financial genius, a brilliant portfolio manager, our guest has very bad news for you. Burt Malkiel's book, A Random Walk Down Wall Street, 50 years ago, had a clear and vivid message, which was that Wall Street genius is really just an illusion, and that professionals in pinstripe suits at the end of the day are no better than naked animals. It was a genius and radical idea because what he had to say is that you should forget them and just buy and hold clear, boring, basic, low-cost index funds. He is here to tell us about it. Burt Malkiel, welcome to the show.
Thank you very much. Glad to be here.
Your book is actually, it's pretty funny. It's a little saucy sometimes, your book. I mean, you say no one in finance can really forecast the future, or at least they can't do it successfully, consistently. You know, I think you use the word genius in quotation marks, and you give it to Ponzi schemers and whatnot. Right now, are there any actual individual geniuses on Wall Street? You know, real human geniuses, maybe AI is a genius we've been all waiting for. Can you identify any current geniuses on Wall Street right now?
Well, as you know, I put genius in quotes because I'm not sure there are geniuses in the market. And I've always said I would much rather be lucky than smart. Are there some hedge fund people who have, in fact, made a lot of money? George Soros bet against the British pound and made a lot of money. There were people who sold short in 2000 and made a lot of money. But I am not willing to say that they were geniuses. I want to say that they were lucky, because for every one of them, there was a hedge fund that in fact lost money. No, I don't think there are geniuses. I think there are a lot of very smart people in Wall Street, but it is not possible to predict the future. And, you know, it's kind of very interesting how you talk about AI. I recently had to give a presentation on the economic outlook. And I thought, you know, just for kicks, I will go to ChatGPT and I will ask, can you give me an outline of what I should say? And actually, ChatGPT gave me a wonderful answer. It was a one-sentence answer. I cannot predict the future.
It might not necessarily qualify as genius, but you're able to write about Wall Street with clarity, which is really unusual because Wall Street, and I suffer from this myself, you speak to Wall Street executives and they absolutely fetishize complexity. Why does Wall Street like to make things sound so complicated? Is there something sinister or something that has to do with the ego?
Whether it's sinister, but this is a very highly paid profession. And someone like me who says, listen, don't listen to anybody. Just buy a simple index fund and keep on investing period after period. If I'm charging you 2% a year to manage your money, I want you to think you can't do it yourself. So sure, you've got a vested interest. This is a very highly paid profession. These guys do very, very well. Is that sinister? You know, I don't know. You call it sinister, anything you want, but is there an incentive to make it seem like it's very complicated, that ordinary people can't do it themselves? I think that's absolutely right.
The honest truth is, it's not necessarily that I think that the aura of complexity on Wall Street is coming from a sinister place. More like it makes me feel bad or makes me feel dumb, and that I appreciate that your book is sort of written so that I can understand it. But it does make me think about exclusion in a small way, because so many stocks are owned by so few people in this country, because the very wealthiest people in America have such giant portfolios, that when the stock market goes up, inequality goes up too. Is there anything that can be done to change that in the future?
One of the things that's impressed me throughout my life is really how capable so many people are. And I think to the extent that we can eliminate discrimination, I mean, for example, opening up our jobs, our economic opportunities to women has been a very good thing, and I think has been generally helpful for women. I think it's the same sort of thing in terms of racial discrimination. I am absolutely convinced that rather than there being just a small coterie of geniuses, that intelligence is very widely distributed in our population. And so my own sense would be the more we can do with education, the better.
Why is it that we need geniuses, or really just the concept of genius? Is it like the way we need heroes and heroism, you know, to help just explain the world and justify?
I think we need innovators, and I'm not saying that innovation isn't good. We absolutely do, but I'm not going to call them geniuses. And Jack Bogle would certainly never have called himself a genius. But I think we do need innovators. There will undoubtedly be financial products that are actually good for one. You know, I'm not a fan of Bitcoin. I don't think, I don't recommend that any investor buy it. But will there be improvements in the payment system in the future? And will there be digital currencies in the future that are stable and that are useful, as opposed to something that goes up $1,000 or down $1,000 in a day? Absolutely. And there's room for much more innovation in finance. So I think there will be innovation. There should be innovation. I just wouldn't call it genius.
That was great. Burt Malkiel, thank you so much.
Thank you so much. I really enjoyed our conversation.
Stay tuned, because next we have a very far out genius. There is no one way to be a genius. You could be dreamy and far out. You could be scrupulous and scientific. You could work within the institutional establishment, or you could honor indigenous wisdom. All of those descriptions apply to this guest. Moraba Jah is a space environmentalist, an astrodynamicist, a spacecraft navigator, and the first African-American professor of aerospace engineering at the University of Texas. Last year, the MacArthur Foundation gave him a fellowship that is informally known as a Genius Grant. So, if you want, you could call him a genius, you could call him Professor Jah, but you'd rather you call him Moraba. So, Moraba, welcome.
Great to be here, my brother. Thank you so much.
Really glad to have you. I really love the phrase, a stroke of genius. You were in Alaska with your family in a hotel one morning. I think you were taking a shower.
Yeah.
And you had this feeling and this vision that kind of struck you. And you know, whether or not it has anything at all to do with genius, tell us about that moment.
You know, I'm in the shower, and I felt a presence. And in my mind's eye, I saw flashes of scenes from like history and how in the beginning, whatever that means, it seems like there was this intergenerational contract of stewardship with the planet, but that humanity over time has mostly abandoned that intergenerational contract of stewardship and has forgotten about how interconnected things are.
Did that moment change the life you led and the work that you do?
Absolutely. So one of the people that I really look up to is Jane Goodall. I watched something about Jane where she said that she went to a meeting as a scientist and she left that meeting an activist. In very similar ways, I went to Anchorage kind of just this scientist, and I came back both a scientist and now this space environmentalist activist to really try to, I guess, really showcase how we need to protect orbital space.
If there's a kind of genius that means something to you, something that you would want to live up to, or something you'd want to recognize in yourself, what would that kind of genius like actually look like?
To me, the best kind of genius is simply allowing myself to let the universe go through me and, I guess, use me as some sort of vehicle for the work that I'm trying to do. And if I can keep myself kind of in the moment and in a place of compassion and empathy, then I think genius is just what comes through when you allow that to happen.
There's more garbage orbiting the Earth than there are working satellites. You now work not just to make sure that all that stuff is properly tracked, but to be an evangelist for expanding the way we think about environmental protection so that it includes all that stuff. What can those of us who are not scientists, what can we do to help you?
Every day, the technologies that we have are more and more reliant on these robots in the space that we call satellites. And we're tracking about 50,000 things ranging in size from a cell phone to the space station. 5,000 are working and everything else is garbage. So that's like 90% of the stuff is trash. The thing that most people just don't realize is that these satellites that are providing these critical services and capabilities, position, navigation, timing, communications, internet with the Starlink satellites, right? Any of these things can get schwacked, that's the technical term, get schwacked by a piece of junk, and then it's game over, and then you lose that capability. So I think more and more people just need to be aware that, oh, well, that space, that's somebody else's problem. No, it's our problem because our way of life, our technology is now going through this infrastructure.
There's a real stereotypical idea of genius that I'm thinking of a kind of solitary genius working by herself or himself off in a fun cabin, you know? What does it mean, what would it mean to be a genius collaborator?
Back in the times of like the Renaissance, people looked at folks like, Da Vinci, Michelangelo, and they said, okay, these are geniuses in their own right, right? And people say, well, how can anybody be like another one of those? Science has developed so much beyond those days that there's no way for somebody to be able to be, quote unquote, this Renaissance person that knows very deeply things in all these different fields. Like, those days are gone, okay? But to me, the real genius is recognizing where you bring in smart people from other fields that complement and augment your own to solve wicked problems.
Yeah, connectedness, connections with one another. But my understanding, though, from reading a little bit of your writing, is that you were, I think in your childhood, you felt really isolated.
I did, yeah. My mom was born in Haiti, and she was naturalized citizen. My father, Sierra Leone, naturalized citizen. They got divorced when I was very young, and yeah, my father was just very abusive. So at the age of 7, he kidnapped me, and 9 days later, they found me in some apartment in the Bay Area, put me back on a plane to my mom. And my mom had, we had a cousin that lived in Caracas, and so we fled the country because my mom's like, I don't want your father to ever find you again. He never did physically again. But growing up in Venezuela, I felt very isolated. I felt very alone. I came into contact in this void with what seemed to feel like an ocean of infinite love and compassion. And then I realized, I have a choice here. I can choose to meet my experiences with equal anger, or I can choose to act from a place of love and compassion and heal from my pain and make my healing be of service to others. And that's what I've chosen to do.
When the MacArthur Foundation, when they named you a fellow, they said it was because, they used a beautiful phrase, it's because you envision transparent and collaborative solutions for the Earth's orbital spheres. What are those solutions? And maybe when are they coming?
My inspiration for this comes from indigenous people, from traditional ecological knowledge, TEK, I call it ancient tech. And so for me, the vision of my future is seeing Western science and traditional ecological knowledge come together, not annihilate each other, but actually harmonize with each other, so that then that could be the way of the future, so that humanity does recognize interconnectedness, empathy, and stewardship.
Thank you so much for being here and sharing your story, sharing yourself.
Thank you, brother.
Truly enjoyed it.
Thank you.
Coming up next, a genius I would like to be when I grow up. Getting older is not easy, but the good news is time brings opportunities to become a more practiced, a more seasoned, a more you version of you. The guest who's sitting with me at this table is one of the most accomplished people I've ever met, and she is 17 years old. In 2021, Zaila Avantgarde won the Scripps National Spelling Bee, but She considers herself not so much a speller as a basketball player, and she has multiple Guinness World Records in juggling. A few weeks ago, this young genius started the 11th grade. Zaila, so glad you're here.
Thanks for having me.
Truth is, we're all super different. We all have our own gifts. We all have our own limitations. When and how did you come to realize how special you are?
So that's a complicated question, I would say, because I didn't so much realize, I realized I was special, but I became special through a process of like training and stuff. If you look back on it, like I wouldn't say I popped out the womb like a genius or something like that. It's like when people would start to stop and look at me while I was dribbling or practicing at a court, people like stop and look because, hey, look at this cute little girl. I was very small when I was that age. So this cute little girl dribbling 2 balls and doing all this between the legs, step backs into shots and stuff. So pretty early on, I realized that, yeah, I might be a little bit different than the average kid.
You won this like completely beloved national competition, but it's something that I think you no longer consider your main passion, or maybe you didn't even consider it your main passion then. What does basketball make you feel that spelling doesn't?
I would say basketball gives me even more of like the competitive rush. Like I just really love to compete and stuff. So like, and like spelling is more like, yes, it's not really like person-to-person competition. It's more like person versus dictionary, which is something you hear a lot from spelling bee people. It's like it's me versus the dictionary, because that's where the words are coming from. Whereas with basketball, it's more like physical competition. Like, oh, I made it between the legs, and there's this girl on me, and I have to shield her off. And it's like more tangible competition, as opposed to the more philosophical competition of spelling.
I want to ask you about a very different kind of genius. There's this billionaire named Sam Bankman-Fried. Think you've heard of him?
Of course.
Widely considered to be the world's, great crypto genius before he was then charged with fraud, which he has denied. How should the rest of us look at people who get called geniuses, but maybe they still have shortcomings, just like everybody else?
Sometimes I feel like the term genius is like nowadays it's so loaded. Like it's not, maybe it's like, oh, it doesn't just mean, oh, look at her, she's a genius, like she's so smart or whatever. But like then like if you're labeled with that like your whole life, that kind of like puts a pressure on you. Like maybe once upon a time, like I listened to a podcast about Sam Bankman-Fried, but I don't know him personally, so I can't speak for him. But hypothetically, like he's like his parents are like, oh my God, you're so smart. He goes to accelerated programs in school, and that's just putting pressure from a very early age. Like I'm a genius, I have to be a genius, I have to always be a genius. So I always feel like people like some of the scammers and stuff should get maybe just a little bit of sympathy, just a little bit, because they are like causing all sorts of trouble, because like they've been considered geniuses their whole life and they had a nice business plan or something, but then it didn't work out. And so what are they supposed to do? Go to all these people who say, oh, you're a genius? That just puts a little pressure on you to like give you that extra push you needed to try to maybe go into the murky waters of life.
The murky waters of life. I want to ask you one final question about pressure. I think that there is sometimes pressure in the United States, maybe everywhere, pressure on really smart people, genius or otherwise, to use their intelligence to like make a lot of money, to be successful. And like I guess I'm thinking specifically about the finance industry and mathematicians, but it's true of the business world. You're smart, you go make money in business. Do you have a favorite company or an industry or like a job that appeals to you?
I mean, I'm not like super like make millions of dollars. I mean, if anybody who's watching or listening wants to give me millions of dollars, please hit me up. However, like I'm interested in going to neuroscience or maybe working for NASA or maybe being an NBA head coach. But I just realized I've never thought, how much money would I get for this? Because that's not really something like I think of, because you can make a lot of money, not to sound trite, but you can also be really miserable making a lot of money. So that's not even something I actually consider, like how much money will I make? I'll cross that bridge when it comes.
Zaila, you're gonna cross the bridge, you're gonna have a great time. I have had a great time talking to you. I'm thrilled you're here.
Thanks for having me.
When you ask geniuses, as I just did, what a genius is, or if we need geniuses, or if they're a genius, the answer you'll get will be genius. It turns out that there is not one way to be a genius of finance or of art or of language, just as there is not one way to think about genius itself. What matters is not what you call unusually high levels of intelligence or talent. What matters is what you do with it. Thank you so much for watching the first episode of the Business Week Show. We'll see you again for another one soon.
I am a completely virtuous person. I have no missing virtues. But I do wish I could sing.
People clearly tend to be impatient where they should be patient.
I waste the most money on champagne. I love champagne every day. Every day I have 2 glasses of champagne. That's my thing. 2 glasses of champagne every day.
Risk is everywhere. It is a risk to get out of bed, take a sip of coffee, step into the street, shake someone's hand, eat a tuna melt. Trust risks betrayal, authenticity risks rejection, and if you want to play it safe, doing nothing risks missing out on everything. We associate risk with what you might lose, but there is no winning in the marketplace without it. If anyone ever comes up to you and offers you something that is completely risk-free, buyer beware. Nothing ventured, nothing gained. I read this thing in Bloomberg Business Week about Silicon Valley Bank, which bought billions of dollars of bonds, a risk. Then the value of those bonds fell, depositors went running out the door. The impact of that risk was one of the biggest bank failures in the history of this country. What does it feel like to take risk in business and in life? We're gonna try to find out from actual risk takers. It's a risk, we're gonna take it together, and we're gonna take it tonight.
It's the Business Week Show.
Welcome to the Business Week Show. Tonight, risk. The very idea of who gets to take financial risk in global markets and how they go about taking that risk and then how they talk about that risk changed thanks to tonight's first guest. In 2012, Jamie Rogozinski logged onto Reddit, he started a new page, and he called it Wall Street Bets. In the years that followed, it got millions of users. It sparked real frenzies in stocks like GameStop and AMC, and at one point, it got its own Super Bowl ad. But as you may imagine, things did not work out all that well for everyone, And Jamie is here tonight to tell us all about it. Jamie, seriously, thanks for being here.
Thanks a lot for having me.
Risk is a funny thing because it freaks some people out, me included. But there's also something about it that is so attractive and so tantalizing. Why have you been so drawn to it?
Risk is a funny thing because when people say risk, especially when you frame it that way, the implication is either there's an element of randomness, right, or that's the outcome can be very, very costly because it's either unlikely to pay out or the actual, chance of losing might be really costly. But the way that I see risk is really, if you're able to actually quantify those elements, it's really a price that you pay for an opportunity. The way that I look at risk in that sense, it's not that I'm attracted to these thrill seeks. It's, I think this is worth it, right? I think I can identify these are the probabilities or possibilities, and sometimes I can't, but at least I can map them out. And this is what the possible outcome is. And I'm like, let's do this.
Okay, let's do this. Let's really talk about that. Because what you're saying is you're really talking about what it means for something to be risky. When you started Wall Street Bets, the way you've talked about it is that you said you wanted a place where people could talk about risky ideas and they could talk about it kind of proudly, risky trade ideas. You were enabling other people to take risks. So can you tell us, like, what worries did you have at the time that things potentially could go wrong for them?
You know, my definition, my understanding and my position on risk has evolved, right? It's become clear as the years gone by. And early on, I justified this by saying, well, look, they're all adults. You have to be 18 in order to open up a brokerage. Same thing if you go to a casino, everyone can go through. And when I said I wanted to be able to discuss high risk, I wanted to discuss high risk, high return, right? It wasn't just high risk is throwing your money out the window and having it go away with 100% certainty. This was high risk with the possibility of making money. And those two obviously go hand in hand. There are some that are irresponsible with it, but I can't make myself responsible in much the same way that there's gambling addicts, right? But outside of that, what I start seeing is a learning process, much like the one that I personally went through. I lost tons of money, but I walked away with so much knowledge and understanding and hands-on experience that a textbook can never explain to you.
I want to ask you about someone who sort of counts as your really, really complete opposite, Jack Bogle. He was the founder of Vanguard. He helped popularize the very vanilla, very boring idea that if you're an investor, you can diversify your bets. He ended up popularizing the index fund. How did it feel that you, in some ways, were kind of singularly responsible for changing the way that just millions of people think about investing? What did that feel like?
It was humbling for sure. It was unexpected to see the enthusiasm. If I were to have predicted the outcome of it, it would have been people looking down at this particular type of activity. Secretly, it was almost a goal of mine. But the beauty of it is what conservative investors do, Bogle, Buffett, whatever it might be, is no different than what gamblers that literally go to sit at a roulette table do. The changes in the vision that Wall Street Bets were, it demystified the idea of finance to people that might otherwise think it's just Excel sheets and discounted cash flows.
You also took a different kind of risk, and you sued Reddit, and you lost. Will you tell us a little bit about what that felt like?
Terrible. Yeah, that was probably in the top 5 riskiest things, if not 3. I get kicked out, and the stubbornness behind Reddit, they never answered. I tried pleading and sorries and threats and back channels and lawyers. They would just be like, no, you're done. They got to a point where they said, no, we're done trying to negotiate. We want to take you to court with this. And I said, all right, well, I guess now I have to actually go to court. And so this is when I decided to countersue them.
So it didn't feel like a risk. It felt like just something you had to do.
I needed to do a foreclosure. I still had a chip on my shoulder, and I couldn't fully commit to anything. And I'd still kind of look at, every time I'd see Wall Street Bets on the news or people talking about it, it would still have that kind of sour feeling. And so, and I needed to get past that. And I'm like, look, if I lose, I lose. And then it is what it is. And it would have been the fight of the century for me, or my lifetime for me. But then I can be at peace. Right?
Is that how you feel now? Are you at peace?
Unfortunately not, because it's not over yet. I would have liked for the judge to have been like, no, dude, you lose and it's over. You know, I don't want to cover too much on the legal side of things, but the judge, let's just say they left plenty of room for maneuvering. So unfortunately, it's not over.
I was told, I really don't know what it is. I was told you brought an object, I think, that maybe encapsulates risk. I think Natasha, my colleague, is gonna pass it to us, I do believe. What is this? Okay. All right. Tell us about this guy.
You're familiar with this?
Yeah. Remind me.
So this is from a meme, right? It says, "This is fine." It's a little dog, and this encapsulates so much of both my life and my ability to handle emotions, especially with the volatility of markets, but also life in general. It gives you so many ups and downs and so many ways to go through it. Oftentimes, when faced with adversity, my composure resembles this. It's like, yeah, don't worry about it.
Can I see him?
Okay. Yeah, absolutely.
All right. Well, this is mine now. Jamie, thank you so much for being here. Loved having you.
Not a problem. Thank you very much for having me.
We have more risk coming up next. When executives across corporate America want to take a little risk or manage it, they often turn to Wall Street. And there is no entity on Wall Street with a more interesting relationship to risk, including Wall Street bets, than the company Goldman Sachs. And when I think about Goldman, which I do often because I'm a Wall Street reporter, my mind often turns to Maeve Duvally. Maeve is a longtime media executive and until recently was a managing director at Goldman. The truth of the matter is we have a cordial relationship, but a kind of antagonistic one because it's my job to report on Wall Street's money and power, and it's her job to push back. Recently, I finished her wonderful memoir, Maeve Rising, which is an account of her journey from being a lonely and angry person to the woman who is sitting at this table with me right now. Maeve Duvally, welcome.
Max, thanks for having me. You know, I would say we don't have a antagonistic relationship. I would say that we've locked horns through the years.
Okay,
is that a better characterization?
I think that's a better characterization, but I'm going to ask you in just a couple of minutes about all kinds of risks that you have taken,
okay,
personally and professionally.
Sure.
But I feel like we should start first things first.
Yep.
Why is risk, which is really, I mean, it's just a fancy way of saying basically the things that can go wrong. Why is risk so important to the work that happens on Wall Street?
Well, from a market perspective, obviously managing market risk, managing operational risk that somebody pushes a button they're not supposed to, and the trade that happens is bigger than it was supposed to be. Those are obvious risks. And there's also kind of macro risk, right? That a central bank does something that people weren't expecting. But the kind of risk that I manage, and incidentally, everybody at Goldman Sachs is taught they have to manage, is reputational risk.
Okay, so I want to talk about 2018. I think my favorite page of your book. You put on makeup at the office for the first time. What I really want to ask about is, like, tell me about the day. Like, what do you remember in full about that day in 2018?
Well, it was the day of the Knight Bagehot Fellowship dinner, which you've probably been to. Knight Bagehot Fellowship is a fellowship for mid-career financial journalists at Columbia University. I'm a alumni of that program and also on the board of Knight Bagehot Fellowship. It's really a nice gathering. I usually look forward to the dinner, but sometime early that afternoon, I literally had this overwhelming feeling and desire that I needed to wear makeup to the event that evening. And once I had that thought, I couldn't get it out of my mind. And I bolted out the door and walked a third of a mile to the closest Sephora and bought a bunch of makeup, which I put on at the end of the day. And I went to that dinner with some makeup on for the first time.
You put on the makeup, you end up kind of negotiating with yourself. And you say to yourself that you basically have this barrel of femininity, and you think, like, should I just keep the lid on? Should I just keep the lid on? What would you have risked if you had done that?
I think that would have been impossible, but if I did that, I would have been miserable.
I was wondering when I read your book how it felt to kind of risk your male privilege. You were risking your male privilege in a male-dominated industry.
I'm certain I had male privilege, and I'm certain through the years I exercised male privilege, but I wasn't really consciously aware of it. And to be perfectly honest, it's not something that really matters to me.
When it's time for you to choose a name, you pick one that means she who intoxicates.
Yeah.
Which blew me away when I read it, because months before, you stopped drinking. Why did you quit?
Well, I had a series of progressively bad bottoms. My last bottom, which was in January of 2018, I holed myself up in an apartment. I only left to get alcohol. I drank around the clock, and I made an attempt on my life. So if I continued drinking, I'm convinced that I would have killed myself. After that episode, I made a decision that I wanted to live. And I knew if I wanted to live, I had to stop drinking.
Look, I mean, we have a professional relationship, so part of me feels like it's hard to say this, but it's also hard not to say it. I'm glad you made that decision. A lot of people who are miserable, they don't get out of their misery.
Yeah.
They stay there.
So the reality is there are a lot of drug addicts and alcoholics in the world, and the vast majority of them do not get sober and do not get clean, and they die alcoholic and addict deaths. That's the reality. So those of us who have made it to recovery, don't take it for granted, number one, and two, realize that it was a gift. And it's a gift that has to be nourished all the time, because if you take it for granted, you're going to wind up right back on the street.
When you came out, you got, I think, literal bouquets from traders at Goldman. I think you got like these very warm notes from people. I think you got phone calls.
Yeah.
Those were from traders, and they were not from investment bankers. And you write in the book with clarity, investment bankers were quiet. I was so surprised by that. What can you explain that? Why did that happen?
I think probably some of my relationships with investment bankers were shallower than I thought. And I think investment bankers are very good at having really expansive relationships kind of across a wide group of people. But, maybe some of those relationships aren't as deep as they would appear.
I love that you're accusing investment bankers writ large of a certain kind of interpersonal shallowness.
I'm not sure I said it exactly that way.
That is exactly as you said.
Yeah.
No. I'm hoping that you'll...
You're not going to put words in my mouth, are you?
Well, I'm the interviewer now.
Yeah.
I asked you earlier about male privilege. coming out as trans in the milieu of, first of all, New York City, where we are, but also a corporation which I'm sure, as I'm also keenly aware, has a lot of pressures too. Can you talk, if you want to at all, about, I don't know, maybe the kind of privileges that come with having a really good career as you do?
Sure. So I certainly have white privilege. I have the privilege of having worked at Goldman Sachs. I'm relatively well off. I live in the Chelsea section of New York, which is arguably the best place to be an out transgender person in the world. And even before I left Goldman Sachs, I began to, and I've continued to be, an advocate or activist for the LGBTQ community more broadly, because not everybody is in a position to speak out. Not everybody wants to speak out, but I'm in a position to, and I want to speak out, so I'm going to.
Thank you so much for being here. I really enjoyed this.
Thanks for having me, Max.